Sell that this morning and buy everything that's been beaten up? I don't know. Is that the trade, Anna?
Yeah, let's have a look at some of the sectors that are going to be in focus. As I mentioned before the break, nearly everything in focus this morning as we watch for this to ripple through these sectors. Airlines certainly in focus, hedged to certain degrees, but very much on the back foot as a result of the higher oil prices, as hedging can just take the edges off, if you like. So how much do they bounce this morning? How much of a retreat do we see for some of the oil majors? Those that focus on oil and gas, maybe there's the epicenter of the selling there, and that weighs on London. The mining sector in focus too. I would add into that list then, Guy, anything that is connected to the bond markets, anything that prices off bond markets, which is a lot of things, a lot of sectors, but real estate, utilities also in focus as these yields really drop today.
Absolutely. So here we go. Let's take a look at exactly how Europe is going to open this morning. What are the details we need to look for? Are the banks going to move? Big sector. Are they going to move off the interest rate story? What's going to happen with the energy sector? That's going to be interesting. FTSE 100 out of the gate, positive. Does it come a little bit higher? I think we probably are going to see it coming in a bit higher. We're expecting maybe 3% on the FTSE 100. Not seeing that quite yet. Stock 600 opening up 0.9%. I suspect this morning it may take a little while to get some of these markets open, to get a full picture of what is happening. It's going to be interesting to see how long it takes the DAX to get going this morning, to get full pricing there. The IBEX is up by 1.25%. The FTSE's continuing to climb up by 1.4%. Do you believe this energy move? The CTAs were super long. They have to reverse, but how sticky is that trade? How much of what we see on the screen this morning is going to be real tomorrow and the next day and the next day, I think is a real open question this morning. Do you buy the rally or do you fade it this morning? Key questions. At the moment, the FTSE's up by 1.5%. The Stock 600 is up by 1.4%. The IBEX is up by 1.2%. As I say, it's going to take a while to get things going this morning. We may not get the full picture for a little while, but we're expecting big moves to the upside. So far, I'm not seeing it, but I suspect there's some market congestion that we may be needing to deal with this morning, Anna.
Yeah, absolutely. Plenty of markets still closed, not getting the full picture on the CAC, the DAX, all the AEX, some heavily weighted companies, of course, there. We do have bond markets in focus and gilt yields dropping just like the rest of Europe, down 20 basis points at the 10-year horizon. We're down 22 basis points at the 2-year horizon. So, as I say, across the curve, and as we've seen elsewhere in Europe, rolling back the higher yields of yesterday and doing more than that. So we are certainly focused on anything that is connected with bond markets. Just looking at the other sectors, Guy, where we are seeing early gains, and certainly construction and materials. So that sector is the best performing, was fast out of the gates. Some of these building businesses, construction businesses, very reliant on energy prices, material prices, of course. Personal consumer discretionary, grocery stores, that's another sector where we're seeing quite a bit of positivity. So something more positive for consumers being factored in there, perhaps. Only one sector in negative territory so far at this early stage of the trading day, and no surprises for guessing that is energy. It is down by 0.4%, but there are a host of stocks that are not yet open, it seems, across Europe. And so with that in mind, we wait for this to really sort of set firm.
The OMX is the only market that I'm seeing on my screen at the moment that is delivering the kind of performance that I originally anticipated we would see first thing this morning. So the OMX in Stockholm is up by 4%.
There are many companies not open yet.
I just wonder how long it's going to take to get this thing going this morning.
Yeah.
FTSE's up by 1.5%. IBEX is up by 2, nearly 3%. But as you say, I think there's going to be a real congestion story this morning. At the moment, I've got 140 unchanged on my screen at the moment. So we've got 440 up, this is the stock 600, 22 down, but we've still got kind of 130. So it could take a while for this market to deliver.
And if those are the ones that are going to be the biggest movers with the most attention to them this morning, then we could be in for some big moves. Technology, now the best performing sector, up by 3.5%, and we see Infineon Technologies up by 9.7%. And this was an interesting feature of what we saw through the Asia session, the Kospi really jumping, some of SK Hynix, some of the other AI-related companies, and of course there's an energy component to it, but they weren't sold off necessarily because of their exposure to the Strait of Hormuz. They were sold off because they've done so well in January, February, and now they bounced back this morning, and we see some of that coming through on these markets.
Shell's down by 8.5%. Siemens is up by, which I need to check which Siemens to make sure that I'm looking at the right one. Siemens Energy is up by sort of 10%. So we're seeing either end, you're getting some quite big moves. You just buy what you sold and sell what you bought? Is that the trade? Let's
get some perspective then. Henry Allen joins us, macro strategist at Deutsche Bank Research. Henry, very nice to have you with us. What a day for stocks. The DAX just opening up then, 5% higher this morning, which is the kind of performance we were expecting, really, based on what the futures told us. I mean, is this a good, do you buy this? Is this a dip we are buying this morning? And if so, how long does it last?
I think we can be confident because I think what Trump has done overnight is really open up that de-escalation pathway with the 2-week ceasefire. And obviously the hope for markets is that it won't just be 2 weeks, that he'll extend it beyond that. And something I was struck by, and we've been writing about consistently, is even before this ceasefire, this oil shock was never really hitting the severity of several past oil shocks. It wasn't hitting the severity we saw in 2022, let alone what we saw in the 1970s. Indeed, even before the ceasefire announcement yesterday, the Stock 600, S&P 500, only down 5 or 6% from record highs. This was not some huge bear market by any means. And I think one of the reasons for that is consistently investors were expecting there would be some kind of reversal. If you look at the energy futures curve, yes, front-end Brent prices, for instance, were around $110 a barrel. But if you look at 6-month Brent, even beforehand, that was around $82 a barrel yesterday, come down to $77 today. So there was a $30 gap between front-end pricing and what people were expecting in 6 months' time. So implicitly, investors pricing in a temporary conflict that was going to unwind. So the fact we've now kind of opened up that pathway, I think we can take with some confidence.
Yes, it does seem as if analysts, very quick to declare what we all think we know about President Trump's reaction function and what's important to him with the political realities that loom on the calendar and say, well, this is going to be short. But I just wonder whether that is the whole story? I mean, do we, if President Trump wants to step away, oil prices don't necessarily go down to $60, $70, do they?
Not necessarily, but I'm conscious that with Trump, investors have been caught offside repeatedly. We've seen several of these moves where suddenly we've had this big risk-on surge. We saw that in January, a smaller one when we had the Greenland reversal. People were worried, was the US going to annex Greenland or something? And then all of a sudden they've announced a framework deal. The risk-on tone comes back. Those tariffs he threatened on Europe were avoided. We saw an even bigger one last year with the 90-day tariff extension about almost a year ago exactly, when suddenly the S&P was surging 9.5% as it looked as though we'd avoid that global trade war. So we've seen several points where Trump has done the risk-off move. Done the de-escalation. We've then had the risk-on move, and actually, generally, those have been sustained. We saw after the tariff reversal, indeed, last year that that was then met with further de-escalatory moves. And Trump has said himself he wants to reopen the Strait of Hormuz, get that oil flowing. For now, markets are still not back to their pre-strike levels, so that actually implies that if we did get back there, oil prices have further to fall.
Do you not think that the market will say, this could change quite quickly, and therefore, just as a hedge, I need to put in not zero geopolitical risk into the oil price, I need to put $10, $20 in. So what is the difference to the earnings outlook if we're at $80 a barrel versus $60 a barrel, just in terms of the growth impact that $20 might imply?
It should, but one thing, firstly, at the end of last year, oil prices were already at their lowest since 2021. We were at a low point with $60 a barrel. We've been coming down progressively.
5-year average is 73, I think.
Yeah, so we're not actually a million miles away from what a lot of companies have been used to. And the other thing is that Trump's incentives, as we've seen repeatedly, not just with Iran, but with other things like Greenland, like tariffs, like central bank independence, are geared towards a resolution to getting energy prices down. Gasoline price in the US right now are above $4 a gallon. They're the highest they've been in either of Trump's 2 terms. We know that US consumers are much more exposed to stock market performance. That's been a point of vulnerability. Of course, we've got the midterms coming up. His own approval ratings have been falling. So all the incentives are geared towards a de-escalation here. Trump, even yesterday when he was threatening the comments about civilization, he was still couching that in terms of, I don't want to do this. So, it's clear that, again, Trump does not want an escalation here.
Do you think he can get oil prices back down? Let's call it the 5-year average. You think he can get them back down to $70 a barrel?
I mean, that's partly depending on what Iran do as well, but I think that's certainly the aim. Yes, I'm not saying we're out of the woods yet, and something that we need to remember is that oil price at $95 a barrel, yes, they're now from 110, they're not down to the original point of 70, but this is at least giving space for central banks to not then respond with incredibly aggressive rate hikes.
Yeah.
It's giving us time,
But
at the end of the day.
Growth impact won't there?
There will, but oil prices have only been at these elevated levels for less than a month, really, just over a month. You'd need to see that sustained over a period of 6+ months for that to have meaningful growth implications. We're not talking about recession or even kind of serious downgrade at this point. We're talking in the realms of 2, 3, 4 tenths at this point, and that's if it's sustained. Already we're coming down today. So, actually, if you also look at the data we've had so far, even covering the month of March, the strikes began on Feb 28. If you look at the data even for the month of March, it's been okay, all things considering. Even in Europe, more exposed to the energy shock, the PMIs, yes, they slowed a bit. Still in expansionary territory, actually, the composite PMI being upgraded a bit from the flash yesterday. US jobs report, the ISMs, still very, very positive, covering the month of March since the strikes began. We're not seeing some huge push to contraction. We're not seeing the data downgrades we saw back in 2022 when Russia invaded Ukraine and oil was up to $120 a barrel. And indeed, another difference to 2022 is that in 2022, people were pricing in a sustained oil shock. The 6-month Brent futures were above $100 a barrel. We've never seen that today. Investors have never been pricing in a sustained oil shock. 6-month Brent at 77.
Henry, you're making me feel better, so that's good. That's all very positive. I was a bit concerned earlier that we would start to see downgrades, profit downgrades, stock downgrades, almost as a result of a little bit of certainty being introduced into markets. Because if you're an analyst and you can see energy prices have gone kind of crazy over the last month, and you need to do something about that, but until things settle down and you can make a rational argument as to what your new assumption is, it's quite difficult to kind of get that through. So I then wondered whether we're going to see downgrades from here. Given how little time we spent at $120 oil then, do you think we actually are not going to see too much of that?
I think it's going to be pretty limited, assuming we get the ceasefire path along the broad outlines that markets and other analysts expect. I think if oil prices, I think we spent around 3 to 4 weeks around the $100 a barrel mark, and actually partly because futures have always been at the lower point, and lots of companies do base their prices off 6 month, 12-month futures and stuff. That impact didn't hit everyone anyway. So, a lot of that flows out the Strait of Hormuz. It was still taking some weeks before they got to their final destinations. And I think so long as it is a month, a lot of people will look through that. Yes, clearly it's a shock. I'm not saying it'll have no impact, but, just as the textbooks would say central banks should do. If it's a temporary shock of a month, you're not going to have a huge reaction to that. You're going to look through it. I think a lot of companies will be basing their assumptions off the same premise.
So what's a problematic oil price? Is below 90 okay? Is above 90 okay? Is there a line in the sand where things become difficult?
I mean, clearly it interacts with everything else, but my threshold generally is about $100 a barrel, and sustained at $100 a barrel, not just a day at $100 a barrel. I mean, back in 22, we had around 5 months above $100 a barrel. Today we've had 3-4 weeks. This is not on the same league.
Nice to see. Thanks for someone better say us. We always appreciate it. Henry Allen, macro strategist, joining from Deutsche Bank Research. Quick look at the core 6, some of the key names that we watch out for here in Europe, just to get an idea of how we are trading. And there are some very, very substantial moves out there. It's interesting to see, actually, pharma not benefiting as much, but everything is doing well. Luxury's having a good day. Even defense stocks are rallying this morning. Rheinmetall is higher. Tech is up. Schneider Electric is up nicely as well. Nestle, maybe one of the places to hide, up, but not as much. So that's the trade this morning. We're basically seeing pretty much across the board gains. Energy, maybe the one exception. Let's talk to Charlie Wells, get an idea of what he's seeing in that energy space. And there are some decent moves to the downside.
Good morning, Guy. Yeah, so we were seeing a lot of movement down here in these European energy majors, Shell, BP, Total, Gulp as well, all significantly in the red on the decline in the oil price. But when you dig in, you see some differences here, right? BP, they've got more of that upstream exposure, so more sensitivity to the changes in that oil price. So again, this is a story we were expecting to see based on that. But again, this is one of the only areas where we're really likely to see red today. Take a look at miners. That is, again, a very different story we've been telling, a very different color here as well, right? Fresnillo up over 10%. They've got a lot of exposure to gold. We've seen a lot of these asset prices increase, gold up, silver up, copper up, on, you know, excitement, on optimism about the economic story that had been so downbeat recently. A lot of these other European names in the green because of copper. You think Anglo-American, you think Rio Tinto, and you start to think about copper. Let's flip and look at airlines as well. They've been such a negative read over the past few weeks, not just because of jet fuel price concerns, but also because of disruptions, right? Because of the fact that there have been so many flight cancellations, backlogs. You see IAG up, TUI up significantly. That could also be a read on the consumer, right? On, you know, a more budget-conscious consumer, getting more flexibility here. And again, a lot of green from these other major European carriers as well. Let's talk about banks, because that's a little bit more of an indirect story. There have been concerns at banks on the macro backdrop, but again, you're seeing green here. You're seeing a lot of upticks in these major names, and this could be really a relief on concerns about rates going higher in the wrong direction. That story could start to be changing and could be bringing a lot of the optimism that we're seeing related to the ceasefire news that's sweeping through the markets today.
Charlie, thank you very much. Yeah, that relationship between rates and banks has been complicated in the month of March. Charlie Wells with the latest on some of those stocks that are moving. As we were just hearing from Charlie, coming up, are there blue skies ahead? Airlines take off on the ceasefire between the US and Iran. We hear from the head of the airline industry's global trade body and discuss the impact on aviation next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
we hopefully will see some flow of oil return, which will be a positive. So the airline industry has been impacted by both the supply of crude, but more importantly, the supply of the refined product, because a lot of jet kerosene was refined in the region, and that obviously is dependent on reopening the straits as well.
That is, of course, the IATA Director General, and we should note, incoming Indigo CEO Willie Walsh reacting to the news of the two-week ceasefire between the United States and Iran. Airlines, of course, consume an awful lot of fuel. They are highly exposed to what happens with the fuel price, with the jet price. And unsurprisingly, this morning, what we are seeing is a very big bounce in some of the European names. So IAG, Air France, Lufthansa, all bouncing strongly from here. Let's talk a little bit kind of what happens next. And I think that probably is the question a lot of airline CEOs are going to be asking themselves right now. Let's join Bloomberg's Global Aviation Managing Editor, Benedict Hamill, who joins us from Berlin. Benny, good morning. It is unsurprising to see the airlines bouncing back this morning. They are going to like a cheaper jet fuel price, but are they going to get a cheaper jet fuel price?
Well, they probably will. The question is whether consumers will also get cheaper tickets. What you have seen is a reaction on the price side. As far as the consumer is concerned, you've seen these fuel surcharges, you've seen extra cost on baggage. We only had yesterday Delta announcing that. And that's probably something that will remain in the market for the foreseeable future. We just heard from Willie Walsh there. We've heard from other airline executives saying, not so fast. Yes, this is good news, but you can't just sort of swing the pendulum back via a single tweet, as it were. So this will take time to find its way and work its way back through the system once companies have gotten used to higher prices. And remember, the demand is there. There's still strong demand out there. The bookings are strong. So once you've locked in these higher prices, and you see people still buying the tickets, it'll be very hard for companies to sort of pare them back. So I would wager that over the next couple of weeks, you will still see these higher prices, particularly as we head into the peak summer travel season.
And what does this mean for the operators in the Middle East then, Benny? Because they really have reshaped the long-haul industry in recent decades. Qatar Airways, Emirates and the like. I mean, what are we expecting? How quickly are we expecting them to return to full force?
Again, it won't happen overnight. If you look at the last 5 weeks since the war started, they really pared back operations almost to zero and have slowly started coming back up. But remember, a lot of these aircraft remain grounded. Qatar Airways has quite a few aircraft sort of out of position. They've stored them in places like Spain. They have to bring them back. They have to bring crews back. And importantly, they have to bring back the story, the demand picture that people still want to travel through this part of the world. Do they want to be stuck there again? There is that concern. So that'll take time to get people back, to rebuild the reputation, as it were, of these airlines. One way to do that, speaking of prices, will be via lower fares. So if you're looking for low fares, that's probably the place to go. Emirates, Qatar, Etihad, they will all try and bring back demand through lower fares. But remember, the other airlines, you mentioned Lufthansa and Air France and so on, they've also not sat still. So they have pushed more capacity into the market, into routes like Asia and so on. So sort of unwinding all of these sort of changes, that's going to take a while, probably into the summer and if not beyond.
Benny, for a while it looked like maybe the US carriers were going to have an advantage. They would have access, availability when it came to fuel, to jet, and that was going to potentially work in their favor. Does that go away now? And what message do you think Ed Bastian delivers today when Delta kicks off its earnings?
Yeah, so as you said, Delta will have their earnings today, midday, and it'll be interesting sort of how bold the company might be in terms of its prediction. Will they issue a proper forecast? Might they refrain from one? That's something we'll be looking out for. A couple of weeks ago, a lot of the airline executives came together in Washington, D.C. for a big conference, and the mood was really quite jubilant. The demand was there. The people were booking. Some of it might have been sort of booking quickly now before fares rise. That's the big question, whether people will still rush to buy these tickets now. And, you know, as I said, the demand still is there. but it's an advantage that the US airlines have had for a while that might go away fairly quickly.
Benny, thank you very much. Bloomberg's Global Aviation Managing Editor, bringing us those global airline stories. Benedict Camel, thank you for joining us. 8:22 in London. Back to the broader market story, and airlines are part of that, of course. Airlines doing really well. Elsewhere, we see European equity markets really on the front foot, up by 4.9%. The CAC 40 up 4.2%. The Xetra DAX getting the best of those gains, up by just shy of 5%. Let's bring into the conversation Bloomberg Senior Strategist Neil Campling, who has been taking the pulse of the markets this morning. They seem to be very much alive and well, Neil, in fine form. So what are traders saying? The DAX just 5% higher this morning. What are traders saying? What are you hearing?
First thing, obviously, clearly a relief rally. The move that we've seen in the markets this morning, we've only seen these kind of moves above 5% for the stocks on 4 previous occasions in the last decade. 3 of those were during COVID, and another was during the Ukraine-Russia war in 2022. So the first thing is, one investor said to me this morning that in a short term, this market remains untradeable. A second basically mentioned that what we've seen in terms of hedge funds is a massive degrossing of their exposures. If we think about what happens in degrossing, that is when a lot of the time the risk managers take control of those books and reduce the leverage in those books. Are they suddenly going to regross, if you like? Are they going to suddenly increase those exposures? I think that's unlikely. This is a pause. This is not an end to the troubles in the Middle East as we see it. If the choke point has been over the Strait of Hormuz, Iran basically has that under control. Will Israel remain the ceasefire? So many of these questions are being asked today. Now, the trend followers, the CTA funds, which are very much momentum based, but we're hearing from traders this morning that they were effectively long energy and short equities. So you're going to see certainly a bounce based on a reversal of that short-term effect. Then on the other hand, if you talk about momentum and with them being so quick and moving around so quickly, the other thing to remember is that, to quote a classic phrase, that momentum often is the following of sheep. And to quote Gordon Gekko, from that film, of course, sheep get slaughtered. So be careful in terms of trying to follow these short-term moves.
As the CTAs come back in and reverse some of those positions, but are there levels I need to think about? Are there levels I need to watch out for that will push them even further, that will drive this rally on?
Yes, we had some data that came through this morning from some of these chats with traders talking about Goldman saying that these CTA funds at above 6740 on the S&P and above sort of 6800 will see a sort of 50 billion of equity demand to buy, push up potentially to 200. So that's a 4x increase to follow that trend in the short term. So at the index level, you may well see sort of the macro funds, etc., buying, but underlying, what have we seen in the last couple of weeks? Certainly for MSCI World Index, we've been trending at below average volumes. So that suggests that active managers, real sort of the money managers, aren't deploying capital at the moment. And I think until we get a longer term scenario, and we're coming into earnings season to see whether we're yet going to see impact in terms of outlooks, remains to be seen, to be fair.
Thanks, Neil. Thanks for the update. Really appreciate it. Bloomberg Senior Strategist Neil Campling, figuring out what's going on this morning and how far we go. What are we going to talk about next? We'll get back to the fundamentals in some ways, trying to understand what is happening on the ground. Sanam Vakil from Chatham House is going to be joining us next. Is this situation sustainable? What's the situation after look like? What does the Strait of Hormuz look like after? What does Iran look like? All of that coming up next. This is Bloomberg.
have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade, 30 minutes into a session, and what an incredible Wednesday session this is turning out to be then. European equity markets firmly on the front foot, up by just shy of 3.9%. The Xetra DAX getting the best of the gains. It was over 5% higher, up by 5.2% a moment ago, just pairing those gains a little bit. As Guy, you were saying earlier on, one of the more energy-intensive indexes doing well on the back of those steeply lower oil prices, and that really is the underlying driver of everything this morning. The FTSE 100, energy-intensive in a different way, a lot of energy companies listed there, and that is one of the sectors, in fact the only sector when I last looked, in negative territory, and so that market is up, but only by 2.4%. The CAC Garant making that other nice point this morning, that it isn't just those sort of first order sectors affected by lower energy prices that are getting a boost today. It's technology, consumer products, that includes luxury. Guy, what are you seeing?
Let's take a look at these numbers. These are, you're not going to see this very often, okay? So let's just kind of work our way through what we're seeing on the screens on our Bloomberg this morning. 532 stocks are up in the Stoxx 600. Only 67 are down. Anna's just mentioned some of the names that are certainly going to be at the top of that list, the energy names. I'll show you those in just a moment. Check out the volume. You don't often see volume days like today. In fact, they come along very, very few and far between. We're at 160% up on the average volume that we've seen over the last 20 days. Now, the last 20 days obviously includes, obviously, the bulk of what we've been seeing in terms of the conflict in the Middle East, but you don't often see a volume day like that. So there's a big repositioning happening, big rotation happening. That's driving the volume. Antofagasta, ASML, HSBC are up, so the miners are tracking higher, unsurprisingly. They are energy intensive, and you're going to see maybe a return kind of to normal flows in the global economy. Technology's doing well as well. That's interesting as a trade. You've certainly seen that coming out of Asia. ASML is up by 7.63%. What we were watching for this morning was whether or not the banks were going to react. Now, HSBC is a slightly different picture, but nevertheless, let's kind of extend that theory and idea. Interest rates have moved very rapidly. Are the banks going to respond to that? The answer we already now know is yes. Big chunk of the European equity universe. Downside, Shell's down by, let's call it 7%. BP's down by 8%. Freight rates, do they come lower from here? Probably. That would seem to be a logical conclusion. Therefore, what we're seeing today is AP Møller-Mærsk down by 2.1%, Anna.
Let's get an update, Guy, on some of the other news flow that we're covering this morning. Moody's has cut the outlook on the flagship fund of private credit giant Blue Owl Capital to negative. The rating firm moved the outlook on Blue Owl Credit Income Core from stable after, quote, significantly higher than peer redemption requests in the first quarter. Macro hedge funds struggled in the month of March as the war in the Middle East upended inflation expectations, leading to steep losses at many of the industry's largest firms. Sources say Saeed Haidar's Jupiter fund lost about 12% in the month of March, and Bloomberg understands the Brevin Howard Master Fund fell 6.6% for the worst monthly loss in its 2-decade-plus history. And ship owners are working to understand the fine print of a US-Iran ceasefire that could temporarily unblock the Strait of Hormuz and open an exit for more than 800 vessels trapped in the Persian Gulf. President Trump earlier said the US will be, quote, helping with the traffic build-up in the Strait of Hormuz. The ceasefire buys time for the US and Iran to potentially reach a longer agreement to end the 6-week war. Let's get to Bloomberg's Jumana Basechi with that in mind. She is in Dubai for us. And Jumana, so far, is the ceasefire holding? What do we know about the durability of this ceasefire?
Yeah, well, it was a bit hit and miss in the early hours of the morning. I will say that even after the ceasefire was announced, we still saw a barrage of incoming projectiles being directed at various countries in the Gulf, including Israel as well. So that has subsided. And I think now there's a combination of feelings in the region. Number one, relief that we've averted the very worst case scenario. And of course, President Trump's announcement vis-a-vis the ceasefire came about 90 minutes before that deadline in which he had threatened to unleash destruction on Iran's infrastructure. So a relief that that outcome was avoided. But at the same time, perhaps a little bit of skepticism about the durability of the ceasefire and whether it can actually translate into something more permanent. Now, overnight, the Iranian National Supreme Council put forward their list of terms of what they would like to see in order for this to turn into a longer-term cessation of hostilities. And there's still very maximalist demands, and one of them is essentially maintaining control, maintaining sovereignty over who passes through the Strait of Hormuz. And this is clearly a non-starter for many nations and Gulf nations in the region. Other maximalist demands include the U.S. removing their sites, their bases from the region, war reparations, assurances that the war won't happen again, and another one including that all operations on their proxies in the region need to stop as well. So many of these demands are unacceptable, and indeed we've heard from the Israeli Prime Minister this morning, and he said that while they subscribe to the US-Iran ceasefire, they do not subscribe to the fact that the ceasefire should be all-encompassing and that their war with Hezbollah will continue. So still a lot of questions about whether this is going to translate into something more permanent, but for the time being, a step back from the brink, and of course, for the foreseeable future, no threat of imminent escalation.
What do we know about the talks, Jumana?
Yeah, well, the chief mediator here was Pakistan, and we know that there was a huge last-ditch attempt to get these diplomatic channels working with success. And, shortly after President Trump put up that Truth Social post, we also heard from the Pakistani Prime Minister as well. He then extended an invitation to all parties to attend an in-person meeting in Islamabad in the next few days. And a short while ago, the Iranian state media actually reporting, and this is state media, I should say, but they are saying that Ghalibaf will lead the delegation from the Iranian side. He, of course, is the very outspoken speaker of the parliament. He's also been very active on social media, very strident and critical of the United States. And on the other side, they are also reporting that J.D. Vance will be leading the discussions from the United States. Overnight, a lot of the reports suggest that J.D. Vance did play a seminal role in getting this deal across the line, the ceasefire agreement across the line, alongside China. President Trump actually did credit China in some comments this morning. He suggested that China actually put a lot of influence, a lot of pressure on Iran to come to the negotiating table. So again, some hope of a more substantial diplomatic breakthrough, and it seems as though those talks actually are going to go ahead later this week in Islamabad.
Jumana, thanks for the update. Appreciate it. Jumana Basechi joining us out of Dubai. Let's talk now to Sana Vakil, Middle East and North Africa Program Director, joining us from Chatham House. Good morning. Is the conflict over?
Good morning.
The conflict is paused, and that's just because the negotiation is set to begin on Friday, as Jumana laid out, but really because both sides have still quite maximalist demands, and we have to see how much room for compromise there is between the two negotiating positions. This is a welcome pause. This is a war that nobody was winning. All sides have come out much weaker, but I still remain cautious because Iran's demands are really quite extreme, and it's hard to see them coming out having achieved everything.
Do you think the Straits of Hormuz returns to the free-flowing nature that we saw before the conflict? Do we go back to that? Do we not go back to that? What does the new reality look like?
Well, I think that's the key question. And if the Strait of Hormuz does not go back to the status quo before the war, then obviously I think this war has a chance to recommence at any time. Iran knows it has its leverage and can always exert that leverage. This will all depend on what kind of guarantees Iran obtains from the United States. Is this ceasefire going to become permanent? That is one of the most important demands that they're asking for. They do not want to see a repeat of this war. Secondly, what they are also looking for is so-called compensation or sanctions relief or access to their frozen assets. If Iran has economic lifelines that can help lower the sort of demands on the Strait of Hormuz, Iran is going to be isolated in the region. There is no return for Iran to the ties it had with its neighbors, particularly on the Gulf Arab side specifically. So that's important to remember. And if those conditions, if Iran is extracting a toll on the Strait of Hormuz, that is going to perpetually harden Gulf Arab views of the Islamic Republic.
Good morning to you, Sanam. Can I ask a bit more about the different factions within Iran, the hardline factions versus the reformists, to the extent that it's possible to identify who's in charge of those right now? As Jumana was telling us, the speaker, Ghalibaf, on the Iranian side, according to Iranian media, is going to be leading the delegation in the talks. What does that tell us about, does that tell us anything useful about the extent of what Iran will be asking for here?
Well, in terms of who's in charge, I think right now it's important to see the Iranian system as institutionalized, and they rely on a sort of consensus decision-making process. So Ghalibaf is probably out there as a key figure because he's well known. He's a regime insider. He's conservative, but also pragmatic, and has close ties as a former member of the IRGC. So he brings together a lot of different elements from across the Iranian system. He will not make decisions on his own. He will take, I think, what's on the table back to Tehran, and I think we will see a lot of back and forth. The state and health of the supreme leader is still very unknown. There are reports, of course, that he's incapacitated, but we should see this very much as a structural decision-making process rather than an individual that is in command and control.
And what about Iran's proxies in the region, Sanam? How much sway will Iran have over them and how they respond at this time? And we keep in mind, of course, Israel has said that it does not consider this to be a ceasefire on the Lebanon front.
Yes, that's an interesting demand on Iran's side, looking to shield Hezbollah and the Houthis from further strikes. I think that demand is really unachievable. And if Iran goes ahead and cuts a deal with President Trump and leaves the Hezbollah front vulnerable to further Israeli incursions and strikes. That will say a lot about the dynamics between Tehran and these proxies. Ultimately, I would imagine that the Islamic Republic will prioritize its own interests, but that is, certainly going to be a sticking point, and one that Netanyahu has already made clear is not connected to the process in Islamabad.
Sanam, how much sway does Beijing have in Tehran right now?
I think China has certainly played a very important behind-the-scenes role. I think that they pressured Iran or convinced Iran that as of right now it has increased its leverage through the control it exerts over the Strait of Hormuz, and this was the right time to come to the negotiating table. So China also just vetoed a resolution at the Security Council, and perhaps this was part of the quid pro quo. China would support the blocking of that resolution, but would encourage Iran at least to come to the negotiating table. And we should see this as a first step. This is a pause. This is not a final settlement. We can all celebrate when this is done based on the terms and conditions of the deal.
Yeah, Sanam, this is a pause then, not the final deal. But if we look ahead a little bit about what we try to project forward, what we have learned from the last 6 weeks or so, this war in Iran. And I'm thinking here about if we look through the lens of great power rivalry and we think about the US and China, and picking up from Guy's question about China, to what extent has thinking about the US and China changed in the region? And there might be quite a nuanced answer there, I'm not sure.
Well, I think it's important. Remember, we're still in the fog of war without a settlement. I think we're getting more details out about how this war was planned and organized. Analysts like myself for the past 6 weeks have been critiquing the planning of this war, that President Trump entered this war on faulty assumptions, certainly convinced by Prime Minister Netanyahu, and the New York Times has released an important story confirming this. I think certainly people around the region are looking at the execution and the prosecution of this war and wondering what it has achieved. This was, remember, only meant to be 4 or 5 days, and in the 6th week, there has been a huge amount of damage, economic, human costs that we haven't really calculated yet, and relations across the region have been set back, I would say, by a decade, if not 2. There is deep mistrust, and so countries are looking at the United States, I think, and wondering what has been accomplished beyond all of this damage. And it looks like President Trump is cutting and running. He really wanted this deal, and he wanted to extricate himself from this war. So I think this will raise questions. But it's also important to remember that China has played a behind-the-scenes role. China hasn't done more than that. China didn't swan in to support the Gulf states in any way. Either it sort of managed its own side negotiations with Iran, and that sort of leaves the region caught up in a great power rivalry without any of its own off-ramps and with limited tools to manage conflict that is imposed by external forces.
Sanam, thank you very much. Thanks for bringing us up to speed with your analysis. Sanam Vakil, Middle East and North Africa Programme Director at Chatham House. Coming up on the programme, we'll take a closer look at the outlook for oil as it plunges below $100 a barrel on the ceasefire, temporary as it might be, at least for now, in the Middle East. That is next. This is Bloomberg.
say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade. 49 minutes into a session that's proving to be really very positive, especially over in Germany for these European equity markets. As we price in this 2 weeks at least ceasefire, that is the plan. That's what European equity markets look like then, and we need to focus on what's happening with the oil price.
Well, so front and centre, what happens with the oil price? What goes on next? Do we go back to where we were before? That's one of the questions that everybody's trying to figure out right now. It's down. Oil this morning, the most in 6 years, obviously after this ceasefire deal has been agreed. Stephen Szczepczynski joins us now, who leads our Asia energy coverage, to give us a sense of kind of where we go from here. Stephen, the screens look dramatic this morning. What are you hearing, though? What are people saying about what comes next? Like, what are you seeing on the screens, and is that real?
Yeah, I mean, I think there's obviously relief that there's been some sort of deal made. I think there is a reason for the sell-off. The risk to more infrastructure damage has decreased significantly, right? That was one of the big risk premiums that was being priced into Brent, was every day that went by, as there were tit-for-tat attacks, as Iran sent drones and missiles across other countries and across borders, there was always fear that there would be material damage to infrastructure that would take years to repair. Luckily, with this ceasefire, those risks have evaporated. Now what's being focused on is Hormuz, right? The part of the deal is opening Hormuz, but we haven't seen any real meaningful increase in shipments. Of course, this deal is just hours old. It will take a while for ships to figure out what their orders are, how this will go, how the exact passage will happen. So I think that's what the market is focusing on now, because the supply situation hasn't quite yet changed.
Yeah, Stephen, what will help us understand the definition of open and close when it comes to the Strait of Hormuz? The Iranians seem to be suggesting there's going to need to be some participation from their armed forces to allow some of these ships to get out of the Persian Gulf. So you can see we're showing a map now, almost live, I think, of where many of these ships are, and many of them will want to leave the Persian Gulf to try and deliver whatever it is that they are carrying.
Yeah, I mean, there are over 800 ships, a lot of those being oil, fuel, and gas tankers. And exactly how they're going to go through is unclear. Of course, Iran has said that there will be some sort of inclusion of their armed military, also if it reaches technical restraints. I mean, I think what we have to look at is the capacity. Because over the weekend, we had 20 ships go through. That was the highest level since the war began. But you have to remember that on a daily basis, there were 120, 130, 140 ships going through Hormuz. So are we going to be getting back to pre-war levels? It's unlikely, according to the analysts and the traders that we've been speaking with. Instead, you're going to likely see an increase In the amount, potentially, but that again depends on how much is Iran able to take. Are ships going to be going just through the Iran route, which has been the sort of approved route over the last few weeks? Will they go through Omani waters, kind of hugging the Omani coast? We saw one empty LNG tanker do that over the weekend. Will we see more ships go that way? Also, what is the tolling mechanism? AP reported that Iran will be able to receive tolls for the ships that go through, which had been also kind of common practice over the last few weeks. Over this 2-week ceasefire period, it's unclear how that will all happen. So what we're likely going to see is a lot of ships congregate near the Dubai Anchorage area as they figure out insurance, if the crews are willing or to go through the safety reasons, if the ship owners are willing to take the journey, discussions with Iranian officials, discussions with Omani officials. I think there's a lot of technical things that sort of need to happen before we really start to see the flows increase from where we were over the weekend.
Okay, yeah, we're just showing that chart there, Stephen, on the screen, showing just what kind of drop-off we've seen in the amount of traffic going through Hormuz. Stephen, thank you very much. Stephen Sapczynski in Singapore, thank you for that. Joining us now with a look at the markets trading day ahead and into the rest of the week, Bloomberg's Skylar Montgomery-Koenig is with us this morning. Skylar, your thoughts this morning. Looks like quite a lot of conviction on the face of it, doesn't it? But, I mean, this is reliant on a ceasefire holding, and that's only 2 weeks.
Yeah, absolutely. I think the moves today are very clear. You're kind of just undoing what we've had over March. So those kind of losers in equity markets, those were the economies and equity markets that were more exposed as energy importers, where there was less of a sector weight towards energy and more towards those sectors that use commodities as an input cost. And so we're really going to hurt from an earnings perspective. So that's just being undone. You're also seeing the kind of losers in terms of Korea, Taiwan, those kinds of moves that you saw very large in March to the downside, they can at least be kind of 50% undone or more so given the move we've had in Brent.
If we stay below 100 on Brent, are we okay? That's the question I think everybody's trying to understand. How much of a premium do I put onto the oil price now that I need to kind of keep there? And what level are we at a problem and what level are we not at a problem?
Because we started the year at 60-ish.
Yeah. Yes, that's exactly
seems like a long
We've
time
seen
ago.
this massive move, and you've already seen it in the economic data, and you've already seen it in the central bank response to that economic data, right? The Bank of England was supposed to cut in March, and then they didn't because you had this inflationary shock. You're certainly not going to get cuts from the ECB, and that's a negative for equities, and so there should be a downward valuation
and for earnings, presumably.
Yeah, exactly. I mean, there will be some kind of inflationary impact. We've seen it very clearly in PMI data that input costs have risen, and so that means that earnings should have some kind of a downgrade from that. What I will say is equity markets are very good at looking through shocks. So during COVID, you were able to look through to that earnings momentum to the upside, but you got earnings downgrades first, and we haven't had that this time around. If you look at Euro Stoxx expectations for EPS for 2026, they've just been flat throughout the conflict because people have been hesitant to do those downgrades because they don't know where we're going to end up.
That was Anna's point,
yeah. So, I mean, we talked to Henry Allen earlier, who sounded a little more relaxed about the fact that, you know, oil prices didn't stay above 100 for all that long. And that seemed to him to be quite a material factor as to how much damage this does. But we need to be aware that this could do more, you think, Skylar?
Yeah, and I think part of it, too, is the yield story. We're not going to return to the low levels in yields that we had previously. We're certainly not going to get 3 cuts from the Fed, which had boosted equity markets previously. And so you do need some kind of valuation adjustment for that.
But presumably the energy shock starts now. These things are going to come out. It's going to take a long time to get there. Prices are going to remain higher for quite a while. Skylar, great to see you. Thanks very much indeed for stopping by to see us. Skylar Montgomery-Koenig from Bloomberg M Live. That does it for us. What a day. The picture on the screen on your Bloomberg terminal is extraordinary this morning in terms of the rally that we're seeing. Look at the bond market as well. Look at the commodity market. It's just all over the place. Does it sustain?
Yeah, energy sector, the only one in negative territory for reasons we all understand. Travel and leisure, that sector up by 7.4%, having a good day. That is it for our show this hour. This is Bloomberg.
world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Oil falls the most in almost 6 years, and stocks surge after the US and Iran agreed to a 2-week ceasefire, but a path to a permanent deal remains unclear. President Trump says the US will help ease congestion in the Strait of Hormuz, with the agreement also said to allow Iran and Oman to charge transit fees on ships. Plus, Israel backs the truce but says it does not include Lebanon, while some Arab states report attacks by Tehran in the immediate aftermath of Trump's announcement. Well, checking in on these markets, it is a remarkable day this morning. Relief sweeping around the globe. European stocks surging on that ceasefire, as they already have in Asia, as they're expected to do on Wall Street. Oil down the most in almost 6 years, below $100 a barrel on both Brent and WTI, down 13% now on Brent, and that's leading traders to pair ECB rate hike bets to now see about 2 hikes rather than 3 by the end of the year, and just 1 BOE hike. So massive moves in your bond space. Look at the 2-year gilt yield here, down about 25 basis points at the moment. The German 10-year Bund yield is down 17 basis points, and euro-dollar ploughing ahead on the flip side of dollar weakness. Now, looking across the European continent, green across the continent, as you can see, because of this relief, because of Europe's energy exposure to the Middle East conflict. The DAX, though, really outperforming this morning, up nearly 5%, given Germany is one of the most energy-intensive economies. And the FTSE is the underperformer, if we can call it that, up 2.3% at the moment, again, because of its exposure to energy. And we have Brent down, as I say, at $94 a barrel. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London. Well, the US and Iran have agreed to a 2-week ceasefire, sending oil prices lower and lifting global stocks. It's a temporary reprieve for the region, buying time for the two sides to reach a longer agreement to end the war. The US president made the announcement on social media, cautioning the pause hinges on the reopening of the Strait of Hormuz, and says that the US will be helping with the traffic build-up. Iran's foreign minister, meanwhile, said that safe passage through the waterway will be possible during that time, vowing Iran will cease defensive operations if attacks are paused. Pakistan, a key mediator, says that it'll host talks on Friday, though the US is yet to confirm its attendance. So for the latest, let's bring in Bloomberg Horizons anchor Germana Basecci. Germana, what do we know about the terms of the ceasefire? How did it get over the line when previously Iran had rejected the idea of a temporary pause? And really, when does it start?
Well, certainly there appears to be a very strong diplomatic push in the last couple of days. Chief mediator over here is Pakistan. The Prime Minister took to social media overnight in conjunction with President Trump to announce the ceasefire, a 2-week ceasefire. And of course, it is a relief. It is a relief for global markets, but it's obviously a relief as well for people in the region that the very worst case scenario was avoided. And President Trump announced that ceasefire about 90 minutes before his deadline of unleashing destruction on Iranian infrastructure if they did not agree to the U.S. terms. And that was followed up by comments from the Iranian Foreign Minister Abbas Araghchi echoing that they had agreed to a ceasefire, but for the foreseeable, over the next couple of weeks, any vessel looking to pass through the strait would have to do so in coordination with Iran's armed forces. A crucial point here, I think that's worth mentioning. And then a couple of hours later, it took about a whole 4 hours. We also heard from the Israeli Prime Minister as well, Benjamin Netanyahu, lending his support to the ceasefire so long as Iran stops their attacks on Israel and on the region as well, but then also emphasizing that from Israel's perspective, it does not apply to Hezbollah. So where we go from here, we know that it's a 2-week ceasefire. There is a push for in-person discussions to take place in Islamabad later this week. Iranian state media reporting that J.D. Vance could be heading up the U.S. delegation. Unclear at this point who's going to be heading up the Iranian delegation, but of course, the Speaker of the House, Mohammad Ghalibaf, is one of the names that is being put forward. And ultimately, this is a question of whether you can bridge the two sides' respective stances, because what the U.S. is asking for is very different from the counter demands that Iran have put forward, including their insistence on maintaining some form of sovereignty over the Strait of Hormuz.
And as you say, that is what's crucial for markets, the fact that the Strait was included in this ceasefire. Germana, what detail do we have on how vessels will make it through the Strait safely?
Well, we don't have a lot of detail apart from the fact that Iran are once again reiterating the point that any vessel that wants to go through needs to do it in conjunction, in coordination with Iran's armed forces. So this in itself is a non-starter for Gulf nations, for pretty much all nations around the world that agree that this should be a free maritime corridor. So that's the starting point. But we also know that there are about 800 vessels stranded in the Persian Gulf right now. Only a handful of them have been trickling through the Strait on a day-to-day basis. Prior to the war, we saw about 100 to 120 vessels passing through. Now it's anything between 4 and 6. And of course, they're only getting through with the permission of the Iranians. And then overnight as well, Associated Press reporting that there is a plan being put forward in which Iran would be charging a transit fee for vessels going forward that would be split between Iran and Oman, and the proceeds from those fees would then go towards reconstruction and war reparations. That is the proposal, of course, that they're putting forward. Again, a non-starter for many Gulf nations. And I think the bigger question here is, number one, how long it's actually going to take to return back to normal, if this structure, this new protocol around the Strait of Hormuz is actually going to hold, and whether the in-person discussions can yield a different outcome. And finally, how long it's going to take for the broader energy infrastructure in the region to resort back to normal as normal as before, because as we've been talking about, over 40 sites in the region have been targeted, and many of them have been severely damaged. And we're talking about months, possibly even years, for some of those damages to be fully restored back to normal.
Okay, so many years, many questions left to answer here. Bloomberg's Horizons anchor, Jemana Basecci, thank you very much. Well, because of lower oil prices this morning, notably WTI down more than 15%. We are seeing we're seeing oil majors in the US down heavily in the pre-market. The likes of ExxonMobil and Chevron there down more than 5%. And this is as we see WTI currently trading at $95.63 a barrel. But broadly, futures stateside pointing higher. S&P E-minis up 2.5% and Nasdaq futures up 3.2% following the relief that we're seeing around the world. It's not just in the stock space. You're also seeing European bonds and treasuries rallying this morning. Let's bring in Miles Bradshaw, Head of Global Aggregate Strategies at JP Morgan Asset Management, for more on that. Well, Miles, we're already seeing a repricing of Fed and ECB bets. At the moment, you're seeing Fed cut bets revived and ECB hikes being paired. You were already saying that it wasn't obvious central banks would hike as much as was being priced. So is there room for even more repricing than we're seeing at the moment?
I think so. I mean, I was looking this morning at what the oil market is pricing and the energy markets, the natural gas in Europe, and it's pretty similar to the ECB's baseline scenario, energy scenario back from their March forecasts. And that's a world where inflation, it doesn't pass through significantly into core inflation, growth is a bit weaker. So I think you can take out more hikes from the European central banks, most definitely. The question is, why were the European central banks raising rates? They were raising rates because their concerns were about inflation expectations. They weren't raising rates to create a recession so that there would be service deflation to offset energy inflation. It was about second-round effects. And as you're seeing the energy markets come off, as you're seeing the energy shock diminish, the risk of second-round effects comes down. The whole thing about second-round effects is uncertainty. They're not sure the pass-through. What's quite clear is the economy today is not where it was in 2022 when the Ukraine-Russian war started and energy prices exploded. Inflation's much lower, labour markets are looser, interest rates are much higher. So really their concern is about the risk of inflation expectations, and most likely I think the central banks will wait and see rather than preempting. And I think the bond market is pricing a lot of risk that actually they go ahead and are preemptive in terms of raising rates to anchor those inflation expectations.
Well, yeah, what if the ceasefire doesn't hold? In 2 weeks, do we just see bonds go right back to where they were?
I think it's possible, but I think we've reached the point where we know sort of the range that the market is likely to go in terms of pricing hikes. Let's say sort of 3 hikes from the ECB. That's the sort of worst case scenario we got to during sort of the most stressed periods of the energy markets. And I think we saw at that point the market started to worry more about growth. And I think the key thing from my perspective, if I look at risk markets, credit spreads, for example, markets are pricing inflation risks. They're not really pricing so much in terms of growth risks. Credit spreads, if you look at the crossover, is a few basis points above where it was at the end of February, yet bond yields are much higher. So I think, if we see this energy prices escalate again, you could see bond yields go up a touch, but I think we've seen the maximum the market can price in before we start to think about demand destruction and potentially a recession risk becoming more elevated.
So you can put the demand destruction part onto one side, but is it not the case that it's going to take a long time to rebuild this energy infrastructure? It could be a while before you get safe passage to the Strait of Hormuz.
Yeah.
And then, oil analysts telling us that oil could stay elevated, not go back to pre-war levels.
Yes.
So we've got to factor all that in, surely.
Yeah, and does that mean the central banks raise rates? I think that's the critical question. And I think when you plug all the level of oil prices, what we're pricing, you could look at December, with pricing a more elevated level of energy prices than we had in February. The inflation shock is relatively small, and I think what's uncertain is the growth shock, because the economy is in a more vulnerable position than it was in 2022. And I think in that world, central banks err on the side of caution and will wait to see the economic data. And let's remember, European economy has been plugging along okay. In the UK, the unemployment rate is rising. The central bank was probably going to be cutting rates in March if it wasn't for this energy crisis. And the market is still pricing over 1.5 rate hikes this year. So I think we're pricing a lot of the bad scenarios where central banks are all focused on inflation because the energy price, and we're not concerned about growth. So I think there is still value there in the bond market.
So perhaps the BOE doesn't hike at all?
I think that's the most likely scenario, and the question is, how does this crisis unfold, and how does the energy crisis unfold? Will they be cutting rates? That's the question I'm asking myself. Will they be cutting rates this year if this is indeed the off-ramp that we see oil flow begin to pick up from here on in through the Straits of Hormuz, with various conditions attached? Will they be cutting rates because the real economy is in not great shape?
I did think it was quite surprising at the last BOE decision that even the most dovish members of the Monetary Policy Committee, the likes of Swati Dhingra, sounded quite hawkish so soon into the war.
They sounded hawkish because they wanted to be clear that they will anchor inflation expectations. Subsequently, they've come out and have watered down some of that hawkishness, saying we will need patience to look through this. There's a range of views out there. So I think what they were quite clearly saying is a uniform message to the market and to the public: we will not let this energy crisis morph into another inflation scare. But the key thing is the economy is very different than where it was in 2022, so the risks of pass-through are much lower today. The need to hike rates is much lower than it was in 2022, and let's remember, interest rates were near zero. So we're in a very different world, and I think what's happened in the bond market is you've also had a large degrossing flow, massive moves, very thin liquidity that has seen value come in the market.
So just finally, what's your take on the private credit concerns? It's been bubbling away in the background. Are you less concerned now about contagion risks when you have less risk of weaker growth because of a prolonged Middle East conflict?
I think the contagion risk, we've kicked the tires thoroughly, and the contagion risk is really about risk appetite, risk sentiment, the closure of these. I say closure because they were always semi-liquid private credit funds that had the ability to limit the outflows, and that's what they're doing. Then affects risk appetite. It affects the availability of credit for new borrowers, and that then can cascade into slightly wider spreads. So I think that risk remains. But if you think about a systemic crisis similar to what we had in 2007, we don't have the same leverage in the system. We don't have these funds that are highly levered and need that short-term financing to keep going. And we think the system has a lot more capital, so we're not as exposed to that kind of systemic crisis. So if you see widening, it's more likely to be an opportunity to buy into higher risk premium because people are worried.
Okay, great to have you on, Miles.
Thank you.
Miles Bradshaw, Head of Global Aggregate Strategies at JP Morgan Asset Management. Thanks. Well, coming up, we'll be talking to Alessia Berardi, Head of Emerging Macro Strategy at the Amundi Investment Institute, about the impact of the Iran war on emerging markets. That's next. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg. Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
As details continue to emerge about the two-week ceasefire, markets are finally taking a breather from the risk of escalating conflict and surging oil prices. But the deal remains fragile, and the impact of the conflict will likely reshape the Gulf for many years to come. Ziad Daoud, Chief Emerging Markets Economist at Bloomberg Economics, joins us now. Ziad, good to have you with us. I wonder what, in your mind, are the top critical, unanswered questions now surrounding this temporary ceasefire?
Sure. So I think things had to get really bad before we got a breakthrough. And yesterday was quite bad in terms of the threats that we were hearing, in terms of the rhetoric that we were seeing from President Trump, and in terms of potential escalation that we were, that was potentially going to see in the Middle East. We have the two-week ceasefire now, and I think there are two unanswered questions that could basically make it more complicated: Lebanon and Hormuz. On Lebanon, there's an ongoing Israeli invasion of Lebanon. The Prime Minister of Pakistan, who mediated the deal, says it's immediate and it's effective everywhere, including Lebanon. The Prime Minister of Israel says it doesn't include Lebanon. So that's already one source of complication. The second one is the Strait of Hormuz, which has been largely shut for more than 5 weeks. There are questions. Will traffic return to normal in Hormuz? Will Iran continue to vet ships going through the strait? And will it continue to collect fees from vessels that are going through the strait? I think these are the two crucial questions that can complicate the implementation of the deal.
So bearing that in mind, what does the ceasefire mean for the global economy?
I think between yesterday and today, it's a relief. Let's remember that this is a season for people like me, macroeconomists, to come up with their forecast. The IMF is going to publish its forecast next week, the World Bank next week. Us at Bloomberg Economics actually are going to publish our forecast this week. And the crucial question here is what is going to happen to oil prices, and the big determinant of oil prices is the direction of war. Yesterday, oil is at 110, potentially rising. Today, or now, oil is at 95, potentially falling. That's a big relief to the global economy. That means inflation may not be as high as the worst-case scenario is. Growth may not be as low as the worst-case scenario is. And the transfer of income from consumers to producers may not be as bad as things looked yesterday.
But if you focus specifically on the Gulf, how is the war going to reshape the region's economy and security? Because it seems like the damage there will be more lasting.
Well, I think even if the war ends tomorrow, I don't think any Gulf leader will emerge from the experience unchanged. And I think all of them will face four questions. There's a question about how to defend borders and cities, having been under attack for more than 5 weeks. There are questions about how to deal with the U.S. On the one hand, U.S. military equipment have proven to be effective in defending the Gulf cities, but U.S. Political administrations have not been so reliable. There are questions about how to provide energy to the global economy now that the Strait of Hormuz has been shut once and could be closed again, and whether they would invest in rerouting and diverging routes that have proven so effective during this conflict. And there's a question about cooperation versus competition within the Gulf. My hunch is that the 6 Gulf countries are facing common questions, but they'll probably come up with different answers to these 4 questions.
Okay, really great to get all your questions and answers, Ziad. That's Ziad Daoud, our Chief Emerging Markets Economist at Bloomberg Economics. Thank you. Well, emerging markets have been enjoying a global rally, as everyone has, as the ceasefire has revived risk appetite. Alessia Berardi, Head of Emerging Macro Strategy at the Amundi Investment Institute, joins us now on set. Really good to have you. I mean, this is the best day for EM stocks and currencies that we've seen since November 2022. Low oil, a weaker dollar. Should investors be treating this ceasefire, though, with caution, given just how fragile it is?
Yeah, I think we need to treat it with caution because of the reason just said, right? We have to assess how long it will last and what will be really the sustainable negotiation between the two parts. So normally when we look at emerging markets, you look at the impact coming from global conditions, global financial conditions, and more idiosyncratic themes. Of course, this morning we are seeing a quite important relief on global financial conditions. So dollar is weakening. Core central banks' action is repricing towards less tightening. ECB, Bank of England, Fed was not really tightening, but in any case, there is a global financial conditions relief. Then you look at the domestic conditions and then the impact of oil on growth and inflation. And even, looking at that, you are in a situation right now where you will have a much lower oil price than yesterday morning, and expectations are for lower price. That means less stagflationary impulse across the board.
So does it help to draw a line under some of the vulnerabilities in EM that we had seen, particularly exposed by that stronger dollar?
Yes, it is, but we have to look at emerging markets with, they are not really an homogeneous set of countries, right? There are countries that are more externally vulnerable and others that are less. Over the years, emerging markets have been building quite important buffers in terms of external vulnerabilities. So let's start to mention, for example, reserves. So there are countries in emerging markets that are sitting on a quite important level of reserves, and that helps to, defend the currencies. There are countries instead, like Turkey. We saw Turkey in the recent weeks, how they were struggling to actually defend the currency through the reserves that are quite thin in the country. So we need to, again, discriminate between emerging markets in terms of external vulnerability.
Okay, and just coming back to something that Ziad was saying and the questions that he was highlighting, is it that you would be more focused on what actually is happening in the Strait of Hormuz, the passage of ships through the Strait of Hormuz, than every little report about progress in potential talks when it comes to how it will impact markets?
I think the two things are very much related, right? We need to look at how the talks are going, but we need really to measure how the traffic in the Strait of Hormuz is increasing daily. So we know that last weekend there was a little blip of, increase in terms of traffic, still very far away, 10% maybe in comparison to the pre-war conflict. But this is very important because in order to, make these countries safe, you need to see more oil shipped to these countries.
And which countries do you expect to be hit hardest when you think about that prolonged damage because of the time it's going to take to rebuild energy infrastructure?
Of course, the net energy importers are the ones hit more strongly, right? And we have, India, we have Turkey, we have some examples across emerging markets. Asia in general is really an important destination for oil from the Strait of Hormuz. So we are really looking at how that is impacting the region, Thailand, Philippines. Overall, inflation is one of the impact, but then in order to keep inflation down, these countries are putting in place measures that are at the moment temporary, but still they are hitting more and eroding the fiscal buffer. And then you need to see how expenditure will be diverted between more productive expenditure to assistance or subsidies before really calling for a fiscal slippage. So there are several ways of this shock impacting these countries, and this is what we are looking at.
Yeah, and it's been interesting to see that regulatory response as well as, well, in lieu of or before a fiscal or monetary response,
yes,
and wondering about the growth impact of that. I also just want to get your take on Hungary, because of course we have seen J.D. Vance, the US Vice President in Budapest, supporting Prime Minister Viktor Orban, and I wonder how much further Hungary's markets could rally if Orban is ousted.
Yeah, I'm glad you make this question because it reminds me of the fact that we are going back to idiosyncratic themes, and we are leaving for a while the big, systemic risk. So as far as Hungary is concerned, I mean, in this new kind of environment where we do have even emerging market central banks to rethink about their next steps, Hungary's central banks is one of them where, that can return to a much, let's say, more pronounced easing than what it was priced right now, right? And therefore, it is supporting our constructive view on local debt in Hungary and the Hungarian florin.
Okay, Alessia, great to have you with us this morning. Alessia Berardi, Head of Emerging Macro Strategy at the Amundi Investment Institute. Thank you. Well, coming up on the programme, the shipping industry is scrambling to understand what the US-Iran ceasefire actually means for passage through the Strait of Hormuz. So we'll get you more on that in a moment. This is Bloomberg.
The problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London, and these are your top stories. Oil falls the most in almost 6 years, and stocks surge after the US and Iran agree to a 2-week ceasefire. But a path to a permanent deal remains unclear. President Trump says the US will help ease congestion in the Strait of Hormuz, with the agreement also said to allow Iran and Oman to charge transit fees on ships. Plus, Israel backs the truce but says it does not include Lebanon, while some Arab states report attacks by Tehran in the immediate aftermath of Trump's announcement. Well, this is a remarkable day in markets. We have oil prices plunging below $100 a barrel after the US and Iran agreed to that 2-week ceasefire. The deal involves halting military action in exchange for Iran reopening the Strait of Hormuz to global shipping traffic. President Trump says that the US will be helping with the traffic buildup. Let's now bring in Bloomberg's Middle East energy reporter, Anthony DePaula. Anthony, just talk us through what we know about the agreement to reopen the waterway. Is it likely that we'll see oil prices getting back to pre-war levels?
Good morning, Lizzie. Well, there's a lot that we still need to know, really, before we can see any kind of normalcy returning to the market, really, because we are looking for ships to start moving out of the Gulf. As you remember, when the Persian Gulf was closed because the Strait of Hormuz was effectively blocked by Iran, it has really choked off most of the flow out of the Gulf. So we've got a lot of vessels that are in the Gulf laden with crude, refined products, chemicals, and those vessels have not been able to get out of the Gulf because of the blockage at Hormuz. So pretty much all movement stopped during the month of March. So we're going to have to see those vessels getting out of the Persian Gulf, clearing out that backlog of vessels there, and it'll be really a question of testing the waters, as it were. Excuse the pun. Testing the waters in terms of whether those vessels are able to safely navigate Hormuz and get out. And we are really just watching the tanker traffic there, also speaking with the shippers, speaking with the tanker owners, the producers, to see what their level of comfort is in terms of getting out and what they understand the rules are. So we've seen, conflicting plans and conflicting terms for how they would get out. So we're really going to need to see that oil start to flow and then see some permanency to this agreement that is a longer ceasefire or an end to the conflict before we can see prices getting back to normal, Lizzie.
Yeah, we just want to know whether oil can get back to where it was. But, of course, we've got to factor in all of that damage that's been done to energy infrastructure as well.
Yeah, exactly. I mean, prices were quite a bit lower when we were coming into this. Then we built in that risk premium, and then we did see damage, and we actually saw the cutoff of supply. So these are the real kind of touch points that the markets wanted to see to go higher. So we are still in that area where we've got unspecified damage because refineries have been hit, LNG facilities have been hit, and we don't really have a readout on all the damage there. Plus, oil fields have been shut in, and so depending on the how those have been shut in, the skill of the companies in shutting them in, it will depend on how long they're able to get back up. Plus, you'll need rig crews, drilling rig crews, technicians to get back in. A lot of offshore rigs in the Gulf have been evacuated because they came under attack, and that's where we've seen some of the fields halted. So we're going to need to get a little bit more certainty in the market before workers can come back in, before tankers can come back in, and before those things start moving. So right now, we're watching first for tanker movements, then potentially for some additional tankers coming into the Gulf to pick up, and at that point we might see some additional production coming on. So we need to see those things happen before we do get much lower. Prices have come down a huge amount. We're talking over 15% today, but we're still in the high 90s, whereas we were in the 60s, 70s leading into this. So we've still got a ways to go before we get back to normal, Lizzie.
Yeah, important context. Anthony, thank you. That's Anthony DePaola, Bloomberg's Middle East energy reporter. We're focusing in on shipping. You have ship owners racing to understand the fine print of that US-Iran ceasefire and what it actually means for vessels trapped in the Persian Gulf. Just in the past few moments, we've had BIMCO, the Baltic and International Maritime Council, saying that ship owners are awaiting technical guidance on Hormuz transit. Iran says that it'll allow safe passage through the strait in coordination with its armed forces and within technical limitations. President Trump, meanwhile, says that the US would be helping with the traffic build-up. For more, I'm joined by Bloomberg's Alaric Nightingale. And Al, I do wonder, how is the shipping industry reacting to this news this morning?
It's much along the lines of how you just summarised it. I think there's a lot of caution. What is this ceasefire exactly? How agreed it is, are all the parts of it? There are so many things that are kind of unclear. If you look at the 10-point plan that Iran is supposedly putting forward, there seem to be different kind of demands that we're seeing. So what's the actual detail of the plan? And then, do you want to be the first wildebeest in the river to check if there are crocodiles? So that's, if you're an owner, you're looking at the other guy and saying, are you going to go first? No, you, and see, build up some confidence. And one of the things that people are saying to us this morning is they need to see others go first and see how the kind of the safety looks in practical terms when you start to see transits, and then they'll take a view. So it's a kind of a chicken and egg situation. And the same goes for insurance even. That's going to be, if this becomes a normalised situation, the first step is, or one of the key steps is going to be insurance. The very first one probably going to charge quite high prices, and then you'll find a more kind of appropriate market level as you understand the risk. So all of these kind of things are a chicken and egg process to just try and sort of figure out how safe it really is, and that's where we're at right now. It's
interesting when you look at the shipping stocks in Europe this morning. You've got Hapag-Lloyd up 5%, so clearly relieved, but Maersk down 1.4%, Kuehne and Nagel only up 0.25%. I wonder, is it that different shipping companies have different obstacles to get shipping traffic back to normal?
I mean, there's some of that, and there's probably a lot of kind of aspects of their operations and their kind of logistics that are very different. So it might be about fuel costs. If you've got a particular kind of hedged position or an unhedged position, and suddenly you've got much lower fuel costs, that could be very helpful to you. I'm not speaking of those particular companies, but you will see a kind of a fair degree of variability between two different shipping companies about how they might respond kind of stock-wise to a more kind of peaceful situation.
Okay, well, as you can see on the screen, it's absolutely plummeted the amount of crossings through Hormuz, just down to an absolute trickle if you compare the left to the right of the screen there. But great to get your analysis, Alaric. That's Bloomberg's Alaric Nightingale. Well, Pakistan has emerged as a key player in helping to deliver this ceasefire between the US and Iran. The country's Prime Minister publicly appealed to both sides to agree to a truce, setting the stage for President Trump's announcement hours later. Joining us to discuss is Julian Barnes-Dacey, Director of the Middle East and North Africa Programme at the European Council on Foreign Relations. So great to have you with us this morning, Julian. Will the ceasefire hold?
Look, I think the truth is it's a very precarious situation. Both sides have seen the desire for a short-term opening here. But there are some pretty maximalist demands on the table from both sides, and I don't really see there being a great prospect of a more inclusive agreement to hold things together. So perhaps we muddle through, but I think the negotiations are going to be tricky and the situation is going to be complicated for some time going forward. I think the key question is, how much does Trump want out? He is not going to get the kind of big deal that he wants. Iran is not going to give him the kind of concessions that he has put on the table as seeking for a long time. So the question is, will he accept less to extricate himself from this situation?
Yeah, if he walks away at this point, can he really call it a victory, Julian?
Well, I mean, I think it's clearly not a victory. He's going to spin it 1,000 different ways to claim a victory. But at the end of the day, the Iranian regime is still standing. It still maintains its nuclear capabilities as it was before the war, its missile capabilities. And now it's imposed itself on the Strait of Hormuz and seemingly is going to be allowed to take a toll on ships coming through. So I think it's more Iran that has reasserted a degree of deterrence, has widened its strategic posture in the Straits of Hormuz, and has really forced the Americans to back down from their demands in terms of what the desired outcome was here.
So that's the gains for Iran. But on the American side, is this war leaving the US diminished in the eyes of its allies?
I think the US comes out of this seriously diminished. It hasn't won militarily, strategically, politically. It has shown itself to be a fickle ally of sorts to many of the GCC states. It's now looking to cut a deal with Tehran that undercuts regional security and does very little to address their core interests or the core ambitions laid out by the US. So Trump definitely comes out of this a weakened president. He has been unable to deliver on what he sought to gain, and certainly the U.S. capabilities to drive the strategic agenda in the Middle East has been very weakened, and the Iranians are the ones now setting the agenda.
And how are Russia and China looking at this?
Well, I think that the Chinese, by some accounts, were involved in trying to press towards a ceasefire at the end of the day here. I think the Chinese in particular have a strong interest in seeing oil shipments resume. They have a strong demand and supply need out of the Gulf. So they clearly played a role. I think the Russians were more willing to sit quietly, watch this conflict unfold. They obviously saw a lot of gains in terms of the rise of oil prices and the lack of U.S. military and political focus on the situation in Ukraine. So a bit of a mixed bag between the two different sides there. I think the Chinese, as I say, more looking for some kind of deal here. The Russians presumably more happy to see the U.S. get sucked into a longer-term conflict.
Just in terms of how this pans out more short-term, Julian, the semi-official Iranian student news agency has been reporting that the Iranian parliament speaker, Mohammad Bagher Ghalibaf, is going to lead the Iranian negotiating team with the US in Islamabad on Friday. What does that tell you about how talks are going to be conducted from Tehran's side?
Well, look, I think the truth is the Iranian regime has hardened, has become more securitized and more controlled by the IRGC since the killing of the former supreme leader. The parliamentary speaker is seen as hardline. He himself is affiliated with the IRGC. So this just gives you a picture of where the Iranian regime is today and what Trump has achieved since the war began. Trump has talked about a regime change, but we have not seen regime change. We've seen a hardening of the regime, and now the US is going to have to negotiate with even more hardline figures.
Okay, and how precarious does it make the ceasefire that Israel says the deal doesn't extend to Lebanon? A divergence from what we were hearing from Pakistan. Do you get the sense that Israel isn't fully on board here?
My sense is that the Israelis are going to be very unhappy with this deal. We've already seen the Israeli opposition leader coming out saying it's a complete disaster. The Israelis are now saying it won't include Lebanon. Netanyahu feels the pressure to do what Trump says. He can't completely denounce Trump's agreement, but I think there's a strong likelihood that the Israelis will look to create fractures, weaknesses within the agreement, look to unravel it, to spoil the process, and Lebanon is clearly a place where they could take that forward. But if you were Israel today, you have seen a conflict unfold that now leaves Iran stronger and potentially in a position where it can cut some kind of deal with Trump that enables it to maintain its core strategic capabilities in a way that Israel was looking to bring down prior to the conflict's beginning.
Okay, appreciate your insights this morning. That's Julian Barnes-Dacey, Director of the Middle East and North Africa Programme at the European Council on Foreign Relations. We're just breaking across the terminal during our conversation. We did have some latest news on the ground from Iran, and that is from the semi-official Mehr news agency saying that several explosions were heard at Iran's Lavan refinery. The source of those explosions, however, is unclear. So we'll keep an eye on what's happening there. Of course, it is unclear when the ceasefire is set to begin. But coming up, biopharma in focus. We're going to be speaking to the CEO of private equity firm Jato Capital after its new fund raised over $1 billion for clinical trial research here in Europe. That's next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is The Pulse. I'm Lizzie Burden in London. Well, as we take in the news of that 2-week ceasefire between the US and Iran, the Federal Reserve Bank of New York President John Williams has said that risks to inflation and employment from higher energy prices are in balance and that he favours holding interest rates steady. Williams added that he expects inflation this year to be around 2.75%. He sat down exclusively with Bloomberg's Mike McKee in New York.
To
my mind, monetary policy today is really well positioned, given where all of those dynamics have been playing out, and well positioned to kind of wait and see on some of the effects of what's happening today. This isn't. I'm not saying we're just in some kind of we can't act. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes. Right now, I think that monetary policy though is pretty well positioned, given what we've been seeing so far.
Monetary policy is well positioned, but what about the economy? What's the state of the economy?
Well, if you asked me this a month or two ago, we would be talking about remarkable resilience of the economy, growing at 2% last year, looking to grow even faster this year. Clearly, with the conflict in the Middle East, that changes that a bit. Consumers, families are going to be paying higher fuel costs, gas price with the gas price increases. So I've been bringing down my forecast for growth this year, probably somewhere between 2 and 2.5% for growth this year. An unemployment rate probably staying around where it is now, 4.3%. And economy that's continuing to grow, but roughly at trend. Again, driven by consumer spending and investments, especially in AI.
Well, you mentioned unemployment. You cut rates in the last year, we were told, basically to prop up the labor market. What is the state of the labor market? Is that accomplished?
Well, it's hard to read all of the tea leaves because it's a pretty complicated situation with the labor market. We are seeing some various kind of different signals. My view is if you look at the unemployment rate, it's today at 4.3%. It's about where it was in July. So we've seen some stability there in terms of the unemployment rate and in job openings and some of the other indicators. So I feel like we've seen the labor market much more stable now. Definitely not a labor market that's weakening based on the economic indicators. That said, if you look at the surveys, including the survey that we do and the Conference Board survey, that's not how people are, kind of feeling about the labor market. Definitely, we've seen a continued process of people being more pessimistic about the labor market. Not about a recession or something, but just a view that this is a pretty low fire labor market, and maybe the views are not as strong as you would think just looking at the aggregate payroll and unemployment data.
New York Fed President John Williams speaking to Bloomberg's Mike McKee there. Well, turning now to healthcare, a biopharma-focused private equity firm has raised $1.2 billion for its latest fund to deploy money into clinical stage companies here in Europe. JATO Capital says that it's exceeded its initial target, tapping into increased investor interest from the US. The funds will be used to help develop breakthrough therapies for severe diseases. And I'm pleased to say we're joined now from Paris by Raphael Torgman, founder and CEO of JATO Capital. So really good to have you with us, Raphael. Congratulations on this latest funding round. I do want to start, though, with the impact of the geopolitics. I wonder how the situation in the Middle East and the associated inflation is impacting fundraising in life sciences. Good morning.
Good morning, and thank you very much for your kind words. Indeed, it's a quite achievement with a $1.2 billion raised after the Fund 1 raised only less than 5 years ago of $630 million. And this is on a strategy that is actually very much differentiated, proven with Fund 1, and to answer to your question, independent of the geopolitical problem, because it's without cycle, without bubble, you always need new drugs for very severe patients. And we are targeting exactly the pharma demand, the big pharma who is commercializing most of their drugs, 70% of their drug coming from smaller companies that we finance. And they are losing regularly their patent life of the drugs, and they are losing, it is estimated that by 2033, they will lose for $400 billion of revenue a year, with, for some of the pharma, representing more than 50% of their revenues per year. So JATO is really targeting this demand, and it's without end, unfortunately, for human beings and all these patients, and it's exactly what we are targeting: the pharma demand, patient benefit that will drive the financial performance, and also the European market. So geopolitical environment has been, I would say, even helpful because for Europe is more stable, I would say, but also the fact that we are in an industry that is very much, again, without cycle bubble. You could have acquisition for billions of, including private companies, like in our portfolio, even in a difficult environment.
But within Europe, there's a lot of focus on the need to value innovation better, to pay more for new medicines. Do you think that policymakers are catching up, moving fast enough to stop Europe falling behind?
So the richness of Europe, and it's why also we raised the first fund, but also the second fund even larger, is the fact that there is a lot of very good R&D, high quality, but there is not enough capital in Europe, particularly at the stage when we invest, which is a clinical stage, where you could anticipate the future value of the patient, the number of patients that the drug will target, and the benefit for patients that will define the price and the reimbursement of the drug. And Europe still represents, 30% of the 5 countries of the market in innovative drugs. So the richness of the R&D, needing financing is exactly our strategy. And we think we are at the right place and the right time because also of Europe. So it's even an advantage. And then you have to indeed work with different countries, but just the 5 biggest countries in Europe is already 30%, and US is 50% of the market of innovative drugs.
I'm interested as well in your thinking around the obesity drug market. What for you holds the most promise there as we move beyond Wegovy and Zepbound?
Yeah. So obesity is a very important market. It was not some years ago. Actually, it was seen more like a lifestyle almost. And then pharma realized the impact of treating obesity on consequences cardiovascular and actually to increase the GDP of countries. And we actually just done an investment with a new fund, Alveus Therapeutics, which is a Danish-American company, and with new drugs that could actually avoid the side effect of the first generation of GLP-1, like Ozempic, for example. So this is a big market, and I would compare that because it's a market estimated by 2030 to at least 150 billion a year. So there is room for several players, actually. So we need to be there to finance this innovation, to then have acquisition by pharma, like we are working always with our team of multiple talents inside the investment team of G8 to accompany and to retro-engineering the future value and the future cash flow of the drug. So yes, obesity is very important, and there is room. In a way, it's a little bit like statins some years ago, or 20 more years ago, where you will have several drugs. And if I may add that we are investing in very severe cause and patient and disease, and obesity is one of them. But one comparable is also in terms of impact on the society, and very severe, is also the fertility. The decrease of natality in the world now, almost everywhere but Africa, is a real problem, including a very big impact also on the GDP. And we have invested also in this field of fertility with Repronovo. And it's interesting to see that Lilly announced that after obesity, they want to be in the field of reproductive medicine.
Interesting. You seem to be a leader in this space. Raphael Torgman, J2 Capital founder and CEO, thank you very much for your time this morning. Well, it is such a remarkable day in these markets. We should check again on the moves that we're seeing around the world. The Stock 600 here in Europe up now 3.5%. So pairing some of the earlier gains that we had seen, but still oil, Brent, below $100 a barrel on this 2-week ceasefire between the US and Iran. The impact of that on bond markets, incredibly pronounced. We're seeing double-digit drops particularly at the front end when it comes to yields. Just as an example, the 2-year gilt yield down 24 basis points at 4.16. And as we look ahead to the Wall Street session, futures pointing higher there too, up 3.4% on NASDAQ futures. Up next, Bloomberg Brief. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It is 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks are soaring, and the dollar dips after the U.S. and Iran agreed to a 2-week ceasefire. Oil drops back below solidly $100 a barrel as ships await a temporary reopening of the Strait of Hormuz, and treasuries rally with bets that the Fed will resume its rate cuts and auction for 10-year notes on deck this afternoon. Let's take a look at what's going on in the markets. You can see S&P futures at their session highs right now, up 2.7%. NASDAQ futures up 3.5%. The small caps doing even better. So a massive rally here, and we have seen a massive rally in Europe as well, with some benchmark indexes rising almost 5% this morning. Take a look at what's going on in Treasuries here. You can see the rally pushing down on yields. So the 2-year yield down 7 basis points to 371, 372. The 10-year yield down 6 to 423 even, and the 30-year yield down 3 basis points to 484. Of course, most importantly, oil, or at least it has been driving this market over the past month and weeks as the war kicked off. Brent crude down 14% to 94.45. We are looking at NYMEX WTI down 16%, and at one point it had been down almost 20%. Right now trading at $95. Yesterday it traded up to $117, and we saw Brent crude for delivery reach an all-time record since record keeping began. Gas, oil, fuel trading on the Intercontinental Exchange down almost 20% as well, 18% the drop there. For some of the individual stock stories that we're watching this morning, let's get out to London. Chloe Millay is standing by. Chloe, what have you got?
Good morning, Matt. As you just mentioned, the reopening of the Strait of Hormuz, this 2-week ceasefire that has been announced, has sent oil prices tumbling. And so we are seeing that reflected in the shares of those big oil companies that had, of course, been really benefiting from this major disruption to global energy supplies since the beginning of the year. So we're seeing this reversal in sentiment and all of those names falling significantly today. On the flip side, we've got airlines that are doing much better. This is a sector that had really struggled since the beginning of the conflict because of flight cancellations and also because of rising jet fuel shortages and prices. And so now this ceasefire comes as a huge relief, and we're seeing those names move much higher in pre-market trading. And finally, there is a lot of broad-based optimism across equities, and another sector that's benefiting is the chip stocks. They had been struggling as well since the beginning of the war because of concerns about higher energy costs and higher yields. And today, this also comes as a big relief, and therefore we are in the green as well for those chip sectors.
All right, Chloe, thanks very much. We'll get back to you a little bit later on. Coming up also in this hour, Tina Fordham is going to join us of Fordham Global Foresight with a closer look at the ceasefire deal, plus its implications on global growth with Lucy Baldwin of Citi. Let's talk about that U.S.-Iranian agreement to stop the fighting just hours before Trump's genocidal deadline. The president made an announcement on social media cautioning the pause is contingent on the reopening of the Strait of Hormuz. Iran's foreign minister said safe passage through the waterway will be possible during that time and vows that Iran will cease defensive operations if attacks are paused. Let's get to our team coverage with Bloomberg's Jumana Bersetchi and Washington Deputy Bureau Chief Laura Davidson. Jumana, first to you, what do we know about the 10-point plan that the Iranians put forward? President Trump apparently said that was a good basis point for negotiations. What do the Iranians want?
Yeah, well, I mean, that's a very pertinent question because we're heading into what will be 2 weeks of intense negotiations, we imagine, over the coming days. And the starting point for that are some of the very maximalist demands that Iran have laid out. That 10-point proposal, now, President Trump has described it as being a workable starting point, but some of the demands are indeed quite maximalist, and I would say non-starter for many in the region, including the right to sovereignty still over the passage of vessels through the Strait of Hormuz, a full cessation of hostilities, assurances that the U.S. will not strike again. They would like to maintain the series of proxies that they have in the region, the so-called axis of resistance, and indeed they've actually linked the ceasefire in Iran to ongoing operations in Lebanon as well, something which the Israeli Prime Minister has come back and said they would not accept on their part. And then beyond that, they're also asking for war reparations as well. So a broad list of demands coming through from Iran, very maximalist, unlikely that the U.S. would actually concede to those demands, but a starting point for discussions. And indeed, I will tell you, we are in a very different place than where we were about 12 hours ago when there was a real fear that this could perhaps escalate out of control. Today, the region is breathing a sigh of relief, but it is very tenuous, and we've got to see what the next couple of days brings.
All right, so far from the unconditional surrender that President Trump demanded at the outset of this war, yesterday he threatened the death of an entire civilization. Laura, how does the president spin this as a victory?
So this is a standard Trump playbook of, despite what the actual facts may say, or if a deal has really been achieved here, he's gone out and declared victory. I'll note that, as Jumana said, this is a very tenuous agreement. It is just 14 days. It is not at all clear yet if each side is able to turn this into some sort of more durable peace deal. Right now we have, based on the statements coming out from both sides, both the U.S. and Iranian sort of statements indicate they're seeing this and hearing what they want to hear from each other. For example, Trump has said that the U.S. military is going to help escort ships through the Strait of Hormuz. The Iranian side has said that their military will also be involved in that. So there's a lot of discrepancy here about exactly how this 14-day, these top-line agreements are implemented, much less, something more lasting, regarding Iranian's nuclear program, its ballistic missile arsenal, for example. But it's clear that Trump was under a lot of pressure at home. He had, people who had been allies, folks like Tucker Carlson, Republican senators in Congress who were really criticizing his statements and rhetoric from a day or two ago, suggesting he was going to return Iran to the Stone Ages. That really all proved to be too much, coupled with the economic pressure that voters are feeling and really warning signs ahead of the midterms. That all culminated into what we saw transpire just about 12 hours ago.
Jumana, the president has repeatedly claimed that the U.S. military has achieved complete and total regime change, even though it seems like the IRGC is still in charge of the same theocratic regime. Do we know who's negotiating on behalf of Iran?
Well, you raise a very important point, which is, and what some people say quite flippantly is there's been a replacement of one Khamenei with another Khamenei, obviously his son, the son of the former supreme leader, but ultimately just stepping away from that. There doesn't appear to be at least visible signs of regime disintegration. And we know that the hardliners from the Revolutionary Guard, the IRGC, the clerics have been calling the shots here. They've been very vocal, obviously, on social media. A lot of this war has played out in social media. Now, Iranian state media reported a couple of hours ago that into these potential in-person discussions in Islamabad, they may be sending the Speaker of the House, that is Mohammad Ghalibaf. He has been one of the most vocal and strident voices. If you look at everything he's posted over the course of the last couple of weeks, nothing would have suggested that they would actually come to the table and start these negotiations. And I think a lot of that can be credited to Pakistan, who played a key role in mediation here, and also to China as well, something which President Trump has referenced himself, with the role that China played in also bringing Iran to the table. But to go back to what we were saying here, Iran has identified that they have a new leverage point, and this is a point that did not exist a couple of weeks ago in the Strait of Hormuz. So in addition to the demands that they were looking to negotiate even before the war even started, there's now an additional point of leverage. That is the Strait of Hormuz. So if the U.S. say that they've managed to regain full and free shipping through the Strait of Hormuz, but not deal with the other issues, then we're sort of back to square zero again.
Free being an important word there, considering the fact that the Iranians seem to want to charge a toll on ships passing through the strait that they also seem now to control. Jumana Bersecci and Laura Davison, thanks very much for joining us. We'll talk to you, I'm sure, a lot throughout the day. We really appreciate your hard work. Oil plunging below $100 a barrel. WTI posting its biggest drop since the pandemic, and U.S. natural gas futures the lowest since August. Let's bring in Bloomberg energy reporter Anthony DePaola in Dubai. And Anthony, it's been pointed out a few times already last night and this morning that there's really an asymmetric set of probabilities here. I mean, it would be really difficult to get oil back down below 80. Surely impossible to get back below 60 where it had been at the beginning of the year for NYMEX. But anything goes wrong and it instantly jumps back above $100. Do you see it that way as well?
Well, we're certainly in a risky period here. So the market is taking a deep sigh of relief. As Jumana had just mentioned, the region is reacting to the fact that we haven't seen an escalation of the war here in this region, and that impacts oil markets as well too, because there was a threat against a lot of infrastructure. So that's why we're seeing this big sigh of relief in the market. But we are clearly not out of the woods yet. There remains a lot of oil stuck inside the Persian Gulf, both crude oil as well as refined products, and that needs to clear. With the uncertainty around the terms of how open the Strait of Hormuz will be, if that's going to be open with only the permission of Iran, whether there's going to be some payments involved there, that is still very unclear. And those tankers inside the Gulf need to clear first before we can get oil flowing back to the market. Then we would have to see, once that safe passage is proven, tankers that are willing to come into the Gulf and pick up crude oil, at which point some of those producers inside the Gulf could resume loading new barrels of crude, newly produced oil, because a lot of those producers were forced to shut down because they couldn't export the oil. Storage tanks became full and they had to shut in production. So we really need to see the flow begin before we can see that oil production ramp up, and shippers, producers buyers are really asking for certainty before they move into that process of normalizing. So we're not going to see the prices coming down until we do see that. So we are still in this, and we've still got some ways to go before we can see some normalization and those prices falling, as you mentioned before, Matt.
Anthony, many of us are tourists in this market and have been learning a heck of a lot over the last couple of months. Dated Brent, which is apparently the barrels of oil for almost immediate delivery, hit an all-time record yesterday, since record keeping began in the 80s. And of course, we've all been hearing about how much jet fuel is costing the carriers. How are these other barrels or distillates being priced right now?
Yeah, so the Gulf is a big exporter of middle distillates. That's diesel, which goes into trucks, so highly important fuel for all kinds of transport, as well as the jet fuel, which they ship a lot of that, had been shipping a lot of that to Europe. So the Gulf is really important, particularly for the European supply of those middle distillates, whereas the crude oil is going, lots of that is going mainly to Asia, as well as smaller amounts coming to Europe. So it's a really key market for that. And so we have seen the products really increasing because they've been blocked in. You mentioned the dated Brent price. So another thing is price discovery here. When the benchmarks that set Gulf oil are pretty much trapped inside the Gulf, traders don't really have the benchmarks on which to price the crude. So we've seen oil that loads outside of the Gulf, that's the Omani crude, those prices have been skyrocketing, whereas Dubai crude, which is it's a very small flow in terms of barrels, but the price is set based on a lot of other crudes in the Gulf that come out, and those have not been moving. So traders are really scratching their heads on how do we price these things, what is the benchmark, and then that has led to some real dislocations, particularly on things like those products which haven't been able to get to the market, and that's been exacerbating the issue of the crude that hasn't been able to get to the market and get into the refineries to make those fuels. So we've really seen that back up, particularly on those middle distillates, diesel and jet, as you said, Matt.
All right, Anthony, really appreciate your coverage. Anthony DePaula there covering the oil markets for us. Coming up, more implications of the ceasefire deal with Tina Fordham of Fordham Global Foresight out of London next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller. Jennifer Kavanaugh of the libertarian think tank Defense Priorities weighing in on the latest ceasefire deal between Washington and Tehran, saying that it's a relief President Trump took an off-ramp, and I think almost everyone would agree with her there, but she said if he was going to back down, he did so in the worst way, raising the stakes so high beforehand. He maximized the damage to his credibility and global perceptions of U.S. power. This is a clear strategic defeat for the U.S. Let's ask Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight, how she sees it. And Tina, I think you'd agree it's a tremendous relief that we didn't decide to bomb Iran back to the Stone Ages and kill millions of people. But how do you think it looks the way we went about it?
Well, you know, I was just talking to some clients here in Europe, some of our corporate clients, about how it looks. And of course, there's relief. And yet, you know, the idea of thinking the unthinkable, of an American president threatening to, you know, mass murder, in effect, on a country of 92 million people and then scaling back from it, it leaves scars. And I think that has to be understood. And one of the things that my client said is the unpredictability of the U.S. is forcing them to reconsider their plans, because I think everybody understands that this ceasefire, you know, buys time for 2 weeks. The proof is in the pudding in terms of whether, you know, whether ships will actually traverse the Strait of Hormuz, and insurers will be willing to put that cargo and those sailors at risk. And then there are the implications of Iran effectively coming out of this in a stronger position than they started.
I wonder why the president continues to restate that we've achieved complete and total regime change when it looks like the same people are in charge, albeit, you know, the sun rather than the Ayatollah. But the IRGC and this theocratic regime that everyone has had such problems with for past 47 years remains unchanged. How do you see that?
I see it as a consequence of a policy that really painted the White House into a corner. Whether it's because the Israelis oversold the prospects of regime change or some other, you know, element of White House policymaking, and the fact that the war aims of this operation were never telegraphed, were never, you know, presented to the American people. We only saw the U.S. Treasury Secretary on the U.S. Sunday morning talk shows. The war is unpopular with Americans. You know, people will be relieved in the short term at calling victory, if indeed it ends up being that way. But any outcome, you know, from a market perspective and a global economy perspective that leaves Iran in control of the Strait, one of the world's most significant choke points, effectively using it as a toll road, can't be seen as a victory. It means that regime now has a near permanent source of leverage. And why would they give that up?
What about the nuclear situation, Tina? What was your analysis of the previous agreement where we, through diplomatic means, had been checking on the enriched uranium, the JCPOA? And what do you think, how do you think we stand now that most likely that highly enriched uranium is buried, but we actually don't know exactly where it is?
Well, we don't know, and there were some suggestions that there might have been some special forces operation to recover those highly enriched uranium supplies. But your question is very well taken, because of course President Trump withdrew from the JCPOA, a diplomatic agreement which had its many flaws and yet did include an inspection element. And whatever happens with Iran and its supplies, which it's always seen as a source of both national pride and protection from invasion, we're looking at the widening of a nuclear arms race in the region, with the other countries, Gulf and otherwise, also looking to obtain this. Countries like Pakistan already, previously agreeing a security pact with Saudi Arabia. And so the job of monitoring and enforcing some kind of international infrastructure to prevent the use of weapons of mass destruction now became a lot harder. And of course, every country is going to want one.
I wonder about, President Trump had demanded an unconditional surrender at the beginning of this war. And now Iran has laid out 10 conditions under which it will surrender. How does he negotiate those conditions, especially considering that part of that we understand is that the U.S. military and Israeli forces stop attacking Iran's proxies while Benjamin Netanyahu continues his war in Lebanon?
Well, indeed. So when it comes to U.S. diplomacy, I mean, the Iranians, who have an amazing trolling game, if you haven't seen it on X, say that they aren't in touch with anyone. And what does appear to be transpiring seems to be by text message, still involving the Omanis. Now, of course, Pakistan, not usually a security and diplomacy partner for the United States on major agreements. And I think what we're seeing, Matt, is the limitations of real estate transaction diplomacy by text message.
Tina, what's the most important element that you're watching for in the next few hours and days?
Traffic through the strait, whether ships get through, what the kind of selection process is, how much good faith compliance there is with this agreement. We've already seen Israel saying that it won't refrain from its incursions into Lebanon. And, what's called cheating in international affairs. Who cheats first, and how they do it.
All right, Tina Fordham, great to get your insight. Really appreciate it. Tina Fordham there of Global Fordham Insight talking to us from London. It's time now for your front page news. First up on the New York Times, the Republican win in the special election runoff in Georgia to replace Marjorie Taylor Greene. Democrats had hoped for a strong showing, but Clay Fuller will serve out the rest of Greene's term in the House after receiving endorsement from President Trump. Next up on the Wall Street Journal, President Trump rebuffed requests from Ford and other U.S. automakers for relief from aluminum tariffs, fires at major U.S. factories, creating bottlenecks, or one in particular, for vehicles such as the F-150 have added to Ford's challenges. And finally, the Financial Times reporting that Perplexity's revenues have jumped 50% in a month as the company leans into AI, really its only business. The company shifted from its chatbot-style search engine to AI agents that carry out tasks on behalf of users. Taking a look at what's going on in markets today, it is particularly remarkable to see oil coming down double-digit percent. So Brent crude off now 14% to $93.86 a barrel for June delivery. NYMEX crude down 16% to $94.93 for May delivery. And at one point we saw crude down, NYMEX crude down 20% from a high of $117 a barrel yesterday. Interestingly, gold rallying up 2% now to $4,800 a troy ounce. In terms of futures, we see absolutely massive moves in European cash markets. Some indexes up as much as 5%. The DAX, for example. S&P futures gaining 2.7% right now as the dollar comes down and the 10-year yield drops, with investors buying bonds. We have a 10-year auction today that we'll be paying very close attention to as well. Coming up, we speak with Lucy Baldwin of Citi on global growth amid the U.S.-Iran ceasefire. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It is 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for what is already looking like an absolutely amazing trading day. Stocks are soaring and the dollar dips after the U.S. and Iran agreed to a 2-week ceasefire. We see oil plummeting back below $100 a barrel as ships await a temporary reopening of the Strait of Hormuz, and treasuries are rallying hard with bets that the Fed will now be able to resume rate cuts and auction for 10-year notes on deck later this afternoon that we will all be paying very close attention to. Take a look at S&P futures as European cash indexes move 5% higher in Germany. S&P futures are up 2.7%. NASDAQ and Russell futures up 3.5% and more. So an absolute rally, and we have a lot of trading desks saying get ready for more as hedge funds and CTAs cover shorts. You can see yields down across the curve. The 2-year yield down 7 basis points to 372. The 10 down 6 to 423.40. And the U.S. 30-year yield down 3 basis points at 484. In terms of the moves in oil, which have been spectacular as of late, Brent crude now down 14% for June delivery to $93.94 a barrel. NYMEX crude, which yesterday reached $117 for the May contract, is now down 16% at 95 even. And you can see gas oil futures also down almost 20% right now. Amazing moves in stocks as well. For that, let's get out to London. Chloe Melee is standing by. Chloe, what have you got?
Good morning, Matt. This 2-week ceasefire that's been announced and the temporary reopening of the Strait of Hormuz have sent oil prices falling very, very significantly. And so therefore we are seeing this impact being translated into a lot of negative moves in pre-market trading for all of that oil sector, which of course had really benefited over the last few weeks from this disruption in global energy supplies. And then on the flip side, we've got airlines really moving higher this morning, all in the green because oil prices are falling. This is of course, a sector that had been struggling since the start of the war because of flight disruptions, but also because rising oil prices meant higher jet fuel prices. And so this news of a ceasefire is really coming as a big relief. And so we are seeing the likes of Delta and United being definitely in the green this morning. And finally, another key sector that is moving higher is chip stocks. There had been concerns since the start of the war that those high energy prices and those high yields from the Iran war would could really impact the AI sector negatively. And so this is another industry that is seeing this ceasefire as a big relief. And so we are seeing the likes of NVIDIA and Micron moving definitely higher this morning as well.
All right, Chloe, thanks very much. Chloe Melee with some of your stock movers that we'll continue to track throughout the day. Now, Washington and Tehran buying more time to come up with a longer-term agreement after notching a 2-week ceasefire. President Trump made the announcement just hours before his deadline, cautioning that the pause is contingent upon reopening the Strait of Hormuz. Iran's foreign minister said safe passage through the waterway will be possible during that time and vows that Iran will cease defensive operations if attacks are paused. Joining us now from Washington is Bloomberg's Tyler Kendall. And Tyler, I think we can all say this is a huge relief on both sides of the aisle. There was great concern when the president tweeted out yesterday morning that he may destroy the entire civilization. How will the White House spin this as a victory?
Well, hey, Matt, good morning. At this point, of course, this is a pulling back of President Trump's threats and also the bar. I know that you mentioned this earlier in the program that the president had previously set for what he called unconditional surrender. But we're going to have to wait and see how negotiations unfold over the next 2 weeks. This White House is expected to tout the tactical successes of the military operation so far. We are awaiting a briefing later this morning from Defense Secretary Pete Hegseth, as well as the Joint Chiefs of Staff, Dan Kane. Now, President Trump has said that the Iranian side has provided this 10-point plan that will make for a good basis for negotiations going forward. But there's definitely questions here as we glean more details, because many of them seem like unlikely terms for the U.S. and Israel, including that Iran is able to have sovereignty over the Strait of Hormuz. Now, we'll have to ultimately see what comes out of this deal. President Trump did give an interview to the AFP overnight where he said that some of the top sticking issues for the U.S., like Iran's highly enriched stockpile of uranium, is going to be, quote, completely taken care of. So I think that as negotiations go on, the White House will be giving us more details on what they view as successes of this military operation.
Yeah, it'll be interesting to see how the president deals. I know he didn't give any details with that highly enriched uranium. But what about the Strait of Hormuz, Tyler? I mean, one of the conditions that Iran has laid out is that it will be in charge of traffic through the strait. It wasn't before the U.S. and Israel started this war. How does the president want the U.S. military to aid in getting those 800 ships currently stuck in the Gulf out through Hormuz?
Well, we're awaiting more details, but in a late-night post yesterday after his initial post, he said that the U.S. would be hanging around, in his words, when it comes to the strait. Perhaps we will end up seeing some sort of naval escorts. We heard from the French President Macron earlier as well that there's going to be this group of 15 countries that could provide some sort of assurances when it comes to the strait, but that ceasefire needs to be fully in place in order for them to deploy assets. But the fact that Iran is still signaling intent to have control over the waterway really could complicate the bid for a longer-term deal, considering this White House has made clear that they don't think that Iran should be allowed to charge tolls in the strait, something that appears to be moving forward as this ceasefire is being implemented. In fact, President Trump had said the other day from the White House press briefing room that he thinks the U.S. should be allowed to gain tolls from the strait. We'll see how this develops. Of course, President Trump has also previously indicated that he thinks that the U.S. should seize Iranian oil. Bloomberg News had reporting just yesterday that the president had floated that idea to advisors, not necessarily to gain leverage over Iran, but really to gain leverage over China, though, of course, sources had cautioned Bloomberg that that plan wasn't something that was going to be set in motion, at least just yet. But as we continue to get details on what this could entail, the strait will remain a top focus, as it has been for this White House.
Tyler, thanks very much. Bloomberg's chief Washington correspondent Tyler Kendall talking to us about the White House response. Joining us now to talk more about the market response is Lucy Baldwin, global head of research at Citi. And Lucy, I noted this morning a number of trading desks had been, I guess, cautioning that we'll see maybe a melt up here as hedge funds and CTAs cover shorts. How is the market positioned going into this?
Good morning. Yes, look, I think you're absolutely right. You know, people have been pretty defensively, cautiously positioned, and this morning's reaction, therefore, is you're seeing that covering of a number of those positions. So whether that's around the globe, markets like Korea or Japan, whether that's areas like Europe or emerging markets that had obviously been very much in the crosshairs of this, being major energy importers and incredibly reliant on the Strait of Hormuz for that energy. So you're seeing that sort of unwind of what we've seen over the course of the last few weeks. And then I think as you go forward, right, there'll be a lot of focus on central banks and their ability to sort of resume their cutting cycle around the globe. And I think there'll be a lot of people looking at those sort of long duration trends. So, for example, you know, the ECB, many had started to assume and price in rate hikes on the back of the inflation that we would have seen if that oil price had stayed above 100 for a long period of time. You know, that again is another one where you're seeing that, you know, that change now. And obviously, you know, for us, for example, we expect to see the Fed later on this year resuming the cutting cycle. So I think there's no doubt that there is relief in markets, but I think it's worth saying that also in many ways, right, markets had been quite resilient, and for most people, I think the base case had been some level of a return to not necessarily full normality, but to return to the straight opening later in the year. For many, that was in the second quarter, and so this, I think, for a lot of people will put things back on track for a growth environment for the full year that looks more like trends sort of in the upper 2s towards 3% global growth. If, of course, and this is the big if and the big question, this ceasefire can be maintained and that 10-point plan can be worked through over the course of the next few days and weeks.
Lucy, you know, Europe and a lot of Asian markets had drastically outperformed the U.S. last year. Of course, they had a lot of catching up to do because the U.S. has been outperforming for the better part of a decade. But I wonder if you think that continues now that we're in a ceasefire, if we hopefully get a longer-term peace deal, because Europe's dependence on gas from the Middle East and oil has really been laid bare. It really doesn't seem to have much of a plan in terms of powering its own businesses and consumers. So what happens to that sort of competition with regional assets going forward?
Yeah, look, I think, as you say, there's a number of questions longer term around Europe and the security and supply of gas and oil. But I think markets, as you say, will be focusing on what were the big themes at the beginning of this year before this. If you go back 6 to 8 weeks, what were the big themes? One, as you mentioned, was around this diversification thematic. As you suggest, last year, the US didn't perform as well as certain other markets. Europe, EM, etc., had a better year in terms of equity price performance. And I think there'll be a lot of people assuming that you get a resumption of that thematic because of this broader diversification theme, not just, you know, potentially in certain areas, you know, across the globe, but also down the market cap spectrum. And of course, that's what you're seeing today, even within the US market, you know, the performance of the Russell, etc. So there's that broadening thesis that we think is playing out, and that will resume on the back of this ceasefire, as you say, assuming that's capable of holding. And I think the other important thing as well as that is the massive debate discussion around the AI trade, right? We've seen the performance of the picks and shovels trade, the semi-cap equipment, etc. And I think, you know, one of the big debates clearly in the market, aside from the conflict with Iran, has obviously been around software and what the terminal value for a sector like software is, previously seen as sort of stable, sticky, recurring revenue streams. And what are the other, if you like, asset-light sectors that could be disrupted from AI longer term versus the sort of more traditional asset-heavy sectors where you probably assume there is less likelihood of AI disruption. And again, I think some of those thematics that had been very much in focus at the start of this year will come back to the fore. I would just flag we have had a 7,700 S&P target on the back of good earnings growth that we'd expected this year through for the US. And I think, you know, what we'd been careful not to do is downgrade that too hastily on the back of the conflict. Of course, if this had been a prolonged conflict and oil prices had stayed high, that would have been a risk to growth and to earnings for sure. But I think, you know, this will give conviction that the US market, as well as the rest of the globe, and that broadening thesis can hold, the US market can resume some good momentum in many cases.
All right, Lucy Baldwin, great to get some time with you. Really appreciate you joining us. Lucy Baldwin there, head of research at Citi. Let's get to some of the other top stories trending on the terminal this morning. Moody's cut the outlook for Blue Owl's flagship private credit fund from stable to negative. The cut was driven by, quote, significantly higher than peer redemption requests in the first quarter, end quote. Blue Owl had received requests from investors to cash in on almost 22% of outstanding shares in the first 3 months of the year, but capped redemptions at 5%. Elon Musk is seeking to have OpenAI CEO and board member Sam Altman removed from his role as part of Musk's legal challenge to OpenAI's conversion to a for-profit company. Musk wants a court order restoring its status as a nonprofit. OpenAI says the lawsuit is nothing more than a harassment campaign that's driven by ego, jealousy, and a desire to slow down a competitor. That was all a direct quote, by the way. Big funds are piling into treasuries and AI stocks, as Lucy was just telling us. Amid this ceasefire, the actions point to tentative confidence that the worst of the sell-off may be over. Many traders, however, remain uneasy about the 2-week ceasefire, with few details on its terms, like that 10-point plan, the conditions offered by Iran. Coming up, more than 800 vessels still trapped in the Strait of Hormuz as ship owners await the temporary reopening and look for insurance. More on that next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Matt Miller in for Vonnie Quinn in New York. Bloomberg's Anthony DePaula has been talking to us about oil, and I want to bring him back out of Dubai to get the latest read. It's obviously a minute-by-minute market here, Anthony, but the moves are all in the same direction after the great relief that we won't see a civilization destroyed in Iran. What do we know about movement through the Strait of Hormuz, and how is that supporting prices?
Yeah, good morning, Matt. Well, Hormuz is exactly what we're watching today as we try to see whether the market kind of bites on this ceasefire and starts to move cargoes out of the Gulf. Of course, the oil market has taken a big step down on it as we see this positive step of the fact of not waking up this morning in the Middle East to see the U.S. and Iran reciprocally bombing the power plants and desalination facilities in the region. So that's been a positive, taking that risk away from destruction of additional energy infrastructure. But now the next step is going to be if the market trusts this ceasefire, trust that it's going to hold for the 2 weeks, and that passage through the Strait of Hormuz is safe. So that's one of the things that has come up in the talks, some conflicting views there, with the Trump administration saying that the ceasefire is dependent on Hormuz opening up, the Iranians saying they want to continue controlling it and continuing to charge people for that. So we are watching this bulk of tankers and other vessels that are still inside the Persian Gulf to see whether they will move through. Of course, a trickle of Iranian vessels have been taking their oil out today, even during the previous days of the war, and some countries that are allied with Iran have been allowed to pass through at a fee. So now we need to see what the terms are for other tankers to get through, and whether they will be able to go through. So there's going to need to be some confidence building first before those tankers start flowing and bringing that oil back to the market.
What about, Anthony, the infrastructure that has been shut off or damaged in this war? How quickly can it be repaired or turned back on?
Yeah, so the main things that we've seen damaged so far, of course, is that Qatari LNG production there. We've seen that it's been put back by years in terms of some of the supplies that the Qataris said they could ship into countries like in Europe, for example. Other facilities that have been damaged have been refineries. The biggest refinery in the Gulf, which is in the UAE, not fully back yet. The biggest refinery in Saudi Arabia has been hit, has resumed some production. But those facilities are both on the Persian Gulf, so they won't be able to fully restart anyway until they can resume production. In terms of damage to fields, it's harder to damage a field, of course, because it's mostly underground. You've got to hit the oil processing facilities. Saudi Arabia's got a massive one at Cake that was hit in 2019 so far. That's not been hit. And Sheba is another big facility that's been repeatedly targeted, but so far we don't think that that's been damaged. So the production facilities seem to still be there. However, a lot of production has been shut in simply because the producers couldn't get it out of the region. So they had to stop producing because the storage tanks filled up. We'll see if this 2-week period lasts for that long, and if we get some relief by vessels leaving the Gulf, but also coming back in to pick up some more oil. So we're really watching that intently. First the ships, and then the production level, Matt.
All right, Anthony, really appreciate your reporting. Anthony DePaula there out of Dubai. Let's talk more about the ships there, because the energy sector's mood has been lifted by the ceasefire. That's why we've seen big drops, as much as 20% for forward contracts of oil. But ship owners still remain uncertain on the key details, as more than 800 vessels are trapped in the Persian Gulf. You're looking at maps go on the Bloomberg terminal. Joining us now is Bloomberg's Alaric Nightingale, who leads our team covering European oil trading out of London. Alaric, what are you hearing about the effort to get ships out? Are they prepared with the proper insurance, and do they trust, the Iranians well enough to move through, because lives are something that you can't insure against losing?
Those are great questions and really cut to the heart of the matter. I think in terms of the insurance, from the people we've spoken to this morning, there's definitely a great deal of caution about the cover and the willingness of the shipping industry to take that cover, even if it's on offer. So you have a kind of a chicken and egg. The insurance industry needs to kind of price it, but to price it, it needs to see flow. And there's lots of different aspects to the risk profile of every ship. You know, if you've got a ship that's linked to China, maybe that's less risky than one that's linked to the US. Those kinds of things all need to be worked out, and you need to see a kind of a good amount of passage before you can accurately price it, and therefore you kind of got a bit of an impasse there to figure out at least. And then in terms of the owners' attitudes, yeah, they're cautious. You know, it's absolutely not crystal clear about what this ceasefire really looks like, what the practicalities are. You know, can ships just go through Strait of Hormuz without any kind of impediment? You know, lots of things need to be addressed.
Eric. What do we know about the toll? I mean, I've heard reports, and as I'm sure you have as well, that Iran is charging a $2 million toll per ship. Is that, you know, still being levied?
I mean, these are numbers that get talked about, and I'm sure that there is a charge, well, in some instances, but I would also expect it to be a little bit more variable than just a flat fee of $2 million per vessel. But yeah, that's another issue. If Iran is able to kind of insist on, or if Iran does insist on charges, that may be unacceptable to some. Right. And even just paying those charges could be a kind of a sanctions problem.
All right, Alaric, really appreciate your reporting. Alaric Nightingale there runs our oil coverage out of London. I will say the Wall Street Journal says that Iran is telling ship owners permission is still necessary in order to transit the strait. This is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Just a quick look here as we come to the top of the hour at oil. Right now, Brent crude for June delivery down 14% at $94.30 a barrel. NYMEX crude for May delivery down 16% at $94.68 as we get a 2-week truce in the Strait of Hormuz. S&P futures soaring 2.7% as European markets rise more than 4% at some benchmarks. That's it for Bloomberg Brief Surveillance is ahead. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York, and beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies. You know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start the Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your Opening Trade.
Only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
The amount of downside has probably been less than anyone would have expected.
The market is being very calm about this whole situation.
The drawdowns in equities were not as great as you would expect.
The market is trying to understand what is likely to happen.
Right now, the market is expecting a soft off-ramp.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, live from New York. This is Bloomberg Surveillance. Welcome to Whipsaw Wednesday, a 2-week ceasefire propping up risk assets around the world, sending oil prices tumbling, the most since the pandemic, with Iran saying traffic can go through the Strait of Hormuz, however, with caveats. Analysts searching for the details of the agreement to understand how quickly shipping can resume. The move in markets has been sharp, but not enough to erase the losses since the end of February when the war began. The bounce back absolutely violent and immediate. Russell 2000 leading the charge, up 3.6% in pre-market trading. You can see NASDAQ futures also outperforming at a 3.4% gain. When you take a look at what's going on in the bond space, pretty much across the board. But before we get there, let's also talk about how much it's really a global story, in particular with the Kospi completely surging on the heels of an expectation that you can get that risk on field, particularly in Asia, up 6.9%, the Nikkei up 5.4%. In Europe, rapid response with the DAX up the most going back to 2022 if this holds up 4.5%. The bond space just helping to fuel this. Concerns about rate hikes just easing away as people take a look at the potential inflationary pushback. Two-year yields in the U.S. falling 5 basis points to 3.7%. You could see a much more violent move, more than 20 basis point decline both in the UK and the German 2 yields. And then when you take a look at the why, it all has to do with the oil space. Crude absolutely tumbling on the prospect of a potential end cessation to the violence, down 13.9% on Brent, down 16.5% on New York crude. We have an incredible show. John and AMH both out. With us, though, coming up this hour, do not miss this, Julian Emmanuel of Evercore ISI. With global markets absolutely surging, Amrita Sen of Energy Aspects as oil plunges the most since the 2020 pandemic, and Lindsay Piegza of Stifel on the risk of stagflation. We begin with the top story, the U.S. and Iran reaching a deal for a 2-week ceasefire. Our team coverage starts right now with Bloomberg's Tyler Kendall in Washington and Jumana Bersachi in Dubai. Tyler, I want to start with you. What do we know about what concessions the U.S. made heading into this to reach this ceasefire?
Hey, Lisa, good morning. Well, this definitely marks a pulling back from President Trump's threat of what was heightened rhetoric yesterday ahead of his 8 p.m. Eastern deadline. We're still waiting on further details, trying to glean them on exactly what is going to go into this proposal. But President Trump himself said that he was willing to work with Iran's 10 top demands as a basis for negotiation. But we know that a lot of those terms, including pledges that the U.S. and Israel would not attack Iran going further, and that Iran could have sovereignty over the Strait of Hormuz, are unlikely to be tenable for the U.S. and Israel going forward. President Trump himself said in a post that, quote, almost all points of contention had been agreed to, but there are still big questions here on what some of the top U.S. demands, including limits on Iran's nuclear program, as well as what's going to happen to the country's enriched uranium stockpile, are ultimately going to look like. So while tensions are now simmered for at least now, there are still big questions here on how this is ultimately going to unfold, because, of course, Lisa, it all comes down to the Strait of Hormuz. President Trump did suggest that the U.S. would somehow be involved in securing that waterway. But again, we're going to have to see how it comes to fruition.
And Jumana, on the Iranian side, we got a statement saying that for a period of 2 weeks, safe passage through the Strait of Hormuz will be possible via coordination with Iran's armed forces and with due consideration of technical limitations. Do we have a sense of what that means?
Well, it's exactly to Tyler's point. They are once again reasserting their right of sovereignty over the Strait of Hormuz, a condition, of course, that did not exist before the war. This is a new political point of leverage that has emerged as an outcome of the war, and it is something that Iran are holding on very close to as we get into the series of what is expected to be in-person negotiations by the end of this week. So this is one of their main points of leverage. And overnight, the National Supreme Council of Iran released their 10 points for what they would like to see in order to turn this ceasefire into a more lasting peace resolution. And one of the points is, again, maintaining that sovereignty over the Strait of Hormuz. They have said that for the next 2 weeks, ships will be able to pass so long as they work in coordination, this is a quote, with Iran armed forces. And therefore, once again, sort of just reiterating the control that they have over that chokehold. But it's not just that. To Tyler's point, there are other very maximalist demands that they're putting forward, including assurances that the U.S. will never attack again. They want a full lifting of sanctions. They want to be able to still work with their proxies in the region. And many of these, again, would be non-starters from the U.S.'s standpoint. So they're still very far apart. The other thing that I want to mention as well is, of course, you know, we step back from the brink and the world today looks very different than it did, say, 24 hours ago. But I will just say that there's a question about whether all arms of IRGC are actually implementing the ceasefire, because just in the last couple of hours, we're hearing of more projectiles being intercepted in Kuwait. About half an hour ago, the UAE put up a notice saying that they're still, once again, intercepting and incoming projectiles coming through. And so it may be a couple of days before the ceasefire gets fully implemented. And so for the time being, no, there is a bit of relief, but a lot of cautiousness about how this is all going to play out.
Bloomberg's Tyler Kendall, Jumana Bercecci. Thank you both so much for that, and we'll be catching up with you throughout the day. Julian Emanuel of Evercore ISI joining us here in the studio. Julian, before we get into it, what's your response to the ceasefire and how much you can really buy into it?
Well, so I think we just have to step back and say two things here. Number one, there's a huge sigh of relief that the incendiary language and the inflamed rhetoric of the last 3 days on all sides is being set aside for hopefully at least 2 weeks, perhaps longer. But then when you think about where the markets were and are, taken individually, the degree of hedging in stocks, credit, bonds, all bearish, and oil, all bullish, were at extremes going back to the pandemic. Taken collectively, the amount of hedging, and I've been doing this for a while, I was a junior trader on the floor during the first Gulf War. There is no precedent for the collective amount of hedging. So from that perspective, this is a sigh of relief that we do think has some staying power. But again, as we've been saying, the devil will be in the details over the next several weeks.
So if it has staying power, that means it's something that is tradable and that you do see upside here in a number of different markets. How much is it concentrated in the United States versus, say, Europe versus, say, Southeast Asia?
Well, again, if you go back to the oil price, which is essentially the linchpin for everything here, the sigh of relief being breathed in Europe this morning is proportionally larger because the effect on elevated oil prices on Europe is also proportionally larger. But when you think about it, our view has been that the bull market that started in October of 2022 has further to go. We thought that a week and a half ago as you were plumbing back towards 6,300. And frankly, what we find in bull market history is the stocks, themes, and geographies that led, and U.S. tech has been all of those, end up leading. So from our point of view, the biggest thing is the fall in yields here, telling you that is an endorsement of higher multiple equities.
Yeah, and that's clearly what is gaining the most this morning. You can see this rush into big tech, seeing valuations as more attractive after the sell-off. I wonder more broadly, though, about the drop in yields, because you aren't seeing necessarily yields going all the way back to where they were on February 27th, and you're not seeing oil prices go all the way back to where they were on February 27th. And even if this deal is enacted in some form and a prolonged ceasefire takes hold, unclear how much oil prices go back to where they were. Does there have to be a higher inflationary understanding going forward that will affect those bond yields?
No, and look, to be clear, our house view is that the landing zone for oil is certainly going to be much higher than it was. This is a structural change that will take years to work through the system. So we're looking at a Brent price that ultimately lands in the mid to high 80s, WTI, the low to mid 80s. And for stocks, both of those are perfectly fine, given the fact that over the course of years and decades, the reliance on oil for equity markets has diminished. Obviously, it's still quite significant, as we've seen by the threat. But again, here for us, it is not, if you continue subsiding from here, is not at all a material headwind for either growth or the equity markets.
How much of a linchpin will potentially earnings be, even more so now, given the fact that that has been the one aspect of the market that has upheld all optimism, starting off with Delta later this hour?
So if in the middle of February, before the conflict began, I told you that earnings would be revised higher between here and then, you'd have called me a fool. Earnings have been revised higher, and actually, we are below consensus, projecting an earnings growth rate of over 11% for 2006, and the history of double-digit earnings growth is incredibly powerful. Since 1996, 11 years of double-digit earnings growth, the market has been up 10 out of 11 years.
Well, this is a reason why a lot of people have stayed optimistic, albeit maybe hedged. Julian Emmanuel is going to be sticking with us for the hour, which is a wonderful thing. If you are just joining, there was a ceasefire agreed upon with Iran, saying that there can be ships going through the Strait of Hormuz with coordination with their armed forces and with the understanding of technical limitations. We will have more for you. And at 8 a.m. Eastern, we do have a press conference with Pete Hegseth, the Department of War, the Defense Department Secretary. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand.
Hi, Lisa. As you were just saying, President Donald Trump announcing a 2-week ceasefire last night, subject to Tehran reopening the Strait of Hormuz. The president is calling Iran's 10-point plan workable for negotiations and says the U.S. will assist in allowing safe passage through the Strait of Hormuz. Plus, the White House is also saying Israel has also agreed to the ceasefire. Israeli Prime Minister Benjamin Netanyahu saying the temporary deal, however, does not extend to Israel's war with Hezbollah in Lebanon. And a new front in the war with Iran, U.S. intelligence agencies warning private sector companies of Iran-linked cyber attacks on critical infrastructure, including drinking water systems. The warning came before the ceasefire was announced. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, an 11th hour deal.
All I can tell you is they're begging to make a deal.
If there is no deal, we are going to hit each and every one of their electric generating plants. We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil and everything else.
Colonel Wayne Sanders of Bloomberg Intelligence joins next as we try to get some details around the agreement that was reached. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
What a turnaround it's been after a ceasefire was agreed upon hours before the 8 p.m. deadline yesterday. What we're seeing right now in markets is an absolute cheer from risk assets led by the small caps and by big tech, up both more than 3.4%. S&P futures up 2.6% in the bond space. A sense of relief that maybe there won't be the same kind of inflationary pressures that will keep a rate hike very much at the forefront of Fed officials' minds. You can see two-year yields down almost 6 basis points, 3.73%, a lesser rally at the long end of the yield curve ahead of $39 billion of 10-year notes being auctioned today off at 1 p.m. Eastern, down 5 basis points right now to 4.2%. to 4%. It is all being driven by the oil space. When you take a look at crude, at Brent, at WTI, absolutely nosediving. The most going back to 2020, April of that year, 13.3% decline on Brent to $94.78. That is the June contract. The New York crude for the May contract is 15.9% down, $95 even. Under surveillance this morning, an 11th hour deal.
We want to knock out every single thing they have. Now, it's possible that we'll make a deal before that.
All I can tell you is they're begging to make a deal. So let's see what happens.
If there is no deal, we are going to hit each and every one of their electric generating plants very hard. We have to have a deal that's acceptable to me.
Here's the latest. The U.S. and Iran agreeing to a 2-week ceasefire just hours before President Trump's deadline. Joining us now, Colonel Wayne Sanders, Senior Defense Analyst at Bloomberg Intelligence. Colonel, thank you so much for being with us. What do you make of the agreement that was released just less than 2 hours before that 8 p.m. deadline?
Hey, thanks so much for having me on. I think the ceasefire deal is a great opportunity right now for both sides, right, to be able to claim some victory here. If you look at the U.S. side of the house, you can claim the military strikes were successful, that we were able to degrade missile stockpiles for Iranian capability, that nuclear enrichment capability has been degraded, if not for 10 to 20 years, as President Trump has been talking about. So I think those are a good side for the U.S. Iran can sit here and say that they were able to hold off the great United States military and that they still maintain quite a bit of military power and influence over the Straits of Hormuz on the global scale. So I think at this point in time now, if they can at least come to the agreement as to what the execution of that agreement across the Straits is probably going to be the most sensitive area right here in terms of what that toll looks like, what the escort capability would look like in the region.
Well, that is, to me, kind of the key point, right? And that's what a lot of people keep pointing to. Should Iran keep control, essentially, over the Strait of Hormuz, it makes them a superpower of sorts, for that a lot of people are saying. It gives them a lot of financial clout with respect to the tolls that they'd be collecting. And frankly, it gives them power over one of the most important waterways in the world. Is that palatable to the United States and, frankly, to the Gulf allies?
Yeah, I think for the U.S., for President Trump right now, it may be just based off of the situation he's in right now. For the Gulf states, I know that's not really what they're looking for at this point in time because of the power and influence that Iran could actually exert over this. When I see some of the comments that President Trump has talked about recently, right, it's, hey, this seems more like a NATO and an Asia problem. So him removing the U.S. from that situation says, hey, come buy toll-free oil from the United States, as you've heard him say over the last little bit. But on that geographic scale, if you're looking at geopolitically, a lot of the help for the Gulf states and how close the U.S. has gotten from them at this point in time, I think that they are still looking for the U.S. to play a role in either bringing down what that toll would look like, or that's going to be part of this ceasefire deal, part of the negotiations over the next 2 weeks.
Colonel Jumana Basachi was talking earlier this morning about how there have been reports of projectiles being shot from Iran. Unclear exactly how cohesive the IRGC is right now in agreeing to some sort of ceasefire. What do we know about that, and how fragile some sort of truce really is?
Yeah, I think one of the biggest pieces there is if you go back and you look at the Iran-Israel 12-day war, there were even after a peace deal was made during the end of that conflict, there were still skirmishes that took place. It was almost like everybody wanted to get their last shots in. There also, you have to look at, when you deal with Iran, is also some of the proxies, whether you're looking at Hezbollah playing a part of this, or it's IRGC that's not getting the message yet. There's a lot of pieces that are in that. I think the key there is going to be how much is actually being hit that would actually cause. There are going to be trigger points for the United States that they'll want to acknowledge and would potentially raise to an escalation. But if they think it's just a skirmish and something like that, they'll probably still hold back from re-engaging with Iran at the full-scale conflict they're doing now.
Colonel Sanders, what does this look like in 2 weeks? Is it going to be, a replay of brinkmanship or something different?
No, it's a great point, right? I look at it in terms of what does the 2 weeks for the United States military look like right now? And so if you're on the intelligence community side, you are going to be doing everything you can to confirm or deny battle damage assessment for what you've hit so far, as well as what is going on. So you're trying to pull in as much information as you can to make sure that, is Iran holding to what they're saying? Are there troop movements anywhere going on so that you can potentially provide some type of mitigation strategy? If you are a planner, you're putting together what that would look like if an agreement is not reached in those 2 weeks, so that you are prepared to jump directly back in with full-scale conflict as they did before. The maintainers are doing everything they can to maintain those aircraft, the flight lines, everything else like that. The only ones who might get a little bit of rest right now are the pilots, but they're still going to probably have overflight to make sure that we still have intelligence, surveillance, and reconnaissance during this time frame. So if it's all said and done, you're probably going to see a slow amount of withdrawal of U.S. forces. You know, I think with the third carrier group on the way, you might actually see the Ford head back while the Bush gets there from a carrier strike group perspective. But you're probably still going to see quite a bit of presence in that region, even if nothing is taking place, just to maintain situational awareness in the area, just in case.
Colonel, do you have a sense of how the alliances look right now? Who's lining up with who in terms of trying to pressure some sort of ongoing ceasefire that can last?
Yeah, I mean, I see Pakistan, Egypt, and Turkey pushing really hard right now to maintain that ceasefire. I know that when you look at UAE and Saudi Arabia, they were wanting us to continue to push. They were pushing for the United States to continue to push Iran further back militarily. From that perspective, you see a lot of that coming based off of the amount of Iranian strikes. We're mainly focused on UAE and Saudi Arabia, disproportionate compared to anywhere else. And a lot of that, I think, is due to some of the trade deals that we have with the United States, that those Gulf states did, as well as the military presence and the allowed access that the military has had in both Saudi Arabia and in UAE.
Colonel Wayne Sanders of Bloomberg Intelligence, thank you so much for being with us and all of your insights. Julian Emmanuel, I'm looking at this and thinking how much has changed, right? How different is the landscape that we're looking at, even if a ceasefire were to last? Is there anything fundamentally, other than oil prices being a bit higher than where they were to begin, that has materially shifted for you in terms of your base assumptions going forward?
Well, you've certainly degraded a great deal of Iran's capabilities, regardless of their ability to control the straits, either in the near or the medium term. And so from that perspective, one can argue that there is a change, which frankly, puts a cap on oil prices, but also because of the greater instability in general, also puts a much higher floor on oil prices. But I think the Colonel made a pretty good point here, is that there are so many moving pieces, and as you pointed out, so many shifting alliances, that it's very difficult to fathom how the next 2 weeks, let alone the next 2 months, unfold.
One market move that caught our attention this morning was the Chinese yuan, the renminbi. We're looking at right now the dollar at the weakest level versus the renminbi going back to 2023. It has completely taken out some of what we had seen at the February 27th deadline. You've seen the yuan strengthen significantly beyond that. And this comes at a time where people are talking about the petro-yuan, right? We had the petrodollar after 1974 and the Henry Kissinger Accord with Saudi Arabia. Now there is speculation that any kind of transfer of oil through the Strait of Hormuz will be transacted in the Chinese renminbi. How much does this type of speculation get your attention and make you actually think about where you're going to be investing and what the base currency is going to look like?
Well, again, from an investment point of view, we continue to be believers in the U.S. in terms of its capital markets and the risk-reward opportunities. But you have to acknowledge that, if nothing else, the decline in oil prices in the last 24 hours, because China is such a reliant importer, particularly on Middle Eastern oil, is significant and certainly a tailwind for China. And frankly, what it does is the reflection of the currency certainly gives Chairman Xi a much more robust jump-off point for the meeting that's going to happen with President Trump a month from now.
Yeah, on the flip side, there's also a question about verbal intervention and verbal diplomacy, and what we could hear later today from President Trump, what that could look like. Jordan Rochester over at Mizuho was saying that the hardest part of this war is not understanding energy logistics, but markets' reaction to White House messaging. What are you hoping to hear from the White House messaging that could potentially set this market more permanently at ease?
The concept of more permanently at ease certainly has much longer than a 2-week shelf life. Frankly, I think if we hear more of what we heard yesterday evening, that there is progress being made and there are negotiations ongoing, that's enough.
This morning, it is Whipsaw Wednesday with risk assets absolutely soaring. Coming up, we're going to be speaking with Amrita Sen of Energy Aspects, with oil plunging more than 10%, the most going back to 2020 amid the height of the pandemic. Plus, Yahira Anand with your morning movers, airline stocks soaring following news of a ceasefire. This is Bloomberg Surveillance.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
seeing a huge surge in risk assets after a ceasefire was announced less than 2 hours away from that 8 p.m. deadline yesterday, led really by some of the smaller companies as well as the technology companies. 3.7% gain on the Russell 2000 futures, NASDAQ futures up 3.5% in the bond space. A real bid into credit, into fixed income, a belief that maybe inflationary pressures will not force the Federal Reserve and other central banks to hike rates lower by about 6 basis points at the front end. 2-year yield 3.73%, 10-year 4.24%. And then, of course, all of this is being driven by oil prices. Oil plunging the most going back to 2022, with Brent and WTI both down more than 10%, almost 14% on Brent, 16% on crude. We are getting the beginning of earnings season, and this to me is going to be the key moment going forward. How much can companies adjust and adapt to a very tumultuous moment? How Delta Airlines is adapting and adjusting is leaving out full year guidance in their latest statement announcing earnings. They do beat expectations pretty much across the board, whether it's passenger revenue, whether it's earnings per share, also seeing profit of around $1 billion for the second quarter. But they talked about how they are trying to insulate their balance sheet from some of the increase in oil prices. Protective acts include meaningful cuts to capacity growth. They say that demand is still strong, though. This is the key point. And Julian Emanuel, who is with us for this hour, this is what everyone keeps going back to. The momentum heading into this, very strong.
Yeah, look, the economy was in a good place, which allowed the stock market to weather this disruption. And again, whether it is the economy now looking as if it won't be on a stagflationary path and back towards 2% or more GDP growth for the year, it's a reinforcement of earnings and ultimately the entire message that things are on reasonably solid footing.
And traders are hearing that message loud and clear, with Delta up 9% in pre-market trading. With more on that and many others, we are 3 hours away from the cash open, and Yahaira Anand has your morning movers. Yahaira.
Hi, Lisa. Great segue. A clear beneficiary of this ceasefire is the airline stocks, and they are all higher across the board and now higher now that Delta came out with good earnings. The hope now is that oil starts flowing through the Strait of Hormuz, easing some of those supply concerns that had sent jet fuel costs soaring. And of course, that is critical for the airlines since fuel is such a massive part of their costs. And as we're seeing oil pulling back sharply, we are seeing pressure being put on U.S. energy stocks. These names have been big winners during the conflict. Occidental up some 16% since the war began. Exxon up 10%. So this is a clear reversal we're seeing as that risk premium comes out and investors lock in those gains. And we end on tech stocks, another clear beneficiary of this ceasefire. They had been hit hard during this conflict with oil higher, inflation fears pushing rates higher, but the pressure is easing, so you are seeing this rotation back into the more growthier parts of the market. So names like Google up 4% in the pre-market. Lisa.
Thank you so much, Yahaira. On our radar this morning, the U.S. and Iran agreeing to a 2-week ceasefire, averting a major escalation just ahead of President Trump's deadline. Iran agreeing to reopen the Strait of Hormuz. President Trump saying the U.S. will help restart traffic through the waterway. The White House also saying that Israel agreed to the ceasefire. Israeli Prime Minister Benjamin Netanyahu disputing that, saying the temporary deal does not extend to Lebanon. And more than 800 vessels remain trapped in the Persian Gulf, according to the Wall Street Journal. Iran is telling ships anchored near the Strait of Hormuz they must have permission to cross or face being destroyed. And Julian, this is really the question. If you have 800 ships that are still waiting to get through, you have many others wondering whether they should begin their journey. How important is to see traffic actually begin to flow, and under what conditions?
No, we definitely want to see it, and I think traders across the world will have that app showing the traffic in real time. And you do want to see it. And when you think about all the sticking points and the complications of the next several weeks, control of the strait is far and away the biggest point.
Yeah, and how much is it going to be concentrated with oil or just all of the potential resources, right? I mean, how much do you see this trickling out to agriculture? How much do you see this trickling out to, the petrochemical space, especially in light of some of the damage that's already been done?
So, for instance, you started the show talking about how much the Kospi has rallied. Let us remember that helium which has been bottlenecked in the Strait, is an incredibly important input into chip manufacture.
Yeah, how much does South Korea and, frankly, the entirety of the complex need that helium? The Kospi up more than 5% this morning, so we're going to keep watching that. Meanwhile, oil, very much the asset class in focus, plunging by the most since 2020. Key questions still remaining on what's next for energy flows through the Middle East. Joining us now is Javier Blas of Bloomberg Opinion. Javier, I'm so glad to have you on the show. What's your sense of what's actually been agreed upon and how much potentially, should this stick, this fundamentally changes the oil trade?
Well, so far what we have seen is two statements with in parts are contradictory. President Trump said that he wanted a safe and unrestricted flow of all commodities through the Strait of Hormuz. The Iranian statement say, however, that it's going to be limited because of technical capabilities, but also that approval is going to be needed by his military. So those statements are contradictory in nature. The fact is that at this moment, and that's emphasis at this moment, very little is moving out of the Strait of Hormuz. The oil market has priced it as it was completely open and full. But I think that the sentiment from many oil traders is that over time, and I think that that's going to be in the next few hours, we will start to see some movement both in oil and gas flows, LNG flows from the Strait of Hormuz, and that's going to really alleviate tension. And we are still in a bad situation, but worst case scenario has completely been avoided, at least for now.
There is a feeling, though, that the backwardation in the oil curve is extreme, is at record levels. If you take a look at where spot Brent was trading just yesterday at over $140 a barrel versus the further out $70 or $80 that you see at the end of this year. Do you see that shifting, that backwardation is going to change as people reassess what the landscape looks like?
I think that backwardation is going to remain for a few more days into the market, that extreme backwardation. If a refinery is short of oil right now and it needs the barrels of oil, it's going to have to pay a big price to secure the oil. But if we start seeing some movement of oil, that some of those panic buying may recede, some of the refineries may be able to withhold a few more days when they hope that the oil is going to start flowing. So I think that the key question is the next 24 to 48 hours. If we see a meaningful movement of oil out of the Strait of Hormuz, that will be significant. Will oil tankers move into the Strait of Hormuz? That is a much bigger question because that really takes quite a lot of risk. Can you get a ship into the Strait of Hormuz, take the risk that maybe that ship gets trapped if the peace talks fail? Because to restart production in the Middle East, we need first the vessels to get out, but we also need new vessels to go in. And that second phase, I think, is going to take more than a few hours, and it probably will take a few days.
Javier Blas of Bloomberg Opinion, honored to have you on the show. Love to read your commentary, and hopefully we can catch up with you again soon. I'm Rita Sen of Energy Aspects, writing, even after Hormuz flows restart, most producers will need several months to restore production. Amrita Sen joins us now. Amrita, I would love to get your sense of just how much has changed given the truce that was announced last night.
I think I completely agree with what Javier said. If you read the statements, they're actually two quite different statements. We are hearing from refiners and lifters who are trying to kind of get a ship in. Firstly, the cost is prohibitive. You know, you're talking about more than $40 a barrel. Even if you can get insurance, there's a huge amount of confusion with regards to whether they need to pay the Iranians, how they're going to pay the Iranians, because payment to be made to the Iranians is not easy given the sanctions. The Iranians are actually sending out messages to vessels outside the strait saying that, you know, if you are actually going to pass the strait or if you're going to come in, you need our permission. So this is by no means a strait that's open for business, to be very clear. What I would say is that we are likely to see the ships that are within the strait right now, whether they're empty or whether they're loaded with crude and products. We've counted, our cargo tracking team counts about 250 vessels. Those over time could potentially move out with Iran's permission, but I don't think you'll see vessels moving in. And I think that's going to be the critical thing, unless you actually have a complete ceasefire, not just a 2-week one, but we know that hostilities have ended.
Amrita, when thinking about the growth versus inflation trade-off, I'm just wondering, have you seen any evidence of demand destruction in these last several weeks?
Great question, because, and you guys were just talking about the divergence between actual kind of physical prices and futures prices. The problem is everything is being reflected in the physical price, right? Dated Brent was trading above $140. Dubai traded back in a few weeks ago at $160 per barrel. And that's actually being reflected in products prices. If you look at diesel, if you look at jet fuel, they've been trading over $200 per barrel, even in the US. And yes, we have seen some demand destruction in parts of Asia, partly also because governments have stepped in and asked for rationing in advance, or as kind of the crisis has progressed. So we have definitely seen about 1 million barrels per day of reduction, mostly in jet fuel, also, given the flight cancellations in the Middle East, but also in like naphtha, LPG, so steam crackers, things or units that would actually make plastics effectively, right? So again, the challenge we have in this is that because this is hitting Asia first, it's a really long time lag before it hits the West, right? Whether it's the products itself, jet fuel, gasoline, diesel, or the end products, it's the clothes we're wearing or all the kind of plastic goods that we consume. And that's why there's so much complacency in the market. But yes, we have seen the demand destruction, and I don't think it's over yet.
Rita, how long is that lag time before maybe you're going to see ongoing higher oil prices and higher product prices, even if the ceasefire were to hold today?
Yeah, look, the damage in some ways has been done, right? We were all kind of talking about this big surplus in oil markets. Our surplus was definitely not as big as some of the U.S. investment banks out there, but still it was a big surplus. That's been wiped out now. All that Russian oil that was on water floating around, that's now gone. India's taken all of that. So for the oil market, we're pretty much starting from scratch, right? So we are going to be trading in a higher range. But more importantly to your question, that when do we see that impact? It's about a 2.5 month lag, because Asia would be buying the crude in March, that arrives in April, they process they make the products, and then they send it west. So the earliest the West is going to feel the real pinch is May, really into June. So we haven't seen the actual shortages being felt yet.
Amrita Sen of Energy Aspects, thank you so much for your insights. Interesting also that Delta saw second quarter fuel costs increasing more than $2 billion at the high end, highlighting how airlines are already pricing this in and adjusting capacity and prices as a result.
But amazing, look at that report. They beat on earnings. It's just a tribute to corporate America, whether you're an airline, a manufacturer, or a technology company's ability to generate, margin and under all sorts of circumstances.
And earnings season kicks off in earnest next week. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Donald Trump announcing a 2-week ceasefire last night. The deal is subject to Tehran reopening the Strait of Hormuz. The president is calling Iran's 10-point plan workable for negotiations and saying the U.S. will assist in allowing safe passage through the strait. The IMF is poised to cut its forecast for global growth as a result of the war in Iran. Managing Director Kristalina Georgieva says the conflict has triggered a negative supply shock. The new figures will be released at the IMF meeting in Washington next week. And Delta shares surging even more after earnings, up 12% in the pre-market. The airline reporting better than expected quarterly results. Meanwhile, due to the war, Delta now expecting to incur more than $2 billion in higher fuel costs through June. The carrier is sticking to its previous full-year profit forecast due to uncertainty. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, all eyes on energy.
So right now, my view on inflation is we're looking at an inflation rate for the year as a whole of something like 2.75%. But of course, it depends what happens with energy prices.
Lindsay Piegza of Stifel joins next as we talk about the potential bleed through to consumer prices. This is Bloomberg Surveillance. Good morning.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back as we assess a new landscape following the ceasefire agreement that was announced last night ahead of the 8 p.m. deadline. We're looking at stocks absolutely ripping, led by tech and small caps. Those shares both up about more than 3.5% in pre-market trading. S&P futures up 2.7%. It is all being driven by oil prices, oil plunging after people seeing a reprieve to potentially some of the pressures. You're seeing a 14.3% decline in Brent, a 16.4% on the near-term contract of crude. And we're continuing to get commentary from a number of different companies. We got Delta earnings. They beat across the line. However, they did not necessarily increase their full-year forecast and talked about a $2 billion hit to some of the increase in oil costs for the second quarter. Now Exxon coming out saying that they see a 6% hit to first quarter production versus the fourth quarter on the Mideast conflict. A real question here about the actual physical damage that has already been incurred by a number of different oil companies, both in the region and outside of the region that have assets there, given this has been going on for quite a while, Julian.
Yeah, look, and this just shows you that, for the most part, the oil companies trade more bullishly as the spot oil price rises. But at the end of the day, the operational difficulties that a company like that has, in some respects, are even more extreme than a company in another industry. And as a CEO, you've got to deal with this in various different ways.
But it also shows that the physical constraints are there. And potentially it's going to take time before this all gets worked through, both when it comes to the damage being done to oil facilities, as well as just the backlog, as Amrita Sen was talking about.
I think you measure the repair in terms of months or maybe even years, not days.
Which is a reason why people are trying to game out exactly what kind of inflationary read-through there is, especially if there isn't necessarily the same hit to growth. Under surveillance this morning, all eyes on energy.
I expect headline inflation to actually be elevated, in the middle of this year. Right now, my view on inflation is we're looking at an inflation rate for the year as a whole of something like 2.75%. But of course, it depends what happens with energy prices. I think this monetary policy is exactly where it needs to be, and then we can respond if the situation changes.
Here's the latest. Plunging oil prices adding to bets the Fed could still cut rates later this year. Pressures from the energy shock remaining despite crude falling below triple digits. Lindsay Piegza of Stifel writing, the domestic economy is not strong enough to perpetually withstand elevated energy prices. Lindsay joins us now. Lindsay, what are 24 hours? What do you make now of the inflationary pressures? Should the ceasefire potentially hold?
Well, that's the big question. There's still a number of unknowns when we're talking about the impact of higher energy prices, whether or not the ceasefire does hold, whether or not we see the Strait of Hormuz reopen in its entirety. But what we know is that the faster the oil markets are able to normalize, this will mitigate the prolonged impact of elevated energy prices, filtering out into not just the domestic economy, but of course the global economy. But it all hinges on whether or not we see energy markets return to a more normal functionality.
There is a feeling, Lindsay, that there still is going to be an inflationary read-through, especially because there's a lag time before some of the products from around the world make their way to consumers. Diesel prices still incredibly elevated relative to where they were, say, 6 months ago. At what point are we looking at either a permanently higher inflation rate that the Fed just accepts, or potentially a Fed that is not willing to ease rates, even in the face of some evolving slack in the labor market?
Well, the conditions were already going to prove very difficult for the Fed to talk about any additional accommodation unless we saw a material deterioration in labor market conditions or a market deceleration in inflation. Now you layer on the risk of this global, potentially prolonged global energy price shock, and this simply reaffirms the position of the Fed on the sideline for a prolonged period of time. Now, as you mentioned, there is a sizable lag in terms of oil filtering through to not just gas prices, but the broader economy. So we will continue to see upward pressure in inflation in the coming months, again, which will reiterate the Fed's need to remain on the sideline. But the Fed is very unlikely to react to higher energy prices if there's any whiff of a temporary or transitory nature of these pressures. Remember, this is a committee that has been tolerant of above trend, above target inflation for years. And so this time around will be very similar to that, to the Fed not necessarily even opening the door to a serious conversation about reversing course, but again, simply solidifying the Fed on the sidelines, sitting on its hands until we hopefully do see some reprieve from a more normalized energy market.
So when you look at the next 12 months, Lindsay, which is the bigger risk right now based on the oil price spike, growth or inflation?
Oh, right now it's inflation. Because remember, the domestic economy is starting from a position of relative strength. We did have a relatively solid growth profile, a relatively resilient consumer, still positive investment flows, gains in productivity as a result of this massive expansion and adoption of technology. So the U.S. economy was relatively well positioned to withstand at least a temporary shock, but the starting point from inflation was already elevated. We were already materially above the Fed's 2% target, as we have been for years. And so not only does this speak to the notion that the Fed stopped short of a sufficiently restrictive level of policy the first time around, but it does leave the Fed in a position to increasingly focus on elevated prices, that side of the dual mandate, as we do continue to enter this unknown period of higher inflation.
Just quickly, Lindsay, how important is CPI for you and frankly for the Fed coming out on Friday?
It's unusual that the CPI report will take precedence over the PCE, the Fed's preferred measure of inflation, but that is the February report. The CPI on Friday will give us the first look at how these higher energy prices are seeping out into the broader economy via transportation, via food, via the manufacturing component. And so this will be a significant read. If we do see that headline jump over 1% on a monthly basis, ticking higher to a 3.5%, 3.7%. This is going to be a significant wake-up call for the Fed. And again, reiterate the fact that the Fed will be on the sideline for a prolonged period of time.
Lindsay Peiggs of Stifel, thank you so much for that. Julian Emmanuel, it seems like people came into the year saying the Fed was going to cut rates by a couple of times. Now people are looking at this and saying, given the fact the U.S. can weather all of this and talking about how strong those earnings are, could we be at neutral right now?
Potentially. That's not our base case. We still think there will be one, perhaps two rate cuts to the end of the year. The one thing we do know, and we have thought all along, is that the concept of the Fed hiking in 2026 was, is, and will be preposterous.
Taking a step back, what does it do to markets, the deepest, most liquid markets, and people's confidence in them, If everything can change on a dime, we were talking about how reminiscent this moment is to what we saw last year at almost the exact same time with Liberation Day and then some sort of pivot point. How much does that undermine confidence?
Well, and again, this is a unique time we're living in. Multiples are elevated because liquidity, by and large, has been very high, and technology, the promise of AI is there. Productivity has been increasing, but along with that, because so much is dependent on policy in the short term, volatility is higher. We have to learn to live with it.
Julian Emanuel, thank you so much for spending the morning with us. Always wonderful to have you on the show as we look at markets that are absolutely ripping after a ceasefire was announced heading into the 8 p.m. deadline last night, led by small caps, led by the Kospi, led by European equities seeing one of their best days going back to 2022 with oil prices plunging the most since the height of the 2020 pandemic. Coming up next, Alex Altman of Barclays, Seth Jones of CSIS, Scott Modell of Rapidin Energy, and Earl Davis of BMO. You're watching Bloomberg Surveillance. Good morning.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This
this is a big hit to consumers and households and businesses.
We're seeing the risks manifest themselves on both sides.
Inflation is fundamental for a more optimistic macroeconomic outlook.
The risk is that inflation expectations begin to unwind.
We do not see March core inflation being all that much higher than it was in February.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, live from New York. Welcome to the second hour of Bloomberg Surveillance. A two-week ceasefire propping up risk assets around the world with many questions remaining. Sending oil prices tumbling the most since the pandemic. Iran saying traffic can go through the Strait of Hormuz with some key caveats. Analysts searching for the details of the agreement to understand how quickly shipping can resume. Right now, markets are not waiting for anything. There is a complete rally rip-roaring across the world, which you see in the U.S. You see futures inflecting upward, led by the small caps, led by the big tech names. 3.4% gain on NASDAQ futures, 3.6% gain on the Russell 2000. When you take a look at the rest of the world, it's an even bigger rally, especially in some of the areas that have been most volatile. The Kospi now up almost 7% on the day after being beaten up in the wake of fears around Southeast Asia and Asia more particularly tied to oil prices. The Nikkei up more than 5%. The DAX up almost 5% for one of the biggest days that we've seen going back to 2022. In the bond space, a real bid in, possibly inflation will not put a rate hike back on the table. And across the board, particularly the front end around the world, you are seeing yields tumble. 3.73% down 5 basis points on the 2-year. Over in the UK and over in Germany, yields down more than 20 basis points at the front end. And all of this tied to oil prices. When you take a look at crude, WTI at Brent tumbling more than 10%, down 13.9% for Brent, down 13% for WTI, after expecting maybe a reprieve to some of the violence as well as some of the blockages for a lot of the oil tankers. We have an incredible hour coming up. Alex Altman of Barclays is going to be joining us for the full hour, which is a wonderful thing. With that relief rally sweeping through global markets, he's feeling incredibly vindicated. Seth Jones of CSIS with Iran delivering a 10-point plan to end the war. And Rapidan Energy Group CEO Scott Modell as crude prices drop back below $100 a barrel. We begin this hour with our top stories. Stocks surging following the announcement of a 2-week ceasefire between the U.S. and Iran. Bloomberg's Jumana Versace joins us now from Dubai. Jumana, what do we know about this agreement and how quickly traffic can get back going through the strait?
Yeah, well, it's a bit of a turnaround in sentiment from where we were about 24 hours ago, Lisa. And yesterday we were reporting that there were perhaps little chances of a diplomatic breakthrough. But indeed, in the early hours of this morning, exactly 90 minutes before his deadline, President Trump announced that they had agreed to a 2-week ceasefire that was shortly followed up by a post by the Iranian foreign minister as well, saying that they too had agreed to a temporary ceasefire. But, and this is key, in Kuwait as well, the Iranian state media saying at around 10 a.m. local time, their refinery got targeted too. So again, some question marks about whether all sides are holding up their side of the deal here. Whether for a more sustainable cessation of hostilities is a big question that's still hanging over the region. But for now, relief that we've avoided the worst case scenario.
Jumana Versace, thank you so much, as always, for that. Joining us now, I am so pleased to say, is Global Head of Equities Tactical Strategies at Barclays, Alex Altman, here in the studio. Alex, wonderful to see you. Thank you for being here.
Thank you.
So you wrote a quote that I want to read in your recent research. It has been said that knowledge is to know that a tomato is a fruit, but wisdom is to know that a tomato does not go in a fruit salad. How does that relate to the moment that we're in?
It's actually a quote from a journalist in the 1950s in the UK, so I wish I could say it was mine, but I'm now adopting it as mine. Why does it relate to today? It relates to today because over the past month, we've had a huge amount of knowledge thrown at the market for an event which I would say people weren't necessarily experts on. And even if they were experts on Middle East geopolitics, they weren't necessarily an expert on Donald Trump. And so you had this sort of X factor when trying to navigate that. And the point being is that for all of that knowledge, did they necessarily have the wisdom to understand how this negotiation process was actually unfolding behind the scenes because of the brouhaha coming from both the administration and also from the Iranian side? And I think that actually the demonstration by what's happening in back doors from Pakistan,
China is a clear illustration that actually a lot of people had a lot of knowledge, but they're not sure they necessarily had that much wisdom.
So you've been buying, you were bullish and constructive on equities ahead of this, believing that there would be some sort of resolution, that things wouldn't get to the most extreme levels, and that, frankly, oil prices would eventually go down. How do you feel today, looking at how much assets have rallied, looking at how much oil prices have come down, and deciding whether it's worth it now or whether kind of all of that has been given up in terms of a premium?
So let's look at risk assets first, right? Which is, this has been going on for a month. I mean, really, we started talking about Iran right at the end of January. That's when it sort of all kicked off, and then obviously the war actually commenced at the end of February. So because this has been going on for a while, it's very hard to believe that we're going to unwind the risk reduction process that's been going on for a month in the span of a day. So we look at a lot of positioning metrics. All of them are kind of pointing to the same thing, which is hedge fund discretionary net exposures dropped dramatically. Vol control and CTA exposures across major US indices and global indices reduced, not only just to reduce length, but got short. And we know for a fact that sentiment got pretty bombed out. I mean, there was a lot of doomers and panickers and individuals on social media that were and still doubling down today, saying the ceasefire won't hold. So the point being, from a risk asset perspective, is that our perspective is this can really overshoot to the upside. And remember, also, earnings revisions have been positive. There's something that Venu's team in research have been basically talking about, and credit to them. You know, they upgraded their S&P forecast in Barclays research all the way through this because the earnings revisions have been positive. So right now, the S&P is still only trading on a lower multiple today than it was in May of last year in the wake of the resolution around Liberation Day. And so the room for us to move further to the top side, even with a precarious ceasefire, I think is still quite...
There are a lot of moving pieces here, and I would love to dive in. So on one hand, you're talking about earnings. A lot of that is concentrated in the United States in particular. We just got Delta, a robust backdrop, beating on earnings, even with the potential overhang of higher oil prices. We do see this pretty much across the board, and earnings will kick off in earnest next week. What about, say, in Asia, where you're seeing that pullback, that you saw that huge pullback in Southeast Asia, and now that rip over in South Korea? What about in Germany, in Europe, which has been completely avoided by so many people during the entirety of this conflict?
Yes, look, I think that there's a natural reflexive appetite to go back into global equities. Remember, that was the story for all of January and most of February as well. I think the challenge is today, and kind of tying into your question about where oil prices go, we're probably going to expect a slower normalization of oil prices. Just naturally, there's going to be frictions in the Straits of Hormuz. And also, let's not forget, you know, one of the reasons why we've been so bullish on commodities, energy included, is because it's kind of every man for himself now. We need strategic reserves of not just energy, but also for all commodities now. So if that applies to like creating more demand and more strategic reserve rebuilding, and there's a higher price tag for oil and energy products, then for net energy import regions, which is, of course, Asia, which is, of course, Europe, then it's going to be more of a challenge in terms of the earnings trajectory for those regions.
Meanwhile, we saw this morning, Exxon says that it's seeing 6% of its worldwide output shut as a result of the Mideast conflict. There will be the rebuilds that will be required on the heels of this. Does that make you even more bullish on some of the energy-related assets in equity markets, particularly in areas like the United States, or say even in the Middle East?
I think we've got to work off the starting point, which is energy has been the best performing sector year to date by a dramatic margin, as you would expect. And so there's been some momentum chasing in there. It's basically been one of the only portfolio hedges that actually that has worked over the past few months. We should expect some near-term give back, but that's going to rotate back into other part of the commodity complex that uses energy as an input cost for producing aluminium, for producing copper, and so on and so forth. So I would expect those base metals and the like to actually be the real commodity driver as a reflexive move back up at the expense of energy. But I think ultimately the trajectory for all of the commodity complex is actually going to be higher thematically.
Has anything changed from February 27th to today? Even if, say, the ceasefire does hold, can we go back to where we were on February 27th when it comes to both oil prices and when it comes to also this expectation of where risk could come from, given headline volatility that has been extreme?
I think we have to acknowledge something has changed, right? And one of the things is there's going to be a lingering perception of the reduction in US hegemony, right? And so the fragmenting of the global world order, is that really necessarily new? It's something that maybe has been going on for a little bit of a while. So that there is that. From a markets-related perspective, we've got to probably accept that the price deck of oil is higher than it was at least near term. And the normalization process just mechanically would take a while. We lost some production because of attacks. The Straits of Hormuz are not fully open. We don't have full shipments going through there, but we do have countermeasures, of course. We have the East-West pipeline, we've got the Fujairah pipeline. We've got things that can at least mitigate us near term. So I think ultimately we don't know, and I think other commentators have said this, we don't know the full effect of the earnings hit, so we have to acknowledge that. Probably in a reduction, or I don't think we're going to go back to 22 times S&P forward earnings. But for example, we could comfortably go back to say 20.5, 21 times, still putting in a discount, and that's still going to get us back to all-time highs.
Alex Altman, you're going to be sticking with us for the entire hour, which is a wonderful thing. Right now, let's head over and get an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Donald Trump announcing a 2-week ceasefire subject to Tehran reopening the Strait of Hormuz. The president is calling Iran's 10-point plan workable for negotiations and says the U.S. will assist in allowing safe passage through the Strait of Hormuz. Ecuador's President Daniel Noboa says he would welcome U.S. troops to help confront the security crisis in his nation. Speaking to our own Anne-Marie Horder, Noboa said, quote, "It's international collaboration against crime and a U.S. troop deployment could happen as early as this year." And Intel announcing it's joining Elon Musk's effort to develop semiconductors for Tesla, SpaceX, and xAI. Intel will help the so-called Terafab project refactor the technology in a chip factory, which typically helps make semiconductors more powerful or reliable. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, a last-ditch deal.
All I can tell you is they're begging to make a deal. If there is no deal, we are going to hit each and every one of their electric generating plants. We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil.
Seth Jones of CSIS joining next. This is Bloomberg Surveillance. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Seeing a rip-roaring rally in risk assets this morning after yesterday's ceasefire announcement, led by equities most notably in Asia and Europe. Here in the U.S., S&P futures a little bit less excited, 2.7% gain, still a remarkable bounce after some of the pessimism in markets. Two-year yields over in Germany, over in the U.K., absolutely tumbling down 23 basis points in Germany with 2.49%, an expectation that maybe central banks will not have to hike rates, and that is particularly relevant in the European region. Two-year yields in the U.S. down 6 basis points, and crude tumbling 14% decline on Brent to $93.98. Right now, we want to head over to this idea of what has actually transpired, given the fact that we have gotten this ceasefire under surveillance this morning, a last-ditch deal.
We want to knock out every single thing they have. Now, it's possible that we'll make a deal before that. All I can tell you is they're begging to make a deal. So let's see what happens. If there is no deal, we are going to hit each and every one of their electric generating plants very hard. We have to have a deal that's acceptable to me.
Here's the latest. The U.S. and Iran agreeing to a 2-week ceasefire, with Tehran vowing to reopen the Strait of Hormuz. Bloomberg's Tyler Kendall joins us now. Tyler, we're expecting a press conference at 8 a.m. Eastern in about an hour or 45 minutes time. What kind of positioning will the administration say in terms of how this deal was reached and what's ahead?
Hey, Lisa, good morning. Well, we're really expecting the administration to tout tactical successes of the military operation so far, considering that there are still some big lingering questions about what exactly is going to transpire when we see, if and when we see, a longer-term agreement. Because President Trump is pulling back his threats, at least for now, but we heard from the Vice President, J.D. Vance, earlier today, who's set to lead the new round of negotiations, calling this truce, quote, fragile. Still, the VP does maintain that the U.S. has obtained its full military objectives amid questions about whether or not some of those top U.S. demands, including limits on Iran's ballistic and nuclear missile programs, will be included in a longer-term deal. Because, of course, all of this is contingent on the reopening of the Strait of Hormuz. But as Iran continues to signal intent to influence the waterway, that really could complicate the bid for a longer-term agreement. Because President Trump has said himself that he has agreed to negotiate on the basis of Iran's top 10 demands. But it's our understanding that many of those demands are unlikely terms for the U.S. and Israel to agree to, including assurances that there would be no more attacks on Iran and that Iran could have sovereignty over the strait. Now, President Trump himself says that the U.S. will help ensure traffic through the waterway. He said in a post that the U.S. would be, quote, hanging around amid a more than 800 ship backlog. But we really know that President Trump wants to see allies help when it comes to the waterway. We did hear from the French President Macron earlier today, who previewed we could expect about a 15-country coalition to deploy what he is calling a strictly defensive mission in coordination with Iran when it comes to the Strait of Hormuz. Lisa, I will quickly point out that NATO Secretary General Mark Rutte will be at the White House today. I would expect to hear a lot of rhetoric out of the White House about putting some more pressure on our allies as the ceasefire takes hold.
Bloomberg's Tyler Kendall, thank you so much for the update. Joining us now is someone who's worked in the Defense Department, who's worked with military forces in the U.S., has extensive experience in this entire region. Seth Jones of CSIS. Seth, thank you so much for being with us. I want to start with your response to the ceasefire, how realistic you see it holding for after that 2-week and even the entire 2-week period.
Well, look, I think it's helpful that there have been negotiations between the U.S. and the Iranians. I think it's helpful that, and a step forward, that we are at a ceasefire. I just think even in talking to Israeli officials recently, I think they do not expect the Iranians or Iranian partner forces to abide by any deal over the medium to long term. There were already sirens going off in Tel Aviv last night for potential incoming Iranian rockets. So I do have low expectations that this is going to stick over the next 2 weeks.
So what do you think has actually been accomplished, Seth?
Well, it's hard to say. I mean, when I look at the 10-point plan that the Iranians have put together, most of those, or at least many of the points, are completely unacceptable for the U.S. over the long run. They are the withdrawal of all U.S. forces, particularly combat forces from the region, Iranian control of the strait, and a number of other things, allowing Iran to have missiles and drone programs, and then compensation for the damage that Iran has incurred over the past several weeks of the conflict. I mean, I don't think there's no realistic expectation that the U.S. is going to provide compensation, probably or Gulf states along those lines. I think there's a lot to hammer out.
Seth, on that point, in terms of a lot to hammer out, realistically, what do you think could be achieved from that 10-point plan? What do you think are the lowest hurdles to beat here?
Well, I think the lowest hurdles would be some kind of a joint arrangement involving countries in the region, particularly ones that are on the Strait of Hormuz, that share any tolls that are charged to commercial ships going through the region, and potentially also some security of commercial vessels that go through the region. So it's not all on the U.S.'s shoulders, but it'll hinge on really how much trust any of these countries, including the U.S., have that the Iranians won't fire on commercial vessels, and I think we'll have to see.
And then you obviously talk about this toll booth not being a realistic prospect. Could you talk a little bit about what's on the sanction relief side, or also the offshore frozen funds as well, which could maybe provide some compensation in lieu of that toll booth instead?
Yeah, I mean, it's possible that there could be some sanctions relief for Iran. I mean, the challenge is that both the current Trump administration and even the Biden administration had pretty tough sanctions against Iran. I find it unlikely that the vast majority of those sanctions are going to be relieved with the prospect of Iran continuing to have a range of partner forces and pretty significant capabilities. But there could be some sanctions relief that comes with any kind of a longer-term deal.
Seth, do you have a sense of how closely aligned the U.S. is with the GCC, with Saudi Arabia and United Arab Emirates and Qatar and the other nations in the region?
Well, I think they are aligned in some ways. I think that one challenge right now is some Gulf states appear to have openly called for the end of the regime in Iran. That does not look like it's going to take place. The Supreme Leader's son is in power at the moment. The regime is largely the Islamic Revolutionary Guard is still in place. But I do think there is a joint view to get the Strait open. I mean, I think it's the single most important issue I think that the U.S. shares. It's a common interest between the Gulf states and the U.S.
Is there a sense of what it's going to take, Seth, in terms of have we actually taken ground troops off the table? Have we actually taken a further, more aggressive stance in the region and put that aside for the time being?
I don't think we've taken the prospect of using either ground or naval forces completely off the table. They're still in the region. The U.S. has naval ships that could be used. The U.S. also has ground forces that could be used, whether it's to take islands in and around the Strait of Hormuz or on the shoreline of Iran. So I think if the U.S. wants to escalate, if it does not feel that Iran is abiding by any kind of a deal, it could use those forces, either naval or ground, as a backup. I mean, the problem is it'd be risky. You do risk naval forces getting shot at with anti-ship cruise missiles coming from Iran. So there are some risks involved.
Seth Jones of CSIS, thank you so much for being with us this morning. We are getting a Truth Social post from President Trump as we parse through the market moves, talking about what has been agreed on and what hasn't been agreed on. He's saying the United States will work closely with Iran, which we have determined has gone through what will be a very productive regime change. There will be no enrichment of uranium, and the United States will, working with Iran, dig up and remove all of the deeply buried nuclear dust. It is now and has been under very exacting satellite surveillance. Nothing has been touched from the date of the attack, going on and saying many of the 15 points have already been agreed to. This, to me, Alex, is a real key question here, and you raised this as well, talking about potentially tariff and sanctions relief with Iran. That seems plausible. Enriching of uranium, not so much.
Yeah, I think that this has definitely been a red line for the administration and, of course, for Israel as well. It's just that there's no enrichment at all. And, you know, the 3.7% enrichment grade, which is for civilian use, versus the 60% highly enriched stuff, which is sitting somewhere under a pile of rubble, allegedly. Yeah, that's just going to be untenable for the Western world and certainly for Israel. So, you know, I think that actually putting that on the table right away and just making that the red line, I think is important not to lose sight for the market.
Well, meanwhile, the market is cheering the idea of a ceasefire. Coming up, Rapid and Energy Group CEO Scott Modell, with oil seeing its biggest one-day drop going back to the pandemic. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
A sense of calm easing over markets, leading to a roaring rally. You're looking at S&P futures near session highs right now, up 2.8% after some of the gains that we've seen going back to, frankly, yesterday at the close after the 8 p.m. deadline. Meanwhile, the Kospi just closing up 6.9%, surging on the heels of some sort of ceasefire deal and a 5.2% gain on the DAX. Meanwhile, what you're seeing in oil prices is really driving everything. Crude WTI plunging more than 10%, 14% declines in both Brent and WTI. A real sense of calm. Now getting some more details from President Trump, putting out on Truth Social, saying that the U.S. is discussing sanctions and tariff relief with Iran and talking about some of that 15-point deal, some of the aspects of which have already been agreed upon. 2 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. The airlines were already up on ceasefire relief, but they are up even higher now after Delta reported earnings. The airline beating expectations with strong premium and loyalty demand, helping to cushion a more than $2 billion fuel hit it expects to incur through June due to the Iran conflict. But this idea that we will see a resolution to this conflict is helping to lift the entire sector, with United and American also up some 12%. Turning to the semiconductor and memory chip stocks, they are also rising. A bit of a relief rally here with the ceasefire bringing investors back into risk and back into this AI trade. And as tensions ease, that could also mean some relief for helium supply out of Qatar. That had been a big concern for the market since it is such a critical part of the chip making process. And we end on the miners, tracking the rise in gold and other precious metals, with gold pushing back around $4,800 an ounce after that ceasefire was announced. So you are seeing names like BHP up 6%, Rio Tinto up nearly 6%, and also Newmont Mining also up. Lisa?
Thank you so much, Yahira. On our radar this morning, as we look to that ceasefire, the U.S. and Iran agreeing to a 2-week ceasing in the fighting. President Donald Trump announcing the deal on social media, suspending all strikes in exchange for the, quote, complete and immediate reopening of the Strait of Hormuz. Pakistan emerging as a pivotal mediator between the U.S. and Iran. Following a public appeal from Prime Minister Shehbaz Sharif, Islamabad will now host high-level delegations from both the United States and Iran this Friday. And NATO chief Mark Rutte heading to the White House today for high-stakes talks with President Donald Trump. The visit coming as the president is threatening to withdraw from NATO due to allies refusing to back U.S. military strikes in Iran. Ongoing questions, Alex, as we look ahead to exactly how this will be resolved. One thing you've been really good about, though, even if you have the best intel on just how complicated the situation is, how global powers are rearranging, that has not influenced exactly how to make money in markets. Why has that been such the case so far this year and, frankly, for the past couple of years?
I think it's a very good question. I'm not sure it's necessarily an easy answer to unpack. My suspicion is that some of it is just naturally the forward nature looking of markets, so they're not necessarily always reacting to the here and now. For example, I think it was it last week or the week before, we had a huge spike in oil one day, and then the S&P was unchanged that day, and everyone was scratching their head. So that sensitivity is changing all the time. The second thing, which I think is really important, is just to think about how the growth in asset management, especially here in the US, hasn't necessarily been directional money. I mean, yes, you've got huge retail exposure and mutual funds and ETFs and whatnot, but actually a huge amount of growth has come from a multi-manager that's just gone from like a 350 billion AUM block to $1 trillion. Remember, that's unlevered, so leverage is orders of magnitude larger. And that's generally running quite risk neutral in terms of it's not necessarily just long stuff, it's long and it's short, running a lot of RV strategies, so that when positions get unwound, it's not necessarily impacting the market in the same way that it would have done when it's just a risk-off correlated one and everything goes up or down.
Which is a reason why people are watching the oil price move, seeing the move in equities and saying, at least in your opinion, things could go a lot higher because people are not positioned for a sustained decrease in some of the tensions globally, and there's a lot of money and liquidity in the system.
Yeah, I think if you've de-risked substantially, your point about liquidity is very valid. We've still got discussion points going on in the background that haven't been resolved, whether it's what's happening with the Fed, what's happening with AI disruption. Remember that? We were talking about that in January.
Don't forget.
We'd love to go back and talk about that and not have to talk about Iran anymore. And there's obviously negatives too, such as private credit, which is still lingering in the background. So yeah, there's a lot of other themes that people are going to have to sort of roll their sleeves up on again. But I think the bottom line is that Iran is just a huge sword of Damocles hanging over the market. Removing some of that just naturally just springs risk back.
Meanwhile, there is a sprinkling of risk still in the market. Another Truth Social post by President Trump saying that any country supplying military equipment, weapons to Iran will immediately be tariffed on any goods sold to the United States of America by 50%, effective immediately. Meanwhile, there are reports coming from Israel that the nation just carried out the largest attack yet on Hezbollah in Lebanon. So both of these things coming together, highlighting the risks that still do remain for the tentative ceasefire, as well as just how much a number of the nations are angling ahead of that. Oil, meanwhile, is still taking their cues from the ceasefire, trading back below $100 a barrel, seeing its biggest one-day drop since the pandemic. Bloomberg's Anthony DiPaolo joins us now. Anthony, thank you so much for being with us. What do we know about any of the ships in the Strait of Hormuz that have been marooned there? How many of them are getting through? What the discussions are like with the Iranian authorities?
Good morning. Yeah, well, so far, none to very few are getting through. We've been watching a few tankers that were linked to Iran or appear to be linked to Iran anyway, that were looking to pass through earlier this morning. There has been a trickle of vessels going through anyway that Iran has been letting through. But in terms of the major bulk of vessels there, that's cargo ships, oil tankers, tankers with refined products on them. Those are still in the Persian Gulf, blocked in behind the Strait of Hormuz, and they're not coming out. So we are watching closely to see what happens with that. But we're getting a lot of skepticism and a lot of question marks from the shippers and from the insurers there. They want more details. They want to know exactly what's going on. Remember, we have this ceasefire based on negotiating these points in these various plans, a 10-point plan, a 15-point plan. And what we're hearing today from the public statements, it seems like it depends on who you're hearing from, what plan they're working on in terms of the negotiation. So we're waiting to get really some clarity on how vessels can go through, what are the security assurances for them, and what are the financial terms? Do they need to pay? Who do they need to pay? How do they need to pay? So really waiting to see that before we see any meaningful movement go through. And that's what we're hearing from the traders, from the shippers. And we need to see that backlog cleared before we can see new oil production ramped up in the Gulf that will add new oil to the market.
Anthony DiPaolo, thank you so much for that from Dubai. Rapid Energy Group CEO Scott Modell writing, the two sides remain very far apart, barring a dramatic unilateral concession or an unlikely meeting in the middle. Expect a resumption of hostilities when the 2-week window closes. Scott joins us now. Scott, thank you so much for being with us. How do you treat the ceasefire, given your belief that it is likely to be short-lived?
Hi, good morning. Thank you. The ceasefire for us, I think it's very interesting. Our core view at this point is that it doesn't work and it reverses. I think Seth Jones said it very nicely. He laid out several of the reasons why we should be skeptical. The sides are extremely far apart. There really hasn't been an end to the fighting and the shooting. I think that's going to go on. I think the Iranians are very thrilled that President Trump has said you essentially have control over the Strait of Hormuz. And we're willing to use your 10-point plan as the basis, as a workable basis. I mean, they're overjoyed at that, but they just don't trust really what's coming from out of this White House. I think they're in a wait-and-see mode. When I take a step back and I think about how the market is looking at this, we were on the verge in mid-April of heading towards 120 or 130 or higher as paper and physical markets converged. I think we could easily get back to that because, again, as you said, in our belief, this is pretty tenuous.
Given the ceasefire that is agreed upon, at least tenuously right now, should it last, how high should oil prices remain just based on frictions that are ongoing both in the region and, frankly, the rebuild that needs to go on to some of the facilities in the area?
You know, I think if the ceasefire lasts and we start to see something that looks workable and we start to see something that resembles 20, 30, 40% of pre-conflict flows to the Strait of Hormuz, and we don't see a resumption of conflict, we don't see bombing here or there, whether it's in Israel or Bahrain, then I think you can sustain prices where they are. I think the market needs to see that for a while before we start to either go back to where we were before yesterday, or we start to say, hey, look, it looks like we can actually get a real deal and go even lower. But I think, it's very plausible to see us in this $90 to $100 range for a week or two, as long as we either don't tip over and this thing doesn't crash, or we get a deal. But I think it's very viable that we stay in this price range. But I do think a lot of questions that need to be answered before everybody can breathe a sigh of relief and say, now we can actually go back down much lower and where crude will sell off to a place where we will have very little geopolitical risk priced in. But we have a long way to go before we get to that place.
Scott, specifically just on Iraq, obviously there was a deal that was announced between Iran and Iraq before this tentative ceasefire was announced. Do you think that changes the calculus for oil prices at all? Because obviously Iraq was producing 3.5 million barrels, a real swing factor that's coming out of Hormuz.
I don't think it's a major. I don't think it's a major factor, but I do think it's important. Our understanding is that there still are fundamental problems in Iraq that will prevent some production from coming back. But it is a sign that Iran is cutting deals. I think the market steps back and says Iraq not being able to export would have been a very, very big problem. That they were able to strike a deal. I think one, it was very sensible and rational to see Iran coming together with a country like Iraq. They've worked long and they've worked together and they have a very close relationship. I think it gives some floor in terms of confidence building that Iran is somebody that can reach reasonable deals. But again, there are so many other things swirling around that offset that at this point.
Scott, is there any credence to the idea that any kind of toll paid through the Strait of Hormuz would be done in Chinese renminbi?
There is. I will say this, though, when I step back, and we've been looking at this for a long time, people will often ask us, this Chinese-Iranian partnership, is Iran in the, have they bought into the idea that they're about helping China replace the dollar with renminbi? And everything I've heard up until now is not really. They don't want to do that. If they have to, they'll take renminbi. They will go along with it. There is a real partnership there, but look, if they can get euros or dollars, they always prefer that. The Chinese-Iranian relationship, I have to say, there's more to it than meets the eye. It's not a clean strategic partnership, but rather there's distrust at the foundation of it. And I think the Iranians will do what they can to maintain control over the strait and balance their equities with China and others. But really, when it comes to dealing with China, they're very distrustful also. And I think they say, we don't want to go all in with China. China is a partner of convenience as they've been so severely under sanctions. But if Iran can actually break out and get to a place where President Trump is really easing sanctions, moving closer to a deal, I think you're going to see that partnership change. And I think you'll see more of a balancing act. But in the meantime, I think they will be happy to take Chinese renminbi as they have been for a very long time. But again, it's not the ideal scenario for them.
Scott Medell of Rapid Energy, the CEO, thank you so much for being with us. Alex, I was looking at the renminbi, and the dollar is the weakest versus the renminbi going back to March of 2023. We saw this huge rise in the renminbi strengthening versus other currencies. How tradable is that, this idea that China has a new face on the global stage and it's being represented in markets?
Well, I think that you have to sort of differentiate between China as a place on the world stage and then China as a capital market that you can invest in. And, as the second largest economy in the world, but actually as a representation of global capital markets is still a very small percentage. So I think that, from the geopolitical stuff, great dinner discussion. I think that from the market allocation, I think China is an interesting market. Let's be very clear, but to access it has always been not particularly straightforward. One of the things that we really like with our tactical strategies team out in Asia is actually just using surgical custom baskets within China to access very, very leading edge thematics such as robotics, AI infrastructure, software, and so on and so forth. It's the things that you just can't get through the typical index.
So it's not exactly a wholesale sea change necessarily from a market positioning standpoint, but a bit on the tactical side, which is what a lot of people have been pointing to. We'll continue that conversation right now. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Strikes have been reported across the Persian Gulf despite the announcement of a U.S.-Iran ceasefire deal. The UAE said it responded to a missile threat on Wednesday, and Kuwait saying it's been dealing with intense attacks from Iran throughout the day. Negotiations are still in place, scheduled for Friday in Pakistan, Iran confirming it will attend. Shares of Exxon are falling 5.8% in the pre-market after the energy giant said its global production fell by 6% in the first quarter due to the war. Half of the outages were concentrated at an LNG plant in Qatar that suffered damage. Still, Exxon expects first quarter gains of over $2 billion due to the spike in energy prices. And Moody's cutting the outlook on Blue Owl to negative after, quote, significantly higher than peer redemption requests in the first quarter. The move is part of ratings agency's broader revision of its outlook for private credit investment vehicles to negative. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Up next, reviving rate cut bets.
We actually think that the next move for the Fed is a cut rather than a hike. I would focus less on how bad the growth data is going to be and more about what the inflationary backdrop is.
Earl Davis of BMO joins next. This is Bloomberg Surveillance.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The rally continues as people look to a ceasefire that could potentially be durable. We are getting more details from President Trump throughout the morning, talking about all things having to do with a 15-point plan, most of which he says have been agreed upon. S&P futures at session highs, 2.8% gain, a bigger gain on the NASDAQ and Russell 2000, 3.5% and 4% gains, respectively, on futures. In the bond space, 2 years, 10 years, 30-year yields, all of them tumbling on the prospect that there might be less inflation and perhaps less of a reason for the Federal Reserve to have to cut rates, led by the front end of the yield curve, 3.72% in the United States, down 6 basis points, a significantly bigger move over in Europe. Under surveillance this morning, reviving rate cut bets.
We actually think that the next move for the Fed is a cut rather than a hike. I would focus less on how bad the growth data is going to be and more about what the inflationary backdrop is. Does this remain a supply-side driven inflation shock, or does it morph into something that is more sustainable?
Here's the latest. Falling oil prices pulling down Treasury yields. Traders betting easing energy prices can keep Fed rate cuts on track. Earl Davis of BMO writing, we expect the relief rally to last 7 to 10 days on pent-up demand, adding there will be a significant amount of new credit issuance, which should limit the extent of the risk on trades. Earl joins us now for more. Earl, thank you so much for being with us. What do you make of the knee-jerk move, particularly at the front of the yield curve in the United States and in Europe?
Good morning. We actually love it. It provides significant opportunity for an active manager and volatility. And our plan from the beginning of the year remains exactly the same in regards to yields. The 10-year range for 2025 was 390 to 480. 435 is the midpoint. We are better sellers below 435, which means we are in selling mode right now. And we're better buyers above 435, which meant we went long. During the war aspect. The interesting thing with the ceasefire is that it doesn't reduce market volatility, it actually increases it. And the reason why it increases it is because your range now is wider. Instead of trading within a 10-point range on duration, you're now within a 20-point range or 30-point range on a shorter term basis. So for us, we're better sellers here. We do believe we will see if not new highs, we will test new highs because driven by inflation and other aspects of the negotiation.
Earl, do you think that we're going to test new highs more significantly at the front end or the long end as people assess the inflationary push through to the economy and, frankly, a Fed that might be politically incentivized to keep rates lower rather than higher?
Yeah, that's a great question because I could foresee a parallel move. But if I were to bet on one of them, I'd say the long end, but not long end, 10-year yields. And the reason why I say that, the whole move in fixed income right now, like even towards the higher yields, call it 440 and stuff, was all real rate based. It wasn't break-even inflations. We never saw break-even inflation go above 245, where the previous high during COVID was 302. So we do believe the next wave of selling or to make a new high could be inflation driven, which means you have another 25 to 50 basis points of moves there, not real rate driven. So I would say 10 years because of it could be an inflation move, not a real rate or risk premium move.
What do you think about on the volatility side specifically? Obviously, rate vol has been a big driver for all of cross-asset volatility. So where do you think that's heading in the near term?
Yeah, that's a good question. I think rate vol right now for, let's call it the next week or 2 weeks, will subside a little bit. But overall, as I started our conversation with, volatility now increases. And the reason why it increases, the big driver will come back to inflation. It's not necessarily oil, but it was the secondary impacts of the Strait of Hormuz being closed, which is your plastics, your fertilizers. That comes into food, and we're going to be seeing that in the numbers coming forward in regards to your packaging of goods, your transportation of goods. That could be significant and sustainable. And even if there is a deal, that will not go back to where it was before. And that is the worrisome part. The market is not looking at that right now, and rightfully so, but we do believe that's going to be a big Q3 story, late Q2. So that's what we're looking out for, and that's what we'll be setting up our risk for.
Earl Davis of BMO, thank you so much for being with us. A lot of people looking to CPI on Friday, core PCE on Thursday, personal income and spending. But more importantly, perhaps inflation expectations, given that the Federal Reserve has said that they are going to respond to that. This morning, we've gotten a slew of messaging from the president, the latest coming from President Trump, saying that he is setting a 50% tariff on countries that are supplying arms to Iran, saying it is effective immediately. Alex Altman of Barclays, what's your takeaway from that, given the fact that the tariff lever is kind of coming into a picture and merging with the Iran war?
So what's really interesting about this, and I'm analyzing it real time as well as you, is that this is just Section 232, which is something which, that's just a bunch of number salads that was with part of all the tariffs that was going on. But if you remember, after the IEEPA Supreme Court throwout, it all went back to 122, 232, 301s, all these random numbers. But 232 was something that was actually used in President Trump's first term as well. And 232 is about national security. So this actually very much fits in that framework. It's already been used on aluminium. And so I think it's a direct strike at China once again as a point of negotiation and leverage ahead of the Trump-Xi meeting next month.
Where does this war, the conflict, the role of the U.S., the role of China, where does it leave the points of leverage going into this negotiation in person?
I think right now the main objective is to be calm between the two superpowers. I think there is effectively an agreed détente. The fact that the president is actually going to China to actually meet with President Xi is, it's a very big deal. And I think both sides ultimately are in a position where they want to maintain sort of this mutual respect near term, even if we can talk about longer term, there are more structural issues as the US and China decouple. One of the reasons why, as a team, we love the commodity theme is because of this US-China decoupling and that whole every man for himself. It started with US and China, and now I think it's morphing into other regions as well, Europe in particular.
Yeah, Alex Altman, thank you so much for being with us this morning. Truly a pleasure having you on a day that has been a complete whipsaw versus what we've seen in the prior couple of weeks. A huge risk rally, particularly in Asia and Europe. In the U.S., you are seeing that rally continue with big tech, with the Russell 2000 futures surging, yields significantly lower, and oil prices plunging the most since the pandemic. Coming up in the next hour, Emily Rowland, John Hancock, Tom Porcelli of Wells Fargo, Matt Dizak of Merrill and Bank of America Private Bank. This is Bloomberg Surveillance. Good morning.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Tune in Welcome to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The amount of downside has probably been less than anyone would have expected.
The market is being very calm about this whole situation.
The drawdowns in equities were not as great as you would expect.
The market is trying to understand what is likely to happen.
Right now, the market is expecting a soft off-ramp.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, live from New York. Welcome back to the third hour of Bloomberg Surveillance. A 2-week ceasefire propping up risk assets around the world with many questions remaining. Some of them, perhaps, will get answered with the Defense Department press conference about to begin any minute. Analysts searching for details to understand the agreement, to understand where the nodes of agreement are, and how quickly shipping can resume through the Strait of Hormuz. Right now in markets, you are seeing that rally continue to session highs, led by, frankly, European and Asian equities. In the United States, it's led by big tech and it's led by the small caps. You're seeing both of those up more than 3.5%. NASDAQ up about 3.5%, Russell 3.9%. Futures in the S&P up 2.8%. Around the world, the gains are significantly higher. The Kospi closing out at 6.9% after being beaten up on concerns about the ability of Asia to get fuel. The Nikkei up 5.4%. The DAX with its best day going back to 2022. European equities up 5.2%. Meanwhile, in the bond space, you're seeing an absolute rush into the front end of the yield curve. In the U.S., you're seeing a 7 basis point decline, 3.72% now on the 2-year. Around the world, the U.K. and the German bond yields down more than 20 basis points. And all of this hinged on this right here. Oil prices plunging the most going back to the pandemic, down about 15% on Brent, $92.21. On WTI, the June contract, $85 as people look to a potential for ships to start moving once again through the Strait of Hormuz. Coming up this hour, Emily Rowland of Manulife John Hancock Investments with that surging risk-on sentiment as a backdrop. Tom Porcelli of Wells Fargo with inflation concerns weighing on the Fed, and Matt Dizak of Merrill and Bank of America Private Bank on continuing U.S. resilience. Right now, we are awaiting the Defense Department press conference. It has not started yet. We are so happy, Emily, to have you in the office. Emily, how much are you looking at this risk-on rally as something that could potentially have legs?
I mean, investors have been trained to buy on these dips, and it's happened before conflicts have been resolved. All we have to look back to is a year ago in the height of Liberation Day, where there was this almost panic buying. We used to talk about panic selling for most of our careers, and now we're experiencing this environment where dip buyers are just absolutely ferocious coming into this market, and the risk of war escalating, oil prices staying elevated, were really never fully priced into markets to begin with. So I'm not overly surprised to see this risk on sentiment this morning.
And at what point do you lean into it? And at one point do you say, okay, we could take profits, sit back here and wait for the next shoe to drop?
We haven't made a lot of changes based on the geopolitical headlines. Clearly so easy to get whipsawed there. So we've continued to hold on to high quality assets here throughout the volatility, finding pockets of areas that have been trading at a discount. I'm excited for earnings season to start next week. We can finally talk about something else and bring the conversation back to the fundamentals. Analysts are penciling in 13% earnings growth for this quarter. Kind of a high bar, but we think that companies are going to be able to deliver to some extent on those expectations.
Heading into this, you were a bit more conservative. You were leaning into the debt markets. You were leaning away from some of the more cyclically exposed areas that could potentially get beaten up in some sort of inflationary shock or a stagflationary type of impulse. Do you still see that as the most likely outcome, even with that backdrop of earnings that we're seeing trickle out this morning from the likes of Delta?
Yeah, I mean, we still are positive on risk assets. The challenge is just the starting point. You know, analysts are penciling in, again, after this, it gets even harder, 18, 20% over the next couple of quarters. So the expectations are probably a little bit elevated, but we're still constructive.
Emily, we're going to continue this conversation in just a minute. We are seeing that briefing get started. The Pentagon providing an update to operations in the Middle East. Let's listen in.
Longer. Not on our watch. Other presidents marked time and kicked the can down the road. President Trump made history. From the strike that took out Qasem Soleimani, to tearing up the disastrous Obama-Iran deal, to the precision campaign that obliterated Iran's nuclear sites in Operation Midnight Hammer, to the decisive military victory we just achieved in Operation Epic Fury. No other president has shown the courage and resolve of this commander-in-chief. President Trump forged this moment. Iran begged for this ceasefire, and we all know it. As the President truth this morning, a big day for world peace. Iran wants it to happen. They've had enough. Operation Epic Fury was a historic and overwhelming victory on the battlefield. A capital V military victory. By any measure, Epic Fury decimated Iran's military and rendered it combat ineffective for years to come. You see, in less than 40 days, one of our combatant commands, Central Command, CENTCOM, using less than 10% of America's total combat power, dismantled one of the world's largest militaries. The world's leading state sponsor of terrorism proved utterly incapable of defending itself, its people, or its territory. We untied just a fraction of our strength, and Iran suffered a devastating military defeat. Together with our Israeli partners, America's military achieved every single objective, on plan, on schedule, exactly as laid out from day one. Iran's Navy is at the bottom of the sea, whether it's the Soleimani class, their frigate class, their prized drone aircraft carriers, submarines, mine layers, sunk. Iran's Air Force has been wiped out. Iran no longer has an air defense, any sort of a comprehensive air defense system. We own their skies. Their missile program is functionally destroyed. Launchers, production facilities, and existing stockpiles depleted and decimated. And almost completely ineffective. Iran shot hundreds and hundreds of missiles and one-way attack drones at our aircraft carrier. They were obsessed with it, and they never got even close. Every single one of those shots easily shot down miles and miles away from the Abe Lincoln. They were blowing ammo into Fantasyland. Contrast that with, most significantly, in last night's wave of more than 800 strikes, we finished completely destroying Iran's defense industrial base, a core pillar of our mission objective. What little they have left buried in bunkers is all they will have. They can still shoot, we know that. Their command and control is so decimated they can't really talk and coordinate, so they still may shoot here and there, but that would be very, very unwise. But they can no longer build missiles, build rockets, build launchers, or build UAVs. Their factories have been razed to the ground, set back in historic fashion. You see, had Iran refused our terms, the next targets would have been their power plants, their bridges, and oil and energy infrastructure. Targets they could not defend and could not realistically rebuild. It would have taken them decades, and we were locked and loaded. They couldn't defend against it. President Trump had the power to cripple Iran's entire economy in minutes, but he chose mercy. He spared those targets because Iran accepted the ceasefire under overwhelming pressure. The new Iranian regime understood that a deal was far better than the fate that awaited them. This new regime just happened to look at what happened to their predecessors. Their top leadership was systematically eliminated. The previous Iranian supreme leader, dead. The Supreme National Security Council Secretary, dead. The Supreme Leader Office Advisor, dead. The Supreme Leader Military Office Chief, dead. The Defense Minister, no longer with us. The IRGC Commander, dead. The Armed Forces General Staff Commander, dead. The Intelligence Minister, dead. The IRGC Navy Commander, no longer here. The IRGC Intel Chief, dead. I skipped over a bunch, and I could go on and on and on, to include the new, so-called new Supreme Leader wounded and disfigured. This new regime was out of options and out of time, so they cut a deal. They know this agreement means that they will never, ever possess a nuclear weapon. Under the terms, any nuclear material they should have will be removed. Any material, they should not have will be removed. Right now, their dust is deeply buried and watched 24/7 overhead. The president has been clear from the beginning, there will be no Iranian nuclear weapons. Period, full stop. Other presidents said it. President Trump did it. Operation Epic Fury. Less than 6 weeks, clear mission, decisive action, overwhelming firepower, America first, a historic battlefield victory. For decades, Iran killed Americans with roadside bombs in Iraq, using cowardly proxies to do their dirty work while they hid safely in Tehran. They struck our embassies with car bombs and attacked from the shadows, never daring to face us toe-to-toe. They thought they could bleed America with impunity. Well, they just learned the hard way what happens when you try to fight us directly. And even when they got lucky, one time in 40 days, and downed 2 of our pilots, they couldn't hold them. In a daring 14-hour rescue operation, 7 hours in daylight and 7 hours of night, both pilots were recovered safely. Not once, but twice. A daylight thunder run right up the middle of their country, boots on the ground. A midnight raid right up the middle of their country, boots on the ground. 0 American casualties. The Iranians humiliated and demoralized. We control their fate, not the other way around. That's why they came to the table. Iran's defeat is America's retribution for every American lost to Iranian terror, especially those brave troops killed by Iranian-made roadside bombs in Iraq that my generation knows so well, and for the suffering their regime has inflicted around the world. Now we have a chance at real peace and a real deal. The War Department, for now, has done its part. We stand ready in the background to ensure Iran upholds every reasonable term. And as everyone knows, nobody makes a better deal than President Trump. To the warriors of Epic Fury, I say well done. You're the backbone of our country. Your skill, your bravery, and sheer guts and grit showed the world what America is all about. I'm proud of you. We're proud of you. President is proud of you. Job well done. But stay vigilant and stay ready. To the families of our fallen, your sacrifice was in service of a historic cause, and we will always remember your heroes, our heroes. We will continue to honor them. And to our Israeli allies, thank you for being a brave, capable, and willing ally on this battlefield. The rest of the world and the rest of our so-called allies saw what real capabilities look like. They should take some notes. Our troops, our American warriors, deserve the credit for this day. But God deserves all the glory. Tens of thousands of sorties, refuelings, and strikes carried out under the protection of divine providence. A massive effort with miraculous protection. Dude 44 Bravo spoke for all of us. God is good. The chairman will now provide an even deeper military detail on the historic success of Operation Epic Fury. Mr. Chairman.
Thank you, Mr. Secretary, and good morning, ladies and gentlemen. Thanks for being here. I want to start this morning by honoring the 13 members of our American Joint Force who were killed in action thus far during this operation. Their sacrifice and that of their families is deeply important to us, and we are grateful for each of them, and will continue to mourn their loss. Their names and their bravery will never be forgotten. On February 28th, the President of the United States ordered the Joint Force to execute Operation Epic Fury with the direction to accomplish 3 distinct military objectives: destroy Iran's ballistic missile and drone capabilities, destroy the Iranian Navy, and destroy their defense industrial base to ensure that Iran cannot reconstitute the ability to project power outside their borders. Over the course of 38 days of major combat operation, the Joint Force achieved the military objectives as defined by the President. We welcome the ongoing ceasefire, and as the Secretary said, we hope that Iran chooses a lasting peace. But as Secretary Hegseth said, let us be clear, a ceasefire is a pause, and the Joint Force remains ready, if ordered or called upon, to resume combat operations with the same speed and precision as we've demonstrated over the last 38 days, and we hope that that is not the case. I want to congratulate and thank the leadership today at U.S. Central Command, including the Commander, Admiral Brad Cooper, the Deputy Commander, Lieutenant General Kevin Leahy, the Senior Enlisted Leader, Fleet Master Chief Compton, and every one of the component commanders, senior enlisted leaders, and especially the staff down at U.S. Central Command, who does not get called out for any of the credit, but grinds 24/7 to help offer the options that we bring to the Secretary and the President. I also want to highlight the forces in the United States European Command under the command of Alexis Grinkowicz, who protected the western flank in support of CENTCOM. And I want to thank our partners across the intelligence community. Our ability to see and understand what an adversary is doing help us to be as decisive as we must be on the battlefield. And that includes DIA, NSA, NGA, the CIA, and the National Reconnaissance Office, and others. I want to thank the other combatant commands who have thus far contributed along the way to U.S. Central Command. This includes Transcom, Stratcom, Spacecom, SOCOM, and Cybercom, all of whom poured all in support of CENTCOM's efforts. And I want to thank, as the Secretary did, our Gulf partners who fought alongside each and every one of us every day. From the Kingdom of Saudi Arabia, the UAE, Bahrain, Qatar, Kuwait, and Jordan, all who joined us together to defend and protect our people and our assets, and who, if required, stand ready to do so again. And I want to thank my team at the Joint Staff, who work literally around the clock in order to help me offer the options that I must with the associated risks to the Secretary and to the President. They are the hardest working people that I know, and I am deeply grateful for their service.
That was U.S. Defense Secretary Pete Hegseth and Chairman of the Joint Chiefs of Staff Air Force General Dan Kane speaking about what just transpired and having a lot of gratitude toward a lot of different players. The takeaway from this is one of completion or near completion, and the idea that there has been a ceasefire that has been agreed upon. This is the reason why you're seeing markets flying and the reason why they have stayed at session highs in the United States in pre-market trading across the board. Joining us now for more insight is Bloomberg's Tyler Kendall. Tyler, seemed like something, not necessarily of a victory lap, but it seemed like a real sense of completion.
Well, Lisa, to your point, in this Pentagon update, Secretary Pete Hegseth said that the U.S. has achieved every single military objective, citing tactical successes in degrading Iran's military capabilities and their defense industrial base. He did go on to say, though, that Iran may still, quote, shoot here and there, but that would be unwise as a ceasefire takes hold. The officials were putting a finer point on that post that we got from President Trump earlier on Truth Social, outlining that a potential longer-term agreement with Iran would include, 1, no enrichment of uranium, and 2, that the U.S. will work with Iran to remove already enriched material. We heard both of these officials saying that Iran will not be allowed to have nuclear capabilities going forward. Now, Hegseth says that there is a, quote, real chance for a real deal and real peace, but that the military remains ready to resume operations if needed. Of course, we had heard from Vice President J.D. Vance, who is now leading the next round of negotiations, calling the truce earlier today, quote, fragile. Lisa, we are still gleaning details on exactly what these negotiators will ultimately agree to. As you well know, it all depends on securing the Strait of Hormuz. But President Trump did float earlier today that the U.S. is willing to talk about tariff and sanctions relief with Iran if an agreement is reached.
Tariff and sanction relief for Iran. Also, though, talking on a Truth Social post about potentially putting a 50% tariff effective immediately on anyone who sells weaponry to Iran. What do we know, Tyler, about that?
Well, at this point, Lisa, it's unclear exactly which authority the administration would use in order to implement such a tariff regime, considering that the Supreme Court had already struck down President Trump's broad-based emergency powers under the International Emergency Economic Powers Act. Though, of course, we do know that there are other tools in the toolkit, as this is the administration likes to say, including those related to national security. We have reached out to the U.S. Trade Representative's office to get more details on whether or not anything is truly locked and loaded that could actually put those tariffs into effect. But it really felt like a message geared towards Russia and China, considering we know that they are at this point the largest backers when it comes to weapon supplies. And Lisa, we can say that there was reporting overnight from the AFP saying that President Trump feels that China actually was a huge player in getting Iran to the negotiating table for this ceasefire. Of course, President Trump is gearing up for his trip to Beijing next month, and perhaps this could be part of some of that leverage, as we know that China played a pretty big role when it came to any potential ramifications from this conflict, since most of the oil that goes through the Strait of Hormuz heads towards Beijing.
Tyler Kendall, thank you so much for that. We're looking at markets that are surging on the hope of a ceasefire taking hold. Emily Rowland here with us of Manulife John Hancock Investments. Emily, how much are you looking at a scenario that truly is a parallel to what we saw about a year ago with Liberation Day and then the de-escalation almost around this exact same time last year?
Yeah, I mean, that's certainly what markets are telling us. And, you know, markets never fully priced this in, as we talked about earlier. The idea was that the U.S. was the only part of the world that was going to be impacted by this. If you think about cross-asset performance coming into today, Japanese equities up 7%. They are a massive importer of oil. Emerging market equities up 4%. U.S. small cap value stocks were up 7%. Year to date, high yield bond spreads barely moved. We got up to about 330 basis points, back down to 3%. And meanwhile, you saw these kind of momentum darlings of the past year really surging the most this morning, whether it was the euro, European stocks, the Kospi, just remarkable. The DAX, as you mentioned earlier, seeing one of its best one-day gains. So we're just sort of back to the narrative, really, of the last 12 months since the market bottomed in the wake of Liberation Day.
What's a haven in this kind of market, given myriad different types of shocks that could be coming down the pike?
Yeah, it's amazing. And I think we learned a lot of lessons about what is a haven in the periods or the days over the last 6 weeks where we did see downside volatility. So we saw that the U.S. dollar was the two things that worked were basically the dollar and energy stocks. What didn't work, surprisingly, were things like gold. We've had a lot of discussions with investors about whether you can consider gold a safe haven or a diversifier against geopolitical risk, and recent history is telling us that maybe not so much. So some pretty interesting cross-asset dynamics playing out here. We suggested that we would look at any backup in rates as sort of a gift to lean into the income that's available in high-quality bonds, and we're certainly seeing that pay off this morning.
Do you think, though, that that has legs, particularly at longer durations, simply because we're looking at a global backdrop where every nation is trying to build up their supply chains, their domestic reliance, their infrastructure, and they're going to have to spend money? How much does that act as a overhang, as a potential counterbalance to some of the otherwise bullish sentiment that we're coming into duration?
Yeah, I mean, there are some little pockets of inflationary pressures, as you point to, and, clearly commodities was playing a big role in that. But what I think bond markets aren't sniffing out is some of the disinflation that's coming down the pipeline. We're seeing it in areas like the housing market, the shelter component of inflation finally seeing some relief. We look at things like Zillow home prices, they're about flat year over year. Rental prices are falling about 1.5% across the country. Shelter's 35% of CPI, so it has the ability to overwhelm some of those other inflationary factors. We're also seeing wage growth. I've spent a lot of time comparing this period to 2022. Wage growth was 5 to 6% at that time, and we're about 3.5%. So really not seeing that pocket of inflation showing any strength either.
That said, we are getting earnings, and we're going to get earnings come next week, and they're expected to be very strong. Yeah. Delta came out earlier today. They omitted full-year guidance. There's a lot of uncertainty, but they beat expectations, and frankly, they show that consumer demand is strong. They might actually cut capacity in order to keep prices higher, in order to offset some of the fuel prices. I mean, what would you see in earnings that would make you rethink the sort of disinflationary narrative and, frankly, a more muted level of growth?
Yeah, you know, we're looking at the impact of currency on earnings most significantly this Q1 season. And what you're going to see is really helpful comps in terms of the dollar was exceptionally strong in Q1 of last year. And the weakness is going to be really accretive to corporate earnings this year. So you think about 40% of the revenues of S&P 500 companies come from overseas. So when the dollar weakens, that translation effect is really, really helpful. It's almost like a gift. It's a sort of a liquidity release valve for companies when that dollar weakens. Then you look ahead, though, to Q2, Q3, the comps become much less favorable. So I think this upcoming earnings season can be a good one for companies, that being a key element there, but I think it gets a lot harder from here.
Emily Rowland, wonderful to have you. Thank you so much for being with us. Emily Rowland of Manulife John Hancock Investments, as we look at a roaring rally around the world on the prospect of a peace deal, or at least a ceasefire agreement for the next 2 weeks. Coming up, we've got Tom Porcelli of Wells Fargo with inflation data in focus, core PCE and CPI on deck, and Yahira Anand with your morning movers. Airline stocks very much in focus. This is Bloomberg Surveillance. Good morning.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you
you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Looking at a market at session highs in the United States after a number of different back and forth discussions about a ceasefire. Yes, there have been a number of projectiles, et cetera. However, discussions on both sides seem to have, at the moment, on one hand, a cessation of some of the escalation risk, and on the other, the promise of allowing ships to go through the Strait of Hormuz. Right now, you're seeing equities across the board. S&P futures higher by 2.6%, 3.4% gain on NASDAQ futures, Russell 2000 up 3.5%. Meanwhile, the real drama has been in Europe, both on the equity side and on the bond space. You could see a surge into some of the fixed income products in the front end of the yield curve. In the UK, two-year yields down 25 basis points to 4.16%. In Germany, the two-year yield down a similar amount to 2.48%. In the US, a 5% decline to 3.73%. All of this being driven by oil. Oil prices plunging on the prospect to an easier flow through the Strait of Hormuz, down more than 15% for both Brent and WTI. 1 hour away for the cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. The airlines were already up on ceasefire relief, but they are up even higher after Delta reported earnings. The airline beating expectations with strong demand from the premium and loyalty members, helping cushion a more than $2 billion fuel hits it expects to incur through June due to the war. But this idea that there is a resolution in sight is helping to lift the entire sector, with United and American also up some 12 to 13%. And as we see oil pulling back sharply, we are seeing pressure on the U.S. Domestic oil players. These names had run up big during the conflict. Occidental up until yesterday up 16% since the war began. Exxon up more than 10%. So you are seeing this reversal today as investors lock in those gains. And another clear beneficiary of the ceasefire is the tech trade. We are seeing names like Meta up 5%, but these names had been hit hard during the conflict as higher oil prices and inflation fears pushed rates higher. But as that pressure starts to ease, you are seeing investors rotating back into this more growthy part of the market. Lisa?
Thank you so much, Yahira. Let's turn to the Federal Reserve. Investors looking for signals from the central banks. Meeting minutes due out at 2 p.m. Eastern. Bloomberg's Michael McKee joins us. Mike, is this just ancient history, or is there actually going to be some tangible information that we can glean?
Well, there's always the possibility of tangible, important information that we might get, but this is largely ancient history. It was 3 weeks ago. The war was just beginning, and nobody knew where we were going. We still don't really know where we're going, so it's hard to say that we have any kind of justification for putting any hope on rate cuts at this point, but the markets are starting to price that back in. You look at December, and there's about a 50% chance right now priced into the markets that the Fed will be cutting rates by then. We'll see how that develops over the next couple of weeks, because we've got a lot of data and a lot of work to do on a peace deal as well. You look at what Fed officials were saying during the war, and I guess it's still on officially, but there are about half and half of the Fed officials who are at this point saying we either want to stay on hold or we might be looking at raising rates because inflation is going up. Now, if inflation stops going up, then that group will become smaller. But there's still a substantial number of people who are on the hawkish side and have been, not just because of the war, but because for 5 years they haven't gotten to the 2% target. it's kind of significant as well that there are only two people who've spoken during this interregnum that have said that we should maybe think about cutting rates. Stephen Myron, of course, but he won't be on the Fed much longer if Kevin Warsh is confirmed. And Chris Waller, who said if prices go down, then we can start thinking about cutting rates again. So it's all going to be about what happens with prices going forward. And we have a lot of inflation data coming out very soon. The Fed minutes aren't going to tell us much, but CPI on Friday is going to be very influential in the markets. And we also get PCE tomorrow. The PCE is February, before the war started, but it gives us a baseline for the Fed's favorite indicator. Then we move on to seeing what happens with import prices and wholesale prices. And then we have the Fed meeting on April 29th. Also, Fed's going to be interested in what the Michigan expectations for inflation are. Are Americans pricing in higher gas prices for the time being and starting to think inflation will continue? So a lot to look forward to, a lot of unsettledness, but I'm not sure we get much of a guidance out of the minutes today.
Michael McKee, thank you so much. An honest assessment of what we can expect at 2 p.m. Eastern today. CPI data due out on Friday. That will be not sleepy in any way, shape, or form, giving investors the first look on how oil prices are stoking inflation. Tom Porcelli, chief economist over at Wells Fargo, writing, the March CPI report will put an abrupt end to the gradual disinflationary trend in place over the past 2 years. Tom joins us now, and congratulations. It's been a while, I know, on your new seat. But I'm thinking more broadly here, you were in the disinflation camp.
Yep.
Something has shifted.
Yeah.
Why has it so fundamentally shifted, even with a potential ceasefire?
Yeah, so I think what we have to keep in mind is that, you know, if we look at sort of the things that are really sort of putting a floor beneath inflation right now, there's a couple of them. One of them, of course, has been this transportation component, which has just been sort of, you know, enduring, right? We keep on seeing these airfare price increases. And that's been true over the course of the last, you know, sort of handful of months. It's been volatile, to be sure. But obviously now, over the next couple of months, it's very easy to expect that the transportation component, and specifically airfares, will lift inflation. And in fact, you know, come Friday when we get CPI, I mean, that's exactly what I think we should all expect. In fact, we're looking for the month-on-month to increase by a full percentage point, which is sort of an outsized gain, needless to say. But if now all of a sudden here we are at 85 on WTI, if that's maintained, then all of a sudden as you roll into the April report, then all of a sudden you're looking at flat prices from a transportation perspective. So a lot of volatility. But I think, Lisa, it's funny. The thing that we've really tried to drive home to investors is it's not just about this kind of inflation that is really being impacted by Iran. Really, at the end of the day, I think what's going to really matter, maybe even more, is inflation expectations. And inflation expectations, if you look at the 5-year forward in inflation swaps, if you look at the 5-year forward measure, or if you look at the 1-year forward measure, they've been incredibly stable. So I think that really actually sort of will lend some comfort to the Fed and why we've continued to expect the Fed to cut rates.
I love Cameron Dawson's comment of New Edge Capital. She came on earlier and she said, find someone to believe in you the way that the market believes in the Fed reaching its 2% inflation target. Is there going to be a certain point where markets realize, you know, if we haven't had a 2% inflation rate going back more than 5 years, and there's no real hope of it in the near term, that we're just essentially giving it up for good?
You know, and so this is part of a much bigger conversation. I will be very, very brief on this. Or brief for an economist. So I actually hate the target. I hate that there's a 2.0% target, mostly because, one, it sort of borders on hubris to think that you can actually hit 2.0% with any degree of precision over any long period of time. I mean, we spend a very limited amount of time at 2.0%. I think the RBA, the Reserve Bank of Australia, actually has a much better approach. It's a range. That, to me, is a sort of a better way of thinking about it. I think bringing it back to the Fed, I think what they are going to sort of come to grips with, and I think this process is already underway, is that if you are sort of, in the 2% zone, that's going to be enough for them to feel comfortable. And by the way, if anyone needs sort of the proof in the pudding on that, the Fed still has cuts built into their SEP. So even with inflation north of their target, I think it's more about what's going on beneath the surface. And you and I have talked about this many times over the last year or more. You know, if I just swap out OER for something like Zillow or apartment list rents, you're already below target.
Well, putting that aside for 1 second, a lot of people are coming into this situation, seeing the war in Iran and saying this is going to add not only a risk to inflation to the upside, but also to growth to the downside. And this is sort of the key question mark in a lot of people's minds, especially as we get earnings like the one from Delta, where they're outperforming and they can increase prices. They're going to cut capacity to do it, but they are going to maintain some of their profit guidance.
Yes.
You know, given that, I mean, where's the stag? And are we looking at a situation of just inflation that's significant with above trend growth for a prolonged period of time?
So I'm a fader of the stag part of this. I think what we have to bear in mind is that before Iran, we actually had fiscal tailwind, right? That was going to be very notable. In fact, we actually would have argued that pre-Iran, you were looking at 3% growth in the United States this year, right? Like we were well above consensus. We'll pare that back a little bit, just given what's happened over the last couple of months. You're still going to be sort of well above what I think consensus probably still is. So the question that we had been asking ourselves over the last couple of weeks was it going to remain, this fiscal stimulus, was it going to remain a tailwind or was it going to be a shock absorber? Right, because the longer that this endures, right, the longer energy price increases remain, the more it becomes a shock absorber. But if this is the exit ramp, right, if we actually have found an exit ramp, which is an open question, but if we have found an exit ramp, then you still get the fiscal tailwind part of this, and you can actually have a pretty good growth year.
How much is this also predicated on true productivity gains coming from the likes of AI? There was a study that was put out by the Fed showing that the population has shrunk for the first time, or the most going back to the 1950s. And ultimately, you cannot have an economy that grows at the same pace that it has traditionally if you have a shrinking population, unless productivity really picks up. I mean, how much is this all just predicated on the AI promises?
So I would say productivity is going to be a critically important part of this entire conversation. Is it critically important today? Actually, I would argue that one of the key reasons why we're actually seeing productivity improvement, I mean, just think about what productivity is, right? The math on that is very basic. It's basically output minus hours. Output part has actually been doing, you know, sort of decently well, as we all appreciate. The hours part, though, has been getting clobbered. And that has been flattering productivity, I think, in ways that is really underappreciated. So you're getting the productivity lift that actually, we would argue, has very little to do with what we're seeing from a tech spending perspective, whether it's AI or otherwise. But as we continue to move forward, there's almost no question that you're going to see this sort of AI really kick in. But I want to stress something. If I look at AI usage by sector, and I look at job hiring by sector, and I put that on a scatter chart, you know what it looks like? It looks like someone sneezed on the page, which, you know, statistically speaking means there's like, you know, the R is 0. So you're not actually seeing that kick in yet. That's actually waiting for us. Right now, it's actually more of just an improvement based on a reduction in hours.
At this point, a lot of people are also wondering how isolated the United States is from the rest of the world on a lot of different levels. But when it comes to economic trajectory as well, people looking at the likes of Asia and Europe and potentially any importers of oil, and even if there is some sort of ceasefire, oil prices are going to be higher. How important is it for the U.S., for the rest of the world, to be growing at a rapid clip, or at least not contracting, which some people have started to game out based on higher commodity costs?
Yeah, and you know, that's why I think it's important to sort of, for all of us to know, is this really the exit ramp? Because the reality is, in the United States, the Fed benefits from having a dual mandate, you know, jobs and inflation. The rest of the global central banks do not have that luxury. They basically have to focus on inflation. So the exit ramp is important because you're talking about hikes in other countries. Again, we were faders of the hike idea in the United States and that remains the case for us. But the more that you actually will see that upward pressure on inflation that puts upward pressure on short-term rates, the more that the sort of the growth differential, U.S. versus everyone else, will favor the United States.
Interesting. Tom Porcelli, wonderful to see you. Thank you so much for being with us.
Thanks, Lisa.
Tom Porcelli, Chief Economist over at Wells Fargo. Right now, let's head over to Yahira Anand and get you an update on stories elsewhere this morning. Hey, Yahira.
Hi, Lisa. The White House wrapping up a briefing on the ceasefire just moments ago with U.S. Defense Secretary Pete Hegseth saying the campaign was a, quote, historic battlefield victory and the military has done its part for now. He says the ceasefire means Iran will never have a nuclear weapon. Vice President J.D. Vance arguing that Iran's developments are good, but warns the truce is fragile.
If the Iranians are willing, in good faith, to work with us, I think we can make an agreement. If they're going to lie, if they're going to cheat, if they're going to try to prevent even the fragile truce that we've set up from taking place, then they're not going to be happy. Because what the president has also shown is that we still have clear military, diplomatic, and maybe most importantly, we have extraordinary economic leverage.
Vance wrapping up his remarks in Budapest this week, adding the U.S. achieved what they wanted, which is the reopening of the Strait of Hormuz. And here, PIMCO is in talks with Bank of America to help finance a massive Oracle data center in Michigan. Sources telling us here at Bloomberg the deal could involve roughly $14 billion in debt. If completed, it would mark PIMCO's second major data center financing in under a year. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira, for everything this morning. Up next, setting you up for the day ahead. Plus, Matt Dizak of Maryland Bank of America Private Bank on renewed U.S. optimism. From New York, this is Bloomberg Surveillance. Good morning.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Operation Epic Fury was a historic and overwhelming victory on the battlefield. A capital V military victory.
We hope that Iran chooses a lasting peace. Let us be clear, a ceasefire is a pause, and the joint force remains ready if ordered or called upon to resume combat operations.
That was U.S. Defense Secretary Pete Hegseth and Joint Chiefs of Staff Chair General Dan Kane as we assess the state of the ceasefire, what the conditions are, what still needs to be determined. There is a huge rally in risk assets around the world as people assess just how much this reduces some of the escalation risks in the U.S. You do see futures inflecting higher, led by the tech sector as well as small caps, both higher more than 3.4%. The S&P futures higher by 2.6%. In the fixed income space, if inflationary risks are at least tempered by the idea that maybe this conflict will not go on for too long. The Fed not necessarily on the hot seat, yields significantly lower, particularly at the front end, down 6 basis points to 3.73%, and across the curve. All of this predicated on the big driver, which is oil. Oil prices plunging more than 10%, both Brent and WTI now down more than 16%, as we assess what this looks like for ships trying to resume passage through the Strait of Hormuz. Counting down to the opening bell, here is the trading diary for the week ahead. 1 p.m. Eastern, a White House press briefing. At 2 p.m., the Fed meeting minutes, which, as Michael McKee told us, are ancient history. At 3:30 p.m., President Trump meeting with the Secretary General of NATO. Thursday, another round of jobless claims. PCE data also coming out. And Friday, CPI and University of Michigan sentiment survey. Watch that space for inflation expectations among consumers. Turning back to our top story, the U.S.-Iran ceasefire pulling oil prices and Treasury yields lower. Traders now betting easing energy prices can keep Fed rate cuts on track. Matt Dizak of Merrill and Bank of America Private Bank joins us now. Matt, great to see you. Thank you for being here. How much are you reassessing just what the Fed can do and, frankly, how much momentum the U.S. economy can continue to have through the remainder of the year?
So we always thought the idea that the Fed was not going to cut rates at all this year was probably a step too far. That's probably the worst it would be, but that was probably unlikely. So we've moved out officially our projection for probably 2 Fed cuts this year, 2 cuts this year still, pushing them back in terms of the time frame, probably 1 in September, maybe 1 back end of the year. It's probably somewhere between 1 and 2, but we always had the idea that the move up in rates based on this shorter term oil price shock was not going to be a reliable indicator. And when you got to real yields at close to 3% on the 30-year tips, over 2% on 10 years. When you saw the short end sell off, we thought that was an opportunity to add some duration risk, add some fixed income risk. Right now, again, hoping the ceasefire holds, that seems to be correct.
There is some reporting from Iranian state TV that the first ship has passed through the Strait of Hormuz since the ceasefire. There still is an expectation in markets, though, that prices on oil will remain elevated, that this is not the end to some of the inflationary pressures coming from the physical world as people stockpile and try to have greater domestic security. How do you factor that into your expectation of 2 rate cuts and a Federal Reserve that still is amenable to the idea of easing policy?
Yeah, and again, the official forecast is for 2 cuts, but the economics team at Bank of America recognizes that's aggressive, and that certainly could change. It's unlikely that the data is going to be that clear moving forward. These supply logjams take time to work themselves through. But again, the idea that just that energy prices going up isn't necessarily inflationary for the economy as a whole, we take a little bit of challenge with that. Gas prices go up, for people to spend that much on gas and everything else is unlikely. They probably have to cut back spending elsewhere. So sustained energy price increases could actually function like a rate hike. They can create demand destruction for other areas of the economy. So in order for people to spend as much on gas if oil prices stay this high, they'd either have to dip into COVID savings, which they don't have, they'd have to use their real earnings growth, which is not that great right now, or they could borrow against assets like their home. They could fund consumption with borrowing like we did pre-financial crisis. We're not seeing them do that. So we're not seeing sustained inflationary pressures economy-wide just from one sector of the economy going up, whether it was energy prices or tariffs. Prices in one sector don't necessarily have to lead to inflation-wide increase across the whole economy, which is why we were conservative. I'm expecting no rate cuts this year. We thought that was a step too far.
That said, we're seeing earnings from the likes of Delta coming out this morning and painting a picture of resilience and painting a picture of enough consumers, maybe not all consumers, but enough of them having the discretionary resources to go out and spend money. They're cutting capacity, charging more money, and there are people who are willing to spend that. At what point do earnings potentially paint a picture of resilience? That does mean that some people can absorb those prices, and you can see that sort of persistence in terms of inflation.
And we do see that resilience. You can see it in the manufacturing data, ISM. You can see it in the services data. You can see it in retail spending. Advantages the U.S. has, whether it's demographic, whether it's educational, agricultural, resources. We have so many advantages, and that's coming through in the U.S. economy. You're seeing that.
What's your top trade after the ceasefire, given some of the momentum that you're seeing behind fixed income right now?
For the individual investor, we would be looking at municipal bonds, particularly longer out the curve. You can get on a tax equivalent yield over 9% on long-dated investment-grade municipals with no leverage. That is a pretty attractive tax equivalent yield. Again, we find real yields to be generally attractive here, both for individual investors and for institutional investors. So we're not that concerned about duration or interest rate risk. We think it's a good time to add and stretch out a little bit there.
Matt Dizak, thank you so much for being with us. Matt Dizak of Bank of Merrill and Bank of America Private Bank here with us. It has been a busy day in Washington ahead with a White House press briefing and President Trump's meeting with the Secretary General of NATO. We're also getting headlines about a first ship passing through the Strait of Hormuz. The Financial Times, though, reporting that Saudi Arabia's crucial east-west pipeline was hit by a drone attack. Bringing it all together to understand what the state of play is Bloomberg's Tyler Kendall. Tyler, it feels like it's moving very quickly. What's the latest in terms of the ceasefire and what details we're finding out?
Hey, Lisa. Well, at this point, actually, a person familiar with the matter just confirmed to Bloomberg News that Saudi Arabia oil pipeline that goes to the Red Sea was indeed hit by a drone attack. At this point, the damage is still being assessed as we wait to glean further details. We haven't gotten any further confirmation other than that, or a response from the White House at this point, as this ceasefire they would like to see ultimately take hold. But of course, we had heard from Vice President J.D. Vance earlier today that the truce at this point is, quote, fragile. Still, in this briefing earlier this hour from Pentagon officials, they are maintaining that the U.S. has achieved its full military objectives in Iran, and they are moving forward with this short-term agreement. President Trump so far has outlined some of those key demands that the U.S. thinks it can get in a deal, including that Iran will not be allowed to have any nuclear capabilities and that the U.S. will work with Iran on extracting the enriched material that is already inside the country. There's going to be a lot developing today at 1 p.m. Eastern. We will get that update from White House Press Secretary Caroline Leavitt, but I'll also put on your radar, as you mentioned, that President Trump will be meeting with the NATO Secretary General Mark Rutte, considered to have a relatively warm relationship with President Trump, but of course the transatlantic alliance has been strained over this conflict. I think we will hear a lot more about the Strait of Hormuz, as President Trump has previously ramped up the pressure on allies to help make sure that that waterway can get opened.
Tyler Kendall, wonderful reporting throughout the morning. Thank you so much for that. We are seeing markets continuing to stay near all-time highs for U.S. equities, futures, and S&P, up 2.7%. Oil prices still plunging more than 14% on the heels of a ceasefire. Coming up tomorrow, we've got Keith Lerner of Truist, Bob Michael of J.P. Morgan, Jill Carey Hall of Bank of America, and Michelle Weaver of Morgan Stanley. This was Bloomberg Surveillance. Good morning.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Stocks are soaring as oil drops. 30 minutes until the start of trading. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, global markets exhale as the U.S. and Iran agree to a ceasefire, but core issues, so many of them, remain unresolved.
Meanwhile, oil plunges below $100. Iranian state TV reports that the first ship has passed through the Strait of Hormuz with Iran's permission.
And Delta jumps while Exxon slides as corporate America recalibrates after the Iran war-driven oil shock.
Lots of things moving this morning. One of the big beneficiaries, Matt, in the stock market that I'm looking at pre-market are all of these travel stocks that have been beat up tremendously. We also heard from Delta Airlines. They were out with a cautious outlook this morning. They're expecting to take a $2 billion fuel hit due to the war, but the affluent are still spending, and maybe fuel prices are going to start coming down. So United, Carnival, all of them rallying this morning.
These U.S. airlines don't hedge. We're going to talk to Sid Phillips about this in just a bit. We're also watching energy stocks falling, as you might expect, alongside the slump in oil on the ceasefire deal. Exxon saying 6% of its global first quarter production was knocked out because of the war in Iran. Its shares are down just about that much. Chevron off 5%, and Occidental down almost 9%, Danny.
Let's get back to that. Our top story this morning, President Trump said that the U.S. is discussing sanctions relief for Iran, acknowledging a key ceasefire demand from Tehran after he threatened to destroy the country. Defense Secretary Pete Hegseth spoke in the last hour.
Operation Epic Fury was a historic and overwhelming victory on the battlefield. A capital V military victory. By any measure, Epic Fury decimated Iran's military and rendered it combat ineffective for years to come.
Joining us now is Becca Wasser, defense lead for Bloomberg Economics. She's led studies in war games for the U.S. Department of Defense. Becca, just how fragile is this ceasefire?
The ceasefire is incredibly fragile, and I think that that's for two main reasons. On the military side of things, we're already seeing potential attacks. We are seeing right now that Iran has continued to fire drones and missiles into the Gulf states, Saudi Arabia, Bahrain, UAE, and Kuwait. And that in itself might be a violation of the ceasefire. Additionally, Israel continues to conduct operations against Hezbollah in Lebanon, arguing that it has ceased attacks against Iran, but not against Iran's proxy group, Hezbollah. And if we're shifting to even the diplomatic things, the two sides are just so far apart on their various demands. Iran has provided very maximalist demands, including things like, the potential expulsion of all U.S. forces from the Middle East. For the U.S., the continued threat of Iran's highly enriched uranium or even its missile and drone program continue to be non-starters. And at the end of the day, Iran right now continues to control the Strait of Hormuz, which was a key war aim from the White House to have that fully open.
How strong, Becca, does the Iranian regime look now, still in place, possibly even more hardline than before? And how weak do we look from the perspective of our adversaries?
Well, you heard Secretary Hegseth saying that this was a complete victory for the U.S., a V for victory. I'm pretty sure that there's a very similar message circulating in Tehran and larger parts of Iran at this juncture in time. You know, essentially, the ceasefire is a temporary pause that allows both sides to claim victory and to claim that they have achieved some part of their mandate. The murkiness of it allows them to do that. But at the end of the day, both sides have taken hits. Iran has had its military capabilities degraded, but it still retains core components of its ability to defend itself and its ability to fire on, potential adversaries. And the U.S. has also taken some sizable hits in terms of its high munitions expenditure, some of its hits to forces. And at the end of the day, the greatest hit, frankly, has been to civilians in the Middle East, as there has been a high human cost of this conflict.
And Iran has also maintained their capability. It would seem to dictate the flow of traffic through the Strait of Hormuz. Becca, what do we know about whether this waterway will indeed be opened over the next 2 weeks?
So the wording of the Iranian agreement is very specific. It says that it's going to be open and that it's going to be at the discretion of Iranian authorities, in particular the Iranian military. So there are open questions about how many vessels are going to be able to get through, what is the method and means of which they're going to be able to get through, how much is Iran going to charge, and what path are they going to take, because Iran still potentially could have earlier mined to the strait, and that is going to dictate how much traffic is going to be able to get through and which pathways they'll be able to take out of the strait.
Becca, how much has this excursion, as President Trump likes to call it, cost us? Pete Hegseth earlier said we only used 10% of our military force to decimate Iran, but we had a story last weekend showing that we're running out of those long-range air-to-surface missiles.
So there is a longer-term readiness cost for the U.S. military. That is some of the wear and tear that we have seen on U.S. forces and capabilities, including an extended deployment of the Forward Carrier Strike Group. Additionally, you have seen this very high expenditure of really critical missiles and munitions that the U.S. might need in potential future conflicts. And there's going to be a gap as the United States tries to rebuild those missiles, which will take, up to years to replenish those stockpiles. And that in itself is going to come at a high cost. And that is why we have a very high budget request for the Department of Defense this year.
All right, Becca, thanks very much. Becca Wasser there of Bloomberg Economics walking us through some of the key questions here. Let's get to the market reaction. JP Morgan's equity sales desk says stock markets have probably found a floor as the latest ceasefire suggests uncertainties over the war have peaked. Let's get more on those market moves with Bloomberg macro strategist Michael Ball. And as far as the market's concerned, Michael, there aren't ton of unresolved questions. Is that what I'm hearing?
I have no idea, guys. I was with you. I think this is very uncertain. I think there's still a lot of actually kinetic action going on as we speak. We just saw a pipeline was hit. We know there were strikes overnight. There's still this question of whether or not Thursday or Friday Iran will open the strait. There's serious problems in Asia with fuels, and we know that's starting to hit real activity. That's going to weigh on global growth. That's going to affect earnings in the U.S. We are going into the earnings season, and now what we need to know is basically, is this 2 weeks for real, or again, are we getting noise out of the White House, which has lost credibility in the last week because of all the wishy-washiness coming out in the messaging. So as far as levels, I'm not sure. We're all looking around. I don't see where support's going to build on the SPX, which again, the rest of the risk complex will take some cues off of. But because of the sort of wider trading range we've been in, it's still very uncertain where things will settle, if we're in a new range or if it's just going to be a much larger, choppier session still.
I was looking at this FT story that basically said hedge funds had built up a record short against European stocks. How much of what we're seeing is just a pain trade?
It looks like it. And it's very expensive to hold shorts, and also with implied vol as high as it was, puts were very expensive, so you're going to see a lot of decay there. You're going to be rushing for the exit. If you're not holding on to a cash long, you're really not justified to be hedged. So if you're just speculating now, it got a lot more expensive to hold on to that speculation, especially with all the uncertainty and implied vol falling now.
You know, Sebastian Boyd from the MLive team put out a fantastic heat map that shows how much price earnings ratios have dropped in different regions and for different industry groups. It seems that after energy, which, because of the earnings side rising so drastically, materials is the second biggest discount in the market.
Yeah, look, I took a look at FactSet yesterday as well because they put out some of their guidance into the quarter of earnings coming.
FactSet, how dare you.
It all went up. I mean, things are still rising as far as EPS guidance, and materials, industrials, most of the cyclical complex is still looking quite positive. And to your point, Matt, valuations are now more attractive. And if you look at things like software and tech, they are sort of generational buying opportunities in a lot of ways, given what the last 20 years has shown us as far as PE levels.
Hey, Michael, thank you very much for joining us. That's Bloomberg macro strategist Michael Ball. In individual corporate news, Delta bracing for a $2 billion fuel hit from the Iran war, forcing the airline to stay cautious and stick to its previous full-year outlook. Joining us now is Sid Phillip, Bloomberg chief correspondent for global aviation. Sid, I mean, that sounds negative, but it feels like the read on these sets of results was positive.
So it was a bit mixed. And the airlines sort of talked about how there's so much uncertainty at the moment that it's very hard to predict what the outcome will be for the full year. Airlines are having to sort of navigate this tricky path of jet fuel prices have surged. That's their biggest expense. And they have to sort of navigate how they can pass on some of those costs to the customers, but also not kill demand. And so that's really how the airlines are sort of treading as they get into the summer season, which is typically the most important season for the airline industry because that's when they tend to generate most of their money. And so we're seeing Delta talking about how bookings continue to be strong. They continue to see demand from premium travelers. I mean, Delta's really built its business on catering to well-heeled travelers who aren't as price sensitive as some of the people looking to fly on discount carriers. And that's really helped the airlines sort of weather these storms. At the same time, I mean, how long demand will hold up for and how fuel will impact their sort of projections for the year, that's something that's still uncertain, and that's why the airline did not put a sort of updated guidance for the full year, saying that there's so much uncertainty out there.
By the way, I was listening to an interview with Willie Walsh on Bloomberg Radio very early this morning. He of British Airways and now IATA, and he was saying that they in Europe hedge, whereas the big U.S. airlines I know don't hedge. Why is that discrepancy, and will we then see their shares react differently as a result?
So the U.S. airlines haven't hedged for a while now, and the reason that some of the airline CEOs have said is because their fuel bills are so big that they can't afford, like essentially any sort of trade in any direction would move the market, and so it's much harder for them to hedge fuel. And European carriers tend to hedge fuel because it just sort of makes sense from an operational perspective. At the same time, I mean, we're seeing fuel shortages in some places in Europe. So whether or not you've hedged that fuel, I mean, availability of fuel, and that's sort of having an impact on airlines as well and sort of their planning and their routes that they operate. Because if there's no fuel to sort of refuel the aircraft, then you can't really operate those routes.
You said, thanks for joining us. That's Sid Phillip. On the latest on airlines, on Delta, and a check on markets as a big rally gets underway. I would just note, though, that we had gains of more than 2% on March 31st, nearly 2.9%. So this would actually only be the biggest day of a rally going back to a few days ago. But the big move is in NYMEX and Brent crude. Both of those are falling, on track for their biggest drop since April of 2020 when the COVID vaccine came into the conversation. Yields, those also unwinding their moves, as is the dollar, giving up its gains for the year so far, Matt.
I'm looking at, my WEI screen, and I have an EMEA view set up, and there are green boxes around nearly every single European index, which means they're moving up more than 3 standard deviations. That's a term that Tom Keene uses so often. I don't really know what it means, but it's a lot, right? 5+% for the Euro stocks gain, 5+% for the DAX gain in Germany, 4+% for the IBEX in Madrid, for the FTSE MIB in Italy. So just massive European gains, and obviously they took a harder hit. They were more exposed to the closure of the Strait of Hormuz.
And huge short positionings on European stocks, too. So the pain trade, it's clear this morning the pain trade is higher.
Yeah, absolutely fascinating, ripping moves in European markets. Coming up, Terry Haynes says Iran volatility is still the new normal, deal or no deal. He joins us next. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Let's get out of high interest. Look what's making headlines around the world. NATO Chief Mark Rutte will meet with President Trump today, hoping to temper the president's anger that alliance members have refused to help in the Iran war. But Rutte's own allies are questioning whether his deferential approach to President Trump is appropriate or even working. Allies fear his flattering approach could weaken Europe's standing. And Moody's is cutting its outlook on Blue Owl's flagship fund to negative, citing significantly higher than peer redemption requests in the first quarter. The private credit industry overall is facing pressure as redemption requests increase and concerns mount over lending standards. A once hot hedge fund option strategy just had its worst month since 2011. The so-called dispersion trade lost nearly 5% in March after the Iran war shock drove S&P 500 volatility higher and forced stocks to move in sync. That surge in correlations erased the strategy's edge, exposing how vulnerable it is to global macro events. Danny?
To our top story, the U.S. and Iran agreeing to a 2-week ceasefire with Tehran set to reopen the Strait of Hormuz. There have been reports of initial one ship moving through. Pangea Policy founder Terry Haynes says volatility isn't going away and investors shouldn't assume this brings lasting stability. He joins us now. So, Terry, the markets feel that relief. Just how far should that relief extend?
Hi, Danny. Good morning. I think it should probably extend in the short term, but not much more than that. You're going to have Iran headlines buffeting markets every day of the next 2 weeks, every minute of the next 2 weeks, as different things get tested out by both sides, as negotiations convene and continue. As it will always look more likely, less likely, depending on the minute and the hour. And I don't begrudge anybody a relief rally, but the idea that this is some sort of inexorable path to peace is misunderstood, I think, not least because we don't know what the Iranian intentions are.
I have to ask, Terry, on March 6th, President Trump put out a post on Truth Social saying there will be no deal with Iran until an unconditional surrender. And of course, we all know now that Iran has put out 10 conditions. How many of them do you think the president is going to be forced to accept?
I think it's a mistake, Matt, to assume that, I think what is the United States side, 15 conditions, something like that? I think it's a mistake to assume that there are 15 conditions of the United States side, 10 conditions of the Iranian side, and the United States is quote unquote accepting a bunch of things. There's very likely discussion somewhere in the middle, and we not only don't we know what those conditions are, we don't even know the scope of the discussions. Iran has always wanted a very tight negotiation based, not on anything other than a couple of different issues. The United States is looking for a much broader set of issues to be decided going forward, and I think that's very much a jump ball right now.
Terry, I just wonder, even if the Strait of Hormuz is tepidly being open over the next 2 weeks, just the state of energy infrastructure reliability in the region. There were reports this morning, first from the FT, we matched them, that Saudi Arabia's vital east-west oil pipeline carrying crude from the Gulf to the Red Sea had been attacked. There is this present risk of proxy groups being able to wage attacks on such things. Terry, can we take any comfort that as these negotiations go on, that there can be some restoration to energy flow throughout the world?
My short answer is I don't think you ought to take any comfort from it, Danny. I think what markets ought to look for first is to see if Iran is sincere in its desire to open the strait. I think that's very much an open question. Secondly, there is a question about whether or not Iran can control its proxies and get it to stop attacking oil infrastructure, whether anywhere outside of Iran itself, whether it be Oman, whether it be Saudi, UAE, Qatar, Kuwait, any of those places. I think this bears looking at if you're in that market on a day-to-day, minute-to-minute basis to see if Iran's sincerity is real or not. Because if it's not, then we're going to snap back to kind of full-on war posture here very, very quickly.
Jonathan Karl from the New York Times this morning tweeted that he asked President Trump today if he's okay with the Iranians charging a toll for all the ships that pass through the Strait of Hormuz. And President Trump replied to him, "We're thinking of doing it as a joint venture. It's a way of securing it, also securing it from lots of other people. It's a beautiful thing." Do you see that as a political possibility, Terry, that we then go into business with the Iranians controlling the flow of traffic through the Strait of Hormuz?
I think the president ought to be taken seriously, but not literally in a lot of these cases. He's said a lot of things this morning about cooperating with Iran from anything from nuclear dust to lowering tariffs and sanctions. People are always discombobulated by what Trump does, but he's throwing up a fog around negotiations and, frankly, trying to put the other side that he's negotiating with on the defensive. I think those things ought to be seen in that light. It is interesting to me that the president does not automatically discount the ability of Iran to continue charging a toll, but then he's trying to get these people to yes. So flying off at the handle doesn't help in negotiations either.
I just wonder, listening to Pete Hegseth earlier this morning, Terry, and he kind of repeated this phrase of a decisive military victory, capital V. Is that sort of language, one, from the administration trying to communicate largely, we are done, we reached our objectives in Iran,
mission
and we
accomplished.
are just, exactly, mission accomplished, and we are now just looking for an off-ramp, of course, no real mention of Iran's missile arsenal or nuclear program?
I read Secretary Hegseth is trying to put an exclamation point on the administration's talking point for a while that the military objectives have been achieved. They're speaking primarily to a domestic audience there, and I think trying to paint in primary colors. I'm not defending them by saying so. I mean, there's clearly a little bit of degradation that hasn't been accomplished yet, but by and large, it has. And I think what they want to say to you is that the military objectives are achieved. I think what they want to leave out today is that we can be back to, continuing the military campaign if we choose. But I would expect that if negotiations do not proceed well over the next few days, you'll start hearing that again from the Defense Department and from the White House.
We heard from and reported former UK National Security Advisor Pete Ricketts saying that although Iran has suffered huge physical damage and has lost a lot of lives, it emerges strategically stronger. The regime has survived. It's shown the massive leverage control of Hormuz gives it. And a professor at Long Island University, Dalia Fahmy, said actually the war has cost the United States much more than anticipated. What do you think, Terry, about the costs of this war, both in terms of dollars that could otherwise be spent, on Medicare and Medicaid, and in terms of munitions, in terms of the long-range cruise missiles that allow us to keep boots off the ground in the case of another conflict?
The guns and butter debate has been going on since the Vietnam War, and it will continue to go on.
But it's more difficult now with a debt to GDP of 136%, right? Because it wasn't that high.
Unquestionably. And, and I've said for years and continue to say, markets continue to give the United States a pass on debt to GDP ratio by and large because, we're the only significantly growing economy. And, we don't look great, but everybody else looks worse, frankly. But as long as markets continue to give the United States a pass on that, largely because of the dynamism of the United States economy, I mean, that's going to continue.
Terry, how do the Republicans look, given that they campaigned literally against starting new wars because they didn't want to spend money on guns, but rather butter? I mean, that was the whole point of Donald Trump's campaign. J.D. Vance said it a million times. Pete Hegseth said he's a recovering neocon. How do they look having flipped the other direction?
Well, I think I don't look at it as a flip, frankly. This is certainly not good for Trump's politics and Republican politics. And one thing that ought to be considered that isn't thought about very much is that the administration decided to go do this anyway. And it is an indication of seriousness of the threat, which is we've all known has been going on for a while. And the seriousness of the threat of Iran to the region and beyond isn't just the opinion of the United States. The IAEA has been warning about this for roughly 2.5 years. It's one reason I've been writing about it for so long.
Well, we appreciate your writing and we appreciate your time, Terry. Thanks so much for joining us. Terry Haynes there is the founder of Pangea Policy. We come back, we'll hear the opening bell and see the start of trading on this very bullish day.
Estava sitiada.
Isso, ao começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talia ki kon ahmata suara pangok ahmalepa manchang leni ay kun mananya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller on really a momentous day, I think, for peace and for markets. S&P futures up more than 2.5% as the cash trade in Europe in some regions is up more than 5% on national benchmarks. NASDAQ gaining even more, 3.5% on the NASDAQ and the Russell 2000. You see and hear the opening bell. Down at the New York Stock Exchange, it looks like South American bottling, Coca-Cola bottling business ringing the opening bell. Coca-Cola shares have done well over the last 5 years, up I think 65, 70% down at the NASDAQ. Coin shares ringing the opening bell. And after Coin shares went public with a SPAC last week, the stock dropped 21%. The next day, it dropped another 25%. So they've been losing value for shareholders, but not for long. Maybe they'll gain it back quickly.
And it's not an easy market to list into right now. So good for them for going for it anyway. Matt, a good day for the travel stocks. They're rebounding following the U.S.-Iran ceasefire agreement. Delta, we did hear from this morning. It was a mixed picture, as Sid Phillips was telling us. A little bit more caution. They're taking a $2 billion fuel hit due to the war. Still seeing demand, especially from their premium customers, but United, Carnival, all those shares, both those up at least 11% this morning, Matt.
Energy stocks going the other direction on the ceasefire deal because of the huge drop in crude. At one point, I was looking at NYMEX crude and saw a 20% drop. It went as high as $117 yesterday, and it was down in the low 90s for a while this morning. As a result, ExxonMobil says 6% of its global first quarter production was, well, actually, the stock dropped 7%, but they said 6% of their production was knocked out because of the war. So that's another story than the underlying price of crude. But Chevron is down 6%, Oxy is down 10%. So all of those companies moving the other direction, but they have had fantastic runs and are likely to have fantastic earnings. Speaking of that, we have one of the biggest bulls on Wall Street, John Stoltzfus, joining us, Oppenheimer Chief Investment Strategist. He has an S&P 500 year-end price target of 8,100, and is it fair to say never wavered? Never wavered, John?
It never has wavered this year. And, you know, last year we had a 7,100 target. At one point we did waver on the April 2nd tariffs that were announced, and then we reinstated it in July of that year at 7,100. We did.
By the way, did you take a lesson from that? Did you take, I hate to use the TACO acronym because it seems so petty, but, you know, President Trump came out with these massive tariffs, saw the market reaction, and then said, hey, now it's time to buy stocks, and took them down. Did you realize because of that it would happen like that this time?
Less so that than just the fact that I think so much was at stake, not only for the U.S. here and for Iran itself, but also for Europe, for Asia, that the pressure to come to some kind of a ceasefire just would appear to us that it was inevitable, maybe not as soon as everybody expected or not as away from the fact of you know, long to accomplish. But we are surprised at how quickly this did happen, but we never wavered. We continue, you know, with cyclicals over defensive, still take a look for babies that got thrown out with the bathwater in technology, consumer discretionary, industrials, financials.
Isn't it different though? Just I mean, for lots of reasons, but for one, the fact that we didn't even really sell off that much throughout this whole thing. I think before yesterday we're down 4%. We're less than 3% away from all-time highs. Does that kind of cap just how much any sort of relief rally might take place after today?
Well, I think it actually does. I think it's a great observation, Danny. You know, when you look at last year was an 18.9% pullback from as I recall, it was a date in February to April 8th, as I recall. It was some huge drop. And this year, it was much less over something that would seem much more intense than tariffs being put in, and always the negotiation process that could happen with something like that, as it did. But we'd have to say that we think a lot of the things that are driving the market is that the private investor is intermediate to longer-term goals, and as a result of both indirect and direct investments that they hold, the indirect being with institutions, but they control whether they're going to add to it or take it away, the power that has is intermediate to long-term investing. Their goal is beyond, in essence, and in that they recognize that something like this is relatively short-term, as painful as it is when you go through it. But the longer term are things, the innovation in technology, the likely improvement, as we've seen over the years in terms of earnings, as a result of the advancements in technology long before AI became the catchword of the day.
I keep going back to this chart that Sebastian Boyd put up in the MLive blog, and it shows the drop in PE ratios that we have had throughout this war. Obviously, you've had the biggest drop in energy across regions because, and here we've got the chart up on screen, because the E is expected to be so much higher. But if you look at the United States there in the second to last column, materials got 10% cheaper, industrials got 9% cheaper, consumer discretionary got 7% cheaper. What do you like right now, John, in terms of industry groups, in terms of regions, after this discounting that we've seen?
I think that in terms of the industrials, that's more of a global story, and in terms of it's both the U.S., in terms of its power, in our industrials having technology heavily embedded in it, but Europe also has good presence in that area. So does Japan, so does Korea, and other countries in Asia. So we'd say the industrial sector looks, especially with all the talk about how the stockpiles and armaments has gone down, it's inevitable that will have to be rebuilt. We think, again, because of technology and the need for warfare today, to be it's done with cheaper military equipment. When you think of the drones, who knows what they're going to come up with.
What about for the companies that are exposed to supply chains in the meantime, before it's built up? So be it energy-exposed companies, the travel stocks that you were showing that are rallying a lot today. Do you think even if this ceasefire were to morph into a longer-standing agreement, that there are going to be scars left on these companies that we're going to start to discern as we head through their earnings?
I think without a doubt, likely not in earnings this season, but as we move through the other quarters in the year, perhaps. But for the better managed companies, our thoughts are likely, just as the better managed companies did remarkably well through the process of COVID and prior to that, the financial crisis, in terms of recovery, the ability to bounce from it. We think that it'll be positive surprises will still propel the S&P 500 higher, not necessarily like to the moon, and not necessarily without some thoughtful retracements along the way. But it looks like we are, having been in this business since '83, I've been through every boom, bust, and recovery cycle since then. So I've heard of every reason in the world to get bearish. And sometimes it's right near term, but in the intermediate to long term, by that I mean 3, 5, 7 years out. And that used to be 20 years was long term, and it still could be. But
how much wealth is created, John? Like in your career, buying these dips. Tracy Alloway had a funny or scary tweet, depending on how you read it, saying like, if there's a nuclear winter, I'm going to buy the dip, right? Because on the other side, either my portfolio is on fire or my portfolio is on fire. But it's true, isn't it?
Well, the thing about it is when we look at it, we like to buy the babies that get thrown out with the bathwater, because when the trading floors and the trading rooms get wild with energy to get rid of positions and highly leveraged positions, they throw the whole basket out. But in the process of that, that's where you find your really well-managed companies, your well-positioned companies in terms of their client base, in terms of their managing their suppliers. Those are the ones you want to get. We always say, don't buy the dip, buy the babies that get thrown out with the bathwater. And we found that in portfolios that we manage to be a remarkably a good thing to do. We've had a very good results. I'm not going to pitch my results, but last year we surprised a lot of people with
your own book.
dividend portfolio. Well, we it was we were well in the double digits in terms of return, and this year we're still positive in our dividend opportunity portfolio, and we're across all 11 sectors, and we're very selective of what we own. We ride our winners. We're reluctant. Sometimes we trim and add something, but we always say when you get these dramatic moments on the downside, you usually find somebody will say, now's the time to get defensive. And we usually say, I think it's a little late to do that. It's like, it's quick. Look for those babies, because they're these really good companies. And just think, when you think of the tech bubble, my gosh, it was 26 years ago. That's a long time. Tech was primitive then. When we hear all this stuff with the AI and when are they going to be profitable, probably a lot sooner than expected, but again, not as soon as many would like to see.
The timeline has accelerated in so many ways.
Yeah, I feel like in 5 years from now, we'll look at this point and be like, oh, AI was so primitive then. It was so cute, us and our little chatbots. John, we're going to have to end it there. Thank you so much for joining us.
It's always a pleasure having you.
So great to have you, John Stolfus of Oppenheimer. And by the way, a lot of those babies that have been thrown out with the bathwater getting bought this morning. Look at what's dominating. It is tech. It is consumer discretionary. If you look on your move screen, most stocks are higher this morning. Only about 100 are lower at the moment. 102, as a matter of fact, are lower. What's leading us? It's NVIDIA, it's Amazon, it's Broadcom. So it's all of the big mega cap tech stocks that are doing very, very strongly. Meta, Microsoft, Alphabet, Apple. To the downside, it will not surprise you that it's the energy names. Exxon down nearly 7%, dragging the index down by 5.5%. Chevron, ConocoPhillips, J&J, Verizon, AT&T. So you also get a feeling of some of the safety utility type stocks, and those are the two indexes that are down. Energy, it's on track for its worst day since April of 2025. It's undone a month of gains. Industrials, consumer discretionary, infotech, those stand at the top of the pile for a gain of about 2.5%, Matt.
All right, coming up, the U.S.-Iran ceasefire eases fears, but strikes in the Middle East are persisting. We'll speak with Jennifer Gavito, former Deputy Assistant Secretary of State for Iraq and Iran, next. This is Bloomberg Open Interest.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It is a relief rally. Terry Haynes, though, cautioning just how long that relief can last. But we have a big rally on our hands. NASDAQ now up 3%. We are less than 3% away from all-time highs, despite the fact there's a lot of fragility in the ceasefire. But Brent crude, a huge drop, 15%, on track for one of its biggest drops in a few years at this point. Let's look at some of the top calls, some of the analyst action that we're focusing on. Barclays, they have downgraded Coinbase to a sell. They say the slump from earlier this year is likely to continue into next quarter, which could hurt profits as fewer people buy and sell crypto. I'm going to assume, though, that Bitcoin is rallying a lot today, so Coinbase is up nearly 5%. Next up, MoffettNathanson is upgrading T-Mobile to a buy, saying the company has been gaining a steady stream of customers from rural areas over the past 10 years. Look, hard to make any calls or upgrades and downgrades and have the stock move accordingly because it's the macro that's moving everything. T-Mobile moving lower as a lot of those safety type stocks move lower. And finally, Roth Capital Partners, they're downgrading oil stocks as a ceasefire in the Iran conflict drives a sharp drop in crude prices. I mean, duh. The firm says that fast money piled into E&Ps and it raised the risk of a pullback if oil keeps falling, and a big fall in oil stocks we are seeing at the moment. Diamondback Energy down 7.2%, Permian Resources down 7.8%, and SM Energy that is down 10.7% this morning, Matt.
Guess what?
What?
Bitcoin is rallying
There we
today.
go.
Good assumption. Up right now 3.5% to $71,706. Now, the U.S.-Iran ceasefire is offering relief to investors, but key risks remain unresolved, and the energy shock may be far from over. Joining us now is Jennifer Gavito, Senior Advisor at the Cohen Group. Jennifer has held senior positions at the State Department and National Security Council, influencing decisions on critical regions, specifically Iraq, Iran, and Libya. Jennifer, great to have you on the program. You know, one of the things, one of the criticisms I've heard a lot over the last couple of days is that we have now confirmed the power, the control that Iran has over the Strait of Hormuz and how important that is for the global economy. Didn't we always know that they had that power? Like, wasn't this always a risk, or was it a surprise to the Trump administration?
I think both of those things are true. And first, thanks for having me back on this morning. Iran has always had the power to close the strait. That has long been known, but it really had determined that that was a nuclear option, and so had never exercised that. It wasn't until this set of strikes began that we saw Iran kind of realize that vision. And it seems, at least in these initial hours after the ceasefire agreement, that there is some acquiescence on the part of the United States and the international community that control may continue in some form.
So what now, Jennifer, when seemingly ceasefire for 2 weeks, but seemingly the two sides very far apart still?
You're absolutely right. They are very, very far apart. And if, in fact, the 10-point plan that has been widely seen as far as the conditions for Iran for the ceasefire are the basis on which the negotiation is happening, it is hard for me to imagine that the United States, let alone Israel or allies in the region, will be able to accommodate some of those demands. I do think, it has to be said that the ceasefire is a positive step. We have always said that this conflict was never going to be resolved militarily. It would always require a diplomatic solution. And a diplomatic solution was never going to be possible in those 12-hour, 24-hour, 48-hour windows that the president had issued. And so 2 weeks does provide a reasonable basis to see what may be achieved. But again, looking at the conditions, I think that both sides have, and the red lines that we know exist, again, for both parties, not to mention, again, Israel, it is very difficult at this moment to envision how a sustainable end to the conflict is reached.
How much has this excursion cost us, Jennifer? Pete Hegseth this morning in his press conference for President Trump said that we've only expended 10% of our military power. But we also had a story last weekend that said, before this war, we had 2,400 of these long-range air-to-surface cruise missiles, and now we've only got like 450, and we're collecting them from other regions around the globe and bringing them to Iran.
Well, so for good reason, those numbers are not well publicized. I think that, it depends greatly on whether you're talking about defensive capabilities or offensive capabilities and what specific capabilities are in question. But certainly this has been a costly conflict so far. Over a dozen U.S. servicemen died as a result of it, not to mention the financial cost and the cost to our national security. I would add to that some of our key relationships, particularly with Europe, have also been strained. And we're hearing this morning that Israel is quite frustrated by having been cut out of the negotiations over the ceasefire. And so I think it will take some time to determine what the military cost of this has been specifically, and how the U.S. may be able to bounce back from that by increasing production lines. But in the meantime, I think that the problem is a bit broader than that.
I'm not sure if you've seen Alex Wickman put out a story this morning saying that the ceasefire has reinforced views also among our adversaries, not just our allies, but our adversaries, that the U.S. is maybe weaker than thought. That's the view from China. That's the view from Russia. All right. How much has this set us back in those terms?
Well, first of all, I think it's important to remember that there have been key beneficiaries of this conflict, Russia being one of them, with the removal of oil sanctions that now permit it to restock its war chest for its fight against Ukraine. So Russia has been a clear winner in this conflict. China, it's been reported, played a role in the mediation that led to yesterday's ceasefire. So again, contributed to international legitimacy there. But as far as where the United States comes out of this, we don't yet know what the final terms of a long term into the conflict may be. But I think that there are some key questions, and chief among them are a month ago when this began, the Strait of Hormuz was open for free flow of travel. This morning, even after the ceasefire, that is not the case. Iran is, as I understand it, demanding some sort of toll for passage of ships, and that looks to be its long-term intent. And so are we fundamentally in a better position today than we were a year ago? You can argue that the United States has had significant tactical and military success against a wide range, tens of thousands of targets inside of Iran. But when it comes to strategic objectives, including the reasons that were initially laid out for entering this conflict, specifically degradation of the nuclear program, degradation of regional proxies, and ensuring that Iran cannot project its power outside of its borders, I'm not sure that any progress has been made on those.
Okay.
And added to that, we now have arguably a harder line regime in place than we began with.
Yeah, it's the big fear for this moment. Jennifer, I'm sorry to jump in. We're just up against a commercial break. Thank you so much for joining us. Jennifer Gavito, Senior Advisor of the Cohen Group.
bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Exxon says 6% of its global first quarter production was knocked out because of the war in Iran. Bloomberg senior U.S. oil reporter Kevin Crowley broke this story and joins us now from Houston. Kevin, what did you learn from Exxon?
Well, they said this morning that two of its major countries, Qatar and the United Arab Emirates, were severely affected by the war in Iran in the first quarter, both in terms of the closure of the Strait of Hormuz and, in the case of Qatar, direct attacks on 2 of its liquefied natural gas plants. Now, typically, this production represents about 20% of its global worldwide production, but because the war was mostly just in the month of March, this translated into a 6% drop in Exxon's first quarter production compared with the previous quarter.
What will that mean for earnings, Kevin? We only got 30 seconds, but how strong are Exxon's earnings going to look since the price went up?
So it's a messy quarter. They are going to take a big a derivatives charge on cargoes that were sold but not yet delivered. But they expect that to fully unwind over time. But excluding that anomaly, they expect earnings per share to be up, mainly because of higher oil and gas prices in the period.
All right, Kevin, thanks very much. Sorry we had to cut that short because it's such an important story. I hope to talk to you about this again very soon. Kevin Crowley there. Next time it won't be so quickly. Coming up in the next hour, Ellen Hazen of FL Putnam joins us as this relief rally sweeps through global markets. And then the CEO of Hyundai and Genesis, Jose Munoz, on the company's Made in America push, plus Rachel Bronson from the Chicago Council on Global Affairs.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next,
and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. The new Iran ceasefire has markets soaring almost 3% this morning. The Dow is up more than 1,200 in early trading. Nasdaq's ahead 636. Oil has plunged below $95. Defense Secretary Pete Hegseth is giving President Trump credit for the agreement to pause fighting for 2 weeks.
He chose mercy. He spared those targets because Iran accepted the ceasefire under overwhelming pressure.
Joint Chiefs Chair General Dan Kane says the U.S. military remains at the ready.
Let us be clear, a ceasefire is a pause, and the joint force remains ready if ordered or called upon to resume combat operations.
Israel says the agreement will not stop its fight in Lebanon.
I'm Vicki Barker at the Foreign Desk in London. Beneath the normal traffic sounds of central Beirut, the wail of sirens. Lebanese officials say dozens of people have been killed and hundreds wounded in a series of Israeli airstrikes across the country, calling it a serious escalation of the ongoing attacks. Israel has made it clear the ceasefire does not include Lebanon, and it's bringing that point home with firepower.
A source tells CBS News suspected Long Island serial killer Rex Heuermann is expected to change his plea to guilty today in the murders of 7 women, most believed to have been sex workers. CBS News legal contributor Caroline Polisi.
This is obviously huge for the victims' families. They have been fighting for years just to get justice for their loved ones.
Heuermann's lawyers repeatedly tried unsuccessfully to have DNA evidence against him thrown out. The daughter of a woman lost at sea off the Bahamas is questioning her mother's disappearance after her mom's husband claimed she fell overboard. Carly Aylesworth tells CBS News the couple had split in recent years and gotten back together.
It's always been kind of rocky. Their relationship has been a lot of fighting and drinking lately. So I'm just kind of questioning what actually went on in that dinghy.
Brian Hooker hasn't been accused of wrongdoing. The search and rescue mission continues. New research finds athletics can go a long way toward keeping kids in class. CBS's Jim Crisula.
Student athletes are a third less likely to be chronically absent from school, even in the off-season. That's according to new research from the American Enterprise Institute, a conservative-leaning think tank. There's an emerging consensus that connections to activities, teachers, and peers are critical to combating the nation's school absenteeism crisis.
This is CBS News. UConn's women's hoops coach is apologizing for an outburst after his team lost in the Final Four last week.
In the final seconds of South Carolina's win over UConn, Coach Gene Auriemma approached Gamecocks coach Dawn Staley for a post-game handshake before they started yelling at each other.
Here's now Dawn and Gino getting into it a little bit on the sideline.
Auriemma was upset Staley had not met him for the traditional pre-game handshake. In a statement last night, Auriemma, a 12-time national champion, said he apologized to Staley yesterday, saying he lost himself with his behavior. He said Staley and her team and women's basketball deserve better. Michael Wallace, CBS News.
Stephen Colbert and Oprah swapped seats on last night's Late Show on CBS. She asked what he'll miss most after the gig winds down next month. Besides his crew at the Ed Sullivan Theater, he says it'll be the audience.
The audience is very pure in their engagement in our conversation, and if you stay tuned to them, you know where the conversation is going.
Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com as well. To Scarlett Fu and Paul Sweeney. We're live here in the Bloomberg Interactive Broker Studio with the Bloomberg Intelligence Show here. Coming up, we're going to be heavy on the news of the day, a ceasefire between the U.S., Israel, and Iran. We're going to check in first with Dan Williams, reporter for Bloomberg News. He's based in Jerusalem. We'll get the latest reporting there about this truce. Christopher Smart, he's the founder and managing partner at Arbroath Group and a former special assistant to the president at the National Economic Council, and get his thoughts on the developments in Iran and that part of the world. George Ferguson is going to join us. He covers all the airlines and aerospace companies for Bloomberg Intelligence. Had some good numbers out of Delta today. Earnings up, stock trading higher here. So we'll certainly break that down. So some stock really reflecting the fact that despite the higher fuel costs, top line and bottom line growth are pretty darn solid, so we'll break that down. But let's kick everything off here because the markets are moving with Alexis Christopher.
And that's putting it lightly. Thanks a lot, Paul. And this Bloomberg Business Flash is brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Whatever the challenge, we have a team for it. EisnerAmper.com. All right, we have got stocks on the rise with the S&P 500 up better than 2% or 156 points. Dow Jones Industrial average up 1,322 points, a gain there of 2.8%. NASDAQ Composite up better than 620 points, a gain of 2.8%. Brent crude is down more than 15% at 92.22 the barrel. WTI crude down 18% at 92.56 the barrel. The Bloomberg Dollar Spot Index erasing all its gains so far this year, down about 1% at 1199.46. The two-year yield 3.75%, 10-year 4.25%. Bitcoin having a good day as well, up more than 3% now at 71,650. Taking a look at some stocks, travel stocks are taking off as these oil prices slide. Delta, Southwest, and Carnival Cruise Lines leading the S&P 500 higher today. Also, Delta was out with better than expected earnings and was also pretty rosy about its outlook. Fertilizer stocks, which had risen on fears of supply disruptions from the war, giving back some of those gains today. We've got CF Industries down 11%. Nutrien is down 4%, about 5%. Mosaic just about flat right now. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
Alexis, thank you so much. Appreciate that. Welcome back, Scarlett. You came back to a big day here.
I know.
You brought the bullish market with
Civilization was not destroyed, or
Yes.
one part of civilization was not destroyed,
Right.
which is good news for everyone.
And that's the good news, and we're seeing it in energy prices collapsing here, back down to levels we haven't seen in a while, but still well higher than they were before the war here. So that suggests that the market still sees some risk in that part of the world. But we got a lot coming up here, and the markets are moving higher, as Lexus just broke it down for us. But let's take a look at some of the stocks on the move today, and there are plenty, and we can do that. But Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Yeah, I want to start with one stock moving on strictly fundamentals news, and that's Levi Strauss, ticker LEVI. Right now, the stock up more than 12%. This came after beating expectations with their last quarterly earnings. I don't know if you guys watched the show Love Story.
Nope.
No, I didn't.
I did.
All right, so we got
the
one.
JFK Jr.
This is the JFK Jr.
Right.
Yes.
Okay, talk to me about this.
So apparently the fact that the Levi's 517 style are prominently featured in the show has led the youths to go online and buy share.
By the way, newsflash, all things 90s are back in vogue.
Everything.
So I feel really, I'm redeemed. Thank you.
We're in our sweet spot right now.
We are, my friend. My closet's looking good.
Okay, I was going to ask, did you keep the stuff that you wore in the 90s? Or
Sadly, I did.
You know, there are a number of pieces, I would have to say, that are still there from the 90s.
My daughter's enjoying them now, so there you go. Anyway, go ahead, go on with your stock movers.
Oh, you're good. So the stock's up on that. Obviously, there was some uncertainty about the kind of state of the consumer, U.S. consumer in particular. I also wanted to call out that the company did tout their direct-to-consumer strategy, so online sales going, straight to people buying from Levi's.com as opposed to going to your local store. So Levi Strauss, ticker LEVI, right now up 13%, biggest gain since April 2025.
Okay, wait, it was the Levi's 517 you said?
Yeah.
Okay, all right.
I am a Levi's customer, by the way, not Lee or not Wrangler or not Matt Miller, who does like European style.
He's a bougie guy.
Yeah, exactly. So
he's a bougie guy.
Yeah, we've done enough Levi.
What's next on your list, Bailey?
Looking at the travel space, so looking at shares of Delta, ticker DAL, right now up almost 9%, biggest gain in about 2 months right now. This does come partly after we saw oil and pretty much anything in the energy space pulling back. So crude right now at about $93 a barrel, but also calling out that the company beat expectations, was quite bullish on what the quarters ahead could look like. Executives really touting that travel demand remains healthy and that they do also have the ability to increase fares and fees. So certainly something that consumers will not like, people who are booking flights. I know Paul is not a fan of the friendly skies.
No.
But
even though I'm a million-mile flyer with United.
All right. That's
Yep. So anyway, I'm only flying when people pay me to fly. All right. How about one more? Nat gas. What's going on?
Yeah,
there?
Nat gas also under a bit of pressure. So Nat gas futures, LNG, right now down about 5%. So that's weighing on the companies that move that stuff. So Venture Global, one we want to highlight, ticker VG, down about 14% right now. Biggest drop since October. Again, as much as you see kind of the knock-on effects from anything around oil, LNG, gas prices, you're going to see kind of the investors rotating away from some of the companies that benefit from higher pricing.
All right, good stuff. Thank you so much, Bailey Lipschultz, with our Stocks on the Move. And for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. You can find Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Paul, we have a ceasefire, a temporary 14-day ceasefire in place, which was announced 90 minutes before President Trump's 8 p.m. deadline last night.
Okay.
So,
flair for the dramatics, if nothing else.
If nothing else. Let's go to Dan Williams now. He's our reporter for Bloomberg News based in Jerusalem on the latest coming out of the Middle East. So Pakistan, Dan, is going to play a big role here, but there's reporting that indicates that China also played a big role in kind of pushing Iran to give way a little bit here. And it feels like each side is claiming victory at the moment.
I think ultimately what matters is what deal is secured. Obviously, Asian powers, such as the ones you mentioned, have a special interest here, given their outsized dependence on Hormuz petroleum output. They've certainly been hit by the takeover, the essential freeze on those energy outputs, and are very interested in getting things moving again. We're told that a first round of face-to-face talks following up on this ceasefire will take place on Friday in Islamabad, Pakistan. So that should give you a hint as to perhaps which of those powers is leading this effort. For now, however, it's been just over 12 hours since that ceasefire was announced by President Trump and by Iran. It's proving very murky in places. It's proving potentially fragile in places. We've heard reports from UAE, elsewhere in the Gulf, of continued Iranian attacks. And in Lebanon, most dramatically, there's been a wave of Israeli airstrikes, potentially scores of casualties, including in residential areas in North Beirut, where Israel says Hezbollah has been hiding out. It says that this wave of attacks targeted hundreds of Hezbollah fighters. Now, why is this significant? Because Israel, 4 hours after the Trump announcement, the Iranian announcement, said It was part of the ceasefire, but it opened the proviso that the ceasefire did not apply to Lebanon. Lebanon is the second front of this war. Israel's been fighting Hezbollah, a major Iranian ally there, pretty much in parallel through the entirety of this Israeli-US war on Iran. And for several weeks now, the Israelis have been saying that that war in Lebanon will be prosecuted regardless of developments in Iran. And it appears they've now driven that home with this very dramatic and damaging set of airstrikes. The big question is whether this will be a deal breaker for Iran. We're hearing reports suggesting the Iranians are upset about this. Previously, they wanted a ceasefire to apply to Lebanon as well and to safeguard their Hezbollah ally. The Americans have not related, to my knowledge, openly to the Lebanese front. There's a big question about where things stand here, but the Israelis are certainly making good on their vow to honor the ceasefire with Iran, but continue fighting in Lebanon.
Dan, just judging by the reaction in financial markets around the world of this ceasefire, this temporary ceasefire is being received very well. How about in Israel? How is it being received in Israel?
Well, that's an excellent question because, as you may know, today is the last day of the Jewish holiday of Passover. That means that until sunset this evening, you can see behind me, that's still a few hours off. Religiously observant Jews will not be communicating electronically by phone, public statements. Generally, the Israeli government honors that. So we actually don't have any statements from Israeli government figures beyond that very terse Israeli statement at about 5:30 a.m. saying that Israel was part of this Iran ceasefire. However, there have been opposition figures who are making hay out of this, accusing Israel of entering what they've described as a fiasco of statecraft, something that has set Israel back. Again, that would assume that this ceasefire is permanent. You said earlier that it's a temporary ceasefire. By definition, any ceasefire is temporary. However, in the Middle East, some ceasefires become open-ended. It's defined as a 2-week ceasefire. As I said, it's already shaky. And the Israelis appear reassured that the Americans will continue through diplomacy to pursue what the Allies were pursuing through warfare, which is not only a reopening of the Strait of Hormuz, it's also doing away with what remains of the Iranian nuclear program, so they have no way, if they want to, of achieving a nuclear bomb in the future. Also, what remains of their major military capacities, such as ballistic missiles. So time will tell, but I expect once sunset arrives and this holiday is behind us, there will be a very brisk, a very lively debate within Israel, with the government trying to defend this decision, trying to defend the achievements made in this war, and opposition figures and Israelis who spent the last almost 6 weeks in bomb shelters much of the time, wondering if it was all worth it.
All right, good stuff. Dan Williams, a very comprehensive overview of where things stand right now. Dan Williams is a reporter for Bloomberg News based in Jerusalem, reporting on the latest out of the Middle East. And again, Paul, you look at the markets, and certainly what you're seeing here is a sigh of relief for folks in equities, for folks in the commodity markets. You're seeing yields come down as well. The VIX is back to a 20 handle.
Yep, absolutely. Tom Keene's been keeping that front and center for all of us. And we look at you look at the WTI crude oil, yes, down 18%, big move, but still at $92 and change, reflecting, which is obviously much higher than it was pre-war. And that goes back to, I think everyone now seems to be focusing on the Strait of Hormuz. Will it open? To what degree will it open? What flagged ships will it be open to? So a lot of uncertainty, I guess, still out there.
Yeah, the tracking data, according to Bloomberg, shows 7 ships have exited the region since Tuesday morning, while 3 ships entered. There's still more than 800 vessels that are kind of still stuck inside the Gulf.
Yeah, and I think about it. I just hadn't thought about this until I saw this reporting about the crews that are just stuck there.
Yeah.
And a lot of them are running. They need to get
running
moving.
low on supplies.
Running low on supplies, probably looking to get home for many of them. So hopefully that will work out for those folks. We'll have more coming up. This is Bloomberg. Good morning.
This is Christophers from the Bloomberg Interactive Brokers Studio. A 2-week ceasefire between the U.S. and Iran has sparked a global relief rally in stocks and bonds. S&P 500 now up 157 points, or more than 2%. The Dow is up 1,270 points, or 2.7%. And the NASDAQ Composite gaining 623 points, racing ahead 2.8%. Brent crude is down 15% at $92.94 the barrel, its biggest one-day plunge in about 6 years. WTI crude down 17% at $93.66 the barrel. The Bloomberg Dollar Spot Index now at $11.9970. We've also got energy stocks lower as oil prices plunge. We have shares of ExxonMobil, Chevron, and Occidental Petroleum all lower today. Also, semiconductor, memory, and storage stocks are on the rise as the ceasefire promises to unlock supplies of helium. We've got shares of Micron up 8%, SanDisk up 10%, and Western Digital up 8.5%. Bitcoin on the rise today, up 3% at 71,472, and spot gold up better than 1% now at $4,775 the ounce. And that's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate it. Scarlett Phil and Paul Sweeney live here in our Bloomberg Interactive Brokers studio in New York City. We're streaming live on YouTube and on Bloomberg.com. One of the questions I should have asked, but I haven't asked yet today as we think about the ceasefire is, why now? Why did the two sides agree now? So I'm going to ask our next guest, Christopher Smart. He's a founder and managing partner at Arbroath Group and a former special assistant to the president at the National Economic Council during the Obama administration, joining us via Zoom from up in Boston. Chris, thanks so much for joining us here. Help us out. Why do you think these two sides, or three sides, agreed to this ceasefire now?
Well, Paul, Scarlett, great to be with you. I think both sides were sort of looking at the next few weeks and seeing darkening clouds for each of their agendas, and that this was maybe their best chance of trying to come to at least a temporary stoppage while saving at least some face in it all. You know, the president is able to declare that his overwhelming force secured some concessions from Iran, at least in terms of reopening the strait. The Iranians can claim that they, used the strait to stop the U.S. from the bombing right now, but it still, of course, leaves many, many questions in spite of the market rally today about the path ahead for both continued passage of ships through the Gulf and the broader settlement of the war against Iran in terms of the nuclear and other missile capacities it has.
When it comes to the continued passage through the Strait of Hormuz, we're hearing that Iran is charging as much as $2 million per transit for some carriers. Clearly, the country has more leverage over the global economy now with control over the Strait of Hormuz. It can impose these tolls. President Trump reportedly told ABC that the U.S. may form a joint venture with Iran to charge tolls at the Strait of Hormuz. Can you help us think through that?
That wasn't on my bingo card. So I've seen those reports. It's really hard to know what to make of them. I think, you and your colleagues have done great reporting on how tankers have been, or shipping companies have been, making payments to the Iranian government, through maybe some negotiations with Pakistan to get their ships out of the area. $2 million is a lot of money. Except if you've got an oil tanker trapped in the Strait of Hormuz, and at oil prices these days, that's probably well worth paying if it brings down your insurance costs. And again, you're able to secure a hefty profit margin with oil at $93 as of this morning. So I think, if you are anybody that owns a ship with a bunch of oil, those 800 ships you were referring to earlier, trying to get out of there, you're going to be very happy to pay, $2 million to the Iranian government, maybe another $2 million to the U.S. just to get it out. The key question, I think, both as we're looking at the path ahead is, does the missile firing stop today? We're looking at that coming out of Iran. But secondly, what are the ships ready to go into the Gulf over the next week or two to pick up oil? Those are the ones that will really show whether this regime, this ceasefire is going to hold and restore order to oil markets.
Chris, before the war, the Strait of Hormuz was effectively open to everybody. That's not the case today. Are we going to get back to a free-flowing Strait of Hormuz? Because that's the big economic question for many folks in the market.
And that is the key question. And I think the answer is probably, but it will maybe be more expensive than it was before. You know, we're back to $93 oil, but it was, as you recall, mid-60s before all of this started. Again, as I say, if you now have a risk on the table that Iran could cut this off at any point in the future, you're going to see a premium in your insurance costs. And you're also looking for other sources of oil around the world. I mean, I think you're also going to be stockpiling if you are in Korea or in the Philippines or in China, as China already does. But you're also going to be looking for other sources because you know now, as you said, this is no longer completely free, even if some tolling mechanism or even if it's a toll-free mechanism going forward. There's always the possibility now you can't unsee the fact that Iran, with very little military capacity, is able to block this passage.
Chris, before we let you go, I got to ask you about the president talking about tariffs and sanctions relief with Iran, while at the same time threatening to impose tariffs on countries that provide weapons to Iran. Doesn't that, I mean, can that happen if the Supreme Court basically ruled that the president can't impose tariffs based on emergency powers?
It would seem that it could not happen. I saw the social media post this morning from the president. It does seem like he is, again, going back to the old playbook of using the International Emergency Economic Powers Act to impose these tariffs. This is a wartime situation, so maybe the Supreme Court would view it slightly differently, but it does seem like the court was pretty clear that you can't use that authority you can't use that authority for tariffs. And so it seems unlikely. It's also a little confusing because, as you've also been reporting, he's talking about tariff and sanctions relief for Iran in the context of these negotiations. So I think we'll be watching those things, but it's sort of noise in the background right now as we're all focused on what ships will be getting through the straits and how much they may have to pay.
Chris, thanks so much for joining us. Always appreciate getting a few minutes of your time. Christopher Smart, he's a founder and managing partner at Arbroath Group and a former special assistant to the president at the National Economic Council. So we appreciate getting a few minutes of his time. Getting back to the stock market, earnings coming in here. We had Delta put up some decent numbers here, better than decent numbers. And the stock's trading up about 7.5% here today. So we want to break it down, what it means for Delta, what it means for the airlines, how are they dealing with higher fuel costs, and what it might look like as we get ready for the summer travel season. George Ferguson helps us out here. He's a senior aerospace, defense, and airlines analyst, amateur sailor as well for Bloomberg Intelligence, joining us from Princeton. George, what'd you learn today from Delta?
Well, I guess what we learned first is that, as we expected, capacity probably has to come out of this market. I think if fuel prices stay where they are, the airlines all have to drive fares higher. And at higher fares, you're going to have to start to cut capacity. Delta was adding some of the least capacity in 2Q. We were looking at Cirium databases to get sort of total number of seats they were adding to their network. They're adding a little bit less than 2%. So they're talking about going to zero growth in 2Q and not being able to recoup all of what they need in fares to get profitability back to what it was last year. The challenge here will be American growing at 3%, according to Cirium, and United growing at 8-ish, 9-ish%, high single digits. So interesting to see what their competitors say about knocking capacity out of the marketplace to try to get pricing power here.
What does that effort usually look like, George, when they reduce capacity? Is it, I assume it's not from the most profitable routes, but maybe some routes that are less frequently used, or is it regional routes? Or does every airline approach this differently?
No, I think you've got it right. Delta already talked about that on the call as well. They'll start to knock out the least profitable routes, right? And we would imagine that means routes where you're competing against one of your rivals in the marketplace, and so the consumer gets less choice and then ends up having to pay a bit more. I think some of their international routes are performing pretty well. They talked about strength into Europe still. So maybe not much out of there. They talked about weakness into Mexico, especially with some of the unrest we've seen around Mexico. So we'll probably see cuts in there. My guess is they'll look at the domestic market pretty closely and look where they're flying against competitors and decide what they want to pull and what they want to keep.
George, to the extent that the airlines are trying to pass along some of their higher fuel costs to customers, what's the price elasticity of a U.S. flyer these days?
That's pretty challenging, right? I think that the price elasticity is going to be less for Delta, American, and United with a premium flyer. And if you look at Delta's results, the basic cabin was getting the least amount of capacity gains, and fares were starting to turn positive in that basic cabin. But their premium cabins or premium seating is where they're showing some of the bigger gains. So I think their elasticity on those premium seats is a lot lower than the elasticity on that basic seat. So what does that mean? That means as we get into earnings season and we get into these carriers that are carrying a lot more economy passengers, I'm more concerned about their earnings in this quarter and going forward. But there's clearly some elasticity on the premium seats as well.
George, we heard from Delta that they've quantified the cost of higher fuel through June at more than $2 billion. And last month, they saw a $400 million spike in fuel costs in just the first 2 weeks of March. Nevertheless, Delta is sticking with its full-year forecast. If oil stays at these levels and does not return to its pre-war levels of $70 a barrel, do you expect an updated outlook from Delta?
No, that's a good question, right? They pulled the full year now. I think if the volatility stays where it is right now, Delta's going to be reticent to give you, sort of full year guidance. Even the guidance for 2Q, it looks, it's got some pretty decent wide variations on it. So you can see that, I think they're reticent to give you even a lot on the quarter. I mean, fuel prices here, we just doubled fuel prices in what, a month and a half in that environment. And that's, one of the most important expenses for an airline. Last year, it would have been, in the similar quarter, been something like 15% of Delta revenue. Now it's going to be 30% consumed by fuel. When fuel is bouncing around at these levels of volatility, I think they're going to be really hard pressed to want to give you full year guidance or sort of increase, the tightness of their guidance. And right now, I think we have a ceasefire with Iran. I think we've still got to learn.
Right. George, we're going to have to let it go there. Just at a time, no problem. But we got Delta trading higher, up 7%. That's George Ferguson, Senior Aerospace, Defense, and Airlines Analyst at Bloomberg Intelligence. Also, a retired U.S. Army officer, so we thank him for his service. S&P 500 up 140 points. That's 2.2% this year.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Alexis Christoforous. Stocks are higher, but off their best levels of the morning after a report from Iran's news agency that passage of oil tankers via the Strait of Hormuz have been stopped, despite the ceasefire agreement between the U.S. and Iran. Iran saying it will withdraw from the truce deal if attacks do not stop against Lebanon. Right now, we have got oil still lower, headed for its biggest drop since the pandemic. Brent crude at $94.57 a barrel, down 13%. WTI crude down 15% at $95.62 the barrel. Over in equities, the S&P 500 up 142 points. The Dow Jones Industrial Average up 1,085 points, while the NASDAQ Composite is racing higher by 582 points. And the Bloomberg Dollar Spot Index down about 1% at 1199.89. Energy stocks are getting hammered, though, as oil prices slide. Energy is actually the only sector of the S&P 500 in negative territory today. Outside of these war-related stocks, we've got shares of Levi Strauss up 10%. The jeans maker reporting better than expected results, citing strong demand as the company steers shoppers to its own stores and website. And shares of Blue Owl up now 1%, despite Moody's cutting the outlook on Blue Owl's flagship private credit fund to negative because of those growing investor redemptions. To recap, S&P 500 up 141 points, Brent crude 94.45 the barrel. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, Alexis Christoforous, and especially for bringing us those latest headlines. We are still seeing stocks in rally mode, in relief rally mode, but they have pared their losses, as Alexis mentioned, and oil prices are no longer at their lows of the session. They're still down by double digits, but have come off their lows. Let's bring in Kirsten Fontenrose. She is Senior Fellow at Atlantic Council, joining us from Palm Beach, Florida. We should mention Kirsten was also the Senior Director for the Middle East in the last U.S. administration under President Biden. Kirsten, I would just like you to kind of reflect on the headlines Alexis told us about. This report out of the semi-official TASM news agency that Iran may withdraw from this ceasefire agreement if Israel continues to attack Lebanon. Is this just part of the negotiating that takes place after this fragile truce, or is there more to this, do you think?
This is part of that negotiating. It's important to remember that these points that Iran submitted were not accepted. They were acknowledged as the basis for ongoing negotiations, and this is part of them. Iran was asking for Lebanon to be part of the ceasefire, and Israel has said this has nothing to do with Iran. This is our border, and the Lebanese government is looking to evict Iranian influence from Lebanon. So there's no reason we, as Israel, should respect Iran's wishes for a ceasefire here. So it is part of the negotiations. I mean, the U.S. is also going to continue to press Iran on those points. We aren't seeing any overlap between what Iran is asking for and what the U.S. is going to demand during any talks that happen in the next 2 weeks. That little rebound in the market is positive on the ceasefire news, but I would say, you know, make hay while the sun is shining, because after those 2 weeks, all bets could be off.
Kirsten, so why do you think the two sides came together now to have this truce?
It was in both of their interests. Both the U.S. wanted to see that little bit of a market rebound, and President Trump was not actually eager to continue this war. He said since the beginning that he's really looking for a deal, and consistently gave extensions on timelines to give Iran the possibility of coming forward with concessions, talks, diplomacy. Let's do it that way. And for Iran, they were getting a lot of blowback from the rest of the world about the closure of the Strait, and they were facing a UN Security Council draft resolution that might have given countries the ability to use military force if Russia and China had not vetoed that resolution draft. So both of them had a lot to gain from just hitting the pause button for a bit.
Kirsten, we have another headline here that, according to FARS, one of the semi-official official news agencies, oil ships' passage through the Strait of Hormuz has been halted because of those strikes on Lebanon from Israel. It feels like, you know, when you compare what we have now versus before the war started, Iran has even more leverage over the global economy because it has this control over the Strait of Hormuz. Part of the ceasefire agreement was that Iran would coordinate free passage through the Strait of Hormuz. That means its military is in charge, doesn't it?
Well, it means that they're already violating a ceasefire they just agreed to. And they're using this, they're kind of a one-trick pony now. They don't really have a military left, so they're reduced to using the Strait as their one lever, understandably in a conflict situation. But they're going to try to get the international community to pressure Israel to include Lebanon so that that Strait can be opened. That's the tactic they're taking right now.
Kirsten, realistically, what is your view as to what a lasting peace agreement could, in fact, incorporate?
If Iran agrees to not enrich uranium going forward and to move out of the country the uranium that they've already enriched, and agrees to stop developing long range and volumes of missiles, and agrees to stop arming their proxies like Hezbollah and those in Iraq and Yemen, where neither of the governments in those two countries are eager for their influence either, then the U.S. will agree to removing sanctions and to allowing in a flood of foreign direct investment with sanctions waivers on from the Gulf, for instance, with trade relationships, even a talk about a consortium to enrich civilian level nuclear power grade uranium. So there's a lot for Iran to gain if it decides to join the legitimate international economy instead of prioritizing developing weapons of mass destruction.
But that would suggest that there needs to be true regime change to a more democratic government as opposed to a theocratic government that's been ruling the country. Is that realistic to expect?
If the regime remnants who are left still are revolutionary or still see this as existential, because for some of these folks who assume they would not even survive the wrath of their people after the end of a conflict, this becomes a zero-sum game. But if you have those at the lower level who aren't household names known for oppression within Iran, wouldn't necessarily be subject to retributive justice by their own population, then they may be able to take a leadership role and say, I'm going to prioritize both my own self-preservation and the interests of the country's growth going forward over this zero-sum game where I either win all or lose all, and be willing to make some of these concessions.
Kirsten, I want to ask you about the role of Oman in this region going forward, because it was working or is working with Iran on charging tolls for passage through the Strait of Hormuz. At least it was before the ceasefire. It seems to enjoy some measure of trust with Iran as a result. I'm just kind of putting that out there. What is its role, and should we be looking at Oman more carefully now?
It's an interesting question because Oman does have a relationship with Iran where Iran has more trust in them than in other members of the Gulf Cooperation Council Arab states. But part of that is because Oman has always had a foreign policy based on the mantra of friend to all. And they've really tried to walk a fine line on that. We have a fairly new sultan. He's only been in place a few years, and he's still kind of testing the waters on how that foreign policy works in a complicated world. What we're seeing now, though, with this potential agreement on revenue sharing is that it looks to the international community like Oman is siding with Iran for self-enrichment. And they're going to have trouble with that because the UN Convention on the Law of the Seas says that straits cannot be taxed by any unilateral or group of countries. They differ from canals like Panama, Suez, that are sovereign territory. So Oman is going to come under fire they may not be ready for from not the U.S., but from the international community about the economic burden that places on their states.
Kirsten, just about 30 seconds left here. Secretary of Defense Pete Hegseth this morning at his press conference said that there has, in fact, been regime change in Iran. Is that accurate?
Well, it depends on how you look at it. So we have a supreme leader they nominally say is at the helm. Could this be a weekend at Bernie scenario? I mean, the guy, we haven't seen his face and he hasn't made any even on-screen statements. You've got about half of the Supreme National Security Council left, all of the IRGC senior leadership wiped out. So you have to wonder who is calling the shots. So at some level, there is change at the top of the regime. How deeply that regime goes, how deeply it's embedded in the fabric of the technocrats in the government is something that the U.S. government is trying to explore. They're trying to ferret out who might be willing, as I mentioned before, to value the country's growth and future and their own self-preservation over that revolutionary zeal that brought those top leaders in 40 years ago.
Yep. Kirsten, thank you so much. Really appreciate getting a few minutes of your time. Kirsten Fontenrose, Senior Fellow at the Atlantic Council, joining us there as we see markets higher off the intraday highs. Again, a little bit of some reporting coming out from some Iranian agencies that the Strait of Hormuz has now been closed after those attacks by Israel on.
Right. Oil ships passage has been halted after the strikes from Israel on Lebanon continue.
Yep. So we'll stay on top of that, and the markets are reacting to the news just as we all are. S&P up 140 points, the Dow up about 1,100 points here, so about 2.3% move higher. This is
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube and at Bloomberg.com here. We've got oil pulling back on the news of this temporary ceasefire, but we are off the lows of the day. I'm going to quote Brent crude right here, $94.98. It's down $14. It had been as low as $90.40, so kind of off those lows here. So we're getting some reporting that some of the oil going through the Strait of Hormuz may be stopped at the moment. Will Harris joins us here, Senior Global Energy Analyst for Bloomberg Intelligence. He's based in London. Will, talk to us about how you're viewing and how the clients you talk to, how they're viewing global oil and where the prices may settle out. I'm sure there's different scenarios out there.
Yeah, thanks, Paul. So we had a note out this morning saying that we thought the oil market was getting a little bit ahead of itself, given that the situation on the ground really has not changed much at all, despite this agreement of the ceasefire. We think this big drop in the Brent contract, the paper Brent contract, as you mentioned, at now trading in around $94, really reflects an expectation from the market for what oil will be worth in the coming months. It is not reflecting what it actually costs today to keep the lights on, to keep the refiners refining for jet fuel, diesel, and gasoline. If you look at the physical contract, it's trading at or near all-time highs. So I think this is really important for the listeners to know that the physical market is essentially telling us that nothing has changed on the ground, and that's also reflected with some of the headlines that we've seen that essentially no vessels have transited the Strait of Hormuz despite the ceasefire agreement being announced last night.
Yeah, it's a good reminder that as much as things have changed, maybe things haven't changed at all. I know that we talk a lot about this idea of where oil was trading before the war began. What would it take to get Brent to its pre-war level, back to $79 a barrel, or in the 70 range?
Yeah, it's a good question. So I think a lot of people in the market are focused on the recovery of flows through Hormuz, but we are cautioning them that it's much, much more than that. There is a significant amount of inventories built up within the Gulf. There's a lot of production shut in within the Gulf. That's over 10 million barrels a day. That all needs to be gradually brought back on. This is not a simple task, and they could actually come back on at lower volumes than pre-war. So we think that even in a best case scenario, we're looking at months and months of unwinding of the tanker traffic through Hormuz, of loading and unloading and delivery to end markets and recovery of production. We are looking at months, if not longer, to eventually get back to where we were before the war. And you also have the risk, obviously, of geopolitical risk premium sort of being baked in now that this major supply dislocation has occurred.
Well, if I'm Lloyd's of London or some other insurance company, I'm not writing a policy on any of these ships unless I'm absolutely sure that nothing's going to happen. And I'm not sure I can get there. I mean, just take some person in a Boston whaler with a bomb to just really wreak havoc. I mean, how does that side of the equation work?
Yeah, exactly. And I think that's why we've seen such hesitance from all parties really to transit the Strait of Hormuz. Just any attack or even the threat of an attack has been enough to dissuade ship owners, operators, and cargo owners from risking it. So that's why our view on the geopolitical side has been that there's an asymmetric leverage that Iran has really pressed here on the Strait of Hormuz and has been able to squeeze the global economy to eventually achieve at least some of its goals with sanctions relief and among others with the ceasefire agreement announced.
We just want to bring your attention to another headline. It's a red head here crossing the Bloomberg terminal that the Saudi oil pipeline damage is said to be limited after the drone strike. There was some concern that perhaps it was out of commission, but the pipeline damage is said to now be limited after a drone strike. Will, I'm curious to get your take on what this all means, the war, the hit to production for the big energy companies. It's going to be earnings season pretty soon here in the U.S. We've already heard that ExxonMobil lost 6% of its global production in the first quarter because of the Iran war. The kind of thinking so far is that this is all good news for energy companies, but maybe not so much?
So actually, counterintuitively, even those like the European energy majors who actually have significant asset exposure, along with Exxon, to the Persian Gulf, we expect them to actually report relatively strong earnings. We think that the price uplift here that they've caught, the tailwind from the Iran war, is going to way more than offset any operational disruption or damage, even in some cases, that has occurred as a result of the war, particularly for those with active trading divisions that have been able to capture some of this extreme price volatility. So overall, we actually view it as a positive for these Western energy companies who are very well globally diversified and obviously have 5 to 10% of their overall portfolios in the Gulf. So the rest of them, the rest of their portfolio will be able to capture some of this price quite effectively. Now, and of course, it's a much different story for these Gulf energy companies like Saudi Aramco and ADNOC.
All right, Will, thanks so much. Appreciate it. As always, Will Harris, he's a senior global energy analyst for Bloomberg Intelligence. He's based in London. I tell you, one thing they could do is build more of those east-west pipelines. I mean,
yeah, but that's not going to come online anytime soon.
I know, but you got to get going here. I mean, it just seems like that Strait of Hormuz, you have to figure out a way to de-risk that. I guess that's what I'm learning from this whole thing. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment with markets rallying. The S&P up 135 points, the Dow up 1,050 points, the NASDAQ up 500 points, 2.4%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning. A relief rally across financial markets with stocks, treasuries gaining, oil is falling. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We have a lot to discuss in the second hour of the program. The U.S. and Iran agreeing to a 14-day ceasefire, the reopening of the Strait of Hormuz as part of that agreement. But there are ongoing strikes, or at least reports of ongoing strikes hanging over this fragile truce. So we'll get to all of that this hour. Becca Wasser is our defense lead for Bloomberg Economics. She'll join us to give us her take on what she sees happening. Mary Ross Gilbert of Bloomberg Intelligence, a senior equity analyst who covers retail, will talk to us about something outside the purview of the war in Iran. Levi's boosting its outlook. Its direct-to-consumer strategy seems to be paying off. We're also going to check in with Ken Shea, who is our consumer products analyst, or senior consumer products analyst, to preview other earnings, this time from Constellation Brands that's coming out, and get an overview of the markets with Christina Hooper, chief market strategist at the Man Group, as we anticipate how investors will price in all these uncertainties that are coming to the forefront. First, though, let's check in with Amy Morris of Bloomberg News for Bloomberg Business Flash. Hi, Amy.
Hi, Scarlett. Stocks are off their highs this morning after a report out of Iran that the passage of oil tankers through the Strait of Hormuz has been stopped. And, you know, Iran also said it would withdraw from the ceasefire if Israel continues strikes on Lebanon's Hezbollah. We do check the markets for you all day long at Bloomberg. The S&P 500 is up 2%. NASDAQ up more than 2.5%. The Dow up 2.3%. Look at the Russell 2000 index. That's up 2.6%. 10-year Treasury yield at 4.26% and the 2-year yield at 3.76%. WTI and Brent crude both around $95 a barrel. Spot gold is now up 0.75%, near $47.40 per ounce. And the Bloomberg Dollar Spot Index is down less than 1%. Anthony DePaola covers the energy markets for Bloomberg.
The region is reacting to the fact that we haven't seen an escalation of the war here in this region, and that impacts oil markets as well too, because there was a threat against a lot of infrastructure. So that's why we're seeing this big sigh of relief in the market, but we are clearly not out of the woods yet.
Bloomberg's Anthony DePaola reporting more than 800 freighters still stuck in the Persian Gulf. Delta Airlines oil refinery helped reduce the fuel price paid per gallon in the first quarter by more than 2% and will provide a $300 million benefit to second quarter expenses. Delta's first quarter earnings report beat expectations, with total revenue rising 12.9% from a year ago. Delta stock jumped after the company reported better than expected earnings, and the ceasefire was announced. Delta shares now more than 6% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Mars, thank you so much. We appreciate that. Lots going on the market. Appreciate getting Amy's updates there. Green on the screen as Amy is just reporting. But let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Christina Aquino. Christine, what are you looking at?
All right, Paul, let's take a look at some of the biggest gainers today. We're starting with Carnival today. So ticker CCL, that was one of the biggest laggards during the duration of the Iran war. And now that we have a temporary ceasefire deal, also one of the biggest gainers today. That stock is up more than 10%, nearly 11% on the day. If that gain holds through the close, it would be the biggest in more than a year. Remember, at the end of March, Carnival results disappointed, especially because they guided a fuel cost of more than $2 billion, which exceeded estimates. The stock was downgraded at Citi and Bernstein. And so presumably now that fuel costs hopefully are going to start stabilizing, they're going to see the benefit from that as well. And maybe they won't have to pay $350,000 to a cruise influencer.
Yeah, no kidding.
Up their usage.
That's quite the expense. All right, speaking of fuel-related expenses, you're also keeping an eye on Delta.
Absolutely, Scarlett. So Delta, ticker DAL, also one of the biggest gainers today. Airlines, of course, benefiting from lower oil prices, currently up more than 6%. Again, if that gain holds, it will be the biggest in 2 months. We did hear from Delta, of course, earlier today. First quarter adjusted profit and revenue actually exceeding estimates, but they did omit their full year guidance. You can probably guess why. They also said that they're going to incur more than $2 billion of fuel costs. But again, analysts are saying it's encouraging that they did have a rather positive outlook, and the fact that we're now, again, hopefully seeing oil prices come down, that bodes well for the company moving forward.
XOM.
XONM. So ExxonMobil. Yeah, exactly. So speaking of laggards today, that is definitely one of the laggards today. As you can imagine, those shares are down more than 5% currently. ExxonMobil also saying that they apparently lost 6% of global production in the first quarter as the Iran war intensified. Half of those outages were actually from an LNG complex in Qatar, where Exxon is a partner. They already said that first quarter earnings are going to be lower from its energy products division. They're among the first companies to really give guidance on the impact of the war here. And we're going to be getting those full sets of results on the 1st of May. So stay tuned.
All right. Thank you so much, Christina Aquino. She is our managing editor for our Markets Live coverage. You can check out her work on MLive Go on the Bloomberg Terminal. And for more conversations like what you just heard, subscribe to our Stock Movers Reports, where we offer you 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. All right, let's move on and give you the overview of what's going on in the Middle East. There is a 14-day ceasefire, but it appears pretty fragile. Paul?
It does. We've got still some Israeli actions in Lebanon. We've still got some various missile and drone strikes at various parts of the region there. So we'll see how this, if it firms up at all over the coming hours.
And Pakistan, which of course played a key role in mediating the truce, is now saying that the attacks in Lebanon may render the ceasefire moot, may violate the ceasefire. So let's check in right now with Becca Wasser. She's the defense lead for Bloomberg Economics on the latest in the Middle East. Becca, how are you monitoring these headlines that seem to show that even though the ceasefire was negotiated just yesterday, it's already showing signs of fraying? Or maybe this is all just negotiations?
Well, you know, it is a very fragile ceasefire, as you said, and things seem to be changing by the minute. But at this juncture in time, it appears as though it's a ceasefire in name only. You have Israel striking in Lebanon, saying that it's striking Hezbollah, but not Iran directly. You also see Iran continuing to launch over 120 projectiles at the Gulf states today. That includes missiles and drone attacks, including an attack on key energy infrastructure. And on top of all of this, you also now have Iranian news reporting that some oil tankers do not have passage through the Strait of Hormuz because of Israel's strikes on Lebanon. So things seem quite tenuous at this juncture in time. But really what the ceasefire was trying to give space for these negotiations on Friday. But even then, it seems as though Iran's 10-point plan and where the U.S. and frankly Israel is, there might be too much space between them to actually overcome that chasm and come to a more lasting deal anyway.
You know, Becca, I think if you talk to folks in the energy business, they would tell you, before this war, this Strait of Hormuz thing really wasn't a big risk if you just take a look at the price of Brent crude. But now, arguably it is a thing. And now there is going to be some type of premium that will likely be put into oil coming out of that part of the world. Is that kind of where we are here? Because that doesn't seem like necessarily a good outcome here.
I mean, I think we are in a brave new world when it comes down to this. Iran has demonstrated that they can retain control over the Strait of Hormuz. It's something that they've threatened to do in the past, but never gone ahead and done, or even threatened to do at the level that they did. So this is a point of leverage for Iran that they're not going to give up anytime soon. Additionally, I think we do have to continue to keep eyes on the Red Sea. You know, should the ceasefire not hold, and should there be the potential for additional violence and fighting, you know, the Houthis still have managed to hold the Red Sea at risk and essentially make it so that a lot of commercial traffic is still rerouting even over a year after the initial attacks. So when you have those two things happening in tandem, you definitely do see a geopolitical risk premium being put towards oil prices.
I really like what you said about how this is a ceasefire in name only, with each side claiming victory. Beyond their public statements, Becca, what does the fact that each side is moving forward with a pause, at least officially, what does it reveal? Does it show that one side has an advantage over the other? Are both sides playing defense because both sides desperately want to de-escalate?
I mean, I think de-escalation is key here. And part of this was, you know, there was a massive attack that was threatened against Iran, including more so against Iranian civilians and civilian infrastructure. So the fact that that has been averted is a good news story. But when you look at things and you look at the fact that it's only a 2-week pause, that's not enough for either side to reconstitute forces, to rebuild, you know, expended missiles and munitions. But what it does give is a little bit of time and a little bit of space for various forces to regroup. It allows President Trump to flow additional forces into the region if needed, but more so, it gives all sides a bit of a pause, and it gives markets a bit of a pause and some breathing room, which I think is very much what President Trump hoped to see after the ceasefire announcement.
Do you think both sides, or all three sides, including Israel, do they have incentives to make this work?
They do, and then they also don't. And this is why negotiations are going to be so tricky. Obviously, peacetime actually benefits everyone, whether especially economically. It also allows you to reconstitute forces militarily. And, you know, we've seen a lot of reports about, you know, how Iran's capabilities are heavily degraded in some areas, although it continues to fight. We've heard stories about Israeli air defense interceptors being a bit low, and the United States has expended a great deal of munitions. But even with all of that, you know, peacetime benefits all. But I think right now, all sides are seemingly entrenched in this ongoing conflict, in ongoing objectives that they set out at the start of the war, and for the US and Israel, frankly, shifted over time and trying to achieve those. But really right now, it's also about messaging victory, but also security for various populations.
All right, Becca, thank you so much. Becca Wasser is defense lead for Bloomberg Economics, saying that we've avoided the worst case scenario, and it allows everyone to kind of take a breath.
Yeah.
A pause, if nothing else.
That's a good thing. So.
That is a good thing, given where we were 48 hours ago. All right, Mary Ross Gilbert is our senior equity analyst covering retail, and we want to get to some earnings. It's not often that you have a retail company come out with earnings at this point in the earnings season, but every once in a while it does happen. So
yeah, the retailers are usually a month late.
They're usually monthly, and you know, they're off schedule with what the rest of the companies are doing right now. Let's talk about Levi's right now, because Levi's has boosted its outlook. Its direct-to-consumer strategy appears to be paying off. Mary, tell us a little bit more about what we've learned about Levi's when it comes to its outlook.
Yeah, so when it comes to its outlook, and when you think about the beat in the quarter, and what the company said on their earnings call, is that the beat was really driven by the wholesale side of the business. Clearly, direct-to-consumer led growth, you know, was up double digits, up about 10%. But when you look at the wholesale business, that was very strong in the quarter. And because of that, that's where they got sort of the beat there. But I think that the company has always done a very good job managing investor expectations. We completely expected a beat and raise. And the great news about Levi's, I think, is because last year they exited the Denizen business. So this was sort of it's kind of like a private brand that they had with Target. They also exited Dockers, so they really got out of businesses that were really dragging down the top line. And so now what you have left is really Levi's and Beyond Yoga, and it's a great global brand, resonates well. They have 46 million loyalty customers. They picked up over 2 million just in the first quarter alone. So you're seeing real strength here. Their campaigns are incredible. I'm sure you saw the Behind Every Original, which debuted at the Super Bowl. So it's fabulous. Features Doichi among other stars in that campaign, and it's going to be a multi-year drop. That's kind of like what they did with the Beyonce campaign, where you have these series of campaigns, and they're so fun.
All right. The TV show Love Story, John F. Kennedy Jr. and Carolyn Bessette. How does that relate to Levi's?
Yeah, so because the character in that film was wearing 517 Levi's and also, and this is sort of another brand, but Calvin Klein. And so because of that, it's kind of really ignited sales there too. So anytime you can get these benefits, organically, for example, Harry Styles, wore it, at an award show, along with all the dancers too, wore 501s. So he wore 501s and they all wore 501s. So
right.
I mean, it's at the heart of culture. If you look around, I was at the golf club Friday night, and I saw this very stylish young lady wearing Levi's jeans with heels and a beautiful blouse, and it's like, wow. So
yeah, well,
it's kind of everywhere.
As Alexis was reminding us, the 90s are back, and it's a Levi's 517, the men's bootcut jeans that Carolyn Bessette Kennedy, or the character portraying Carolyn Bessette Kennedy, was wearing. We should mention as well that the CEO of Levi's will be on Bloomberg Business Week this afternoon. Michelle Gass will be speaking with Tim Stanovic and Carol Master, so be sure to tune in for that. Yeah, Mary, these kinds of pop culture sparked, trends for certain jeans. How long do they last for? Is this something just for this quarter, or can it go on for a while?
Oh, no, this can go on for a while. And actually, Levi's is known for their campaigns over many decades. You can go back several decades and find some absolutely amazing campaigns that the brand has done. So they've always been focused on being right at the center of culture. That's sort of the language or the ethos that they always talk about. And they've always been successful doing that. So yes, this is going to continue to go on, forever, really. And all the other brands are getting involved.
That's funny. All right, Mary, thank you so much for that. We really appreciate it. Mary Ross Gilbert, Senior Equity Analyst. She covers the retail companies for Bloomberg Intelligence. She's based out there in LA. And in my golf club, no jeans.
No jeans?
Period. On property, ever.
So how do people express, the trend towards baggy pants? Or they don't?
Yeah, they don't. They wear khakis, and that's about it. That's
unchanged since the 90s.
Yeah.
Unchanged since the 80s.
Yeah, I don't know. That's just kind of how they roll theirs. Because she mentioned that in my eyes, my antenna popped up, and I was like, boy, I wish we could wear jeans. All right, let's look at these markets here. We've still got holding on to the gains. Let's put it that way. S&P 500 up 140 points. That's 2.1%. The Dow up a little more than 1,000 points, 2.3%. And NASDAQ holding it up 570, 2.6%. So holding on to the gains. Oil still lower, not quite as on the lows of the day, but lower. So I guess it's having the intended effect,
right?
That I think the president wanted to see.
It's a relief rally. How long does it last? That's the question. Exactly. It all depends on how much progress is made between the U.S. and Israel and Iran as they hold talks to come up with a more long-term solution here to the ongoing conflict in the Middle East. This is Bloomberg Intelligence on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Pakistan is warning the ceasefire may be at risk as Israel keeps up strikes against Hezbollah, and traffic through the Strait of Hormuz is reportedly halted again. We check markets for you all day long here at Bloomberg. The S&P 500 up 2.1%, NASDAQ up 2.6%, and the Dow up 2.3%. That's a gain of more than 1,000 points. The 10-year Treasury yield at 4.26% and the 2-year yield at 3.75%. Both WTI and Brent crude continuing to bounce around $95 per barrel. Moody's ratings cut the outlook on Blue Owl credit income to negative after what they describe as significantly higher than peer redemption requests in the first quarter. The private credit industry is facing an investor exodus amid concerns over lax lending standards and failure to clearly explain liquidity restrictions. Moody's expects elevated redemptions to persist in coming quarters, and inflows could slow further. Blue Owl shares less than 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back to Bloomberg Intelligence now with Scarlett Fu and Paul Sweeney.
All right, thank you so much. Amy Morris in Washington with our Bloomberg Business Flash. We do have earnings taking place because Levi's reported, Constellation Brands will be reporting this afternoon, which means we need to get a preview right now with Ken Shea. He is our Senior Consumer Products Analyst to give us a sense of what this wine and spirits company is likely to say. Ken, let me start with a really dumb question. Levi Strauss boosted its outlook because the 90s is making a comeback, and Levi's 517, the bootcut jean, is having a moment because of the Love Story miniseries about JFK Jr., Carolyn Bessette Kennedy. But wine and beer were big in the 90s. Is that helping at all Constellation earnings?
Yeah, hi, Scarlett. Well, I would be a little more skeptical of that happening this quarter anyway. Maybe longer term, who knows what could happen, right? But I think what this quarter is going to tell us, Constellation, it's going to be, first of all, it's fourth quarter, and that means there's going to be a lot of cross currents going on here. On the business side, it probably means their beer business, which has been doing pretty lackluster over the last few quarters, could be showing signs of recovery. At least that's what the latest scanning data from Circana tells us. But in contrast, the wine and spirits side, which you alluded to, is likely to see more sluggish performance. You know, this particular quarter, it's going to be hurt by a lot of divestitures that the company has embarked on over the last few quarters. So there's going to be quite a bit of noise with that. Fourth quarter is usually come with a lot of noise. Could be some write-downs, special charges, so on. Particularly this time because you have an incoming CEO in a fourth quarter. So it's likely there could be some clearing of the decks a little bit to allow the new CEO, Nicholas Fink, to put his own thumbprint on it going forward.
Ken, it may not come as a surprise to you, but I am on a first-name basis with several bartenders down at the Jersey Shore. What they tell me is the kids are drinking less, and maybe part of it's because they're doing the gummy thing. Are you hearing that from your companies?
I'm hearing more and more of an acknowledgement of that, Paul. I think these companies over the last couple of years have been assigning the sluggish alcoholic market conditions mostly to cautious consumer spending, you know, the cyclical nature of where we're at. But, you know, I cover the cannabis group. I know there's a substitution effect going on. You also have the GLP-1 crowd drinks less. So there are some structural, longer-term issues this industry has to deal with. In terms of breaking how much, you know, all these factors play a role, no one really knows. But I think it's more of an acknowledgement that these longer-term issues are there.
These companies are global. Are you seeing different trends in different parts of the world?
There's more of a stable, resilient demand, I think, outside the U.S., particularly for those matters I just mentioned to you. You know, really, it's different market by market. by and large, the spirits business has embarked on a premiumization strategy, meaning they've really doubled down, tripled down on the higher end premium, super premium brands. That doesn't play well in a lot of low income, low wealth regions of the world, exacerbated by some of the geopolitical events and so on. So really, it really depends on region by region. But outside the U.S. seems to be, in total, a little more resilient than in the U.S.
Ken, I'm drinking Barbaresco wine these days. Am I paying a tariff to Italy?
Well, it really depends, on what the political headwinds are in terms of tariffs. By and large, these companies are imports into the U.S. are paying tariffs, so a lot of the companies, U.S. companies, depend on imports to sell in the U.S. That's going to be a factor. Constellation will cite with regard to particularly aluminum cans. Their imports on aluminum cans are likely to erode the margins a little bit.
All right, Ken, thanks so much. Appreciate it. As always, Ken Shea, Senior Consumer Products Analyst for Bloomberg Intelligence. He's down there in our Princeton, New Jersey office. Stocks holding on to the gains here. Yields coming in just slightly. And oil lower by about 15% on WTI crude oil. It had been down about 20% earlier today. We'll stay on top of that. Let's get back to these markets. Christina Hooper joins us here, Chief Market Strategist at the Man Group, joins us here in our studio. Christina, what are the conversations you're having with your clients in a world where, boy, 6-7 weeks ago, things were going pretty well? We were just worried about earnings, maybe trying to get a handle on AI, and then a hot war started. What have been the conversations with your clients over the last 6-7 weeks? I'm sorry.
Well, a lot of it has been thinking about different potential paths because we just have so much uncertainty. And we still do, quite frankly, because we do have a ceasefire, thankfully, but it does seem quite fragile. The vice president described it as fragile. And if you look at Iran's 10-point plan, it's hard to imagine the U.S. agreeing to this or even coming to some agreement with Iran that is some kind of compromise, given what's in that. It looks like Iran is going to take a hardline position on this, and if the U.S. were to agree to it, it would be right out of the George Costanza School of Negotiating. So I do worry that this is quite fragile, and so then it's about asking what are the potential pathways from here, and what then are the asset class implications.
And also decades of distrust between both sides, between the U.S. and Iran as well. So as we try to figure things out, what kind of assumptions, I guess, do you make about where oil prices hover for the foreseeable future?
Well, I think we have to think about several different potential levels. It is a surprise to see oil prices come down so fast, given that boats are still not getting through the Strait of Hormuz, and there are question marks around exactly how comfortable they'll be going through, what kind of safety assurances they'll get, and of course this potential for tolling. Obviously, Iran has done some tolling already. It looks like this could become a much bigger venture, perhaps a U.S.-Iran toll booth, so to speak. And so we have to ask ourselves, where does that cause oil prices ultimately to go? And if this ceasefire doesn't work, we're hearing about drone attacks. Could oil go up to $150 a barrel? We were hearing just yesterday that the physical oil was at very close to $150 levels. So I think it's mapping out, hey, worst case scenario, let's say $200 oil. A bad case scenario, $150 to $190, and then what if we are in that sort of 110 to 120 range? That seems probably most likely, at least in the next couple of months. Well, we can harken back to 2022, where we saw oil prices at around 100 for about 5 months. About 3 of those weeks within the 5 months, it was at about 120. What kind of impact did that have on earnings? Earnings, were negatively impacted, not dramatically. Of course, some industries and sectors far more than others, and energy got a boost from it. But I think just sort of modeling through what could happen depending upon where oil prices are, and then trying to factor in things like what happens to semiconductor. It's an environment where you're not able to get the helium you need, other shortages. So I think it's a lot of modeling and a lot of question marks.
Do you change your allocation globally here whether either regionally, asset class, or do you just try to look through the other side and stick with your plan?
Well, it really depends on your time horizon. But for most clients, they have a long time horizon. So this is just volatility. This is just a lot of near-term uncertainty, and they can pretty much maintain their allocations, especially if they're well diversified across and within the three major asset classes.
In the meantime, you kind of focus on the fundamentals on the corporate side and economic fundamentals. And we get a big data point this week. CPI is coming out on Friday. The headline number, Christina, indicates a 1% gain in CPI month over month, mainly because of oil prices. How much do you read into that, given that we don't know what's going to happen with oil?
Well, that is the $64,000 question. What will the Fed read into it? And will it ignore it as a one-off, assuming that this is the beginning of the end of the Iran war and that we're going to see oil prices much lower? I think that the Fed is going to have some really difficult conversations at the end of this month. Of course, we'll know how the ceasefire has evolved. They'll have a better sense of what happens going forward. But I think the Fed will be predisposed to actually tighten because inflation is a bigger concern, in my opinion, than growth right now.
In past discussions with you, Christina, you've talked about you have a higher expectation, or expectations a little bit higher for a recession. And
absolutely.
Is that still the case? Maybe is it even more so given what's happened?
Absolutely. My thesis has been about expectations that we could see a slowdown in AI, CapEx spending, and of course, additional pressure being placed on consumers. We're seeing that pressure being placed on consumers. Of course, some of it is that those elevated oil prices, but that's not all. We're seeing a weakening labor market. Obviously, the headline was positive for the March jobs report, but if we look at, for example, U6, it's much higher than it was just a year ago. There are signs in different surveys that suggest it's harder for people to get jobs. That is going to weigh on consumers, and it's going to increase, in my opinion, the chances of recession this year.
Christina, what are the havens of choice right now? I mean, where would you go to seek that safety?
Well, there is no sure safe haven. I think what we've learned over the last few months is that we need to be well diversified in our safe haven asset allocation. So that does include gold, that includes cash and short-term treasuries. That also includes hedging strategies, just to provide some lower correlation asset classes in one's portfolio. I think this is a time when we need to be very thoughtful and very well diversified.
All right, Christina, thank you so much. Appreciate it as always. Christina Hooper, she is a Chief Global Market Strategist at the Man Group, joining us live here on our Bloomberg Interactive Broker. We have the stocks holding on to the gains here. The S&P's up 140 points, that's 2.2%. The Nasdaq's up about 570 points, that's 2.6%. And the Dow up 1,100 points. Never get used to that, up 2.4% there. And again, looking at oil, because that's driving the bus here, as it has been for the last 7 weeks. WTI crude oil, it's down $17. We're sitting just under $96 per barrel there. Bitcoin, Tom on the Upper East Side, looking for a quote. It's higher.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. Continued fighting in the Middle East, including Israeli strikes in Lebanon, threatening to derail the fragile U.S.-Iran ceasefire. We check markets for you all day long here at Bloomberg. The S&P 500 is 2.25% higher. NASDAQ is more than 2.5% higher. The Dow is just about 2.5% higher. The 10-year Treasury yield at 4.26%. The 2-year yield at 3.75%. WTI and Brent crude both still bouncing around $95 per gallon. Spot gold more than 1% higher, now around $47.60 per ounce. And the Bloomberg Dollar Spot Index is about 0.9% lower. President Trump posting on social media that any country supplying military weapons to Iran would be immediately tariffed. The president writing that would apply to, quote, any and all goods sold to the United States of America, 50% effective immediately. Now, Trump's announcement on the tariffs has not been documented by the White House nor signed by the president. But the president may also lack the power to put those tariffs in place after the Supreme Court decision that his previous tariff regime that was put in place via an emergency law violated the Constitution. Delta sounding a note of caution in its latest earnings report, thanks to the war with Iran. Bloomberg's Dan Curtis explains.
The company is omitting full-year guidance in its earnings report. On that cautious note, it does see over $2 billion increase in fuel costs this quarter. It's guiding low-teen revenue growth in this quarter as it notes strong demand.
Bloomberg's Dan Curtis reports Delta CEO Ed Bastian is also talking about looking for ways to raise fares even more. Delta shares now more than 6% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We are live here in the Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. The news of the day is the 2-week ceasefire between the U.S., Iran, and Israel. Where do we go from here? That's probably the next question for a lot of people. The markets are certainly reacting positively here to a de-risking, at least in the short term here. But let's check in with the expert on this stuff, Aaron David Miller, Senior Fellow at the Carnegie Endowment for International Peace. Aaron, what do you make of this ceasefire just on face value? What's it mean to you?
I think Trump wanted a way out because he faced a very difficult choice. Number one, to escalate according to the insane notion of destroying Iran as a civilization in 4 hours, or alternatively backing down. And he was offered a lifeline and grabbed it. 2-week ceasefire, dependent, of course, conditional, of course, and Trump's language here is pretty specific, a complete, safe, and there was another adjective, opening of the straits. And I think by and large that 2-week ceasefire is going to hold, but it's hard to imagine, given the nature of the issues involved in any negotiation, that you're going to be able to find a balance of interest that meets Iran's needs and Trump's. I suspect you could end up with an extension of those 2 weeks. But I think, last point, it's going to be very hard for the president to go back to the way we watched war waged over the last 6 weeks. We're going to end up in a very uncertain situation between a comprehensive agreement on one hand and a return to intensive conflict on the other.
It feels like the ceasefire has not resolved some of the fundamental issues that led to the war, right? Iran's government is intact. There's a new leader, but the regime is still there. And the nuclear stockpile remains in place as well. Is that on the table in these ceasefire talks, the nuclear stockpile?
I mean, it'll be on the table, but I think those issues are intractable right now. Look, the Iranians, if the war stopped tomorrow, despite Secretary of Defense's efforts this morning to call it a major military victory, I would argue it's a tactical victory to be sure, but it's a strategic defeat. As you pointed out, the regime survives. It coheres. It's able to make decisions. It's faced down the largest, most powerful military in the world and the most powerful military in the region, Israel. It maintains 900 pounds of highly enriched uranium. President said this morning, we know where it is. We can cover it by satellite. Nonetheless, the Iranians have it. They've demonstrated a capacity to deploy geography. They can rocket and zone the Gulf states at will. And they now control something they didn't control before February 28th, which is the Straits. By any standard, you can't spin that as anything as a loss for the U.S. And I don't see the next 2 weeks, frankly, resolving those three issues to the satisfaction of the United States. My prediction is this will end without a comprehensive agreement. There may be some understandings, and we may return to a kind of between peace and war environment, which is where we've been with the Iranians for the last 30 years.
So I guess for folks in the market, not just the energy markets, but broader markets in general, and people think about economic growth on a global scale, probably one of the more critical issues is the Strait of Hormuz. And we went from a pre-January timeframe when it was open, and it was open for trade. And yes, it was identified as a risk, but it was open. Now it's not. What incentives does Iran have to open it up, I guess?
I mean, to trade opening, regulated openings for reconstruction assistance, either through tolls or sanctions relief. I interviewed Halima Croft from RBC, who was really quite extraordinary yesterday. And the fact is, it's going to be months before pre-war oil flows can be restored, in large measure because of extraordinary infrastructure damage. A country like Iraq, which is OPEC's second largest producer, shut in because they didn't have the amount of storage capacity they needed to retain the oil. They couldn't export it. And it's going to take them weeks, if not months, to come back online, not to mention the damage that the Qataris have suffered with respect to LNG, fertilizer, helium, all this stuff. So I just don't think, frankly, and the Straits are a core issue here. I don't know how they're going to be resolved, that issue can be resolved. I don't think after 2 weeks, particularly if there's an extension, whether or not the negotiations are working, that this administration is going to want to go back to the last 6 weeks. There's not a constituency in this country right now that Donald Trump cares about that isn't breathing a collective sigh of relief this morning that markets are going up and price of crude is going down. Going back to resuming 6 weeks of war where they failed to basically undermine Iran's capacity, that's throwing not just good money after bad, that's sacrificing lives and putting Americans at risk for absolutely no reason. But we're not going to come out of this with some slam dunk black or white victory.
Right.
This is the Middle East. It eats up transformations, and it's more than not a place where U.S. ideas on peacemaking and war making go to die.
Aaron, what's the single biggest new risk that this 6-week conflict has created?
I'm sorry, the single biggest
new risk that has come out of this.
I think the big losers here, as we look at winners and losers, other than the civilians who have been killed in Israel's efforts in Lebanon and the Iranian civilians that have been killed, and those in the Gulf, the biggest losers here are the Gulf states. They envisioned a future in which they would become an economic hub, a financial hub, a cultural hub. They wanted to move beyond oil, MBS is Mohammed bin Salman's Vision 230. All of that is now at risk. The Iranians have, as I mentioned, geography is destiny in this part of the world. And the Iranians 6 weeks in have demonstrated that they can deploy geography to their advantage. I don't know how the Gulf states comport themselves. They've got to be furious at the U.S., but they're increasingly dependent on it.
Yep.
And they're angry at the Israelis. I don't know how that's going to sort of, but if you asked me what is the big takeaway here, and it is inextricably linked to the states, it's that the Gulf states are the biggest losers. And the Iranians are now negotiating with the Omanis.
Yeah.
Yep. All right, Aaron, thank you so much. Appreciate it. Aaron David Miller, Senior Fellow, Carnegie Endowment for International Peace, joining us from Washington, D.C. with some thoughts on how this war and now this 2-week ceasefire may play out going forward. The market's certainly giving it a thumbs up. This is Bloomberg.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and streaming live on Bloomberg.com/video. And that's where you'll find all the live and curated video coming out of the Bloomberg complex. S&P holding on to gains up 2.4%. 2026 is expected to be a year where there's going to be some huge IPOs coming out of AI in particular, but also arguably the biggest of all time is going to be Elon Musk and SpaceX. That's coming, folks. Max Chafkin, he follows all things Elon. He's a Bloomberg Businessweek senior reporter and co-host of the Elon Inc. podcast. He's out in San Francisco here today. Max, what's the latest on potential IPO of SpaceX?
Right. So this was a confidential IPO filing last week from SpaceX, Elon Musk's rocket company, which is now also Elon Musk's AI company, because in February he merged SpaceX with XAI, which owns Twitter, but also makes the a chatbot that is competitive with Anthropic and OpenAI. And what is happening right now is bankers from SpaceX are shopping this thing, trying to take the temperature. And the idea is to get this out very quickly. You know, they're talking about as early as June, and at valuations that are very high. You know, we've seen a bunch of different reports, but earlier this week, Bloomberg said that in some cases, talking about valuations over $2 trillion. Wow. You know, putting that in perspective, it would make SpaceX, you know, one of the most valuable companies in the world. We are going to see some other big IPOs, and I don't think we know for sure which one will be the biggest. Anthropic, a lot of good news coming out of that company lately. They are trying to go public, and OpenAI as well. So it's kind of a race between these three companies to get out first and go biggest.
What do we know, Max, about the financials of SpaceXI?
Well, we know a little bit because although SpaceX is a private company, it's been private for a very long time. They've done tender offers. The stock has, or the equity has traded on secondary markets. This is a company that has done pretty well. Reports suggesting that, and Bloomberg Intelligence estimates suggesting revenues just under $20 billion, mostly coming from Starlink. That is the satellite internet business that SpaceX operates. You also have significant revenue coming from government contracts. SpaceX provides launches for the U.S. government. Now, at $2 trillion, though, it's a very small company to be worth $2 trillion. So most of the valuation is going to come essentially from the future, which is how Elon Musk always likes it. The latest story from Musk is data centers in space.
Exactly. How about control here? Elon Musk, is he going to, how will he keep control of this company? Is there maybe a super voting stock being discussed?
I believe they're talking about super voting, although I'm not 100% sure on that one. And the truth is, it doesn't really matter. Elon Musk doesn't have super voting with Tesla, but he does control it because of the kind of unique relationship Elon Musk has with his investors. My assumption is he will get control. He's been fighting for control with Tesla, whether it's through super voting shares or some other mechanism. But yes, the expectation is he is going to run the company as the, sole CEO, sole decider, just as it is in Tesla.
Is there, I guess among Tesla investors, there's also the hope or potential that SpaceXI, once it is public, will just roll up and buy Tesla and put all of Elon's toys in one place. What are you hearing about that?
Yeah, I think that is widely regarded, not just among kind of Tesla investors, not just among Elon Musk's fans, but also people who are looking at the SpaceX IPO as a strong possibility, partly because Musk has kind of hinted at that. This data center in space plan involves a massive chip fab, the so-called terafab, which yesterday Elon Musk announced a partnership with Intel, big American chip maker. That is a SpaceX-Tesla joint venture. You also have this situation where the shareholder bases are going to be pretty similar. SpaceX's IPO, they're talking about as much as 30%, maybe even more retail shareholders. That's a lot of retail shareholders. That's the kind of Elon Musk fan community. Those are, of course, the same people that hold Tesla shares. So, you know, I think one risk here is a question of, do they have enough money? Are there enough of those people to bid up both stocks, or are you going to see people selling Tesla shares maybe to buy SpaceX shares, something like that? And so you could imagine arguments for, hey, it'd be simpler. This same CEO, we're kind of pushing in the same direction, which is AI. Why not just put them together? This will get very messy if Elon Musk actually tries to pull this off, because even though Tesla is controlled by Elon Musk, there's still a lot of shareholders that, you know, this would be controversial, it'll be a mega inside transaction. There would be questions about valuation. So I think a lot of things would have to fall into place for that to actually happen.
Yeah, this is going to be really, really fun to watch, and it's going to be great to see your reporting on that. Max Chafkin, he's Bloomberg Business Week senior reporter. He's a co-host of the Elon Inc. Podcast. He's out there in our San Francisco offices, which are just awesome, by the way, out there on Pier 3 in the Bay. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Markets higher on the news of a ceasefire, temporary ceasefire. The S&P up 155 points. That's 2.3%. The Dow's up 1,200 points, 47,800. That's up 2.6%. And the Nasdaq up 620 points, 2.8%. We'll have more coming up. This is Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Cammie McCormick. A ceasefire with Iran is in place, and as Linda Kenyon reports, direct talks could be next.
President Trump says he expects peace talks with Iran to take place in Pakistan. He told the New York Post those talks should happen very soon. Pakistan officials say those talks could begin as soon as Friday. The president says Special Envoy Steve Witkoff, his son-in-law Jared Kushner, and JD will be there, referring to Vice President Vance. He also said, quote, maybe JD, I don't know. There's a question of safety, security.
There are different interpretations of the ceasefire deal. Iran sees it as a chance to keep charging ships using the Strait of Hormuz, as Elizabeth Palmer reports.
Petroleum Exporters Association is saying ships will not only have to pay a transit fee, but it's going to have to be paid in crypto, and they're going to have to be inspected before they pass, so that'll slow the whole transit down. In effect, Iran is already acting as if it's being accorded control of one of the world's most important energy arteries. It's an ominous sign for Iranians who were hoping this war would help get rid of a regime that they really despise. Now they fear it's about to become not only more self-confident, but more powerful and more brutal.
A Long Island architect has admitted his guilt in 7 murders known as the Gilgo Beach killings, and Michael Wallace reports he's confessed to another.
In a packed courtroom, Rex Heuermann admitted he strangled 8 women between 1993 and 2011. New York Law School professor Anna Kaminsky says the victims' families are probably feeling mixed emotions about today's guilty pleas.
For some of them, I'm sure it will be some closure, and for others, it will feel, like just a very small piece of this horrible tragedy that they've been through.
Prosecutors have recommended 3 consecutive sentences of life without parole for Heuermann. Michael Wallace, CBS News.
A woman who admitted selling Matthew Perry ketamine will be sentenced today. Rick Montanez has more.
Jasveen Sangha, she is actually the 3rd of 5 people who will be sentenced in connection with Perry's death back in 2023. Sangha is the only one in that group whose plea deal includes acknowledgement of Perry's death. Prosecutors dubbed her the ketamine queen, saying she created an elaborate drug operation and catered to high-end and wealthy clients.
Pam Bondi will not be appearing April 14th for a deposition before the House Oversight Committee. A committee spokeswoman says she was subpoenaed in her capacity as Attorney General to answer questions in the Jeffrey Epstein case. On Wall Street today, stocks are higher. The Dow up 1,200 points. This is CBS News. Hollywood actress is speaking out after a scary car crash. Deborah Rodriguez has that.
Tori Spelling says she was driving 4 of her children and 3 of their friends in Temecula.
And I looked to my right and I saw he was coming full impact into the side of our car.
The Beverly Hills 90210 star says she made a hard left to avoid maximum impact.
We are so grateful and so lucky because it could have been so much worse.
She and the children were hospitalized and treated for cuts, bruises, contusions, and concussions. Spelling says everyone's okay now.
Guardian angels were definitely with us that day.
In her Instagram post, she says she believes the other driver was speeding. So far, no arrests. Deborah Rodriguez, CBS News.
After the cancellation of a British festival he was to headline because of his past anti-Semitic remarks, Kanye West now says he'll have to show change through his actions. I'm Cammie McCormick, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
A 2-week ceasefire, if it can hold. Welcome to Balance of Power. I'm Kaylee Lines, joining you on what is day 1 of a stop in hostilities between the U.S. and Iran. But this pause is fragile, with questions still remaining on Iran's nuclear program, Israel's continued fighting against Hezbollah, and the reopening of the Strait of Hormuz, which seems to be on pause because of those aforementioned Israeli strikes in Lebanon. It's a lot to get to this hour as we take stock of where exactly things stand. We'll have the latest from Bloomberg's Tyler Kendall at the White House with analysis from Becca Wasser of Bloomberg Economics and our political panel. Plus, we have to note the market reaction today, which has been aggressive, to say the least. We'll have more on that with Bloomberg's Ed Harrison and Mike McGlone later on, but we start with Amy Morris, who has a look at where we're trading right this moment from here in Washington. Hey, Amy.
Hey, Kaylee. Aggressively green, if you will. S&P 500 is up 2.4%, NASDAQ up 2.8%, and the Dow up 2.6%. The Dow is now up more than 1,200 points. The 10-year Treasury yield at 4.27%, the 2-year yield at 3.76%. WTI and Brent crude still sort of bouncing around that $95 per barrel mark, but they're actually starting to slip now, closer to $94 per barrel. Spot gold is up 1%, near $47.60 per ounce. Bloomberg Dollar Spot Index is down less than 1%. Anthony DePaola covers the energy markets for Bloomberg.
The region is reacting to the fact that we haven't seen an escalation of the war here in this region, and that impacts oil markets as well too, because there was a threat against a lot of infrastructure. So that's why we're seeing this big sigh of relief in the market, but we are clearly not out of the woods yet.
Bloomberg's Anthony DePaola. President Trump says the U.S. is discussing tariff and sanctions relief with Iran. We're going to keep an eye on that for you. Delta Airlines oil refinery helped reduce the fuel price paid per gallon in the first quarter by more than 2% and will provide a $300 million benefit to second quarter expenses. The company's first quarter earnings report beat expectations. Total revenue rising 12.9% from a year ago. Delta stock jumped after the company reported better than expected earnings and the Iran ceasefire was announced. Delta shares right now 6.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. We go to Balance of Power now with Kaylee Lines.
All right, Amy Morris with the latest on the markets. Thank you so much. We will, of course, be checking back in with Amy over the course of the next 2 hours as we keep stock of these incredible moves that we are seeing clearly a risk rally off the back of the ceasefire agreement between U.S. and Iran. Massive moves in oil, as Amy was just running us through as well. But we do still have a lot of remaining questions that investors and financial markets will have to be considering, which is why we are paying such close attention to all of the messaging we get from the Iranians via state media or otherwise, and from President Trump, who has just posted something fresh on Truth Social regarding the so-called points that we understand Iran has presented to the U.S., a 10-point plan. The U.S., of course, had a 15-point ceasefire plan. The president calling out on Truth Social fraudsters, charlatans, and worse that are sending out lists and letters that have absolutely nothing to do with the U.S. and Iran negotiations. The president says, and this is a quote, "There is only one group of meaningful points that are acceptable to the United States, and we will be discussing them behind closed doors during these negotiations. These are the points that are the basis on which we agreed to a ceasefire." Now, of course, the president announced also on Truth Social that he had agreed to this ceasefire at about 6:32 p.m. yesterday, and he said that it will be contingent on Iran opening the Strait of Hormuz. And yet, as I speak to you now at 12:09 p.m. Eastern Time, the Strait of Hormuz is not in fact open, at least not to oil tankers, as Iranian state media says that passage has been stopped because of Israel's continued strikes in Lebanon. But both Israel and the U.S. say that Lebanon is not party. That part of this conflict, the front to the north, isn't applicable in this ceasefire agreement. So it raises the question of where exactly things stand and how easily a full deal can be reached in this 2-week period. It's a deal, of course, that President Trump has made clear for weeks now that he was seeking.
All I can tell you is they're begging to make a deal. If there is no deal, we are going to hit each and every one of their electric generating plants. We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil.
Free traffic of oil that, again, right now doesn't seem to be happening. So let's turn to the White House now, where we find Bloomberg Washington correspondent Tyler Kendall. Tyler, this was supposed to be a ceasefire. The U.S. strikes stop because Iran opens the strait. It appears that the strait is not open. So has this ceasefire really, truly begun, especially as we're still seeing strikes against other Gulf nations?
Well, Kaylee, to that point, it does appear that Iran is now asking for an additional condition in order for the ceasefire to go through, according to a statement put out on social media by Pakistan's foreign minister, who is saying that Iran would now like to see a stopping in the fighting when it comes to Lebanon, considering that we do know that Israel has opened up a separate front in Lebanon against the Iranian-backed Hezbollah militant group and confirmed earlier today that they conducted one of their largest waves of strikes against Hezbollah after the ceasefire was announced. With this said, though, the ceasefire was not part of, stopping of fighting in Lebanon was not part of any ceasefire deal, according to Israel and the U.S. In fact, President Trump was asked about this in an interview with PBS earlier today, where he said that he's not concerned that that fighting is going to impact the ceasefire that the administration says is going to go into effect for this 2-week period. In fact, he called it a, quote, separate skirmish, saying that there is a difference here when it comes to the negotiations. But to your point, it has made the ceasefire incredibly tenuous because we are seeing an increase in strikes across the region. We heard from Kuwait's government within the last hour confirming that they have intercepted more than 28 drones since this morning. We've also gotten reports from the UAE, Bahrain, as well as Qatar, plus a redhead on the terminal earlier today, as Bloomberg News confirmed per a person familiar that Saudi Arabia's key east-west pipeline was hit with a drone, although Kaylee, at this point, our reporting indicates that the damage to that infrastructure was limited.
All right, Bloomberg's Tyler Kendall live at the White House with the latest. Thank you so much. And we want to get analysis now from Becca Wasser, who leads our defense coverage at Bloomberg Economics and is here with me in our Washington, D.C. studio. So, Becca, obviously, and the president himself even acknowledged this, that the IRGC may take some time to get the message all the way through all its various components that the fighting needs to stop. How much can we attribute the strikes that we are still seeing to that idea? Or is this effectively the activity we're seeing today showing us that this ceasefire has not really truly begun?
So I think right now it's a ceasefire in name only for a few reasons. We are seeing various drones and missiles launched at the Gulf states from Iran. I just was doing some calculations back at my desk, and I think we're at over 150 projectiles being launched at the Gulf since the start of the ceasefire. We also see Israel striking really hard in Lebanon, and that in itself is a problem. And then also, the strait itself is not fully open, at least not in the way that I think President Trump in his Truth Social post envisioned yesterday. So with that, it almost appears as though the U.S. is really the only party that's adhering to the terms of the ceasefire agreement. But there's a question of how long that will hold if the fragile ceasefire crumbles.
Well, and even the Vice President, J.D. Vance, who played a role in getting us to this point, described the ceasefire as fragile, that this thing by its very nature is not firmly solid as it stands right now, Becca. And when it comes to the Strait of Hormuz in particular, as you were alluding to, even as President Trump said, that it has to be done in coordination with Iran's armed forces. If tankers are still having to coordinate with Iranian armed forces, that is not a free Strait of Hormuz.
That's not a free Strait of Hormuz. especially if, the Tehran toll booth is still in place and Tehran is charging fees. But I have a sneaking suspicion that one of the reasons why there was this very clear push for all ships to be in coordination with Iranian armed forces is because that is how they can ensure safe passage through the Strait of Hormuz. So it's unclear whether Iran actually mines the strait or not. And my guess is they want to keep the threat that they potentially did in order to retain parts of control. But they will be needed to essentially chart the routes for the various ships to get through. And I think that's one of the reasons why we're seeing, that level of coordination from the armed forces.
So Iran wants to keep the threat. I would imagine the U.S. military also wants to maintain ready posture if the ceasefire were to collapse and they need to resume activity. So what fundamentally changes for our forces and assets in the Middle East right now? Anything?
Right now, nothing. And as far as I am aware, some of the additional forces that were going to be flowing into the Middle East, such as a third carrier strike group, which may actually be swapping out with the Ford carrier strike group that had an extended deployment, that is still en route. So I think we're going to continue to see forces flowing into the region. But I do want to stress that this is likely not a feint, that this 2-week, ceasefire period, President Trump didn't need that to flow additional forces into the theater. He could have done that without having that excuse. So what we're seeing is just a continuation of U.S. military posture and military presence in order to retain the threat that the U.S. could strike if the ceasefire fell apart, or if, frankly, President Trump deems, because we've seen him do that during negotiations in the past.
Well, and when we consider the U.S. military, at the Department of Defense this morning, the chair of the Joint Chiefs, Stan Kane, and the Defense Secretary, Pete Hegseth, described this as having been an outright military victory for the United States. Pete Hegseth said victory with a capital V. To what extent, Becca, is that true? There's the question about our strategic ambitions with this operation, but militarily, our military ambitions, did we largely accomplish what we set out to do if it were to end here?
Well, I think both things can be true at once. I think right now you do see a heavy degradation of Iran's military capabilities, but some of those capabilities were not ones that truly mattered in the first place. So, for example, decimating Iran's already aging Air Force, that wasn't necessarily the biggest threat. And some of the larger threats, Iran's missiles, in particular its anti-ship cruise missiles that could threaten the Strait of Hormuz, those remain largely intact. So there has been degradation, but that is not enough on its own to claim victory. And while, yes, maybe over time we will see that some of the strikes on Iran's defense industrial base have resulted in, less combat capacity and fewer capabilities. But that is not where we are right now, where Iran still maintains the ability to strike.
Well, and when it comes to the defense industrial base in our remaining minute here, Becca, we've talked frequently with you about the munitions we have expended. How long will it take our defense industrial base to replenish what we have spent?
Definitely years. It is a matter of years, and it's also a matter of money. I think we've seen a very large defense budget request get put forward for the fiscal year 2027, and a huge chunk of that is munitions. And part of this is what's necessary. The Department of Defense is actually buying and procuring the missiles needed to reconstitute stockpiles, but that comes at a cost, both production and money.
All right, Becca Wasser, thank you so much, as always, leading our defense coverage for Bloomberg Economics. She calls this a ceasefire in name only. The market does not seem to be taking it that way, with stocks flying and oil down hard. We'll get more on the market action with Ed Harrison and Mike McGlone from Bloomberg coming up next, right here on Balance of Power.
It's 12:21 on Wall Street. I'm Amy Morris. A wave of optimism continues to sweep through the markets, lifting stocks and bonds and driving oil toward its biggest plunge in 6 years after the U.S. and Iran reached a delicate ceasefire deal. We check markets for you all day long here at Bloomberg. The S&P 500 is up 2.4%, NASDAQ up 2.8%, the Dow up 2.6%. That's more than 1,200 points. The 10-year Treasury yield at 4.27% and the 2-year yield at 3.76%. WTI still around $95 per barrel, but look at Brent crude. It slipped even more, now about $94.50 per barrel. Moody's ratings cut the outlook on Blue Owl credit income to negative after what they describe as significantly higher than peer redemption requests in the first quarter. The private credit industry is facing an investor exodus amid concerns over lax lending standards and failure to clearly explain liquidity restrictions. And Moody's expects elevated redemptions to persist in coming quarters and slower inflows. Blue Owl shares now less than 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
Amy Morris, thank you so much. Amy doing a wonderful job of running through the really drastic market reaction we saw to yesterday's news from President Trump that he had agreed to a 2-week ceasefire with Iran, even as we're questioning whether that very fragile ceasefire will be able to hold, if it even is holding at all, as we speak on this first day. The market doesn't seem to be waiting around to find out. Equity investors taking the opportunity to buy, and oil incredibly reactive to this. We're back in double digits on both Brent and WTI. $100 a barrel, at least for the time being, is no more. But of course, many questions remain geopolitically, strategically for the U.S. when it comes to whether or not we are going to be able to get a lasting end to this conflict and an agreement with Tehran. Therefore, questions still remain for financial markets as well. And we want to pose some of them now to Ed Harrison, who is here with me in our Washington, D.C. studio. He's Bloomberg's senior strategist and also author of the Everything Risk newsletter. Edward, when we consider the market reaction we are seeing today, do you see it as being overdone at all, given all of the uncertainties that still remain?
Hey, Kaylee. No, I don't think it's overdone. I think that the market was coiled for this. If you think about this as compared to what happened a year ago when we had the April the 2nd tariff announcements, markets really fell a lot more than they've fallen this time, and then they rose even higher. So on this first particular day, we're only getting back some of those losses. Just to give you an example, the Mag 7, which had been leading the market higher, it was down almost 13.5% from its record high as of yesterday. And so we're not even close to going back to the highs that the market had in 2025 or early 2026.
Okay, so there still could be room to run effectively for this recovery rally, is what you're saying. So when we think about what else will factor into that beyond just the geopolitics, how much of it is going to matter how a conflict of this duration, if it were to end here just over a month, what lasting impact that could either have on inflation or growth, and which of those risks you think is larger?
I mean, my personal view is that the growth risks are larger, especially because, you know, the Mag 7 that I was talking about before, those are the mega cap tech stocks. They actually peaked at the end of October of last year. And then we had this whole thing about private credit. You know, that was the Blue Owl thing that we were just talking about in the break. So those preceded what happened with Iran. So then on top of that, you have the inflation shock of Iran, which is also negative for consumption. So you have all of that coming together. And so therefore, growth is a problem, which is one of the reasons that the market never fully bought into the concept that there wasn't going to be an end to the conflict. The market still thinks that this conflict will end, because if it doesn't, growth will take a hit that could end up in a recession.
Economic consequences perhaps just too hard to swallow, especially if you're President Trump and Republicans staring down the midterm elections. So if it is really a growth concern that we have here, clearly the market is also building the case now that the Fed is going to be more likely to cut this year. When we were having a conversation just days ago at the notion that they might have to tighten policy further, that the next move might have to be a hike. Is that now kind of off the table?
I think it's always been off the table. I always found
You never bought into it.
I never bought into that because if you think about it, even during 1973, during that conflict, the Fed was cutting because of the recession risk. The reality is that the only time that they're going to hike is if inflation expectations become unanchored, long-term inflation expectations, and that hasn't happened. And so the risk, on balance, given everything I said before about how sentiment was starting to turn down, was for a recession and therefore for them to cut, which is exactly where the market was before Iran came onto the scene. And I think that it will eventually get back there to more cuts because of the recession risk or the slowdown risk.
So how much will depend on whether that recession risk materializes or what happens to overall consumption by how quickly prices at the pump go down? Yes, we are seeing massive declines in crude today, but as that trickles through refining margins and products, like when will the American consumer actually see gas sub 4? Is that even a realistic possibility?
It is a question because, as you said, we're just below $100 a barrel. You know, we were in the 60s before the conflict erupted. So we have months of disruption from the existing Strait of Hormuz blockage. So we're looking at 2, 3, 4 months during which consumers have to pay some pain, and as a result of that, we should expect growth to go down. And then the question becomes: is the conflict still happening? Can the Fed cut in that case? There are a lot of uncertainties in this first day after the ceasefire, and I think that most of it leans toward slower growth, the Fed really looking past the inflation and then cutting interest rates.
All right, Edward Harrison, great stuff as always. Thank you so much for joining us. He's, of course, author of the Everything Risk newsletter and Bloomberg senior strategist. And as we were just discussing with Ed, this notion of what happens to prices at the pump here at home, a lot of that will be dependent on the trajectory of oil, and the trajectory of oil may very well be dependent on whether or not the Strait of Hormuz does indeed fully reopen. President Trump said that was supposed to be part of this deal. Iran says right now, though, oil tankers cannot pass because Israel is still striking Hezbollah in Lebanon. So the Strait remains a key question, and it's something we heard about from the Defense Secretary Pete Hegseth as he briefed the media at the Pentagon earlier today after he was describing what he said was an outright military victory in Iran.
Iran doesn't have the same ability to defend it the way they did before, and so as the president has pointed out to the rest of the world, we barely get any of our energy out of the Strait, just a tiny fraction. It's time for the rest of the world to step up and ensure that that stays open after President Trump and the War Department brought Iran to the place where they are voluntarily opening it right now, as was announced last night.
But again, Iran is saying it is not right now open. So let's get into this and what it means for the oil market with Mike McGlone, Bloomberg Intelligence senior commodity strategist, who is joining us from Miami. So, Mike, clearly the market, the oil market specifically, is betting right now that the Strait will reopen. When we look at declines of 16% on WTI, 13% on Brent, in and around $95 a barrel for the both of them. Is that being overly optimistic at this point?
I don't think so, Kaylee. I initially thought that $120 a barrel in both Brent and WTI was the peak. I stick with that, and it's more solidified. The thing to think about now is, yes, this is a bit of a relief rally in risk assets and crude oil going down, but this might have done some severe damage for global economic growth, consumer sentiment, capital budgeting spending, and very similar to 2008. So again, I look where the puck's going. I look towards that December crude oil future around $72 a barrel. I stick with my theme that I think it's going to be at 50 or lower by the time we get to midterms, but we might be in more of a recession globally and even in the U.S. That's why the U.S. stock market's so important. It has to stay up. I think the risk is things are all going to start tilting lower as we move on.
Demand destruction is what you speak of, Mike McGlone. Had we seen that materializing already with prices where they were? Had that had yet to kick in?
Well, absolutely, Kaylee. Demand destruction, but I'm more worried about wealth reversion, because remember, this happened with the U.S. stock market near 100-year highs versus GDP, and volatility still very low on a 180-day basis. So the demand destruction in the U.S., you can see that in things like gas oil jumping, heating oil taking off, diesel near the all-time high. Diesel right now, the all-time high in 2022 was $5.82, and today's high today got to $5.67. So that's the grease of the global economy, mostly the U.S. just getting hit, and that's going to cause some major curtailing of capital budgeting, reallocation, price surcharges. So to me, this is all kicking in, but it's demand destruction is normal and expected, but it's also the sentiment. You see major sentiment in the polls and everything. Your average consumer is very upset. And before they were worried about maybe losing their jobs through AI, now they have to pay much higher prices at the pump, and they're very upset with the leader that of our country who kind of broke a promise. So to me, this is major sentiment shift. It reminds me very much of what I remember in 2008 when crude oil spiked to 147. The big difference is that was a 50% rise. This year we had a 100% rise until yesterday.
Yeah, it's incredible to consider the superlatives, including the superlative today, that we haven't seen a drop like this since the COVID pandemic, Mike. I appreciate all of that on the demand side. On the supply side, though, I wonder, as we consider what the future of the Strait of Hormuz may look like in reality, if Iran's armed forces still need to be coordinated with for tankers to transit, if we could be talking about fees in the tune of millions of dollars in order for safe passage, does that not structurally change the way in which the global energy supply is ordered, how freely it is able to flow, at what rate? I just wonder the longer term ramifications here, even if there is something that trends back more toward normalization, if we're ever going to get back to what normal previously was.
Kaylee, I think you nailed it. This is a major workaround. Now, remember, that was about 20% of global supply coming through there. There's going to be major workarounds, pipelines, and ways to get away from there. So just look what happened after the Russians' invasion of Ukraine. Not only that, there'll be workarounds away from the Gulf, but also this is what happened when Russia invaded Ukraine. It really kicked that shift towards replacing fossil fuels with technology, i.e. a lot of EV sales now are just much higher than they were before there was incentivized, but also it's a major advantage for the U.S. U.S., remember, before this happened, was the top producer, net exporter of crude oil liquid fuels on the planet. And that's really accelerating, allowed producers to sell forward, bring on those profits, but it'll just extend that normal cycle towards a low price cure, which I think will still head towards $50 a barrel this year in the U.S., which the key thing to remember is we got well above the cost of production. We got to the place where the U.S. is, most of the Western Hemisphere are making good profits, and now they have incentive to bring on more supply, and demand's going to be collapsing. So the key thing to remember in commodities, and most notably crude oils, it pumps and it dumps. But when crude oil pumps, it destroys global economies, and now we're seeing that potential tilt.
All right, Mike McGlone, Bloomberg Senior Commodities Strategist, joining us from Miami. Thank you so much, not just for your insight and analysis today, but through the duration of this conflict. We so appreciate it. And of course, this conflict is on pause, at least in theory, for now, for a 2-week period, as the U.S. and Iran have agreed to a ceasefire, although there is a massive question still around Lebanon as Israel is continuing its strikes against Hezbollah. And Iran says it would like to see that stop if the Strait of Hormuz is going to fully reopen. I would note that we did just hear from Israel that Netanyahu, the prime minister, will be making a televised statement at 8:15 local time. That's 1:15 Eastern time. We may hear from more from him on that. And we're going to hear more from our political panel next on Balance of Power. So stay with us right here on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Continued fighting in the Middle East, including Israeli airstrikes in Lebanon, threatening to derail the fragile U.S.-Iran ceasefire. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 2.5%. NASDAQ is now up more than 3%. The Dow is up 2.6%. The 10-year Treasury yield at 4.27%. The 2-year yield at 3.76%. Both WTI and Brent crude still bouncing around $95 per barrel. And spot gold is about 1% higher, around $47.50 per ounce. The Bloomberg Dollar Spot Index less than 1% lower. President Trump posted on social media that any country supplying military weapons to Iran would be immediately tariffed. The president writing that would apply to, quote, any and all goods sold to the United States of America, 50%, effective immediately. Now, Trump's announcement on those tariffs has not been documented by the White House nor signed by the president. But Trump might not have the authority to do that after the Supreme Court ruled that his previous tariff regimen was unconstitutional. Delta sounding a note of caution in its latest earnings report thanks to the war with Iran. Bloomberg's Dan Curtis with those details.
The company is omitting full-year guidance in its earnings report. On that cautious note, it does see over $2 billion increase in fuel costs this quarter. It's guiding low-teen revenue growth in this quarter as it notes strong demand.
Bloomberg's Dan Curtis reports Delta CEO Ed Bastian is also talking about looking for ways to raise fares even more. Delta shares now about 5.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Tracking the market's reaction to this day one of a ceasefire between the U.S. and Iran. We appreciate it, and we appreciate you joining us here on Balance of Power as we run through where exactly things stand. Yes, there is supposed to be a stop in the hostilities between the U.S. and Iran, but strikes are still ongoing throughout the Gulf, including a drone strike against the Saudis' east-west pipeline earlier today, though no major damage, we understand, was done. And Israel is still conducting its operations against Hezbollah in Lebanon. And as a result, Iran says the Strait of Hormuz is not, in fact, open for business for oil tankers until that situation changes. Of course, that was one key aspect of the ceasefire that President Trump announced last night. He agreed to it on the basis that the Strait of Hormuz would be open. He says another key portion of this as well surrounds Iran's enriched uranium. On True Social this morning, he said there will be no enrichment of uranium, that the United States will, working with Iran, dig up and remove all of the deeply buried nuclear dust, referring back to Operation Midnight Hammer last June when the U.S. struck Iran's nuclear facilities. And it's around this idea of Iran stopping the pursuit of a nuclear weapon that we also heard from the Defense Secretary Pete Hegseth in a briefing at the Pentagon earlier this morning.
It's always been non-negotiable that they won't have nuclear capabilities. And so right now it's buried and we're watching it. We know exactly what they have. And they know that, and they will either give it to us, which the president has laid out. They'll give it to us voluntarily. We'll get it. We'll take it out. Or if we have to do something else ourselves, like we did in Midnight Hammer or something like that, we reserve that opportunity. But what's clear, what the new Iranian regime knows, is they'll never have a nuclear weapon or the capability to get a path to one.
But is it really that easy? Let's turn now to our political panel. Rick Davis is joining me, Bloomberg politics contributor, Republican strategist, and Stonecourt Capital partner, alongside Laura Fink, founder and CEO of Rebel Communications and Democratic strategist. Welcome to you both. So, Rick, the U.S. is contending here that Iran is going to give up its nuclear ambitions, and willingly so. I would imagine that this is going to feature heavily in talks over the next 2 weeks. Talks, of course, set to take place in Islamabad on Friday. How difficult in reality, though, is this going to be? Is 2 weeks a realistic time frame to get something like this done?
Well, first of all, I would remind everybody, Kaylee, that this is the line that Iran has been using for decades. Oh, we don't want to make a bomb. We're not going to make a bomb. We're just going to create some highly enriched uranium to have around just in case we need to make a bomb. It's just a little bit more of the same, right? I mean, like, they've never claimed they were making a nuclear weapon. And so we shouldn't be surprised by this. This is kind of standard operating procedure, opening gambit in a negotiation by Iran. Oh, yeah, no, we never expected to have a nuclear weapon. You know, and if you believe that, then you have to have been either asleep for the last 20 or 30 years to not witness what they have been doing. And we don't have to recount all that. But the bottom line is it's a meaningless charge until at which point in time the highly enriched uranium is on a truck and out of Iran, we're not going to sleep well at night knowing that they've got as much as 60% high-grade uranium that could be used today to make a bomb in their country. And that we can't settle for.
Okay, so if what you're saying, Rick, is essentially do not take this notion seriously, how seriously should we be taking this prospect of a ceasefire leading to a lasting agreement? Laura, what is your sense of optimism or the lack thereof today?
Well, we don't have a lot of information. We have conflicting 10-point plans. What the Trump administration is talking about and what the Iranians are talking about are two different things. And I think what this raises is not just the question of the immediate ceasefire, but what is the outcome overall? Is that uranium going to be turned over? And if so, at $1 billion a day, the cost of 15 American lives, more than 1,000 Iranian kids, and more than 500 American service members injured, did they achieve the same thing as we did with diplomacy? We know that the Iranians continue to enrich uranium even after this is going to be an enduring problem, particularly because we essentially have the same regime, just a change in management. We went from father to son, and we've solidified the power of the Iranian Revolutionary Corps that enforces it. So I think that what we see here is a significant destabilization as well as output by the Americans and a question mark as to what is achieved.
Well, this is a really important question that Laura is getting at here, Rick. The notion as to whether or not we spent blood and treasure when we could have just talked it out, effectively what the whole point of this really was. And I want to point to what we heard from the Prime Minister of Spain, Pedro Sanchez, earlier today. Clearly, there has been a big rupture between the U.S. and Spain that has emerged as a result of this conflict. President Trump has made it very clear that he is not happy with the Spanish government and the restrictions they placed on the U.S. Not being able to use its bases and airspace. But he said the government of Spain will not applaud those who set the world on fire just because they show up with a bucket when talking about this ceasefire. Are we realistically Rick, looking at a U.S. president who's now playing firefighter after playing arsonist?
Yeah, pretty interesting way to characterize it. And I look at this thing in sort of two categories. One, what were the tactical wins? There's no question that Secretary Hegseth was accurate in that we did degrade the missile capability and the drone capability of Iran. We did weaken the regime, as far as, getting rid of the first and second stream bench. But we have a lot of strategic questions that are still open and some that have really damaged the United States. And one of those is where we stand with our allies. We, no question in this process, have weakened the relationship we have with our traditional allies around the world. The conduct of how we prosecuted the war was just as important as the outcomes of that prosecution. And so there are a number of strategic, long-term, and economic issues like who controls the strait, who's getting paid for it. Now I hear that the president is talking about a joint venture with the Iranians to charge for people to come out of the strait. That's a situation that didn't exist before the war started. So we have a lot of wood to chop to see, how is this beneficial to the United States, our prosperity and our security? And I think there's still really strong questions about that.
Well, and as you talk about the allies, it's worth noting, and I haven't mentioned it yet this hour, that the Secretary General of NATO, Mark Rutte, will be at the White House this afternoon for a meeting that is set to take place behind closed doors. They're not letting the press in for this one, which usually is a clue that it could be pretty contentious, and you would expect it, Laura, to be so, given the rhetoric we have heard from President Trump about NATO specifically and how disappointed he has been with those in the alliance who he sees as not having come to the United States' aid here. He even said over the weekend yesterday in that press conference, I said bye-bye to NATO. Just how much could this conflict with Iran actually have ramifications well beyond just the Middle East and reshape the Western alliance as we knew it?
I think enormous consequences. I think this is on the heels of all of the tariffs back and forth, really using the leverage that America has to really punish these various countries. And when you do not pursue relationships of trust over the long-term investments can't be made, either in economic relationships or in defense relationships around NATO. And I think the long-term consequences is there will be a realignment, because they cannot trust that America will not have an executive that sustains those relationships, as we have seen through very different, philosophically different Republican and Democratic administrations. The central nurturing of our allies and working hard to maintain diplomatic relationships and cooperation. And certainly there will be disagreements, but maintaining and realizing the value of those allies is something that has truly been lost in the Trump administration. And I think this Iranian conflict, it obviously exposes those rifts in a real way. We haven't had anyone come to help, and it's because we've been on the attack for the last several years since Trump came back into office. So I think we really have to look at that, and no matter which party you sit on, really understand the value of those allies and the importance. Clearly, Donald Trump now sees the value as he asks for help, but did not see the value when it came to maintaining the relationships in other contexts.
Well, so when we consider the value of the alliance, or the value of a commitment to such an alliance, Rick, we all know it would take an act of Congress for the U.S. to formally pull itself out of NATO. This is not a decision that President Trump can make unilaterally. That has been consistently pointed out to us here on Balance of Power. But if even without a formal withdrawal like that, just talking this way, the suggestion that the U.S. may not be there for these allied countries because the U.S. doesn't see them as having been there for us, is that not emboldening to adversaries like Russia?
Yeah, I think that if you were trying to design a scenario that, from a U.S. perspective, that could sort of salvage Russia's world standing that has been just decimated over the 4 years of the attack on Ukraine, these are the kinds of things that start bringing them back into the world community. That you start comparing our allies to working with Russia. Look, we did a solid for Russia by allowing them to go back into the oil trade that enhanced their war effort against one of our allies. So I think the whole question that hopefully we'll start talking about, because it is relevant to the situation in the Middle East, is what do we think the role of Russia is going to be in the world moving forward? They were using their satellite targeting systems to actually try and kill Americans. That has to be dealt with. There's an issue there, and their alliance with malcontents like North Korea and Iran, and in many cases China, is a challenge to the U.S. Free market system around the world. And so I think that this administration is going to find itself in a darker and darker place when it comes to our allies, and a harder and harder sell to find some common cause with a group like the Russians, who are really an enemy of ours.
So that's a hard sell. Mark Rutte, the NATO Secretary General, probably has a hard sell ahead of him this afternoon at the White House. And someone else who is going to have to sell things at the White House this afternoon is the Press Secretary, Caroline Leavitt, who is slated to brief the media in just a few moments at 1 p.m. Eastern Time, the top of the hour. Laura, charged with now messaging not just around the ceasefire, but what the point of the mission was, to get back to what you were telling us originally, and to the American people, whether or not it was all worth it. How hard is that job going to be?
She has a challenging job in one sense, in that she has to continue to articulate an ever-changing set of priorities and measurements of success, and increasing skepticism from the public. But where her job is fairly easy is if she defends whatever President Trump has said at the current moment. She has a lot of job security. But I think, the evolution of that role, it's always been a little bit of a defender of the administration, but it also has been a key communications post to be able to communicate internationally in a very different way than the president does, and with more latitude. And we've really sort of truncated the role and narrowed it because of the need to simply defend whatever President Trump has chosen to do. I think, we saw in this previous news cycle the threat to all of the civilian infrastructure, which would have jeopardized Iranian lives and potentially brought war crimes into question. He talked about destroying a civilization. And so I think she's got her work cut out for her in defending things like that, in addition to all of the things that Rick and I are talking about and the global consequences of these choices.
All right, well, we'll be hearing from her shortly, and we'll bring you relevant remarks that she makes here on Balance of Power on Bloomberg. And we'll be bringing you more from our wonderful political panel in the second hour of Balance of Power as well. Laura Fink and Rick Davis will be back for more on this first day of a 2-week ceasefire between the U.S. and Iran, with many questions still unanswered. And we'll continue to dig into those for you right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
It's day one of the ceasefire between the U.S. and Iran, or at least it is in theory. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons, coming to you live after the U.S. and Iran agreed to stop fighting for 2 weeks. And yet today, strikes continue sporadically across the Middle East and in Lebanon, where Israel is still conducting operations against Hezbollah. And for that reason, the Strait of Hormuz is not yet fully reopened. We have a lot to dig into this hour. We'll get the latest from the White House with Bloomberg's Tyler Kendall and analysis from our political panel. Plus, as the administration and President Trump are claiming that this has been an outright military victory for the United States, we'll get a sense of the extent to which that is true as the former commander of CENTCOM, General Frank McKenzie, will join us shortly. We'll also speak with Democratic Congresswoman, that is Debbie Wasserman Schultz, for her reaction later this hour. But we begin with the market's reaction to all of this, because it has been fast and it has been furious. And that's where we start with Amy Morris here in Washington. Hey, Amy.
Hey, Kaylee. You know, Senate Minority Leader Chuck Schumer is now telling reporters that the Senate's expected to vote next week on a war powers resolution, and Iran's semi-official news agency says Tehran is now preparing a heavy response to Israel's attack on Lebanon. So we're going to watch all of that, and so are the markets. Right now, we're seeing S&P 500 up 2.5%. That's 168 points. NASDAQ up more than 3%. That's 685 points. And look at the Dow up 2.6%. That's 1,231 points higher. The 10-year Treasury yield at 4.27% and the 2-year yield at 3.76%. And as expected, oil is lower. Both WTI and Brent crude now near $94 a barrel. Spot gold more than 1% higher, around $47.60 per ounce, and the Bloomberg Dollar Spot Index is less than 1% lower. Sources say a key Saudi oil pipeline to the Red Sea suffered only limited damage from an earlier drone strike on one of its pumping stations, and that the damage from the strike was limited and contained, and the pipeline was not shut down as a result of that strike. The East-West pipeline has served as a vital lifeline for getting oil from Saudi Arabia, bypassing the largely closed Strait of Hormuz. And Delta Airlines oil refinery helped reduce the fuel price paid per gallon in the first quarter by more than 2% and will provide a $300 million benefit to second quarter expenses. Delta's first quarter earnings report beat expectations, and Delta stock jumped after the company reported those earnings and the Iran ceasefire was announced. Delta shares more than 6% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's get to Balance of Power with Kaylee Lyons.
All right, Amy Morris, thank you so much. Running us through a market that is adjusting in real time to a ceasefire agreement in the Middle East, though it is one that even one of the architects of it, someone who was influential in getting us to this point, the Vice President of the United States, J.D. Vance, is describing it as fragile. And those fragilities are on display as Iran says the Strait of Hormuz is still not reopened, at least to oil tankers, because of Israel's ongoing fighting against Hezbollah in Lebanon. We still have questions, too, about the fate of Iran's nuclear program, whether or not they will agree to stop all enrichment and forfeit the remaining enriched uranium that they still have in their territory. And there are other questions, too, about the wider ramifications of where this exactly leaves the Middle East and our posture in it. And we're going to get into that in just a moment with General Frank McKenzie, who used to lead Central Command. But first, we want to check in on the politics of all of this and the positioning of President Trump, who has for weeks been suggesting that he wanted to see a deal happen.
All I can tell you is they're begging to make a deal. If there is no deal, we are going to hit each and every one of their electric generating plants. We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil.
But again, free traffic of oil, as of right now, is not yet our reality. So let's turn to Bloomberg's Tyler Kendall, who is joining us live from the North Lawn of the White House. So, Tyler, it's one thing to agree to a ceasefire. It's another thing to agree more widely to a longer-term deal. How much progress, realistically, are we seeing in that direction?
Well, Kaylee, at this point within the last hour, we did get a post from President Trump on Truth Social seeming to indicate that he feels that talks between the U.S. and Iran are on track to happen, even as we get this reporting that the ceasefire is at this point very tenuous. Now, President Trump in this post said that only the U.S. and Iran will know what is happening behind closed doors, and outlined that he feels that there's only one set of what he is calling, quote, meaningful points that would contribute to an agreement earlier today, as you well know, and another another post on Truth Social, the president outlined that the U.S. is looking for an agreement where Iran would no longer have a nuclear weapon and would work with the U.S. on extracting its already enriched nuclear material. He said in exchange, the U.S. is considering lifting some of those sanctions and tariffs on the country. But until we get to talk about a longer-term deal, this ceasefire needs to hold. And as you've already outlined, we're seeing some of those sticking points start to emerge, including Iranian state media reporting that traffic through the Strait of Hormuz continues to remain halted, and that Iran is now preparing for what they are calling a serious attack in response to Israel's moves in Lebanon. Now, keep in mind, Israel has opened a separate front in Lebanon to target the Iranian-backed Hezbollah militant group, and the U.S. and Israel say that that is not part of any ceasefire deal. In fact, President Trump called it a, quote, separate skirmish in an interview with PBS News earlier today. But Kaylee, according to Pakistan's foreign minister who is helping to mediate these discussions, they are saying that Iran wants to see that front of the war combined in to any potential ceasefire, or else they are going to continue these strikes on Gulf state energy infrastructure.
Well, and Tyler, when we consider not just the messaging we're getting from Pakistan and the True Social posts we're getting from President Trump, we are expecting this hour a briefing from the White House press secretary, Caroline Leavitt. It has not begun yet. But aside hearing from her, will we be hearing more directly, at least on camera, from President Trump, who's meeting with the Secretary General of NATO at the White House today, but hasn't invited press into that?
At this point, that meeting at 3:30 p.m. Eastern does remain closed, but to be a fly in the wall, perhaps it will open up because, of course, Secretary General Mark Rutte and President Trump are considered to have a relatively warm relation. But transatlantic relations have been strained by the war in Iran. As you well know, President Trump last week issued perhaps his starkest warning that the U.S. is considering leaving the alliance. But I can actually say that our own reporting from Bloomberg News indicates it's actually been recent comments from Secretary of State Marco Rubio that the U.S. should reassess its position in NATO that has caused alarm bells throughout Europe. Now, of course, and as you discussed last hour, this is perhaps more easier said than done. It would require 2/3 a majority vote in the Senate. But Kaylee, we know that the president has some other things that he could do. Our reporting indicates that there is real concern that the U.S. could stay in NATO, but perhaps not adhere to Article 5, the Mutual Defense Clause. President Trump could withdraw the U.S. ambassador to NATO or refuse outright to participate in joint military exercises. So no doubt there's going to be a lot to listen to when it comes to that meeting, but at this point, it remains closed to the press.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. So press not getting the invite as of yet into the White House where that meeting is taking place, but press were present at the Pentagon this morning when we heard once again in the joint briefing from the chair of the Joint Chiefs of Staff, Dan Kane, the general, and the Defense Secretary, Pete Hegseth, who described victory in Iran.
Operation Epic Fury was a historic and overwhelming victory on the battlefield. Iran begged for this ceasefire. Iran's Air Force has been wiped out. Iran no longer has an air defense, any sort of a comprehensive air defense system. We own their skies. Their missile program is functionally destroyed.
He says it's victory with a capital V, but I wonder if our next guest agrees with that assessment. I'm pleased to say that General Frank McKenzie is joining us, the former commander of U.S. Central Command, now executive director of the University of South Florida's Global and National Security Institute. General, thank you for your time. Welcome back to Bloomberg TV and radio. If it were to end here, if this ceasefire ultimately ends in a lasting truce or cessation of hostilities, would you describe this as victory with a capital V?
I would, if we're able to get from Iran what's in our negotiating position. And I think what I've seen of public statements about the U.S. negotiating position and what we're going to demand of Iran is going to be free passage to the Strait of Hormuz, limitations on their nuclear program, limitations on their ballistic missile program, and limitations on their proxy exportation of terror across the region. If those conditions obtain, then clearly this will be a significant victory. And the hard part is ahead of us. Look, the Iranians are not great fighters. They've never been great fighters. They're brilliant negotiators, and they know how to negotiate. They grew up in a culture that is based on negotiation. They will now seek to draw negotiations out, change the terms, and create a new reality. And that's our task now will be to take the substantive operational victory which we have obtained and turn it into something lasting and strategic.
So you say, General, that the Iranians are not great fighters, and yet they had the world and global commerce and the companies that operate tankers that needed to go through the Strait of Hormuz believing that they posed a credible threat to the safety and security of those cargo and crews. And if even President Trump himself is saying that vessels need to be coordinating with Iranian armed forces if they want to pass, if Iran is openly talking about charging vessels to do so, is that not still a lever that Iran is going to be able to say it can pull at any time?
Iran has powerful geographic advantages based on where they are in the Strait of Hormuz. The United States Navy has the ability to open that strait and keep it open if we're required to do so. We haven't asked the Navy to do that just yet. That could still be in the future. Look, here we are less than really 24 hours into this ceasefire. It appears not to be holding completely on the Iranian side anyway. Well, I'm going to be real interested to see what happens in the next 48, 72 hours if the Iranians are actually going to adhere to it. And that would be good if they did, because I think, as I've told you, there's a path forward here for negotiations. But part of that path is going to have to be opening the Strait of Hormuz. Should they choose not to do that, we do have the capability to open that strait.
Well, and beyond our capabilities to open the strait, the president also was suggesting that the U.S. military had the capability to wipe out, or in his words, kill, die a whole civilization. Obviously, we did not see him follow through on that threat with the agreement for this 2-week ceasefire, but our service members had to be ready for that, General. And I wonder if you were inside Central Command still, how you would have had to be prepared for 8 p.m. last night, and if you would have you expect that they are still in that ready posture as we speak because of the fragility of this ceasefire.
So the job of a combatant commander is to give the president and the secretary of defense options, to give them military activities that will support the policy goals of the United States. I would argue that Central Command has done that over the last 30 days, brought us to this point in a really very effective military campaign against Iran. Now it's the task of our diplomats to take what we fashioned operationally and militarily, turn it into a lasting strategic outcome.
Well, and when we consider the strategic outcomes here, it's one thing to consider specifically what this means for the Middle East, for Iran and its future, whether it's nuclear capabilities or ballistic missile capabilities, what that therefore means for the U.S. interests in this region. But in terms of the signal sent by this conflict elsewhere, knowing, for example, that the U.S. has expended heavily munitions and that it may take some time to replenish those, especially if for whatever reason we have to go back in and strike again if the ceasefire can't hold. Does it not signal that despite military strength that may have been shown with this operation, that there could be some weakness ahead because we simply won't have those same stockpiles to fall back on?
Well, of course, stockpiles can be rebuilt. I think a lesson that a lot of people...
Doesn't that take years, though, General?
It depends on what we do with our defense industrial base, which is another question entirely. I think long before the conflict with Iran, there was a sense within this administration that the defense industrial base was too small, too inefficient to actually support the size of the force that we have in the field today against the requirements that we might have. And I believe a number of initiatives are underway to repair that right now. But go back to your original question. I think potential foes across the world are looking very thoughtfully at the success of the U.S. joint force in the campaign over the last 30 days. And yes, you're right. We have eaten into magazines, but I would note again, those magazines can be replenished, and they can be replenished quickly depending on the level of emphasis we choose to put on it.
It's interesting to consider that emphasis, as we know the Pentagon is expected at least to make a $200 billion supplemental funding request on top of the $1.5 trillion defense budget the president already requested of Congress last week. Our defense industrial base obviously is a consideration here, but we heard at the Pentagon today from both the Joint Chief Chair and Defense Secretary Hegseth about the degradation of Iran's defense industrial base in particular, noting how they were specifically targeting sites that make drones, that make missiles. So what about Iran's capability to rebuild that if it so chooses?
So I think Iran's capabilities to build missiles, to build drones, very, very degraded. I don't read the classified information, so I don't know the details. But I would say this. That fact, coupled with our ability to maintain a persistent overhead presence over Iran, will give us very good visibility into the status of what's left of their industrial base, and we'll know very quickly if they choose to rebuild it, and that could lead us to other decisions in the future to restrike. All those things are possible. All of those things the Iranians are acutely aware of.
Well, and we've already heard about the surveillance that we have on the remaining nuclear sites and material after Operation Midnight Hammer. The Defense Secretary was talking about that today. We've had repeatedly suggestions that they could always go in and strike again if they needed to, which is why a diplomatic agreement around that enriched uranium is going to be so critical here. I also wonder, General, as we're considering the Middle East more widely, the idea that Iran has, and still today sporadically, was hitting other Gulf nations, that this was not just about U.S. assets or Israeli assets, that we have seen this spread elsewhere. If this has fundamentally reshaped the Middle East in some way, and even potentially had the effect of drawing some of these other Gulf states closer to Israel, if they may now see their interests as being more aligned.
No, you're absolutely right. The Iranian decision to strike unprovoked its neighbors in the Gulf is the equivalent of Hitler's decision to declare war on the United States in December 1941 after the attack on Pearl Harbor. We were mobilized to fight Japan. It would have been hard for President Roosevelt to mobilize people against Germany. Hitler took the problem out of his hands by declaring war on the United States. That's a little of what the Iranians have done by attacking their neighbors across the region. What began with icy neutrality among those countries is now moving to support for our goals. And you're right, the clear long-term future in the region in terms of defense and a variety of other things is going to feature the continued integration of Israel into those activities. That's inevitable. And the Iranians have no one to blame for that but themselves.
Well, it'll be interesting to see if indeed the president does get the expansion of the Abraham Accords that he has long said he is seeking. Just on Israel, though, it is worth pointing out, General, that of course Israel right now says Lebanon is not part of this ceasefire, that it is going to continue its operations against Hezbollah. Clearly that is not sitting well with Iran, who wants to see that front halted as well if there's to be ships transiting the Strait of Hormuz. How should we consider Israel's position and the threat posed by Hezbollah right now in terms of how the region moves forward and how this particular ceasefire can move forward if it can?
Well, Lebanese Hezbollah poses a mortal threat to the existence of the state of Israel. They have sworn that for many years. Their activities over the decades have been very clear. They've also been a parasite on the state of Lebanon. I think Israel's attacks are actually well justified going into Lebanon. We'll see what Iran does. I think Iran will actually think very long and hard before attacking Israel as a result of the ongoing operations that Israel's conducting in Lebanon. I think that would be a mistake for Iran to stand too strongly behind the idea of coupling what's going on in Lebanon to what's going on in the Strait of Hormuz. That would be a mistake for them.
All right, General, thank you so much for joining us here on Bloomberg. That's the former Central Command Commander, General Frank McKenzie, now with the University of South Florida's Global and National Security Institute. We appreciate you joining us. And on the subject of Israel, we are hearing from the Prime Minister, Benjamin Netanyahu, who says Israel made, quote, huge gains in this war, but is poised to resume the war whenever necessary. Once again, this is a fragile ceasefire that we're speaking of here, and we'll have more on that next here on Balance of Power on Bloomberg TV and radio.
It's 1:21 on Wall Street. I'm Amy Morris. A wave of optimism still sweeping through global markets after the U.S. and Iran agreed to that ceasefire, but the uncertainty has not disappeared. We check the markets for you all day long here at Bloomberg. The S&P 500 is up 2.5%, NASDAQ up about 3%, and the Dow up 2.6%. The 10-year Treasury yield at 4.27%, and the 2-year yield at 3.77%. Both WTI and Brent crude are right around $95 per barrel. Brent crude a little less than $95 a barrel. Moody's ratings cut the outlook on Blue Owl credit income to negative after significantly higher than peer redemption requests in the first quarter. The private credit industry is facing an investor exodus amid concerns over lax lending standards and failure to clearly explain liquidity restrictions. Blue Owl shares now more than 1% lower. The Fed is set to release the minutes from its March meeting, which will show how officials were weighing geopolitical risks and their impact on inflation. Investors will be watching to see how officials discussed inflation expectations and the expected path for interest rates, including the possibility of a rate cut or a rate increase. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Kaylee Lines.
All right, Amy Morris here in Washington, thank you so much. And I would point out here in Washington, we are keeping eyes on the White House as we were just given the 2-minute warning to the beginning of the briefing from the White House Press Secretary Caroline Leavitt. She's set to answer questions from the press momentarily. And of course, as we are awaiting further detail and insight into this tenuous ceasefire between the U.S. and Iran, we'll bring you those relevant remarks from her. But we're also getting remarks right now from the Prime Minister of Israel, Benjamin Netanyahu, who's talked about great gains that Israel has made in this war with Iran, but is going on to say that this isn't the war's end, and specifically that he insisted that this ceasefire would not include Hezbollah, that any deal would not include Hezbollah and the ongoing fighting in Lebanon, which is a problem that Iran has made clear it has. It would like to see that stop if the Strait of Hormuz is to be fully reopened. So it raises the question as to whether or not the end of this conflict really is near. The Israeli Prime Minister, again, says this isn't the war's end. And if the war is not over, does that mean there is still merit in a war powers vote in the United States Congress? The Senate Minority Leader, Chuck Schumer, thinks so. He told reporters this earlier today.
I'm announcing that today the Senate will vote next week on the War Powers Resolution. Congress must reassert its authority, especially at this dangerous moment. No president, Democrat or Republican, should take this country to war alone. Not now, not ever.
So let's get into this with our political panel. Rick Davis and Laura Fink are with me. Rick is Bloomberg Politics contributor, Republican strategist, and Stonecourt Capital partner. Laura, Democratic strategist and CEO and founder of Rebel Communications. And I apologize to you both if I have to cut you off at any point to go to the briefing from the press secretary. But Rick, just beginning with this idea of a war powers vote next week, is there still a point? Was there ever, knowing that President Trump could very easily veto it if it were to pass?
Sure. I think this is, basically performative. I think that Democrats want to try to continue the debate in the U.S. that, has been going on around the world relative to the president's motivations to get in. They see the polling data. They realize it's an incredibly unpopular war. And I wouldn't be surprised that we're still having a conversation about a War Powers Act by the time of the November election. So this is just something that I think Democratic leadership has to be committed to if they want to try to politicize the war in the best possible way. And I don't think it's going to result in anything. So there is an effect, some point that they look ineffective. But it's a no-brainer for a political exercise of an attack on this administration.
Well, and of course, that exercise may be more potent if we are still seeing the war ongoing or if we're in a ceasefire. Laura, is this worth the Democrats' energy at this point, even as a political exercise, as Rick suggests?
Well, the Republicans have all two branches of Congress, and so this is something that they are able to do. But I think the conversation about war powers is something that is on Americans' mind, and it's in the conversation. How did we get here? How did we choose to strike? And you're not just seeing that among the American people in polling, as he suggested. Like they want answers, and they'd like to have some sort of understanding of how to limit the president from doing things that perhaps Congress has not approved of. This is an ongoing conversation that has happened, but because of the uniform opposition to this war, and because it's so strong, the American opposition among the populace is so strong, I think we're having a renewed conversation here. But I also think that we have to look at the fact that that Republicans are joining in. So you've got, I believe it was Senator Ron Johnson who was saying that, we really have to worry about President Trump and the decisions that he's making on a day-to-day basis with these wild threats that he continues to engage in, the changes in deadline, et cetera. You see worry on the Republican side and fear that decisions will be made in the future that impact Americans and have, a serious impact and effect.
All right, Laura Fink and Rick Davis, stay with me. We do want to go now, though, live to the White House as the press secretary, Caroline Leavitt, is speaking about this ceasefire. She calls it a victory for the U.S. Let's listen on Bloomberg TV and radio.
Including 16 entire classes of Iranian warships. Despite once being the largest undersea force in the Middle East, Iran now has 0 submarine vessels. 97% of Iran's once massive inventory of more than 5,000 naval mines has also been targeted and destroyed. Iran's air forces are functionally and operationally irrelevant at this point, after the United States maintained total air dominance over their country for weeks on end. To underscore the significance of this, before Operation Epic Fury, the Iranian Air Force would fly between 30 to 100 flights per day. Today, that number is 0. Iran's ability to fund and support its terrorist proxies has been greatly reduced. At this point, Iran can no longer distribute weapons to its proxies in the region. And most importantly, Iran will not be able to acquire nuclear weapons. Prior to the start of this successful operation, Iran was aggressively expanding its short-range ballistic missile arsenal. Through these weapons and its navy, Iran was attempting to build a military buildup around their country that would pose an imminent and existential threat to the United States military assets in the Middle East, our allies in the region, and ultimately the free world. Iran was pursuing this dangerous and aggressive strategy for one reason: to hold the entire world hostage to its terrorist ambitions. The Iranians aim to use their expanded military capabilities as a shield around their country to continue achieving their ultimate goal internally, building nuclear bombs. But their murderous and evil plans have been blown up, quite literally and figuratively, along with their military, their nuclear program, and most of their senior leadership, including the former Supreme Leader, Ayatollah Ali Khamenei. Their command and control structures were also massively disrupted after being struck more than 2,000 times. Many of their remaining leaders are paralyzed in fear and no longer enjoy the freedom to move around their country freely and meet openly. Thanks to the unmatched excellence of our warriors at the direction of the Commander-in-Chief, the world has just witnessed a historically swift and successful military triumph. President Trump started Operation Epic Fury with strategic military objectives, and the United States has clearly achieved them. As we mark this progress, we also remember and honor the 13 American heroes who laid down their lives in this noble effort. I know President Trump and our grateful nation honors their ultimate sacrifice, and we will never forget them. May God bless their families. The valiant efforts of all of our incredible service members created maximum leverage for the President of the United States, allowing he and his leadership team to engage in tough negotiations over the past couple of weeks that have now created an opening for a diplomatic solution and long-term peace in the Middle East. The President's maximum pressure and the leverage created by the success of Operation Epic Fury led to the Iranian regime asking for and ultimately agreeing to a ceasefire proposal with the United States. Iran could no longer tolerate being bombed or taking the gamble of what was to come following President Trump's 8 p.m. deadline last night. Iran has agreed to open the Strait of Hormuz, and as the President said, we have received a proposal from the Iranians that has been determined to be a workable basis on which to negotiate. I've seen a lot of inaccurate coverage today from the media about these negotiations and these plans already. So let me be clear and correct the record. The Iranians originally put forward a 10-point plan that was fundamentally unserious, unacceptable, and completely discarded. It was literally thrown in the garbage by President Trump and his negotiating team. Many outlets in this room have falsely reported on that plan as being acceptable to the United States, and that is false. With the president's deadline fast approaching and the United States military completely decimating Iran with each passing hour, the regime acknowledged reality to the negotiating team. They put forward a more reasonable and entirely different and condensed plan to the president and his team. President Trump and the team determined the new modified plan was a workable basis on which to negotiate and to align it with our own 15-point proposal. The president's red lines, namely the end of Iranian enrichment in Iran, have not changed. And the idea that President Trump would ever accept an Iranian wish list as a deal is completely absurd. The president will only make a deal that serves in the best interests of the United States of America, and he as a negotiating team will focus on this effort over the next 2 weeks, so long as the Strait of Hormuz remains open with no limitations or delays. These extraordinarily sensitive and complex negotiations will take place behind closed doors over the course of the next 2 weeks. I would strongly advise the media against running with narratives that have no basis in fact. What Iran says publicly or feeds to all of you in the press is much different than what they communicate to the United States, the president, and his team privately. Never underestimate President Trump's ability to successfully advance America's interests and broker peace. President Trump has a proven track record of achieving good deals on behalf of the United States and the American people, and he will only accept one that puts America first. With that, I will take your questions today. I'm sure you have a lot of them. In our new media seat, we have Shane Harris with the AMAC Newsline. Shane, thank you for being here. Why don't you kick us off?
Yeah, thanks for having me, Caroline. Two questions for you. First, following the president's announcement of the ceasefire, if this is indeed the end of hostilities in Iran, what is the president's message to the American people about what was achieved for our country through Operation Epic Fury?
Sure. I think I just laid out a significant portion of that in my opening remarks. 6 weeks ago, the president looked the American people in the eye directly, and he told them that he launched this operation to take out the imminent threat that was posed by Iran. And that threat has now been greatly destroyed. Their Navy, their missiles, their defense industrial base, and their desire and their plan to build a nuclear bomb inside their country is no longer going to be allowed, can no longer happen, thanks to the remarkable success of Operation Epic Fury over the course of the last 38 days. That has been absolutely achieved, and now we're moving into the next phase of this, which is a negotiating period to put some fine points on this and to hopefully broker an agreement that can achieve long-term peace in the Middle East.
Yeah, and then second, what is the president's message to American seniors who have a much higher voter participation rate and they're likely to be a key swing vote in the midterm elections?
Well, the president loves our seniors across the country, and as you know, the president signed the One Big Beautiful Bill, the Working Families Tax Cut last year, which greatly reduced taxes on Social Security for our seniors. In fact, thanks to the Working Families Tax Cut, nearly 90% of seniors will no longer pay tax on their Social Security. That's a huge win for our seniors and also for our middle class and working families across the country with the no tax on tips provision and the no tax on overtime. Next week is tax week. You'll hear a lot from the president about how his policies have benefited the American people, and I'm proud to report that the president will be traveling next week to the great states of Nevada and Arizona to tout this historic accomplishment over the course of the next week. Thank you for being here, Shane. Gabe.
Thank you, Caroline. Iranian state media is saying that Iran has now closed off the Strait of Hormuz today in response to Israeli attacks on Lebanon. What's the White House response to that? And you just listed many military successes. I understand that. But strategically, how is the administration arguing that Iran does not have more economic leverage than it did before the start of the war?
Sure. Well, with respect to the first reporting out of Iranian state media, the president was made aware of those reports before I came to the podium. That is completely unacceptable. And again, this is a case of what they're saying publicly is different privately. We have seen an uptick of traffic in the Strait today, and I will reiterate the president's expectation and demand that the Strait of Hormuz is reopened immediately, quickly, and safely. That is his expectation, and it has been relayed to him privately that is what's taking place, and these reports publicly are false.
Caroline, the president yesterday threatened that a whole civilization would die if a ceasefire deal wasn't reached, understanding that Iranian leaders have previously said death to America. But why is it appropriate for the president of the United States to use that kind of language when talking about civilian targets? And was the president mocking Islam by signing off his True Social post over the weekend, praise be to Allah? Wouldn't that antagonize Muslim allies across the world?
Well, I understand the questions about the president's rhetoric, but what the president cares most about is results. And in fact, his very tough rhetoric and his tough negotiating style is what has led to the result that you are all witnessing today. Iran publicly acknowledging last night that they have agreed or that they wanted this ceasefire with the United States because they no longer could tolerate being bombed by our very powerful and lethal military, and that they have committed to the reopening of the Strait of Hormuz, which the president will hold them accountable for, and it's something the administration is closely monitoring in real time.
So
Danny.
Should the world not take his word seriously?
The world should take his word very seriously in understanding that the president is always most interested in results. And it was the Iranians who backed down, not President Trump. He said that they would face very grave consequences, as you just laid out, by the 8 p.m. deadline if they did not agree to reopening the Strait of Hormuz. And what did they do last night? They agreed to reopen the Strait of Hormuz. Danny.
Thanks, Caroline. Would President Trump like to see Lebanon included in this peace deal? Because as you know, there's been increased Israeli strikes on Lebanon today with dozens of casualties there.
Sure. Lebanon is not part of the ceasefire. That has been relayed to all parties involved in the ceasefire. As you know, Prime Minister Netanyahu put out a statement last night in support of the ceasefire, in support of the United States' efforts, and he's also assured the president they'll continue to be a helpful partner throughout the course of the next 2 weeks.
Is there any thought, though, that the president might like to see Lebanon included in a future date, given that it seems to be causing or potentially undermining the Iran ceasefire?
Again, this will continue to be discussed, I am sure, between the president and Prime Minister Netanyahu, the United States and Israel, and all of the parties involved. But at this point in time, they're not included in the ceasefire deal. Jeff.
Thank you. Caroline, will the U.S. take part in talks with Iran in Islamabad on Friday?
I can announce that the president is dispatching his negotiating team, led by the Vice President of the United States, J.D. Vance, Special Envoy Witkoff, and Mr. Kushner to Islamabad for talks this weekend. The first round of those talks will take place on Saturday morning local time, and we look forward to those in-person meetings.
What role does the president see for the U.S. in monitoring or helping with the Strait of Hormuz going forward?
I think the president commented on that this morning. We're going to continue to monitor it very, very closely. We will be helpful in any way that we can, but we fully expect Iran to do this, and the president has made that quite clear as well. It's, again, as his statement said last night, this ceasefire is subject to the safe reopening of the Strait of Hormuz. Again, this was just determined last night. We understand things take time, but that's the president's expectation, and he will hold everyone to it. Sure, in the green blazer.
Thank you, Caroline.
Sure, and then in front of you. But Andrew, you can go ahead.
All right.
You're not wearing a green blazer.
I am actually wearing a green blazer.
It's a little brown to me, but go ahead.
Fair enough. Regarding the president's rhetoric, when the U.S. invaded Iraq in 2003, George W. Bush said in a message to the Iraqi people that the military campaign was directed, quote, against the lawless men who rule your country and not against you. Yesterday, the president threatened to destroy Iran's civilization, the entire civilization. Not the Iranian government, but the Iranian civilization, the Iranian people. The U.S. has been a moral leader for most of its history by fighting wars against other governments, not against civilizations. How can the president claim that America can ever have the moral high ground if he's threatening to destroy civilizations and not casting wars as fights against other governments?
Andrew, I think you should take a look at the actions of this president over the course of the past 6 weeks and the actions of our brave men and women in our United States military who have taken out essentially taken out the military of a rogue Islamic regime that has chanted death to America for 47 years, that has killed and maimed thousands of American soldiers over the course of the last 5 decades. The president absolutely has the moral high ground over the Iranian terrorist regime, and for you to even suggest otherwise is frankly insulting.
With all due respect, Caroline,
Go ahead.
with all due respect,
Go ahead.
there is...
Just given what we've seen in Lebanon today and the increased attacks from Israel, I mean, is there any concern that Netanyahu is trying to kill the ceasefire?
The president spoke with Prime Minister Netanyahu last night. In that private conversation, Prime Minister Netanyahu relayed exactly what he said to the world publicly, that he supports the president and Israel remains a key ally and partner to the United States. They've been a tremendous partner over the course of the past 6 weeks, and we thank them for their heroic efforts as well. The president had that conversation last night, and that was relayed to the world publicly as well. Reagan, go ahead.
Thank you, Caroline. I have a question for you on Iran, and I have a question on the Dignity Act as well. On Iran, it's been reported that the ceasefire was struck after the involvement of two unlikely factors, J.D. Vance and China. What role did those parties play in striking a deal?
Well, Vice President Vance has played a very significant and a key role in this since the very beginning. Of course, he's the president's right-hand man. He is the vice president of the United States. He's been involved in all of these discussions, and as I just announced, he'll be leading this new phase of negotiations in Islamabad later this week. With respect to China, there were conversations that took place between top levels of our government and China's government. The president has great respect for President Xi and a great working relationship with him and with that country, and he looks forward to visiting China in just a few weeks.
And on the Dignity Act, it's getting a fresh push through Congress. It would give some illegal immigrants in the country a path to citizenship. What's the White House's position on this legislation, and would the president sign it if it made it to his desk?
Honestly, Reagan, I haven't spoken to the president about the legislation, but I will have that conversation, and we'll get you our formal position on it as soon as we can. You're welcome. Go ahead.
The president suggested in an interview this morning that he would support a joint U.S.-Iran venture that charged tolls for ships going through the strait. Does the president believe that the U.S. should earn revenue from the Strait of Hormuz going forward?
It's an idea the president has floated, as you know, and it's something that will continue to be discussed over the course of the next 2 weeks. But the immediate priority of the president is the reopening of the strait without any limitations, whether in the form of tolls or otherwise.
And on the highly enriched uranium, has Iran given the administration any indication that it would simply turn over the enriched uranium, or is this an expectation that the president has that he would have to send in ground troops in order to do that?
This is on the top of the priority list for the president and his negotiating team as they head into this next round of discussions. And as I said in my opener, that is a red line that the president is not going to back away from, and he's committed to ensuring that takes place. We hope it will be through diplomacy.
But have they given any indication that they would turn it over?
They have.
They have.
Yes. Trevor.
The latest news out of Iran is that the air defenses have been activated in several cities, including Isfahan, and that explosions have been heard in Isfahan. Who is bombing Iran right now?
Were those reports just as of a few minutes ago?
Yeah.
Okay, so obviously I'll have to go back and check with the national security team. I'm standing out here with all of you, but I will do that and we will get you an answer, okay?
And just on the civilization question that we've been talking about.
And I would just add to that point, again, I haven't seen these reports. I'm not verifying them. Not that I don't trust you, Trevor, but I want to go back and check with the experts here at the White House. I would just say, and I would echo what the vice president said this morning, this is a fragile truce. Ceasefires are fragile by nature. We've seen this with respect to the 12-day war with Iran and Israel last year. It takes time sometimes for these ceasefires to be fully effectuated. And one of the results of Operation Epic Fury was we completely dismantled Iran's command and control center, which makes it difficult for them to pass messages up and down the chain. And so we understand that. I would caution a little bit of patience, but of course we want to see the ceasefire effectuated and abided by all parties as quickly as possible.
Thank you. And the American presidential administrations, going back to Ronald Reagan, have said this formulation about nuclear war, that a nuclear war cannot be won and must never be fought. Is that still the view of this administration, given the president's comments about civilization?
I have no change in our view on that policy.
Katie. Thanks, Caroline. I'm just, given the gravity of what he said yesterday, what was your understanding of what he meant when he said, this civilization is going to be eliminated?
I think it was a very, very strong threat from the President of the United States that led the Iranian regime to cave to their knees and ask for a ceasefire and agree to reopening the Strait of Hormuz. So it was a very strong threat that led to results. And as the Secretary of War stated at the Pentagon this morning, it was not an empty threat by any means. The Pentagon had a target list that they were ready to hit go on at 8 p.m. last night if the Iranian regime had not agreed to open the strait, which they did. And I think that's something we should all be grateful for.
The United States is a moral leader in the world, given that
I was asked this exact same question by your colleague Andrew in the back, and I think, again, the insinuation by anyone in this room that Iran somehow has the moral high ground over the United States of America is insulting, considering the atrocities that they have, committed against our people and our military over the past 5 decades. John, go ahead.
Thanks a lot, Caroline. 2 questions for you. One has to do with a statement, a joint statement put out this morning by some of America's European allies, our NATO allies. And in that joint statement, they said regarding the Strait of Hormuz, our governments will contribute to ensuring freedom of navigation in the Strait of Hormuz. What's the administration's reaction to that joint statement? Does that smooth things over when the president meets with NATO Secretary General a little bit later this afternoon?
I have a direct quote from the President of the United States on NATO, and I will share it with all of you. They were tested and they failed. And I would add, it's quite sad that NATO turned their backs on the American people over the course of the last 6 weeks, when it's the American people who have been funding their defense. As you know, President Trump will be meeting with Secretary Ruta in a couple of hours here at the White House, and I know he looks forward to having a very frank and candid conversation with him.
And then secondly, in regards to this conflict, 38 days, as you pointed out, President Trump has said that there's been regime change. Has that regime change led to more freedoms for the Iranian people?
I think that's a question that's being asked a little bit too early, John, and we hope that is the case, but it's something that has yet to be seen. Eamon.
Caroline, on this question of tolling by the Iranians in the Strait of Hormuz, I've heard you talk about a number of red lines that the president has in this negotiation, but I haven't heard you say that Iranian tolling in the Strait of Hormuz is a red line. Would it be acceptable to the United States at the end of all this if the Iranians are able to charge tolls in the Strait of Hormuz?
I think the president was very clear and simplistic in his language last night in his Truth Social post, where he said that this ceasefire is subject to the free, safe, and immediate reopening of the Strait of Hormuz. That's very plain language, and it should be taken at face value.
You mean free charge?
Carrie, go ahead. Without limitation, including tolls, yes. Carrie.
Quick follow-up on the tolling. Why would the U.S. allow Iran to collect tolls from the Strait of Hormuz? That's not something that we've opposed for a number of years now.
Again, that's not something we've said that we've definitively accepted. The joint venture is something that was proposed by the president, but he was very clear in his statement last night. He wants to see the strait reopened immediately without limitation, and that's something we're going to hold them to. Yes, in the blue.
And second question.
Family and friends in Iran. I myself am Iranian, and I've been talking to them through the blackout. One of my family members yesterday said goodbye to me. So what message should we be sending Iranians when they message me saying, what should they be doing right now? How should they stay safe? Because they really don't know what to do.
I think the president's main priority, and my main priority as his spokeswoman, is to make sure that clear messages are sent to the American people, of course, which is my job today. With respect to the Iranian people, the president, has taken out the imminent threat that was posed by their military to the United States, to our allies in the region, to our forces in the region. And of course, as the president has long said, he hopes that Iran will be a country of peace, of prosperity, and we're moving into this next round of negotiations to hopefully come to an agreement with this new regime that will create long-term stability in the Middle East.
He has said that they should stay inside of their homes and also take back their country. So there's a contradiction there. So how do you address that?
Again, we're moving into this next round of negotiations with the remnants of the regime and those that we are speaking with now to hopefully reach a place of peace long-term for the region, and that includes the Iranian people as well. In the blue, go ahead.
Thank you, Caroline. The White House posted the statement from the Iranian government that passage in the strait will be coordinated with Iran's armed forces. As of today, who controls the Strait of Hormuz?
again, these statements were put out 12 hours ago. We expect that the strait will be opened immediately. As I said earlier, we have seen an uptick in traffic in the strait, and it's something that we are monitoring minute by minute, hour by hour as the days go on.
Who controls the strait right now?
One on the deportations of Iranian officials, and then on the negotiations. Are there still security concerns about Vice President Vance being part of these peace talks, Steve Witkoff, Jared Kushner? And then two, given the ongoing deportation of General Soleimani's niece, does the Trump administration plan to deport more relatives or people in the families of Iranian officials that are in the U.S.?
Certainly, anyone who is here fraudulently. I understand one of the individuals who their visa was revoked by Secretary Rubio and they were deported by ICE. They had a fraudulent asylum claim. That's against the laws of the United States. So anyone who is here illegally or fraudulently is subject to our nation's immigration laws and will be removed from our country. And I know this continues to be a top priority for the State Department, working in conjunction with the Department of Homeland Security. With respect to the safety of the Vice President, we fully trust the United States Secret Service to do their job, to keep the Vice President and the President's negotiating team safe. They do a tremendous job, and we fully trust them to do that.
Caroline.
In the back, go ahead.
Thank you, Caroline. The President has said Cuba is next. What's the message to the American people regarding Cuba, and what can Cubans expect in relation to this statement?
Well, look, I think when President Trump said that, and he later clarified after making that statement, that he meant the Cuban regime is bound to fall. Their country is very weak. They're in a very weak position economically, obviously, financially. The Cuban people are fed up with their government, as they should be. And these talks and discussions continue to happen at the highest level of our government. I don't have any updates or announcements for you with respect to Cuba policy today. Good to see you.
Thank you, Caroline. Secretary Hegseth said this morning that U.S. troops would be sticking around. Can you expound upon that, what we should expect from U.S. troops in theater for the next 2 weeks and beyond?
I would defer you to the Pentagon for any specifics on assets that have been in place in the Middle East, but take the Secretary at his word, and also the President has reiterated this as well in his own words, that we're not going to move anything immediately. Again, this is a 2-week ceasefire where we hope at the end, and we expect at the end, we'll have a good agreement between the United States and Iran, but in the meantime, we're going to ensure that our military is always at the ready of the Commander-in-Chief. I'll take a couple more in the back. Sure.
Thank you.
On NATO, I'll take your question. Go
Thank you,
ahead.
Caroline. On NATO, can you tell me, is the United States still considering withdrawing from NATO? Is that still a possibility?
It's something the President has discussed, and I think it's something the President will be discussing in a couple of hours with Secretary General Ruta, and perhaps you'll hear directly from the President following that meeting later this afternoon. Thank you, everyone.
All right, that was the White House Press Secretary Caroline Leavitt, heard live on Bloomberg TV and radio, looking ahead to the meeting that President Trump is scheduled to have with the Secretary General Mark Rutte at the White House. 3:30 p.m. Eastern Time is when that is expected, and the press secretary did suggest we may hear from President Trump after that, as she did not push back on the notion that the president may be considering withdrawing from the NATO alliance, given his disappointment with it and lack of participation in this conflict in the Middle East. Of course, it would take an act of Congress to do so, but the press secretary went well beyond that when talking about the ceasefire, at least for this 2-week period that has been agreed to by the U.S. and Iran. She described that as a victory for the United States, and she said it was Iran that backed down, not the U.S. She also reiterated that it is President Trump's expectation that the Strait of Hormuz will be opened immediately, suggesting that even though Iran publicly is saying that it is not for oil tankers due to Israel's ongoing strikes in Lebanon, that the suggestions in private, she said, are very different. And on Lebanon, after we heard from the Prime Minister of Israel, Benjamin Netanyahu, that he made sure Lebanon would not be included in the ceasefire agreement, the press secretary did state that plainly. She said that Lebanon is not included. Obviously, that is something that Iran would like to see change, which underscores the fragility of this truce, which was emphasized as well by Caroline Leavitt. All of that said, of course, she did say that this ceasefire has been in place for now. Obviously, there's a lot of questions as we're still seeing strikes. She chalked that up to the fact that the U.S. has destroying a lot of Iran's military communications capability, but it's a lot of questions that we still have to be answered. And I'll be back for more on the late edition of Balance of Power at 5 p.m. Eastern Time. In the meantime, Fed Minutes are just ahead on Bloomberg Business Week Daily right here on Bloomberg TV and radio.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. It was what some would say was Taco Tuesday. We're going to talk about that a little bit later on, more on the war in a moment. But it's also a Fed Wednesday on this April 8th, 2026, because we are just seconds away from the minutes from the second Fed decision of 2026. Tim, that was back on March 18th. We've got a rally underway, though, and yields have pulled back ahead of this.
Oh, that's ahead of this. Think back to when that meeting happened, though. U.S. Treasury slumped, short-term yields soared to their highest in about 5 months. And we're getting Fed minutes in just a second.
And with that, off to Mike McKee. He's at the Fed in D.C. Mike.
Well, no surprise, the Iran war and tariffs were central to the discussion among Fed officials at their March meeting. The full effect of tariffs had not yet moved through the economy, officials said. A resilient economy, they called it. And the war, then only a few weeks old, raised the threat of inflation increasing and hiring slowing. Some participants judged there was a strong case for a two-sided description of the committee's future interest rate decisions in their post-meeting statement, reflecting the possibility that higher inflation might call for rates to be increased, although no member called for a rate move at that meeting. Most participants raised the concern that a protracted war could lead to further softening of labor markets, which would warrant additional rate cuts. But many participants pointed to the risk of inflation remaining elevated for longer than expected, which, quote, could call for rate increases. The vast majority of participants noted that progress toward the committee's 2% objective could be slower than previously expected, the minutes say. Labor market conditions appeared vulnerable to adverse shock, they say. Most participants highlighting the risk that a protracted conflict in the Middle East could weigh on business sentiment and further reduce hiring. As for policy, most participants felt it was too early to judge how the war would affect the economy. Many participants judging that in time it would be likely become appropriate to lower the target range for the federal funds rate if inflation were to decline in line with their expectations. A couple highlighted, though, that they had pushed their assessment of the most likely timing of rate cuts further into the future. Stephen Myron, though not named, was the only dissenter. The minutes do note that one participant argued rates were still restrictive, and that was increasing risks to the labor market. Guys?
Mike, this is the moment where we sort of parse language here, and we ask you to translate what different words means when it comes to these minutes. The word protracted, that has to do with a period of time, a longer period of time. I go to that word because the Fed said that protracted war could hit jobs, warrant cuts. How long is protracted?
They do have a guide to Federal Reserve terminology in terms of some, many, few, etc., but they don't have a definition of what protracted means. Obviously, it would have suggested that the war could last for several months or longer. We're kind of in a middle period now. Hard to know whether this fits that model or not.
All right, Mike, we're going to come back to you in just a moment. Our Mike McKee there at the Federal Reserve. We're going to continue with Mike in just a moment. Do want to check on the markets in terms of what we've seen in terms of reaction because, listen, folks, we saw a reset happening late last night into this morning because of what is going on, easing tensions or so it seems when it comes to the U.S. war in Iran. Having said that, as for the S&P 500, pretty much where we were prior to the release of these Fed minutes. Same story for the NASDAQ 100, just a little bit of a move to the upside. Probably more importantly is what's going on in the Treasury market. And I'm just taking a look all along the curve in terms of what we're seeing. And we're pretty much where we were prior to the release of those Fed minutes. So, maybe investors, of course, a little bit of I don't know. I think they're just focusing on the war at this point and maybe just kind of happy in terms of that happening at this point, although there are a lot of questions about that. Mike, I want to go back to you. I mean, will the Fed start to look through the war based on what we got? Or, we still have a lot of questions about what happens next.
Too early to reach a judgment on that yet because the war has maybe not ended. We don't know for sure. We've had conflicting headlines all day. Most Fed officials who've spoken in the run-up to their next meetings, since the last meeting so far, have basically said the same thing that the minutes suggest, that there are increased risks to inflation that could come starting with oil prices and then working their way through the economy. They also note that tariffs had still yet to work their way through the economy, and we might get more. So there's a lot they don't know at this point, and I think the minutes really don't give us any more clarity since they were 3 weeks ago, and nothing has happened that gives us more clarity into the future direction of interest rates and oil prices and everything else at the moment.
The next move from the Fed, Mike, not whether it's going to, the Fed's going to just not change rates, but are people still thinking the next move could actually be higher rather than lower?
No, it doesn't appear that way. Right now, we don't have a good measure of inflation since the war started. Friday, we get CPI. That'll be our first real clue. And then we'll watch PPI the following week. We do get PCE inflation tomorrow, but that's for February, so it's not going to tell us anything. But the other two inflation measures will give us an idea of what the initial shock is. Now, we're already into April at the highs of gasoline prices, so we'll have to see if they stay elevated throughout the month, what that's going to mean for inflation. The word we get from oil companies and shipping companies is that this is going to take a while to work its way out of the economy, even if the war ended today. So they're likely going to be faced with uncertainty for quite some time, and I would imagine that we'll get a very similar meeting and minutes when they meet on the 29th of this month, because they're basically going to have to say the same things. Inflation could rise, it could become longer lasting, the labor market could weaken, but we just don't know yet.
Yeah. Mike, sit tight for a sec. We want to bring you into the conversation because here in studio with us, back with us, is Matt Lazzetti. He's Deutsche Bank Chief U.S. Economist, Head of U.S. Economic Research, as we said, right here in our studio. Listening to Mike break it down. Good to have you back.
Great to be back.
What jumps out for you?
Yeah, I think Mike kind of highlighted things, and actually the note that he was talking about where the Fed goes through their account numbers, I had it up in front of me, and I think the one thing that sticks out, back in January, several Fed officials were pushing for this two-sided language. They wanted to open up to the possibility that the next move could be a hike, in addition to being a cut. At the March meeting, it looks like this group grew a little bit. So now some, rather than several officials, are in that group. Some in the Fed's lexicon is actually more than several. So you do see that group as growing. Now, Chair Powell at the meeting in March didn't actually note this. He didn't push that he was asked about it specifically. So I think you've seen that group grow. Now, the minutes always can be stale, right? They're several weeks ago, especially in an environment where things are evolving so quickly.
But sometimes I love it because it kind of just reminds us, okay, here's where we were before some of the craziness. And then, do we get back to that? Or does that craziness, Matt, affect us longer term? Stay with us.
And it gives you a sense of, how hawkish were they, for example, before we got a much stronger jobs report, which could have alleviated some of the concerns about downside risks to the labor market. And so that context matters a lot.
Do you want to ask Mike a question?
Mike, from the minutes perspective, do you see a sense that the Fed could be opening up more to rate hikes as we look ahead? I like the question about protracted nature. I thought that was really giving the Fed optimal flexibility and optionality to respond however they might want. But your overall read of the minutes, is the Fed inching closer to potentially this two-sided language? Do you think they adopt that at the April meeting?
I don't think they will. It'll really depend on what happens with the inflation numbers. They could, and you're right, we have seen more people talking in that area. I think the sentence that you highlighted, the other part of it was in the January meeting, some members said they could support the idea of a two-sided explanation, and this time they said there was a strong case for it. So what that tells me is that probably the case is going to be stronger for no move, and that the people who wanted to cut are going to be fewer at the next meeting because they still don't know, and the risk is a little more two-sided. But I can't say that it really sets them up to raise rates at this point because, in theory, things might get better by then.
It's like, honey, I said some. No, I meant more. Like, I don't know, the nuances. Hey, Mike, before you go, last thing on your mind when you think about the U.S. economy, so much coming at folks. I can't wait for earnings. I want to see what CEOs and the C-suite has to say about the outlook if they're willing to commit. But what's top of mind for you here?
Well, you make an important point about earnings and what CEOs say, because they do note in the minutes that tariffs had caused companies to stand aside and not make decisions, and that continued price increases from the war could cause companies to cut back on hiring. Mm-hmm. So those are the kind of outlooks we'd like to see from the CEOs that will give us a better idea of where the economy is going. But overall, what I take away is that the Fed officials are just like the rest of us and the folks on Wall Street. They don't know what's going to happen, but they stand ready to respond in whatever direction with whatever they can do to help.
Which is kind of what you want in a central bank. All right, Mike, you can come back home, so we'll be welcoming you back. Of course, our Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent, but still with us, Matt Lazzetti. Matt, fundamentally, how is the U.S. doing? Like, when you think about it.
I think if you take a step back and you look at the incoming data, we have an economy where growth has been very resilient. You know, the economy has experienced abnormal and historic shocks over the past 12 to 18 months. And despite that, the economy has been continuing to grow at 2% or above. The labor market, extreme volatility in the month-to-month readings. But if you look at the unemployment rate today, is about where it was last summer. It's still at historically low levels, almost 4.2%. Most measures of labor market slack are very stable. The hiring rate has been stable. The quits rate's been stable. And so despite all the worries, despite the fact that we are experiencing the significant adverse shocks that are putting attention to the Fed's dual mandate, the economy is actually performing quite well.
The economy is not monolithic, and there are different parts of the economy, and the way that different people feel this energy shock is a lot different. We spoke to Chris Britt, the CEO of Chime, last week. This neobank or fintech, whatever you want to call it, where the average income of the user is about $75,000. He said his consumers' fuel spending rose 25% over the last month as a result of the war with Iran. What does it do when that consumer is hit so hard to your outlook of the U.S. economy?
Yeah, you've had an economy, and part of this is always the state for the U.S. economy, which is that it is heavily skewed in terms of the impact of consumer spending towards higher income households that drive a disproportionate share of consumer spending. Now, the shocks that we are seeing tend to be regressive. So they're hitting the middle and lower part of the income distribution more. So they're raising fuel prices. They will be raising food prices most likely. The tariffs that we've seen impact goods more than they do services. So all those are negatively impacting the lower part of the income distribution. That part of the income distribution is generally always more fragile, but has been shown to be more fragile in an environment of higher interest rates, higher inflation that we've seen. But if you take a step back, all of the aggregate spending data still looks quite good. Consumer spending looks relatively solid. From a business CapEx perspective, yesterday we got durable goods orders and shipments, which remain pretty solid. So there's still these kind of distributional concerns about the consumer and the broader economy. But on average, in the aggregate, things look very resilient.
So we keep talking, Matt, a lot around this table about, though, the longer impact of the war. And I can't remember if
protracted.
Protracted?
In the words of the Federal Reserve.
Yes, exactly. But I just think about, and I can't remember if we've talked about this yet with you, is that this idea that you have nations thinking about what they need to protect domestically for their national security. And so producing more at home, making sure they have access to raw materials. I don't know. I'm obsessed with this about the rethink. And I do wonder if that's factoring into your models longer term. And with that, I think about labor costs in here, that would make things probably more expensive here. Even if you take out the moving stuff around costs, I just think about what that does to inflation longer term.
Yeah, so I think there's probably two aspects of this. One is supply chain resiliency, and it was a key topic coming out of the pandemic. And maybe we've forgotten a little bit about it over the past several years, even though you had this historic tariff shock.
Yeah.
But what's happening over the past month certainly intensifies those concerns. Now, it might mean that you have to invest more across multiple supply chains. You incur more costs because of that, and therefore, yes, you're more resilient, but at the same time, your average cost is higher, and so that could feed into inflationary pressures. The other part of this is how are people thinking about their own defense, and so can your European economies rely less on the U.S. for defense. I think certainly we've seen Germany take a strong stance on that position, significant investments in their own defense industries and infrastructure, and that will mean globally fiscal policy is more proactive than it has been in the past. And because of that, inflation will be higher.
Guns versus butter. Like I'm
Correct.
thinking about the impact on what that does for society.
Correct. I think ultimately it will squeeze out and push out some of the private sector. Will overall raise interest rates, keep interest rates higher, and inflation higher.
When we talk about a duration of a conflict like this, I think there's this idea that we're in a period where a ceasefire has been announced, but it's clear that things aren't going back to what they were before February 28th. Oil's not there. Maybe the excitement about what it could go back to is there, but there's still skirmishes happening, and there's still negotiations to be had. Is there a chance that the war may not look like it did in the first 5 weeks, but there is still a heavy presence by the United States and Israel in the region for a long time to come, and that affects the economy?
Yeah, I think we have to think that there's still uncertainty here, right? We're in day one of what is still an uncertain truce at this point. And so, how the world looks 2, 3, 4, 5, 6 months down the road remains highly uncertain. I think it is very likely that energy prices are just higher than they were before the recent events. In part, that's because even if the Strait of Hormuz picks back, reopens fully, and we're clearly not there yet.
No, its oil transit remains halted now.
Correct. So we're clearly not there yet. But you've had some damage to energy infrastructure in the region, which is absolutely critical, and that's going to take longer to get on track. So I think regardless, you are likely in a world where energy prices overall and therefore inflation for this year is going to be higher as a result. Now, I think the U.S. economy can absorb that, and I think that it can be resilient in response to that. I think if oil prices were to move up to $150 a barrel, that's the period where we became really worried that it could wipe out the benefits of tax cuts to U.S. consumers. You might get into nonlinear effects on the economy where growth begins to be more damaged. So, yes, I think it has lingering effects on inflation. I think that impacts the Fed in a hawkish direction, but it doesn't necessarily overturn a relatively resilient view for the economy.
Matt, I want to throw one more thing. And, before the war, every conversation either started or somehow worked its way to artificial intelligence. Yeah. And you guys have done a lot of work. Certainly, we've talked a lot about the potential impact on the labor market, but you guys also did a recent note on AI's maybe impact on inflation. What did you look at, and what did you guys find out?
Yeah, so I think if you think back 6, 7 weeks ago, the entire conversation in markets was about how AI was going to be disinflationary and was going to displace labor, both of which was going to put downward pressure on inflation and on interest rates. Now, obviously, that's completely gone away from the discussions at the moment. But I think there's just this very strong conviction in markets that AI is this massive disinflationary force. One thing that we did is we actually just went out and asked various AI tools whether or not they think it is going to be disinflationary.
Did the tools explode?
They did not explode.
Okay, that's a good sign.
And people, they joke, yeah, of course, if you ask Hal whether or not it's going to take your job, it's going to tell you no. But
I'm sorry, Matt, I cannot answer for you.
Just got about 40 seconds.
Sure, but from the inflation perspective, I thought you found really interesting results. So AI is not at all convinced that over the near term it's going to be a disinflationary force, and it highlights, I think, key factors. There's a big investment boom that's taking place. It can add upward pressure on energy prices. Yeah. But even if you look over the next 5 years, it puts about an equal probability that AI is a significant disinflationary force to it lifting inflation. And again, it's kind of highlighting a lot of these supply chain issues and the investment demand part.
By the way, one of our favorite things, maybe it's just mine, do you know who Tim Stanovic is? Do you know who Carol Messer is? We get all kinds of crazy answers. Matt Luzetti.
We know who Matt Luzetti is.
We certainly do. Deutsche Bank Chief U.S. Economist, Head of U.S. Economic Research. All right, when we come back, we're going to talk clothes, retail. We're going to talk Levi's with the CEO.
It's 2:21 on Wall Street. I'm Amy Morris. Markets feeling optimistic after the U.S. and Iran reached that ceasefire deal. We check markets for you all day long here at Bloomberg. The S&P 500 is up 2.3%. NASDAQ up 2.75%. And the Dow up 2.5%. The 10-year Treasury yield at 4.29%. And the 2-year yield at 3.78%. Both WTI and Brent crude bouncing around $95 per barrel. Pretty much where it's been all day. Fed officials considered differing scenarios for the economy following the war in Iran, including interest rate cuts and rate increases. Now, most officials worried that the war would hurt the labor market and warrant lower interest rates. Many policymakers highlighted the risk to inflation that might warrant rate increases. Moody's ratings cut the outlook on Blue Owl credit income to negative after significantly higher than peer redemption requests in the first quarter. The private credit industry is facing an investor exodus amid concerns over lax lending standards and a failure to clearly explain liquidity restrictions. Moody's expects elevated redemptions to persist in coming quarters and slower inflows. Blue Owl shares about 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
All right, Amy, thank you so much. Yes, indeed. We are here at Bloomberg headquarters in New York City. Well, thank you, Harry. Thank you, Hulu. Thank you, FX. Thank you, Love Story, and more. We want to talk about Levi Strauss & Co. Company's latest results really knocking the socks off investors. The stock is up the most in 1 year as the company raised its projections for the year after reporting better than expected quarterly results. They cited strong demand in all regions as the denim brand steers shoppers to its own stores and website. We're going to talk about that a lot. Company reporting revenues of $1.7 billion in the fiscal quarter. That exceeded the average of analyst estimates. Earnings per share also, excluding some items, surpassing expectations. The stock now up about 7% year to date and has gained nearly 80% in the past 12 months. Yep. For those watching right now, it is up more than 11%, Tim, in today's session.
With us is the president and CEO of Levi Strauss & Co. She's also a member of the company's board. She's former CEO of Kohl's. She spent close to 17 years, too, at Starbucks. We got Michelle Goss here in the studio. Welcome. It's good to see you. The stock soaring. Investors are liking what they see. Where did the momentum come from, and what's really working right now?
Yeah, well, first, thanks for having me, and I'm really excited to talk about how we started the year. You know, we are seeing momentum across the board, which is around our strategies really picking up and accelerating. So we delivered 9% organic growth, 14% on a reported basis. We are seeing this across geographies. We're seeing this across categories. We're seeing it across genders.
Why?
We're seeing it across channels.
Why is this happening?
Well, you know, it's the brand, it's the product, and it's the execution. And all of those things are working. And I got to tell you, the team is doing a phenomenal job. We're coming off of a solid year last year, and it's accelerating right into 2026.
Michelle, denim, though, is such a crowded category. Like, I won't go to certain department stores because it's just too much for me. But I do go to Levi's. And I
thank you for that.
You're welcome. You're welcome. And I said to you coming in, my 23-year-old, she's wearing them. That's where she wants to go. You talked about your wife. Like, you are hitting a lot of different demographics. How do you do that? How do you appeal to so many?
Yeah, well, I would say it does start with the brand. And we like to say that Levi's operates at the center of culture. And we're hitting a new stride with the brand. I mean, the brand has been strong for a long time. Last year, it went up a notch. We had this fantastic partnership with Beyonce. That moved into a partnership with Shabuzi. And this year, we launched our brand campaign at the Super Bowl. And it was the perfect time because Levi's Stadium was hosting the Super Bowl. And we hadn't been on the Super Bowl in over 20 years. But it wasn't about launching an ad for the Super Bowl. It was about launching our campaign. And we call it Behind Every Original, which is a global campaign and leans into what Levi's does best across sports, across fashion, and music. And so if you've seen the ad, it really does bring that to life and has artists like Doechii or SGA, the basketball superstar, great, and Rosie. And I like to talk about Rosie because here is this, she was part of Blackpink, 90 million followers and growing, and we're rolling that right into a collaboration with her in Asia. So that is taking off as we speak. And so this is about launching, like I said, a campaign for the year. Looking ahead, we've got World Cup coming up that Levi Stadium is hosting. We have collaborations. You know, we had our collaboration with Nike and Jordan a couple months ago. We had people lining out the doors to get this special collab.
Michelle, when you talk about these partnerships with celebrities, with the artists, I know each one of them is different, but in general, are they coming to you, or are you identifying them and you're going to them? How organic is it?
It's all of the above. Well, so and it happens organically. I mean, literally, just at the Brits, we had Harry Styles dancers all wearing 501s. I mean, this is about being at the center of culture. And the Beyonce partnership, that started because she wrote a song called Levi's Jeans. But we've been friends with Beyonce for decades, back to the 90s. Or Carolyn Bessette wore the 517s. And, you know, in Love Story, it's heavily featured and sales are up like 25%.
Did that surprise you? And when did you first all of a sudden notice? Like, we've talked about this on air, the impact of this.
Well, the 90s, we've known about the 90s trend for a long time. And in fact, when you go into our stores online, go into our wholesale partners, I mean, that 90s trend is Levi's is all over it from top to bottom. I mean, one of the things we talk about when you ask about what's working, we talk about our 2 key strategies, which is about becoming a more DTC forward company and also evolving the brand from being about jeans to head to toe. We say denim lifestyle. What does that mean? It means that we want to give you the whole wardrobe. It starts with the jeans, but tops, button-downs, jackets, outerwear, dresses, all through the lens of Levi's, but we're playing now in the total apparel space.
Michelle, hang on for a second. Forgive us. This is the world we live in. You live in it too. We all do. We do have some headlines crossing the Bloomberg terminal. This is coming involving the war, U.S. war with Iran. Iranian parliament speaker posting a violation statement. They're saying that the ceasefire deal with the United States has been violated. So again, this is just crossing the Bloomberg terminal. And let me just take a quick check on the market trade. We are seeing stocks just dip a little bit lower on that, but we're still seeing quite a rally across the board. And a quick check on what we're seeing in terms of yields. They too are just ticking up a little bit, just a hair. So we're going to need a little bit of clarification. But folks, this is the world we live in. And this is what we said, that even with the headlines last night into this morning, that the details are going to be really, really crucial. Emerging market currencies index trimming gains as Iran says the ceasefire violated. So forgive us, that's our environment.
We're speaking with Michelle Goss, the CEO of Levi Strauss. Michelle, perhaps it's a good segue to talk about the macroeconomic environment and potential disruptions you've seen from higher transportation costs as a result of bringing these products from overseas into the U.S. and indeed around the world. What has this macroeconomic backdrop over the last 5-6 weeks done for your business?
Yeah, well,
or the last year when I think about tariffs and stuff.
It's been a really uncertain time. You know, I take a step back. You think about the company, LS&Co. We've been around for 170 years. We've weathered lots of storms and navigated, and it goes back to who we are as a brand. During times like this, we have to deliver, we have to execute, but they really do go to brands that they trust, that they love. We offer quality, we offer great value, we offer durability. To date, our consumer has proven resilient. I mean, you see that in our numbers. You know, we are bringing them a lot of innovation. I think, you know, if pressures come on the consumer, when the wallets get tighter, you know, we have to up our game, right? Wallets get tighter, we have to work harder. And that's what we're doing. We offer great red tab right down the middle. We offer Signature by Levi Strauss, which is an awesome value. That business was up 16%. It's in the $20, $25 range. And then we offer Blue Tab, premium Japanese denim. And, you know, you can buy a pair of jeans from Levi's now at like $200. So we're serving every customer need, but know that we are constantly just making sure that we can address the needs of the consumer in the moment, whatever that moment might be.
Love talking fashion, love talking the collaborations. I also, though, do love the nitty-gritty of like supply chains and what a company like you that has been around for so long and seen a lot of different market cycles. What is your supply chain, and have you kind of spread it around based on what we've seen, not just in the last year, but even coming off the pandemic that reminded us that supply chains can be impacted dramatically when they're focused in one area.
Yeah, that's right. We have a robust, very diversified supply chain across many, many countries. We have a really strong team that is agile and responsive. And so, and these relationships with our suppliers go back decades and decades. So we have tremendous partnerships. And as we've navigated things like tariffs, everybody has stepped up to help us, determine what the next steps are there. Just to put it out there on tariffs. I mean, everything that we've guided the street includes tariff assumptions on, call it the original reciprocal tariffs at a higher rate, at that 20% incremental rate. There's been recent news of it going down back to 10%. We haven't baked that into our numbers yet. One could say there's upside there. Yeah. Could mean up to $35 million in EBIT or 7 cents of EPS. But we've held back just knowing that there still is uncertainty out there, as you were saying.
One question we asked outgoing CFO Harmeet Singh in the last year in the wake of tariffs has been about moving production to the United States. He said, no way, that's not happening. Are you sticking by that?
We are sticking by that. Yeah, that is an industry that really has shifted overseas. And like I said, because we have these enduring, long-lasting relationships, I know we'll be able to navigate whatever's ahead on that front.
All right. So a company like you guys, our whole Bloomberg team is like, ask Michelle this. But we're curious about your prospects for reaching $10 billion in revenue. 5 years, 7 years? How are you guys thinking about it?
We have not put a number out there,
but
or a date out there.
Momentum. Like, do you feel like you can take this momentum, and how far can you carry it out? Do you feel comfortable?
Yeah. What I can say, and I think it's important to have bold goals, right? So we've put the 10 billion, we've put the 15% EBIT. I think if you look at the progress over the last couple of years, take revenue. We came off of 7% growth last year. That was up from the prior year. Yeah. This year, we're again guiding mid-single digits. We just had a blowout quarter at up 9%. So I think it's safe to say that you can count on consistent, sustainable growth. And then on EBIT, on profitability, we're making that march to 15%. Again, a few years ago, we were 9, 10%. Last year, about 11.5%. We just said we're taking our guide up yesterday to 12%. So you see that sequential progress, and
so 5 years,
keep doing
years?
That. We'll let you guys do the math, but we're confident.
Yeah,
I mean, like I said, the exciting thing we are
like,
right
you
now,
have visibility.
The strategies are working. We've made some choices the last couple years. We sold the Dockers brand so that we could really focus on the Levi's brand, and there's so much opportunity.
So certainly fashion is working in your favor right now, but we know the industry is fickle and consumers are fickle. What happens, or what do you do rather, to make sure that when the trends do change, you move with them? Yeah.
Well, as the category leader in denim, let's start there. It's our responsibility to fuel the trends. The denim category is growing. It's accelerating right now.
I have more denim in my, no, seriously.
But nowadays,
in my wardrobe that I haven't in a long, long time, and I keep buying more.
But it's not always like that.
But I would say, though, but this evolution to denim lifestyle, or I'll say lifestyle head to toe, that's not all denim, right? It is fine if you're buying a rib cage, wide leg pair of jeans, what's the perfect top that goes with it, which is going to be different than a low rise. Right. And so now that we're playing in this broader space, which basically increases our addressable market by 15x. We're playing in a $1 trillion market in apparel. That requires focus and discipline, but we really up-leveled our capabilities to do that. And, if you just take this last quarter, our tops business was up 13%. Mm-hmm. It's only 20% of our business. So when you think about all that upside, and 40% of our business is non-denim. So it's not just denim anymore for Levi's.
So what is the biggest opportunity or categories that are not yet tapped that could be big for you guys?
Yeah, I would say a couple things. First, when we think about gender, women's is not quite 40% of our business. Last I checked, women's has a big play in the apparel market.
My closet's a lot bigger than mine.
Just saying. But so there's still, that should be at least half our business. So we're expecting tremendous growth there. I was just talking about head to toe. We always will be the leader in bottoms and denim bottoms, but tops. So in our business, we sell 2 bottoms to every top, which, by the way, that used to be like five bottoms to every top. That should be the other way around, minimally 1-to-1. That is all white space for us. And then we have amazing growth ahead of us in expansion. There's still room to grow in the U.S., but you think about these international markets, in some cases, we're just getting started there. So as we look ahead and say, how are we going to go from 6 point something to $10 billion, we can chart that out, and we feel very confident.
Thank you. Forgive our distraction. We were dealing with some headlines on the Middle East, which is obviously so important to everybody's macro. But please come back soon. We would love it.
Thank you. Well,
And
thanks
it
for having me.
continues. Yeah, we loved it. President and CEO of Levi Strauss & Company, of course, she is Michelle Goss, joining us here in studio.
Carol mentioned the headlines on the Middle East. Iran's parliament speaker says a ceasefire deal with the U.S. has been violated. Stocks off their highs of the day. Let's head on over to Amy Morris, who's watching markets and the headlines. Hey, Amy.
Hey, Tim. Yeah, you're absolutely right. Stocks are off their highs for today, but still in the green. The S&P 500 up 2.3%. NASDAQ up 2.75%. The Dow up 2.6%. The 10-year Treasury yield at 4.28%. And the 2-year yield at 3.78%. WTI and Brent crude bouncing between $94 and $95 per barrel, pretty much where they've been throughout the afternoon. Spot gold now less than 0.5% higher, and Bloomberg Dollar Spot Index about 0.75% lower. Now, ExxonMobil lost 6% of its global production in the first quarter because of the war in Iran. The company says 2 liquid natural gas production lines at a facility in Qatar were damaged by Iranian missile strikes, and that'll take a while to fix. Exxon expects first quarter earnings from its energy products division to be lower because of price volatility. Exxon shares more than 6% lower at this hour. And President Trump posted on social media that any country that would supply military weapons to Iran would be immediately tariffed. The president writing that would apply to, quote, any and all goods sold to the U.S. of A, 50% effective immediately. Well, Trump might not have the authority to do that after the Supreme Court's decision that his previous tariff regimen that was put in place via an emergency law violated the Constitution. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's the Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
All right, folks, watching markets, watching the headlines as we continue to see reports about the Iranian parliament speaker, Galbaf, who would lead the country's negotiating team in talks with the U.S. in Islamabad on Friday, according to the semi-official Iranian students' news agencies. But he is talking about some different concerns about the ceasefire. And again, we had some headlines about the ceasefire being violated. We did see a little bit of the Treasury rally fading, the equity rally fading, but just a hair. So I just want to put it in perspective. But again, the Iranian parliament speaker also posting a violation statement. So the talk's unreasonable. So again, we're trying to make some sense out of all of this.
Yeah, I'm just going to this statement right now. Quote, the deep historical distrust we hold toward the United States stems from its repeated violations of all forms of commitments, a pattern that has regrettably been repeated once again. The speaker is saying non-compliance with the first clause of the 10-point proposal regarding the ceasefire in Lebanon, a commitment that the prime minister has also explicitly referred to and declared as an immediate ceasefire everywhere, including Lebanon and other regions, effective immediately.
They also say the entree of an intruding drone into Iran airspace, which was destroyed in the city of Lar in Fars province, in a clear violation of the clause prohibiting any further violation of Iran airspace, denial of Iran's right to enrichment, which was included in the 6th clause of the framework. They say now the very workable basis on which to negotiate has been openly and clearly violated even before the negotiations began. In such a situation, a bilateral ceasefire negotiation is unreasonable. We have said many times the devil is in the details, but curious to see what our next guest has to say.
Dr. Ed Hussein is senior fellow at the Council on Foreign Relations, focused on U.S. foreign policy toward the Middle East generally. He's a professor at the School of Foreign Service at Georgetown University, where he teaches classes on global security, Arab-Israeli peace, and the shared intellectual roots of the West and Islam. Dr. Hussein joins us from Abu Dhabi. Dr. Hussein, just your reaction to the latest headlines and the fragile nature of this ceasefire.
Fragile nature is exactly the right phrase. I woke up this morning here in Abu Dhabi with signal alerts going off on my phone, and then throughout the day we've had attacks from Iran on Dubai. As late as 45 minutes ago, there were attacks, drone attacks, interceptions from Iran into Dubai. So here in the region, especially on this side of the Strait of Hormuz, it didn't feel like a day in which there haven't been violations, but there's been not much coverage of that. Now, Ghalibaf, the Speaker of the Parliament, calling this unreasonable, it doesn't seem like an outright rejection. My question to the audience and for all of us thinking people is, why does Iran care about Lebanon And that's part of the problem, that Iran hasn't given up its imperial ambitions, that violation in Lebanon, which means Israel's counterterrorism measures, that wasn't a violation of Iranian sovereign space. And yet it still harbors these ambitions that it's trying to exert pressure on Lebanon and Israel's efforts there. So I think that's something for us to think about, that it's not just Iran's concerns about Iran. Iran still has these ambitions around the region, which was one of the reasons why October 7th happened 3 years ago. And this is downstream from that terror attack that Hamas instigated with Iranian government support that continues to ricochet around the region and the world.
I'm glad you went there, Dr. Hussein, because I think one of the things we're trying to figure out too, because Israel has continued its ambitions, right? It seems like, and its attacks on Lebanon. So are you saying that Iran still has bigger ambitions by being concerned about that? And so I guess I think we were trying to say, well, Israel has to stop. So help us understand, you understand this region, the dynamics between all of these players and what their missions are and how it might not coincide with what the U.S.'s ambitions are. Because I thought this was about, the nuclear ambitions of Iran.
Yes, I mean, you're absolutely right. The nuclear ambitions are linked to having an Iran that is surrounding Israel with proxies, which was previously the Syrian government, the Lebanese government led by Hezbollah, and in Yemen, there are Houthi attacks that are anti-Israeli, and supporting movements inside Saudi Arabia, inside Bahrain. So these are all movements outside of Iran. And now we have a situation that Iran is trying to negotiate control of the Strait of Hormuz, which it didn't have previously. Now, all of that, and you're right to ask the question about Israel, plays to Israel's existential angst. Israel and Jewish people writ large, as we know, are a traumatized people coming out of the Holocaust, and October 7th pressed that wound, which means we survived since the rise of the Iranian regime, the mullahs in Iran since 1979, by more or less trying to accept that the Iranians will have forces parked all around our borders and will try and do a peace deal. October 7th made the Israelis realize we can't have that world again, and we don't trust the Iranian intentions, and they will support Hamas and Hezbollah attack our people again. Therefore, we'll go after them everywhere, including Iranian nuclear ambitions. And I'm afraid to say this, but it's the truth, and we can't shy away from the truth. For as long as Israel feels it's not safe, it will continue to attack Iran and its allies. And the biggest mistake Iran makes in response to this is, rather than fight with Israel, it begins to attack countries such as where I'm sat here in the Arabian Peninsula, in Abu Dhabi, Dubai, Kuwait, Bahrain, Saudi Arabia, Jordan. And I think that's the danger of the Iranian regime, that it wants to more or less draw in the rest of the world in its war with Israel. And in that, and I think the good news is countries here now feel closer to America than they've done in the last 15 to 20 years. So there's a lot to play with in terms of enhancing US influence and relationships with countries here in the Arabian Peninsula.
Just quickly to get your thoughts, though, isn't this about Israel's existential angst versus Iran's existential angst? Is that what's kind of like, how?
Yeah,
if you've got that going on, you tell me how you end that.
No, it's a battle of different willpowers, different wills, and the Israelis will have stronger willpower for all kinds of reasons. They have 3,000 years to back that, and the Iranians also have strong willpower and have 3,000 years to back that. The rest of us are caught up in that. And the way you end that is by making sure that Iran and the Iranian government, as it stands now, focuses on normalizing Iran's economy as the Japanese did and the South Koreans did, rather than Iran's ambitions being regional and global and shouting every Friday, death to America, death to Israel, and attacking Arab neighbors and allies who have not attacked Iran. Even to this day, we here are in a defensive posture. And the way you end that is by ensuring that Iran's government is not centralized, that Iran's government is decentralized, that there is an Iran that's an Iran of federations, that minorities inside Iran, the Azeris, the Baluchis, the Arabs, the Hazaris, the Persians,
Ed,
the Kurds have greater rights.
Dr. Hussein, is that realistic? Is that realistic in your view? Could that actually happen after 47 years of rule under the Ayatollah, an Islamic Republic, and an IRGC that is so powerful?
It may not happen next month. It may not happen the month after. The US and Israeli attacks on Iran have consolidated the government's nationalist appeal for unity. But if we look at the Iranian population, since the Green Movement during President Obama's time to now, every 2 or 3 years, there's an uprising against this government. This government now is weaker than it's ever been before in terms of its air force, naval force, and ability to produce missiles. But one of the reasons why President Trump tried to support the popular uprising inside Iran was to diminish the government's outreach. But the mistake is now the government is stronger domestically. But there will inevitably be uprisings inside Iran. And I think this government at some time will fall. And we in the West, with our Arabian allies, need to have a perception of what a federalized Iran looks like, where there isn't a centralized control by the IRGC. And that's where I think all of us are failing. We just don't have an alternative vision for Iran without disrupting, without causing refugee flows, without causing further conflict, that all of these minorities inside Iran, I mean, Azer is 25% of the country, close to Azerbaijan, Turkic population, the Kurdish population, huge inside Iran. How do we decentralize power with these minorities that are actually pro-Israel, pro-Arabs, pro-America, rather than the mullah regime trying to take us back to a messianic world order that continues to support forces against Arabia as well as against America and Israel?
Our Dan Williams, who's in Jerusalem, had sent us and shared with us a post he did earlier this morning. He said, when the all clear sounded after the last Iranian missile launch in the early hours of the morning and the ceasefire took hold, my neighbors filed out of the communal bomb shelter, smiling wearily and wishing one another well, quote, until we meet again in 2 weeks' time. I mean, that's I don't know, the reality. Like, you talk about this federalized Iran, what that might look like, and having the ability or having the trouble kind of figuring that out. Is that because it's impossible? I've had conversations with folks about the region, informed people, and just saying, it is existential. There's something in the culture of Iran, that they are preparing for. And so you can't just get rid of that overnight. So it makes me wonder, can there be a federalized Iran?
Well, we haven't made the argument. I've been thinking about a federalized Iran over the last 2 or 3 years. And you look at the history, you start to see that Iran was always a federalized entity, but as in ethnically composed, different ethnic compositions of the country now want to have greater rights. And we haven't recognized that. For example, Azerbaijan and Azeris have a strong relationship. We haven't focused on that. We have ability from Turkey and our NATO ally to project power into Iran that terrifies Iran because they have a long war with the Turks going back to the 1550s. It's another existential battle. But the point that you made is fundamentally true, that Iran has this long willpower to fight. The Iranians, or the Persians rather, famously fought the Romans for 700 years, from 7 AD onwards. So they have a long strategic vision. We, on our side, our Arabian, American, and our Israeli allies, haven't really cast a long-range vision back into Iran, that we don't want to see an Islamist regime that threatens both Arabs and Jews and Americans, both in the region and around the world. And I think that's the task for all of us, to see an Iran that's different, that is decentralized. And it's not about Reza Shah Pahlavi coming into power or his family, but genuinely bottom upwards, representing the rights of the people.
Dr. Hussein, thank you so much. Be well, be safe. So appreciate your time. Take care. This is Bloomberg.
is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready to enter the last hour of trading on this Wednesday. Carol Masser, Tim Stenovec, live here at Bloomberg headquarters. Just looking at markets, we're coming off our best levels of the session. I'm just keeping track. S&P 500 just before the Fed minutes at 2 p.m. We're up about 165 points. We're now up about 146. So we've kind of topped off maybe the highs here of the session. NASDAQ 100 was up about 715 points. We're now up about 623. So it's not like the rally has run out of steam. We're talking about more than 2% gains on the major equity averages. Same thing for the Treasury curve. We did see yields move back